Welcome back. Tasty Live Network, Monday morning, June 21st. Taking a look at the Forex markets to start the week from your buddy Frank. I have not been around markets for 2 days. Was fly fishing up in Michigan. Caught a whopping 0 fish, which you might say, wow, that seems hard to do. Tough fishing conditions. I was told. I can't tell if the guy was. I went with a buddy of mine. We went with a guide, and yeah, he was very nice about it, and remarked many times that some of the worst conditions for fly fishing that he's seen this year. My friend caught about 5 fish. Which, if it was 1 or 2, would have made me feel a little bit better. But the fact that he beat me 5-zip made me feel like it was maybe a me problem. Either way, nice to be out in the Traverse City area. Beautiful up there. They love their cherries and everything else. But an unsuccessful trip away from the trading platform. And with that, let's get into the platform and take a look here at what's been moving. A couple of things in some different places than I remember. Let me start with euro dollar. That seems to always be the most popular place. This euro dollar market, when I left, was, seeing some high volatility around the 116 handle. Looks like close of the week, we got away from that price, moved up to 116.50, have flirted with some selling off of that price. And right now, as we speak, dollar giving ground, it appears like across the board. We'll take a look a little bit closer in a second, but the general trend the last week or so has been some dollar strength after a ton of dollar weakness. This is the hourly chart. I'll take a look at the daily chart. Here's all of that US dollar weakness really since the start of the year. And now the last few weeks here, July has been essentially, we'll just say July has been a bullish month for USD. How we close that month will be of the most interest here. This week and next week, we actually do close July with a Fed meeting on Wednesday. So a lot to be looking at here in the next week. And let me actually pull up this economic calendar, not to look at the FOMC meeting that's coming up, but I believe there obviously it looks like there's nothing there. Was there a Japanese election? Frank's really good at his job, knows exactly what's going on across the globe that might be relevant to these FX markets. But you saw huge dollar sell-off on the open last night, some yen buying, and then they reversed that immediately throughout what would have been the start of the Asian session. And now you've seen that yen bounce or that dollar sell off. And this has also been an interesting one where the month of July has been very good to the dollar against the yen. As you can see, we've gone from below 143 all the way up to 149, and at certain moments looking like they wanted to hit 150, which has been historically the last couple of years a pretty important price level. And also, if you look at the last several years, 150 is pretty rarefied air. And given the rhetoric around US dollar here in 2025, which has been, dollar's getting crushed, Trump wants to depreciate the dollar for all these economic reasons, which you can agree with or disagree with. And he also wants interest rates lower and all these things that would potentially lead to a cheaper dollar. This is a hell of a bounce back, though, in this dollar against the yen. And the fact that we're still, a stone's throw, really 1 day's work away from 150, which if you count up all the weeks that we've been above 150, of course, there's a bunch of them in recent history, but if you count up all the weeks that we've been above 150 in this dollar yen market, going back the last 20 years plus, not a lot of data points. So that's probably what I'll be watching here. And let me get back to that hourly chart. And let me actually, we've never done this on the show. We have some nice research that we'll get to in a second. But why not? Let's just figure out what the heck happened. I think there was a Japanese election. Japan election, PM vows to stay on despite bruising election loss. Okay, here we go. Got the AI telling me what happened. And this is also, AI responses may include mistakes. This is all from Google's AI. I don't know if our compliance officer, how upset he might be about this on-the-fly research trying to figure out what the heck happened in Japan. In a significant parliamentary election held on Sunday, Japan's ruling Liberal Democratic Party suffered a major defeat, losing its majority in the upper house. This follows an earlier loss of its majority in the more powerful lower house. The ruling coalition loses control, so that's the Liberal Democratic Party. Factors in the defeat. Voters expressed discontent over rising prices, the threat of U.S. tariffs on Japanese products, and the increasing burden of supporting Japan's aging population. Wow. Okay. Seems like some young conservative types. The far right populist. I'm not going to say sensate. All right. I tried to. Never mind. Previously holding only one seat made significant gains, securing 14 seats. So I guess far right movement taken hold there in Japan. Democratic Party for the People also saw gains. Okay. So I don't know how that works. Gains on both sides. PM Ishiba, future uncertain. While Prime Minister Ishiba vowed to stay in office to handle pressing issues, including trade negotiations, the election setback has weakened his position. So I'm guessing, yeah, his party got weakened. He's still technically in power, but it looks like potentially some turmoil for Japan. The election represents a potential turning point in Japanese politics, with a rise in right-wing populism and increased pressure on the long-dominant LDP, which again is the Liberal Democratic Party. The coming months will likely see continued political maneuvering and potential shifts in Japan's policy. Okay, so it looks like they're looking for someone to come in and maybe be a little bit more tough on the trade war talk. Not happy with, I guess maybe it's been viewed in Japan that leadership is just doing whatever Trump says. Anyways, I guess what this might be here, this volatility that we saw last night in this market, is a little bit of course, it's what does this mean for the yen? The initial reaction there, which was yen upside and then quickly reversed, I would imagine was kind of like essentially the algos or whatever you would call it translated this more conservative party coming in as bullish for the yen and bearish for the dollar in this pairing, given how tough Japan might now be on tariff talks and some of these other things. And then they reverse that. I would imagine either some of the like polls or something were swaying back and forth, or the market was digesting it as, oh, but maybe this uncertainty in general is not good for the yen. So maybe that was like a little bit of a fear bid in US dollar, a little sell-off in yen. But now, as we really also keep in mind, I believe Japan was closed here to start the week for this election or some holiday after the election or something. So this session is going to be a little bit lighter than you would hope for coming off of an election, because the Japanese market isn't in there. So you're likely to get some of these big swings. I bring this up because now Europe and the US, which are in session, are digesting this as bullish for the yen. and bearish for the US dollar. We'll continue to see where this leads. I mean, if you got short this dollar yen market here up around 149, this is a nice little move for you. If you were looking for this dollar yen market to continue through 150, this political stuff, maybe you have an opinion about how lasting it tends to be. Nice little down move if you wanted to get long that dollar yen, but thought that you missed it at 146, 147, 148 onto potentially 150, which has been the general trend here throughout July. So interesting piece there. Hope we all learned a lot on what the heck's going on in Japan. If you already knew that, sorry for the waste of time. A couple other things really quick. Let's see what else is moving. Man, yeah, dollar getting some pressure here. I don't like this. Dollar Swiss franc back below 80 cents. If you've been looking at this one, I know this has been an intriguing one to a lot of people in the Tasty universe who love the price extremes and also love the, I don't even know what you would call it, like the potential for like edge or like passive income or some kind of income with a trade, just given that the swap rates here have been in the U.S. dollar favor, given that Swiss interest rates are near zero and U.S. rates are still above 4%. Now, of course, there's a lot of price action risk with that. For example, if you got, 0.6 or close to a point of overnight funding in this pair, but then lost, 20 points here on the net change, obviously you're down money in that trade on a daily basis. But a lot of us have been looking at the fact that we're seeing quite historical extremes, this dollar very cheap relative to the Swiss franc amid a carry trade potential that is in the U.S. dollar's favor. Kind of a wonky thing. You don't see it very often. It's almost like like if a stock market was getting really beat up, but this actually kind of makes sense. If a stock was getting really beat up and like the puts were really expensive and you could sell the puts, or maybe it would be like if the calls were really expensive and you could put on a covered call, like the stock fell from like 100 to 50, but the call premium went from like the 30 delta call being priced at like $5 when the stock was at 100 to now being priced at like $10 when the stock is at 50. It'd be like, what? This is kind of weird. I can, get long this falling stock and have some good side income from selling the call. But keep in mind that stock can fall to 25, right? It can fall to 10. And so, yeah, a lot of people looking at this is the weekly chart, still right there around 80 cents, which has been pretty much the low for the last 10 years, going back to the crazy DPEG price action in 2015. And obviously we were there for not a lot of data points. And so this 80 cents is a crazy price extreme historically. We're still sitting right around there where we just again fell below it after 2 weeks of rallying to get back above it. The carry trade still in the U.S. dollar's favor, but of course you have to keep in mind that this thing can absolutely continue to fall. I mean, it's as recently as a couple of weeks ago, we were at below 79 cents for about 2 hours. So something to watch. We're getting, some dollar pressure here going into the U.S. session. That's not quite there. Anything else that Frank wants to cover? Anything in the crosses? Not so much significant stuff. Yen is beaten up on a couple of these non-dollar cross pairs here, but it looks like U.S. dollar is mainly the story. Yen making some nice gains, but also dollar starting to cough it up versus euro, pound, and Swiss franc going into that U.S. session. With that, let's jump over to the slides. Take a look at what we got. Mean reversion, profitability in non-dollar pairs. An exciting one. We're in a low vol environment, my friends. My good friend Glenn crunched a bunch of numbers for us. I'm going to try to figure out what it all means here on the fly with you all, which will be a fun exercise. But first things first, we're looking at non-US dollar pairs, okay? And so all that means is all the Forex pairs that you're looking at, whether it's Australian dollar versus US dollar, or US dollar versus Canadian dollar, Euro versus US dollar. We took the US dollar out of those and we paired up those currencies against each other. We got Aussie CAD in there, we got Aussie Yen, we got Aussie Kiwi, we got Euro Sterling, we got Euro Yen, we got Pound Yen, and we also have Kiwi CAD. You might notice a couple of things. Well, Frank, the Aussie, Canada, and Kiwi, I see a lot of those paired up against each other. And I see a lot of the Euro, Pound, and Yen paired up against each other. A couple of things. Those are pretty distinct among the major currencies. Those are pretty distinct subsectors, I guess I would say, of commodity currencies, which is Aussie, Canada, and Kiwi. And there are some other ones, but not in the major currency class. And you can go do research, and guess what? You can pair them up against almost anything. So take a look if you want. But among the major currencies, there's kind of that subsector, and then there's another subsector which there's not a cute name for, like commodity currencies, but I would just call those like kind of like the traditional or like established, or I don't know, like almost like the major currencies, which is going to be your Euro, your Pound, and your Yen. And so we tend to pair those things up against each other, but we will see some interesting stuff between like the Australian dollar and the Euro, or the Australian dollar and the Yen, or the Pound and the Canadian dollar. There's some cool stuff to be had. And guess what? Again, you can pair up any of these things. There's no wrong answers, really. But what you should monitor is what's the liquidity. If you pair up, you know, the Israeli shekel and the South African rand, it might cost a lot to get that trade off. And so be mindful of those things. That's why when we're talking about taking the US dollar out of the mix and pairing these against each other, these tend to be pretty high liquidity, pretty low cost to get that trade on. And with that, we're looking at some realized vol numbers, and holy smokes, there are some low numbers in here. We're in a pretty low vol environment, but keep in mind that if you think that like the make or break point for VIX, for example, is like 15%, and it's like, oh, higher than 15%, then it's kind of relatively high vol, or lower than 15% is lower than low vol. With currency trade, with Forex trading, that number is going to be more like half of that. Maybe like a 6, 7, 8% would be like normal vol. Higher than 8% would be like, okay, like we're seeing some high vol. Lower than like 4 or 5% would be like, okay, this is pretty low vol environment. But also an interesting thing when you take the dollar out of these pairs is you don't always get higher volatility. You might think that like, oh, the US dollar, that's the most stable currency. And I'm being not sarcastic or facetious, but I'm not saying that it is the most stable currency, but one might think US dollar paired against any of these currencies is the most stable setup. It is the lowest vol setup. And so if I take the US dollar out and I put Australian dollar against Canada, that thing is going to be flying around. Not exactly. You see that volatility there at 4.2%. Look at that Aussie versus New Zealand dollar there on the third row, 3% volatility. And the percentile of that volatility is actually in the 45th percentile. So that's saying 3% in that pair is actually relatively high volatility. It's in the middle of the distribution of volatility. And that's because those, like I said, those commodity currencies and those major currencies, they can be highly correlated to each other. And so again, it's not always that the US dollar version of any of these currency pairs is the lowest volatility. It's almost like Amazon. Let me think of a better example. Microsoft and Apple are both priced in US dollar when you trade them, right? And when you take that US dollar piece out and you price Apple in Microsoft price, you might think, oh, that pairing of this new price that I've created, that thing is going to be very volatile. It might actually not be as volatile. It might be very low volatility because those two stocks tend to move in the same direction. And so trading that pairing of those two stocks, taking the US dollar part out of it, might actually have smaller price swings. Anyways, I have digressed so freaking far away, but it's an interesting little thing. The last thing to note here is most of these non-dollar crosses are currently in low vol environments. The most interesting thing to me is that euro sterling, which is probably the most euro pound, there, the fourth row, and Australian dollar, Canadian dollar, Aussie CAD, the first row, are probably some of the most popular non-dollar crosses. And that euro sterling's in the 56th percentile volatility, relatively high vol environment for it right now. There's your context. Here's your study. We looked back at the last 5 years of data, measured the realized vol, which is on a 20 trade day rolling standard deviation, which is essentially pretty close to like a monthly standard deviation. And keep in mind, the VIX or implied volatility metrics are usually monthly measures that are annualized. So what Glenn tried to do here is pretty much mimic that calculation. And then we split the data into low vol and high vol subsets, looking at low vol being below the 30th percentile. I think that's pretty appropriate. Simulated trade performance using contrarian trade entry when prices touch the 2 standard deviation Bollinger Band. If you haven't looked, we did a study last week. It was great. What we're essentially looking at, a Bollinger Band is just a standard deviation that's updating live with the price. You can put it on the chart. And so it's just telling you what the standard deviation is. You can make it a 1 standard deviation Bollinger Band. You can make it 2 standard deviations. You can make it 3. You can make it 5. Whatever you want. The more standard deviations that you add to that Bollinger Band, the wider the band's going to get, the lower the amount of opportunities or occurrences you're going to see of the price going outside that band. Because keep in mind, 1 standard deviation, that's 68% of the prices, so only 32% of the time will the data get outside that band. 2 standard deviations, that's 95% of the prices, so only 5% you're going to get outside of that band. 3 standard deviations, that's 99% of the data. And so if you're like, well, I'm the smartest guy, I'm going to look for 4 standard deviation moves, you're not going to get them. You're going to get them maybe once a year. So 2 standard deviations, a little rare, a little conservative for my taste, but let's go with it. When the price went below the band, got long. When the price went above the band, got short. That's contrarian setup. Of course, a trend follower, when the price gets below the band, would probably sell into that move, or when it gets above the band, would buy into it. Calculated the win rate based on any positive P&L in a given time frame. I'm guessing he's going to look at a couple time frames, 1 to 10 days. Compared volatility environments as well. Let's get into some of the data. Mean reversion strategies generally favor low vol, though win rates are above 50% in both environments for most pairs, which is nice to see. But this is an interesting thing that we do see in options trading as well, which is if you're selling strangles or iron condors or what have you, you do tend to see, you have historically, that is, seen some higher success rates in lower volatility environments. You might see bigger profits in high vol because there's more expensive options. There's bigger price swings. Same here. You might see some greater profitability of your trading in high vol just because there's more back and forth, right? There's more price points. But really surprising, Australia, Canada, holy smokes. The last 5 years of contrarian trading which is, again, just setting up those Bollinger Bands and buying when it's below the band and selling when it's above. Those are some freaking high win rates. Holy smokes. This is a buying or selling trade, by the way. This is an optionality that gets you, some kind of higher probability of success or something like that. This is buying that Aussie CAD when it's below the Bollinger Band, selling when it's above. Even in high vol, 61.6%. Wow, wow, wow. Aussie yen, kind of a push there. Aussie Kiwi, good in low vol, kind of a push in high vol. Euro sterling, again, the future not indicative of these past performances. I'm happy though to see that the major non-dollar crosses, Aussie CAD, Euro sterling, some high contrarian setups here historically. Euro yen, also a pretty popular one in low vol environments. Nice contrarian trading. There at the bottom, pound yen, kind of a push in both, and Kiwi CAD. I'm pretty surprised that Aussie CAD is so high win rate and Kiwi CAD is so different. It's kind of crazy. While win rates primarily differ by pair, success peaks on day 6 for most pairs. This is also kind of surprising to me that the win rates are pretty stable across the time frames. You see in some of these pairs, waiting for that price reversion past a couple of days hasn't really worked. But yeah, if you're looking at those daily Bollinger Bands and you're entering into a trade, it looks like you can have relatively stable win rates across 2, 3, 4, 5, 6 days. Doesn't look like it's not completely linear up and to the right, which tells you you don't just continue to see more success as you hold it. You want to manage those winners. Optimal trade exit in high volatility is actually, this makes sense to me for sure. In high vol, holding on to a trade past a couple of days doesn't tend to do you any good. Something to be aware of. But that's a lot of good stats. Good job by Glenn. Non-US dollar pairs are generally more mean reverting in low volatility environments than high. Aussie CAD exhibits some crazy, that's 5 years of data. So pretty crazy mean reversion in the last 5 years. Reversion trade success when vol is low. You can hold for a couple of days, it seems like. In high vol, waiting past a couple of days, he says it does improve the win rate, but I don't know. It looks pretty flat. Also, just in high vol, I'm not trying to hold trades very long if volatility is up and just hoping for my trade to turn green or more green. I like this Aussie CAD in a couple of these kind of peaking around here and then sloping lower. I would probably stay in that 1 to 3 range, day range. But anyways, I've gone too long. Great study, Glenn. Everybody, thanks so much for watching. Tom, Tony, and Vanetta coming up next.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot, for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We just ripped higher up to 50 points, and I just thought we would stay there, but
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
Hola.
Hello. 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 Hola.
You guys are dressed alike to go to the airport today. That's adorable.
A bitch stole my look.
No. The black T-shirt is my look. Okay, you can't.
No. I don't know what fakakta T-shirt you got on there.
I'm sorry.
You got like some old concert T-shirt on.
Yeah, Tom, you are serving 90s roadie realness.
Absolutely. I got a nice V-neck T-shirt on.
I'm sorry I didn't put on my little Guido, circa 1978 black T-shirt from Brooklyn.
What the
I just got a nice
slurs with 704.
Who else can we offend real quickly?
I know, just wow.
Oh, give me a couple hours. We can offend everybody.
Are you guys excited to go to Denver?
Yeah.
Oh, joy. Yes, we are. I can't wait to spend time with Tom. I'm just hoping the stray cashew is sent back to me with the almonds that you always send back to me for your nuts back in first class, back to coach. I just hope it makes it.
No, but Tony, you get to go to the lounge, right? Because you don't have your family. It's just the two of you, right?
Of course he does.
I get to sit outside the lounge and not be allowed in because I'll get there before Tom. I live a little bit closer, and I can sit on the floor like a homeless person, and then he can show me some sort of pity.
No, outside the lounge, they have these kind of they're like these animals, but they're like statues, and you can sit on them with the kids. And then when I get there,
you're lying to me right now, right? And you want to get me arrested, right? So I'll sit on these sculptures.
No. They have like a little. It's not a playground. It's just like a little. It's like they're statues. There's some adults sitting there too, and you can sit on there, and I'll come and scoop you up.
Thank you, man. I really appreciate it.
Love lift us up where we belong.
I'll pretty woman you. I'll come get you and sweep you off your feet.
I can't wait to taste breakfast sushi.
Yeah, don't
Oh
eat
my-
breakfast, Tony. Go in hungry. Get your money's worth. This is how This is how you make all your money.
It is
I can't wait. It's gonna be good.
breakfast tofu sushi. Yes, from leftover from last night.
Yum.
My God, their oatmeal blow you away.
Unbelievable. Steel cut.
I don't know. United does like overnight oats. They have like a chia overnight oat situation.
Oh, don't listen.
So
We've been to the United Lounge. That thing sucks too.
you
It's
suck.
it's horrible.
You're horrible. All right.
Oh man.
I called in
I got
advance,
nothing
Tony.
else. This is your time to talk.
No, I called in advance, Tony. They got the omelet station open for you.
Oh, thank you. Hopefully we'll have enough time. Yes, a little bacon, please. Thank you.
Ooh.
Ooh. Lovely.
Gonna be good. Can't wait. Can't wait.
No, it's gonna be fun. We're gonna have we got a lot of stuff to plan. We got a lot of work to do on the flight, actually.
You got to work on your opening monologue.
We go over the stuff that we're going to trade. I mean, the market, changes as ever evolving. So we go over what we're going to trade for the next day.
We don't pick the trades until the day before.
Yep.
Because otherwise, how can you pick the trades a week ago or anything like that? So we don't pick the trades until later today.
Right.
So it's a working trip there, Vanetta. It's a working trip. Now it's hard to get the notes passed back to coach. But
no.
Brittany,
you have extra leg room. I made sure.
Oh, thank you.
I think
usually
you get premium economy.
Come back.
No, I think we're the same job level because we've been here 15 years, and I think we get premium economy.
Yeah, that's the extra leg room. Wow.
Yeah.
So usually, Brittany's up front with Tom. Usually she brings back the notes, but she's not traveling with us this time. So I don't know who's going to bring back the notes, but we'll figure it out.
Hey, don't let him cry. Don't make it seem like he's crying. Okay, I guarantee you, he's in the seat next to me.
Wait a minute. Wait, you have no Brittany? Who is chaperoning this trip?
Oh, she's there. She's there already, setting up. She's there.
Oh, I see. Okay, I was gonna say.
We're unchaperoned. We're unchaperoned.
Yeah.
We don't have an adult with us, so we don't have any.
We don't have an adult.
Garrett's not gonna be there, so.
No, we don't have any adults with us today. We're on our own. It's like, I'm just. I don't.
Maybe you should pin the name of the hotel and where you need to be. Pin it to your shirt.
Well, will that be underneath my key? It's on a shoestring around my neck. Should we put it underneath that or over?
Yeah.
Mm-hmm. Don't worry. I'll have at least 5 text messages from Brittany reminding me where we're staying, and I'll be good.
I was like, do you even know, girl? Do you even know where you need to go?
I have no idea. Honestly, I couldn't tell you. I have no idea.
This is unintentionally hilarious.
I have no idea.
We like to be surprised. I haven't looked either, to be honest with you.
We don't know. We won't know where we're going until we get off the plane and we head towards the Uber. Then we'll look at a text message.
Tom, you were giving me major mom vibes, and I mean specifically my mom, bless her heart, because whenever she goes somewhere with me and my dad, she's like, "I'll just call an Uber," and we're like, "Do you have Uber on your phone?" She's like, "No," but she thinks that she can Southern charm her way into getting into an Uber, and she could do it. But you do not have her charisma, so.
But I have Uber.
You've got her look, but not a charisma.
You got Uber? You got Uber on your phone?
I got Uber. I got Lyft. I got everything. I don't have.
Is it associated with a working credit card?
But Tony also has whatever. What's the other one, Tony? What's the driverless one? We got Waymo.
Waymo.
Yeah, I just did it when we were in Arizona. Yeah, I have Waymo.
Yeah. Mm-hmm. Yeah. So we got everything. We got everything covered.
I can't wait to go to the Mexican equivalent of Chuck E. Cheese in Denver when we go to Casa Bonita. It's gonna be awesome.
Chuck E. Cheese for adults.
It's gonna be awesome.
I mean, that's also, you might get recognized because we were guest stars on a Spanish show yesterday. So
we were. It's true.
It was in Espanol.
By the way, that guy was great.
That guy was
great at what he did.
It was really good.
Oh yeah, yeah. I've done a bunch of stuff with him over the years. We have another event next week, but he's, there's some. They're great.
Yeah, they're super nice. I think Sigma is the name of his channel. I'm not sure the exact.
We did when we did the last show in Milan. We had an interpreter, Andrea, and it was fun. It was similar to that, but it was Italian.
That's how languages work. Yeah.
A different language. Got it.
Yeah.
Got it.
That's fun.
You're unbelievable, Thomas.
Yeah. So my last 2 events have been in different languages.
You're international, baby.
Yeah.
You don't do too great with English either, to be
I don't
fair.
really. So I'm gonna do my best tomorrow.
The only reason I'm on this tour is to interpret what you say, because you usually butcher it.
Not
and
exactly.
Liz and Jenny are headed to Germany for Oktoberfest, so.
That must be nice.
They're doing a talk in Munich, I think.
Which is in Germany.
Yeah, I know. But it's not Oktoberfest now.
No, but I said near the time it'll be like late September, which is when Oktoberfest.
What are you doing? Are you bucking for a interpreter's role or something?
I spreche sehr gut Deutsch.
She does.
Yeah, I'm sure you are. So yeah, no, that's going to be. I think they're doing a risk conference in Munich for the SIBO. But
yeah, why didn't you send Vanetta? She does speak German fluently. I mean, you should have sent her.
Hey, I didn't send those guys. The SIBO did.
Yeah, the SIBO has money. We do not.
Got it. That makes sense now.
Makes Marty.
Yeah.
Anyway.
Yeah.
All right, good time. So you guys didn't do anything last night. White Sox, exciting win over the Tampa Bay Rays. I don't know if you watched any of those highlights of the game, but.
Ooh, I did not. I saw the end of the Cubs game. Ugh.
Well, the Cubs lost, so I didn't really want to talk about that.
Yeah. No, we were doing stuff, and then I didn't watch the White Sox game.
Nor did I.
Oh, what'd you guys do last night? You were just laying out all of your shoes, just packing.
I was making sure I had an extra pair of underwear, extra pair of socks. I was getting it all together.
Yeah, my backpack is locked and loaded.
I cannot.
I think you're gonna be highly jealous of my travel.
Oh no.
Cooper months.
No, that's not the right. You almost had it, sweetie. Just of your setup, of your travel setup.
This is what happens when I go outside my comfort.
Nope, I was like, you almost had it. Nope, your setup.
This is what happens when you go to your little calendar with new words on it. Okay.
Accoutrements.
The word of the day doesn't quite fit. But
yeah, there you go.
Now I'm doing it all on my own too. I'm doing it all on my own.
If you lose the kind of like the oversized, ruffly Italian wear, and you go with the t-shirts, you could fit a lot. You could fit a lot more. You could travel a lot lighter. Let's put it that way.
Well, I was able to travel a lot lighter, but you're going to be jealous of my backpack for sure. I got a good one.
I'm definitely.
Just make sure you have enough space left to bring me my Casa Bonita shirt, size small.
Oh, that's right. I got it. Yes, I do.
Thank you. I want a Casa Bonita shirt.
Sadnov, it's your job to remind me.
Okay, I'm the worst reminder of anybody.
No, I'm going to text you both. It's fine. I got you. I'm going to just text you. I got it.
See, you're learning. You see that? You wouldn't have known that 15 years ago. Now you know. You want a shirt? You better text at exactly 7:05 tonight, Central Time.
Done.
I mean, Mountain
Time. That's Mountain Time. Yeah. Which is a weird time zone. Just like.
It is a weird time. So it's kind of all out by itself. You know what I mean?
Yeah.
Yeah.
But,
so you better text. Yeah, we'll be there for a couple hours. It's going to be.
And Vanessa, don't text me like you normally do late at night, like like you up or something.
Yeah.
Like that. Don't text.
Honey, you wish. Honey, you wish.
Yeah, don't text me like that. Text me for real. Like, hey, don't
you
get my
up.
small T-shirt.
No.
Right. Don't text me like you up or something like that.
Hey, you haven't got a you up text in a long time, okay, Grandpa? You up.
No, the only texts he gets from his wife now are like, go let the dogs out. That's it.
Hey, you up? Now, after you've been married a long time, the only text you get back on is, when are you guys going to be done golfing?
That's right.
That's pretty funny. It's good times. I went to the doctor yesterday. I'm fine. It was just like I needed like to get my yearly checkup, so I got to go get blood today because I have to be fasted. So I'm gonna give blood. But the lady, she was like looking at my chart and she's like, "Oh, you're overdue for your tetanus shot." And I'm like, "Oh, well, I work with a bunch of unmedicated traders. I should get one of those." I don't know where they've been.
You definitely should. You definitely.
So I had to get a tetanus shot yesterday, and it hurt.
A tetanus shot? Why? Who gets a tetanus shot?
Every 10 years, you have to get a tetanus shot, and I hadn't gotten one since 2013. And I'm like, I'm glad you know that because I didn't know.
I haven't had a tetanus shot in 30 years at least.
Okay, well, you should, especially if you're gonna go to Mexico, you should get a tetanus shot. I'm not joking.
Why?
Because like you could step on a rusty nail and then it's lights out, game over for you. I don't know.
or you can eat one.
Yeah, I'm just saying, like.
Those rusty nails you buy every day.
Of all the things that are going to do me in, it's not of all the things that could take me out. It's not going to be a rusty nail that I step on in Mexico.
Just like the market, you got to be prepared for the unpreparable.
Never say never. Actually, though, I'm surprised Case didn't make you get like all your shots updated to be near her baby.
Oh, I probably told her that I did.
But no, like your whooping cough and like some, there's like a bunch of other ones.
This is not a
No, I'm just saying if you have a newborn baby and like you don't want to like, because the baby's brand new. I don't know.
No, you're right. I had to do that with my grandson. Tom obviously doesn't care as much for his.
See, thank you.
This is the way that these kids become like less susceptible to all these things.
Literally not how the science works. Literally not at all.
The first thing that they feed kids nowadays, I had no idea, is peanut butter. They give you everything that you possibly could be allergic to. Peanut butter, mushrooms.
Yeah,
dairy.
Tracy's feeding her baby shrimp right now. Her new baby, Avery, so cute. Yeah. But she's giving it shrimp right now, and I'm like, really?
Right. So then the shellfish allergies
It goes full circle, Sosnoff. You know that.
Yeah.
It goes full circle.
Yeah. Once these kids eat everything when they're like, 6 months old, then they're fine.
Well, I told Tracy to take her baby to Red Lobster, get that new Mariner's Feast.
You know what? Red Lobster, I've only been twice. It's so wet, like, they've had it in water for so long. I don't think you'd be able to test the baby. It doesn't taste like anything.
Oh, you got it?
Not the Feast, and it's been years, but I've been to a Red Lobster. Yes.
Oh, I thought you went to get the new.
I've only been to Red Lobster once. I went once in my life. We were driving from me and one of our tech guys. We had to go do some event up in Detroit, and so we were driving. So we were like maybe halfway between Chicago and Detroit. So we stopped at Red Lobster. I'd never been to one before, and I go, "Oh, these biscuits aren't bad."
Oh, those Cheddar Bay biscuits. Ooh.
That's the highlight.
And that was the total highlight of the meal.
Yeah, but they have a millennial CEO right now, and he is turning things around.
It was downhill. Well, this was like 10 years ago or something.
Right,
it was downhill after the biscuits.
Yeah.
But can I say my favorite thing about going to Northwestern, like for checkups or lab work or whatever, is in the lobby of Northwestern. Not only is there a Stan's Donuts, but there's a Sweet Mandy B's bakery, which is my favorite bakery in Chicago. So after I got mutilated with a tetanus shot, I treated myself to a lemon bar.
Sweet. Nice.
I just I love how there's all this stuff that's bad for you in a building where they probably told you that you can't have this stuff anymore, but it's fine.
Mm-hmm. Do you know what? Lemon bars, very underrated.
Sweet Mandy B's makes the best lemon bar I've ever had in my, and I can't even eat the whole, it's so big, I can't even eat the whole thing.
You're right. Theirs is great.
That's what she said.
Theirs is absolutely great. And you know what? When you're there, when you go to where's there a Sweet Mandy B's?
In the lobby at 259 Erie in the Northwestern, whatever that pavilion is, there's a Sweet Mandy B's. It's actually right next to a Cava.
So Sweet Mandy B's makes the best chocolate and butterscotch pudding you've ever had.
Oh, yeah. I love their cupcakes. I get my birthday cakes from there. I love everything. I love you, sweet Mandy Beast. Anyway, hey, we got a great show for you today. Whether you have a sweet tooth or not, it is a thrilling Thursday here at Tasty Live. Tom and Bat are gearing up to be on the road, so it's going to be the Millennial Takeover tomorrow. Stay tuned for Mike Butler, Nick Batista, and your girl. We're going to be holding it down while the Boomers are away, so that's going to be fun. At the top of the 8 o'clock hour, though, fan favorite trades from the research team. They're going to present their trade idea to Tom and Bat. That's at 8 o'clock. 8:40. Hear me out. Dylan is up for the rotation in a hastily assembled segment because Tom forgot. So
I did not forget. Oh my God, you are so unbelievable.
You did forget with a panicked phone call to the producer of that segment early this morning.
Oh my God.
He
all the business.
He didn't forget. He's just testing out the fire drill. That's
right. Okay. Cool. And then we got Big Boy Scotty S live from the trade desk at around 9:30. Oh, I'm sorry, market measures at 9 o'clock. Part of our Zero DTE series, testing momentum in Zero DTEs. And note, tomorrow's hashtag Fan Friday. Mikey and Nikki will be doing your trade idea. So if you have a trade idea for Mike and Nick, knowing that they don't have Sosnoff style money, they would love your trade ideas. And they're going to put on your trades tomorrow. But hey, in the meantime, in between time, let's get this show on the road. Hit me with my theme music.
Our leading story, breaking news.
Coming
across the wire. Leading story.
Top story.
Just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's July the 24th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
New earnings, Mr. Bat. I have all the ones from last night.
Really nothing. NEM.
NEM? Anti-M? Anti-M?
Yeah.
First headline of the day, Goldman Sachs and Bank BNY are joining forces to transform the $7.1 trillion money market industry with digital tokens. Goldman Sachs and the Bank of New York Mellon have created the ability for institutional investors to purchase tokenized money market funds. Do you care?
Do you care, Sosnoff?
And what purpose does this serve?
It's actually the purpose it serves is only to bring them into the digital. It's more PR than it is anything else. I mean, to be fair, they've had money market funds, tokenized digital money market funds have already been in existence. They're at BlackRock has them already. They've had them for probably the last year. So they're, this is not something new. I mean, these guys, they already exist. So I think it's more a question of playing catch up and just having, first of all, I'm not sure exactly who uses digitized money market funds, but I can see
institutional investors.
Right. And I can see a purpose for it because it gets you, into just it's like a different process. I don't think the rates are any different, but it can make a difference for like speed and international customers, stuff like that. But like I said, I think that BlackRock was the first about a year ago. I want to say it was almost a year ago. And so they've been around. I think Goldman and BNY are just catching up.
Okay. More than $1 trillion in U.S. short-term bills are expected to flood the market over the next 1.5 years following the increase in the debt ceiling. The Treasury is going to replenish its diminished cash balance while funding the country's huge fiscal deficit. As we're opening the spigots, what do you expect to see on the retail side in terms of trading treasuries?
So bonds are under 113, 112, or 113 even right now. They just traded under 113 a moment ago.
I bought some this morning at 113. I was surprised because last night they were actually higher. They traded up to 113, like 14, 15 in that range.
113, 17, Sosno.
Oh, 17. Okay, I didn't see that. I bought some this morning.
At
really
04.
Early, at 04. I also
really early, like at 3 a.m., Sosnoff.
Yeah, I know.
You have a short urethra?
No, I was up early. I don't know. Don't ask. Anyway,
little something before you went to Denver. Is that what we're talking about?
It's Wordle. All he was doing was Wordle. It's not that serious. It's Wordle. It's Wordle.
And I also bought some notes. I bought some notes at 110.29.5.
You are 100% correct.
So about 2.5 points higher. So yeah, I mean, I paid up a little bit just because I had sold stuff out the last couple of days. So I didn't reload yet, but I'm starting to reload here. I like the notes around 110, and I like bonds, obviously under 113, but I haven't bought any more yet.
Okay. In other news, the yen and the euro were up in overnight trading, lifted by progress on trade. The euro crept towards its highest level in nearly 4 years, while the yen held to gains following more progress on trade deals between the U.S. and its largest trading partners. Let's talk yen euro.
Well, the euro and yen
are actually right now, pretty much.
They're both down.
Okay, well, at the time when I pulled this.
Okay, no, I understand. They're both down this morning. The dollar's a little higher, actually. We're playing long dollar versus euro and short dollar versus yen.
Okay.
So I have my positions kind of offset each other. I am short euro, long yen.
So you found more sophisticated ways to lose your money.
Yes.
Well,
yes.
It's working this morning, girl. Be careful. It's working.
Okay, honey. Okay, diva. Hey, in other news, gold may be in a new paradigm as the metal continues to soar in 2025. Did you know over the last 20 years, gold has outperformed the S&P by a wide margin? Over the last 20 years, DataTrek research notes that gold has returned 616% over the last 20 years, while the S&P only gained 421%. Are you surprised by this?
I mean, not really, because in the mid 90s, gold got down to $270, so under $270, got down to like $220. So, I mean, gold was in crash mode and it's been rallying now for the last 30 years straight.
Okay.
We used to trade gold very actively, and now we trade it obviously a lot less actively. At $270, it was very interesting to me. At $3,500, it's a lot less interesting. Gold's up on. There's a lot of people out there that are throwing around ideas that gold is going to be repriced. Holdings, gold storage, and which would add some value to it, and it would also serve as a different kind of gold would be a different kind of like collateralized asset if they repriced it. So
isn't this just the plot to Goldfinger?
Well, there's just no, not really, but there is a lot of. Have you seen Goldfinger, by the way? That'd be
it's my favorite James Bond movie.
Really? I'm surprised.
That whole no, Mr. Bond, I expect you to die.
That can't hold a test of time. No way.
It doesn't.
Pussy
really.
Galore? You shut your mouth right now. Icon, dude.
Well, I can tell you, Pussy Galore doesn't hold a test of time.
It is a great movie, but I don't think
because he was going to make all the gold in Fort Knox radioactive. Don't you remember? It's such a good movie.
Yeah, but anyway, so the talk of repricing gold, just all that chatter on the street, I think has really put a solid kind of like a support for gold. But it's been down the last couple of days. It was down almost 40 yesterday. It's down 30 more today. So it's dropped, $75 the last 2 days.
Are you doing anything in that gold silver ratio? No. Okay. All right.
No, we have positions on in gold. We have positions on in silver, but they're half the size that they were a couple months ago.
Gold down 32, silver down 14, both a little bit sliding here today, but silver's had a nice run. Gold's been going more sideways at the high end of its range.
Also, ECB is holding rates. So just that, I saw that. So good job. Hey, let's get to all the earnings from last night. So many. Let's start with Alphabet, aka Google. They reported second quarter earnings results that beat revenue and earnings. The company increased their capex for 2025 to $85 billion. That's up $10 billion from February due to strong and growing demand for cloud products and services. Google's revenue came in at an eye-watering $96.43 billion. YouTube, it alone brought in $10 billion of ad revenue. Just absolutely wild. What are you doing in Google?
Yeah, they said option trades today, every Tuesday and Thursday was the big, boost for them at Google.
Okay.
I mean, we sold a pretty wide strangle, and I think that this move up $7 is well inside the expected move.
Yeah, you should be gold. You should be golden.
Yeah,
You'd want more of that position, I think, if you had the chance to put it on again.
Yes, I mean,
it's only up $7. Oh, that's great.
Yeah, 197 and change. Yes.
Okay. In other earnings, Tesla reports a sales miss as their auto revenue dropped for a second straight quarter. Tesla brought in revenue of $22.50 billion versus $22.74. Shares dipped more than 4% after hours, following remarks from CEO Elon Musk. He says, we probably could have a few rough quarters. I'm not saying that we will, but we could. What are you doing in Tesla?
We sold...
Down 20.
It's down 20. The expected move was 23 up or down. We sold some July premium that expires tomorrow, so I think
well outside that expected move.
We sold it outside of 2 times the expected move. Right. So I think we're going to be pretty golden.
Nice. All right, let's see if we can keep the hits coming. IBM shares.
They stop here.
All right. Well, IBM on paper delivered stronger results than expected and raised their forecast for full year free cash flow. Street still hated it. Revenue and gross margin were below consensus, but IBM shares have outperformed the S&P by a significant margin this year. IBM reported revenue came in at $16.98 billion versus $16.59. Big Blue, how'd you do?
Probably not great. We have an August strangle. I mean, we're short the 55 puts, and the stock last time I looked was around 66. Let me see where it is.
64 now.
Yeah, so it's a pretty big. It's the expected move I think was $13, and it's well outside that. I think it's 22. So I expect that trade to be a small loser.
Why do you think IBM was like the outlier here?
The funny thing about IBM was when the number came out yesterday, the stock actually jumped $5.
Huh.
Like the Autobots, everybody thinks, oh my God, those things are so good. The Autobots took the stock up $5, and then it just completely sold off.
And then the market makers took it lower.
Yeah, and then so now it's down 22. I don't think anybody that was trading IBM after hours made any money. That's for sure.
Okay, well, we'll see what happens when the market opens. But poor IBM. Also on the womp womp train, Chipotle stock tumbled 9% after the chain cut same-store sales forecast. The company's earnings were in line with expectations, but the company cut its forecast for same-store sales growth for the full year after their revenue fell short of estimates. They said that their customers were getting hit in the wallets and were reducing visits to stores, but that sales trends are turning around, and starting in June, customers had been returning to Chipotle restaurants. Chipotle revenue came in at $3.06 billion versus $3.11 billion expected. CMG.
Yeah, that's going to be my worst trade. I thought CMG, it's a cheap stock. I thought CMG was like, I don't know. I figured it was I thought it was already on its butt, and I thought under 50 would be a decent buy. So I sold the 49. Now it's going to
be a really good buy at 46 and change.
Probably going to be lower than that. I sold the 49 puts in July and August. That's going to be my worst trade for earnings.
Okay.
You know what? Serve CMG right. I know you probably haven't had it in a while, Sadnov, but it's gone downhill, man.
I have not had it in like.
It's good. I had it on Monday. I had it on Monday after the gym.
I got it. I'm sorry. I have to be with the bat on this one. Last time I had it, it was lukewarm and gross.
You guys just don't know what to order.
I know what to order there. I got the
I don't think you do.
You know what? You know what I don't like? It's
what don't you like?
When you order a bowl, there's like a lot of like water or whatever it is. Like, just, I don't know. It's just, there's too much. It's too
liquidy.
Yeah, liquidy.
What are you ordering that there's water in there?
I don't know. It just is. Everything they do.
See, you don't know how to order. Anyway.
Oh my God.
Southwest also had earnings. Southwest profit drops, but the airline says that travel demand has stabilized. Domestic coach class travel demand has come in weaker than airline executives expected this year. Southwest brought in revenue of $7.24 billion versus $7.3 expected. Also, American, I think, came out this morning, which I didn't have it. So what'd you do in the airlines?
They're both
down a buck or something.
American's down like 70 cents. Yeah, 80 cents. And Southwest is down $1.50 or something.
Okay.
So they didn't like either of them.
Well, it'd be interesting to see Southwest going forward because now all of its changes are going to start to take effect with the seat selection and the paying for your checked bags and all that. I'm just curious to see how it's going to affect Southwest's bottom line.
You know, I haven't flown Southwest in a while. I used to fly them. They were the official airline. Well, they were the official. Now. Yeah, I'm bougie now. They were the official airline of every business we ever built. Southwest and American Transair, ATA. When you're on ATA, you're on vacation. Sure. Those were the official airlines of Thinkorswim and early Tasty. Now we're bougie.
Now you're bougie.
Remember whichever's convenient, but the lowest price.
Remember a Midwest Express? Oh man, the chocolate chip cookies.
Midwest Express was a Milwaukee airline.
I know, but I was living in Wisconsin at the time, and I flew Midwest Express all the time.
But you could only fly Midwest Express to Bradley, Milwaukee's airport. They didn't fly. They flew from New York. New York.
That's not the airport. General Mitchell is the airport.
Oh, General Mitchell. Right. Bradley's Hartford or something. Anyway, they would fly to Mitchell Airport and from New York, but they would fly, if I remember correctly, they would fly the old, oh my God, what plane did they fly? They flew like the I want to say the old McDonnell Douglas, like the MD-80s, you know? So the great thing about Midwest Express was they were 2 and 2, if you remember, the entire plane.
No, I don't remember, nerd.
They did not, every other airline that flew that plane, like American flew that same plane, they were 3 and 3.
Oh, but the seats were wide and comfy. Yes, I do remember that. It was a nice airline. Yeah.
It was a great airline.
Yeah.
Yeah.
All right. Memories. Hey, Intel is up, I think, with earnings tonight, Bat. I don't know if you had it on your list. Are Intel's earnings today?
Oh,
yes, they are tonight.
I did not. Yeah, you are 100% correct. Intel has.
Intel's chip contracting plan is going to be in the spotlight. Faced with slumping quarterly sales and burgeoning loss, Intel shareholders want to know what the new CEO's plans are for the chip maker's nascent contract manufacturing business. What are you planning to do in Intel?
I'm selling puts in there, no matter what.
Okay.
Wow.
Nice to have that kind of money.
Well, it's a cheap stock. I'm not getting
I was
caught.
Say it's a cheap stock.
All right. Well, good luck with that. Hey, this is interesting. Apple is debuting an Apple Care One service that would offer consumers protection for 3 Apple devices for just $19.99 a month. So you would cover multiple devices for a single monthly rate. It covers battery replacements, drops, spills, loss, theft. I know you don't believe in insurance or protection plans of any kind, but I have Apple Care, and they replaced my phone when my phone decided to yeet itself off of my motorcycle onto the Illinois toll road, and then I had to run onto the toll road to get my phone. But then Apple replaced my phone for free.
Wow, look at that.
I do not buy any kind of insurance unless I'm required by law.
What are you doing in Apple? This is a cool plan, especially if you've got
Apple looks unchanged, maybe down a dime or something like that.
That is
Market's
the dumbest
unchanged.
plan. Anything that they're willing to sell you is not a good deal.
That is a good, if you understand, like, my iPhone was like well over $1,000, and I was like, I should insure this in case something happens, and something
So
did
you're going
happen.
to pay $250 a year to insure a $1,000 investment?
Yeah, for three, whatever, if it's 3 devices, because that's not how much I pay now, because I only pay like, I don't know how much it is a year, but the math was mathing. I think it's only like $9 or something. I think it's like $9 a month.
The math does not work. It doesn't. There's
For
no
3 devices, yes, it does. If you have an expensive Mac Studio display or laptop or computer, and your kid spills soda on it, yeah, that.
Do you have kids?
No, I do not. But I'm saying, I mean, I work with you. I spill water on my computer, so I'm my own kid. I'm going to keep it moving. John, I'm skipping a story here. Uber is going to let women drivers and riders request to avoid being paired with men starting next month. Yeah. How do I do this also in real life? No. Uber's launching a new feature in the U.S. that pairs women drivers with women riders. They will pilot the program in Los Angeles, San Francisco, and Detroit starting next month. Uber and Lyft have already rolled out similar programs in different countries, but especially late at night, if you might just feel more comfortable having a female driver. So, what are you doing in Uber? I don't know why you're laughing. I don't know why the safety of women is hilarious to you.
It's not. I'm just thinking about how far you can take this thing.
Yeah.
You know, like it's limitless. Yeah.
Yeah.
Okay.
Uber the stock.
$90 and change, up about $1 or so.
Oh, okay. Oh, that's pretty.
Yeah, look at that.
Hey, I'm skipping another story. I saw this because Jamal posted it on his Twitter. If you're not following Jamal, it's Jamal Chandler on Twitter. He's a good Twitter follow. But I saw this and I was like, oh, I'm going to steal this for news. Rumors are swirling that Jeff Bezos might buy CNBC. Tom, you are on notice.
Hold it. CNBC. I thought that's owned by GE, right?
No, it's Comcast Universal, but Comcast is splitting smaller divisions of its cable companies up into smaller bits. And so it is feasible. It's on the table. So it was spun off by NBC Universal Comcast earlier this year. And so it's not, but yeah, GE, that was a long time ago. It's not owned by GE anymore.
Yeah.
But he also owns the Washington Post, so it could align with his interests. Again, this is according to industry insiders. It hasn't been verified. But what do you think would materially change if Bezos owned CNBC? Not that you even need it because you have tastylive. So
maybe they'll take it off the air, put it to its depth.
I don't know what would materially change. I doubt that he would be buying it to change anything materially.
I think he would.
Really? I don't think so.
I mean, he made changes at the Washington Post about what they can and can't cover in their opinion sections.
Yeah, well, CNBC they don't have too much political stuff. I mean, they've got Sorkin and who's the main guy? I forgot. Who's the guy in the morning?
I don't watch CNBC.
Oh, I just forgot the guy. Those two go at it, but they,
Sure.
It's fine. I think that's healthy on there.
Rebecca Quick and Santelli.
No, not Rebecca.
Kernan?
Yeah, Joe Kernan. So you got Kernan's a conservative, Sorkin's a liberal. I think those two go at it. I think it's actually good. I don't think that everybody else, I don't think there's too much politics other than that on that network. So,
Well, I'm skipping another story. Breaking news. Congratulations, because MLB dignitaries are headed to Chicago next month to officially announce, but I have the inside track here, Wrigley Field is going to host the 2027 MLB All-Star Game. You should get on the Kennedy now. This is going to be a nightmare. It's just a nightmare.
And let me just tell you right now that the at the Tasty Trade logo in center field will be prominent. They cannot.
I don't
take
think
that
we
down.
can afford this. I think they're going to change their rates, honey, and I think you're going to be sad.
Oh no! We signed.
We're locked in.
We're locked in. We signed a multi-year. We have a 3-year deal with them. We get the All-Star game. We're not on the mound, of course.
Okay.
But we're in center field and we're all over the stadium.
Wow. Will we have a private suite?
We will not.
Oh, boo.
I don't even know if we'll have tickets, but
This job sucks.
but we will be prominently displayed in center field.
Okay. Well, I will take it. And that's exciting. This is actually very, very cool. So it will be officially announced in early August, but the Cubs are going to host the All-Star game. So congratulations to the Cubs. That's very exciting. I'm skipping a story here, John. ESPN is close to acquisition of the NFL Network and NFL Red Zone. The $2 billion deal is nearing completion, and if completed, ESPN plans to have a new package as part of its new era, and it would be a direct-to-consumer streaming product this fall. Basically, they were touting it as just 8 hours of commercial-free football programming, and people were like, no one wants that much Pat McAfee. But I love Pat McAfee. He's a Swiftie, so I love you, Pat. What do you think about this? ESPN going to acquire NFL Network, Red Zone?
I mean, I guess I'm fine with it. I don't know.
I don't more power to them.
I don't really watch the Red Zone, but I heard it's great.
All right. Well, ESPN owned by Disney, Bat. What are you doing in Disney?
Oh, good question. Something I haven't traded in some time. Disney Ivy rank of 30 has earnings August 6th, is sitting at around 122.90, basically unchanged. Market's basically unchanged. Even the S&P just turned red.
Nice. All right. Finally today, for my viral video of the day, I'm starting to see more of these trickle out into social media. These are videos that have probably been posted a while ago, but they're coming back in a loving tribute to metal legend Ozzy Osbourne himself. Support music education in public schools. Check out these school kids. This is awesome. Watch this.
Very good.
Don't ruin it.
Anyway, they're just the cutest little kiddos. Support arts in the public schools, you monsters. Anyway, hey, that's my time. Bat, what's coming up next?
Good job out of you. Good job out of them. We're going to take a good 90-second break and come back with more Tasty Live after this with Confirm and Send. We'll be right back.
Safe travels. Don't forget my shirt.
Thank you.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I
well-
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we do, let's take a look at the market. Even the S&P is completely unchanged. Sadnov, as foretold. NASDAQ up 37, Russell down 9, and the Dow down 325. The Dow and the Russell trying to take us lower. NASDAQ, which has been the weakest of the group as of late, ever so slightly, unchanged, slightly higher. Even the S&P is unchanged for sure. Volatility up 20 cents at 18.19 or 18.15, but you can see here down near its lows. You might notice that number is $1 higher or so than yesterday. That's because those futures have rolled. Still, you can see here on the chart, the lowest they've been in quite some time. Bonds also trading lower side of 112.24. Explain to me.
I can't. I don't like it.
Good job out of you. Good job.
They tried to rally up. I mean, I'm glad we took profits the last couple of days, but I'm reloading. I'm reloading here a little bit. Haven't bought any of the 12 handle.
Bonds and notes.
Haven't bought any of the 12 handle. Haven't bought any notes down here. I'm going to see if they get a little bit lower. I don't know. At least I know the first trade we're going to make tomorrow.
Yes, on the show in Denver. Bitcoin 119.5. Ethereum hanging in there at 36.30. Oil up 71 cents in a tight range. Gold down 41 after BAT on Tuesday. Sold calls. That is correct. That's option trades today. Don't talk about my Costco trade because Costco is a pig. Unfortunately, we're a little bit long Costco. Anyway, what was on earnings? CMG is going to be the worst one for Tom. Hopefully it's a good one for you. CMG trading under 46, down around 7.5 right now. Tesla was down around 20 early on. It's down around 21 right now. IBM was closer to 17 or so. It's right there, right now. IBM also everything's down south of except Google. Google's the only bucker to the upside, 197, up around $7.
Yeah,
or
it's so funny because I thought that last night the Nasdaq and the S&Ps were so damn strong the whole night, and IBM was down last night. Tesla was down last night. It wasn't like these stocks were surprising anybody this morning.
Right.
And Google wasn't up much at all. And you know what? It's kind of weird, but they just the S&Ps have been, Nasdaq's been strong, S&Ps have been strong. I sold some S&Ps this morning up 8, and I just covered them, so that was a good trade. But the bonds were the bad trade. I don't know. We'll see what happens. I mean, they could roll them over here today. They could.
That would be a first. It'd be a first in the last 3 weeks. But sure, they could.
Yeah, it would be a first. But we're on the road. Everything makes sense.
Everything does make sense. Everything does make sense. Yes.
Yeah, we're on the road. It makes sense. That's all I got. Let's see.
I didn't want to say to Vanetta with that Uber and everything like that, where the women can pick a women driver. Are men going to be allowed to pick a good driver, or do they have to be random?
You can go down a really
I wouldn't do it with her on the show. I mean,
you can go down a really horrible rabbit hole here, is what I'm going to tell you. It can go way beyond men, women, you don't want to go here, Mr. Batista.
No, I don't. I'm sorry I even mentioned it.
You do not want to go here. I thought enough was enough when they said you can pick an electric car.
Yes, that's true. Yeah.
But yeah, no, you don't want to go down this rabbit hole. Trust me. All right, let's see what we got here. We got a bunch of stuff going on. All right, let's do this. Come on. 7:56. Thanks for spending the morning with us. The Bat and I are going to be on till just after 9 o'clock today. Then Tony, myself, and Dylan, we're going to turn it over to Mikey and Nikki, and they're going to take you home today with market measure. We're going to do some zero DTs, and then they're going to bring Scott on and wrap up the show. And then they'll do the show tomorrow morning, and Bat and I will be on the road. So we'll be here with you for the next hour. We're going to do Hear Me Out. We're going to do trades from the research team and a little confirm and send. All right. You ready, Mr. Batista?
I'm ready.
I am ready. I had a quick question regarding contract selection. Given that the standard monthly contracts stand at 22 DTE for August, tomorrow's 21 DTE, obviously, that's when we roll, and 57 days for September, which contract would you recommend if I'm following the 30 to 45 day methodology?
I would, and I'm assuming here that you're talking about equities. I would be going to September for sure. And I only say, I assume you're talking about equities here because I would trade whatever options are represented by the future, that's the front month. So for equities, it's definitely September, 57 days. I probably made it more complicated than it had to be. It was an easy answer, September.
Yeah, I mean, this is, it doesn't matter. The default, once you get inside of like 28 or 30 days, the default's always to the next month out for us. Like it's not even, there's the only time we would trade the 22 days is if we were doing earnings, if we wanted to trade, we were playing for a move just today, like a 1 day move, that kind of stuff. But anything else, if we're playing our normal methodology, we're in September right now, and we started rolling yesterday. We'll roll a little bit more today. We'll roll some tomorrow, but we'll be all in September by the end of Monday.
Beautiful.
Let's go to the next slide. I entered a vertical spread in live cattle a week ago. Why does the P&L vary overnight from what happens during the day? The numbers seem to fluctuate quite a bit overnight. I assume that the market is closed overnight, but what is Tasty tracking?
You know what? I'm going to take a guess here. It's just the wide markets, the bid ask overnight on those options has to be.
It's exactly what it is.
Yeah.
The CME publishes prices 24 24 hours a day, 5 days a week. And sometimes I'm not sure when cattle opens overnight, but it opens at some time overnight. I just don't know. I've never traded it in the night session, so I'm not sure what the cattle has weird hours. But when it's opened, there's nobody trades those options at night, but the CME just opens up everything. So you have this, like you might have, I'm guessing like a $5 or $10 wide market, and our software picks up the mid price, and that's why every time the market changes, your P&L is going to be off. It's going to be wrong. But there's nothing we can do. I mean, we've asked the CME to we've asked them to not have things that they're not making markets in overnight because it messes up customer P&L, or we've asked them to publish a theoretical value so that people get a reasonable P&L, but they don't think it's the right thing to do. We've been arguing about it for years. Unfortunately, I wish we had a button that said turn off the overnight updates, but there isn't. Okay, so that's all it is. It's just wide markets. We can't control it. Let's go next slide. Can you explain why the VIX continues to go lower in such a risk-on environment? And when will it turn around? What is your opinion on how high the VIX can possibly go?
I mean, I guess it's been in the 80s. I mean, so I guess that's how high it could go. That's because that's the old highs. I don't think we'll ever see that again. Knock on wood, we don't want to see that. I mean, want to see elevated volatility by contracting volatility and back and forth markets, but you don't want to see an 80s type crash scenario with volatility. So that's my opinion on where it could go. Why is it so low? Well, you know what? You may think it's a risk-on environment, but the market's saying it's a risk-off environment, and you got to treat what's in front of you, not what you're really thinking.
Listen. I have two schools of thought on this. The first one is, I think the VIX is relatively high compared to, given the fact that the market's at all-time highs. Every time we've seen an all-time high in the past, the VIX has been lower than this. So I think the VIX is actually a little bit high. I mean, on a
ever so slightly. I mean, it's
ever
not
so slightly.
big.
But I also think that, when you think about volatility, the VIX hasn't had a bounce in a long time now. We've been, for the last month and a half, it's been getting crapped on every day. I mean, I think the VIX could bounce a little bit here. I'm kind of in the same school as you, but you could go broke waiting for the VIX to bounce. It's a hard one.
And it's so expensive to inventory, right? I mean, it's $1,000 or more.
Oh yeah.
In the
It's
VIX option.
$1,000 or $2,000 a month to inventory VIX. It's really expensive. So how high can the VIX go? Yeah, the VIX could go realistically. The VIX has, I think, 7 or 8 times in the last 35 years gone over 35.
Mm-hmm.
I mean, 80's kind of like a once in 2 decades, but over 35 to 40 in that range. I think it's happened 8 times in 35 years. So that gives you an idea. So I would think mid to high 20s is probably realistic. Let's go next slide.
Yeah.
Statistically, options are assigned perhaps 10% of the time, and that seems almost high in my own experience. What is your opinion? What, in your opinion, is a good ratio of open naked puts to cash and or buying power? In other words, how much option buying power should one use? I realize it's a matter of risk tolerance and opinion, but would value your thoughts.
Are assigned perhaps 10% of the time. Well, look, if we're staying mechanical here and rolling at 21 days, this number goes from 10% close to zero. If you're staying mechanical, this 10% number just means that if it's true, I don't even know if it's true. This 10% number would represent those options that are in the money, probably close to or at expiration. So I don't have any opinion on it or think that it's high or low or anything else like that. A good ratio for naked puts to cash and buying power. I mean, it depends on the products you're trading. $10, $20, $30 stocks versus $300, $400, $500 stocks. You got to keep your buying power in check. So we look to use about 1 to 3% in any one position. So that's your answer. And
Yeah,
depending on how bullish you are too.
I mean, honestly, for us, 10% assignment would be incredibly huge. I mean, we're
it would. I've never experienced it in my entire trading career.
Yeah,
40
I mean,
years trading options.
We roll stuff really early. If we're 1%, I'd be shocked.
It would be shocking. It would be.
Yeah.
And
I think,
and the one, if it was at 1%, 3/4 of that would be expected or more.
I am going to say that my guess is, yeah, we're way under 1%. And now again, we roll early, but a good ratio of open naked puts to cash. I mean, if you're using more than 50 or 60% of your option buying power, which is essentially your cash, then you're probably kind of maxing out. I wouldn't use much more than that. It has nothing to do with notional. It has to do with option buying power. Stay around 50 to 60% and you'll be fine. Let's go next slide. What percentage of being a good trader is gut instinct? I know it's an impossible question, but I am always questioning my trade decisions. You're not alone, by the way.
Yeah, I don't know how to answer this. I'm gonna tell you that every trade I make is gut instinct. I mean mechanical, but gut instinct. I don't know. You have to be confident in every trade you make. So I'm gonna say every trade I make has gut instinct as a component to it.
You know what's so funny about this? What's so good about this question is that I know exactly where you're coming from, because every trader I've ever met thinks that their gut instinct, how could their gut instinct be so wrong? Trading is the only thing. It reminds me of the Seinfeld episode, with if everything you do is, how could everything you do possibly be wrong? Then why not do the opposite of everything you do? Just, play the George Costanza role. I think every single trader ever has always said, I can't believe, my gut instinct's so good, but yet with trading it's so bad. I think that, like Tony said, everything we do is kind of gut instinct based, but then that's why we built the Tasty mechanics, because we took out a lot of the guesswork and we made as much of it as mechanical as possible. Like what stock you choose, what stock you choose to trade and that kind of stuff, that has to be gut. But but we'll base it on high implied volatility, but you might have 5 stocks with high implied volatility. So you got to pick the one that you think is, maybe most overbought, most oversold, most interesting to trade, most liquid, whatever it is. Sure, I mean, there's a lot of mechanics to this. The more mechanics, the less we rely on gut.
But the less gut has a bearing on it, right?
You would be surprised. The more mechanical you are, the better your gut instinct gets.
Because you're just following the math.
Yeah, you're right. You're just following the math. Let's go to the last slide. I did a covered call, and the call was breached in just one day.
Good for you. That's amazing. You should do that every time.
My question is now what? Do I just sit, roll, or close? The call still has a lot of extrinsic, so closing doesn't seem to make sense to me. But doing nothing also seems like taking a lot of directional risk. Does that mean I should risk it? Is the answer based on how much time is left, or how badly the call has been breached?
Okay. First, a high-class problem. It's wonderful that this happened, and you have less risk. If you sold an out-of-the-money option, let's just say 30 delta, you had 70 deltas of risk. If you're now in the money, let's say that option has 70 delta, you have 30 deltas of risk. And if it has a lot of extrinsic value, I would probably sit with that option. Now, if you're more bullish or equally as bullish as you were before, and there's plenty of time in the front month that you're in, say you put it on with 45-ish days and there's 35-ish days right now, and you don't want to roll to the back month, you can buy a vertical spread, buy back your short option that's in the money and sell an option that's at the money or out of the money. Collect more, do that for a debit, but have more extrinsic value on the out of the money option and more delta and more risk, if that's what you want to do. To answer your question, I'd probably sit or close it and pat myself on the back either way.
My answer to this customer was, listen, our default is always close. I mean, that's the easiest default. Why torture yourself? You made a great trade. Like instead of having to wait a week, a month, whatever, you made a one-day trade. It's awesome. You know what? Take your profit. And if you want to stay in that stock because you're still bullish, turn around, sell an out-of-the-money put, and you have the same synthetic position on, you're using less capital, and you have a higher probability of profit.
Yep, 100%. Good job out of you, Sosnoff. Good job out of the team. We're going to take a good 90-second break and come back with a good option jive. We'll be back in 90 seconds. Take it off.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, like I said, trades to the research team. Who is our first researcher? Oh, my man, you, my friend?
I'm doing well. How are you guys?
Doing great. Thank you for asking. Appreciate it. Good to see you, Thomas. What do you got for us today?
Always good to be here. Tasty Nation, what's up? I do have some good news, maybe some bad news, depending on who you are. I am getting a haircut tomorrow. So the hair is going to go. Yeah.
What is it? Was it picture day at school next week?
That is a good point. There is headshots coming up for the interns, I think, next Tuesday. So it's definitely for that.
So
and then
are
the
you
hair's
gonna
growing
keep the
out.
cheddar flow, or are you gonna change it?
I don't know. I'm debating. I kind of want to go short. Which brings me a new question. Tom, how often do you get your hair cut?
Never.
He's lying. He's lying. His wife was a beautician back in the day, and she is the only one that gets to cut his hair. Oh!
I had a similar thing. My aunt would cut my hair. So.
Well, hopefully you're not doing those things with your aunt that Tom's trying to do with his wife, but whatever.
No. All right, well, let's get focused here. Let's talk about IBIT. So recently, IBIT has had a lot of positive price action going on. So I'm feeling kind of neutral, a little bearish on the company. And so what's my favorite trade to do? I like to do a call front ratio spread. High pop, 80% pop on this call front ratio spread. We're looking at an IV rank currently at 41%, with IBIT trading right now at $67.29 at the top part of its range. So for $1.34, you can buy the 40 Delta strike, which is at the $72 strike. You can sell 2 calls at the 30 Delta. And what you have here is this $1.34 maximum profit collection, a little bit on the bull side for $4.34, with a buying power reduction of 2,442. So what do you guys think about this trade?
Does IBIT have heightened requirements, Tony? I'm not sure.
For naked options, you're talking about?
Yeah.
Let's.
What are you doing this, Thomas? You doing this in SEP or August?
Oh, my apologies. Yeah, I'm doing this on the September 19th contract, so 57 days from now. There is some volatility skew on the options chain, so doing it on the call side allows you to kind of widen up the front ratio spread.
Yeah.
It's about $2,700 to sell at the money options. So that I think that's a little heightened.
Yeah, I think it's a little heightened. Anyway, I covered our naked short calls yesterday in IBIT, so I think it's a fun one. I'm going to widen the strikes out though. I like the 72.77 for a 50-cent credit.
Yeah, Nicky actually, I just talked to him about this trade prior to getting on the show. He proposed even selling a put on the other side. I think it's the $60 strike.
No,
getting like this kind of strangle put. Yeah, sure.
I don't like it with the put. I like the 72.77 for 50-cent credit. Let's see what happens.
Let's see it.
All right, I got it. I'm working it.
Good luck with that then.
Thank you for having me. Good job out of you, Thomas. Good job. I can't wait to see the new due when it comes. So
don't do
change,
it, dude.
have fun.
Don't do it. Don't do it.
I would get tips. I would get diet, short and diet.
No tips. No tips.
Who's our next researcher? That's right.
That's right. Tony's favorite theme
What's
song,
up, Jaws?
the Jaws song.
Yeah.
The Jaws song.
Good, my friend.
The chat's going
What you
absolutely
got for
wild
us?
with the comments you just made, Tony. So they say that's why you're not allowed on CNBC anymore. So
This is why I'm not allowed on CNBC, period. Tom was supposed to have me on CNBC, but then he said, well, I wasn't worthy enough. And it was a one-way ticket to Palookaville for me. And here I landed.
Learning how to
True
be on the
story.
show, learning how to keep the back and forth conversation going, and you scare the intern almost, with your comments.
True
okay?
story.
Like,
CNBC wanted me desperately, and then Saz said, no, you cannot have him. He's mine. He will be my biatch for the next 15 years.
No, actually, what they said was, don't you have anybody better? Don't you remember the real thing? They said, is that all you got? I'm like, oh God.
Is that all?
Yeah, it could have been a TV celebrity there, Jaws. But Tom said, nope, you must carry my bag for the next 15 years.
Hey, we got to move here. We're going to run out of time with all your babbling. Let's go. Go ahead.
All right, so hopefully a trade Tom likes a little bit more. Just your standard strangle in Oracle. One of the few high IVR stocks out right now. Obviously, its earnings are in September. So ways to go. Hopefully you take it off before
We do
management
not have
time.
an Oracle position on, surprisingly. No
Yeah.
Oracle position. What are you selling? The 210, 280?
210, 280. I tried to check the follow page just to see if you have a position on or not, and I was surprised you didn't. So yeah,
We do
210,
not.
280. It's around the 17 Delta Strangle. So.
17 Delta Strangle.
It's a 40% potential return on capital. It shows 994 as the price. So we'll see what it is at the open. But
I like it.
I don't usually go this high BPR, but go big or go home right now. Let's see how it goes.
Okay.
Yep.
We're going.
All right, enough out of you. Who's our next
Working it.
researcher?
Thanks, Shark.
Silky smooth himself. That's right. It's Gad. Gad in the house. What's up, my friend?
What's up, Tom and Tony?
Hello, Gad.
What's up? Do you mind if I move my jacket? You two have like t-shirts, so I don't know if my boss have t-shirts.
Yeah.
Me too.
Take it all off.
Yeah, like this. Sahil, take me. Oh, okay, good. Now we can talk. Oh, yeah.
All
All right. I like it. I like it. What you got for us?
So you got. I don't know if Tom C likes Lulu, but he used to hate
As a
Lulu.
company, I hate Lulu, but go ahead. I'm open. I'll trade it. I won't go in the store.
Okay, good. So I'm trading Lulu in SEP 19, of course. So I'm doing short term Ricardo. So, but it has earnings during September 4th, I guess.
Okay.
So you gotta
No
be
worries.
careful.
195, 185, 270.
280.
Hold it. Oh, I'm messed up. Okay, I'm looking at the wrong stock. No wonder. I'm looking at Oracle. I was looking at Oracle. Sorry about that.
Lulu, yeah.
195, 185.
195, 185. It's a little bit skew.
Yeah. 270, 280.
270, 280. Yeah.
Stock's doing what this morning? Stock's pretty much unchanged, right?
Unchanged, yeah, this morning.
Yeah. All right.
Yeah.
And what do you? Yeah. Okay. I like it. It's 1/3 the width of strikes. You got it.
1/3 strike. Yeah, gonna correct like $3. It's pretty much decent, like the amount we want, and IV rank is good.
Man, they killed this stock.
Sosnov, on the fact that you don't buy them, even though you have them in your closet. I know because I bought them for you.
They have myrtleized this stock, Tony.
Yeah.
All right, well, enough talking from you, Sosnov. We won't be able to finish the segment if you keep talking. Thanks, Kat. Appreciate your time.
Thank
Who
you,
is
thank you,
next?
man.
That's right. It's my man Kai. What's up?
Not much, not much. How are you doing?
Good.
I'm doing good. I'm doing good. How are you?
It's good, it's good. All right, I'm going to do something different. Earnings trade, 1 day. NEM, N-E-M.
It does have earnings. You are correct.
Yeah, so the price trading at the highs in the past 3 years. So I'm slightly short by selling a call side ratio spread, 2/1.
What strikes are you doing?
I put in yesterday 65, 67. So the stock is down $1. So it might be slightly different. So what I try to do is just make it $2 wide and try to collect credit. So no downside risk. That's it. That's all. Whatever the structure works, that's fine.
So you're doing July.
It's 1 day. Expire tomorrow. Because earnings today.
Got it. Yeah. All right. So you did the 65, 67. So you got to do the 64.
Probably 64, 66. Yeah.
Well, it's. Can you do this for a credit? Oh yeah, 2 cents.
I'll try.
Yeah, it's going to be tough.
Yeah.
All right, we'll try.
Close.
We'll try. Okay.
Beautiful.
Hoping
Who is
for
our
a little,
last researcher?
hoping for a
taking us
little
home?
up move, not a big up move.
No tie?
Yeah, I forgot it. I forgot
Is it still on the bedpost?
Yeah. It's over in that
Okay.
proximity.
Okay. All right. Well, who he got for us? Give us something good.
Okay, so I got Brazil today, EWZ. So I was looking at Brazil. Did you know that not only do they have street monkeys in some of the big cities, like performance monkeys, right? But they also like.
Be careful here. Be careful. Keep going.
Okay. Well, I was googling it, right? But also pizza with ketchup and mayo, and even sometimes mustard. It's pretty common. It doesn't, does it?
Yeah. Where's the stock back to 27? It's been there for a while, isn't it?
Yes. Yes. So I'm looking at this. This stock's been flat for a very long time. I'm looking at just a short Jade Lizard, right? So 27.28. I'm selling that put and selling the call, and then buying a 29 call on the upside. So the 28-29 call spread, and then
selling the 27 put, selling the 28 call, buying the 29 call.
That's right. Looks like you can do it here for over $1. The market's looks like it's kind of wide at the moment, but if you look at the open interest is fantastic in this stock. There's a lot of volumes in it. You could do it for a really nice buying power. It looks like about $580.
Yeah, it's just really hard to tell how these markets are so wide on the screen.
Exactly, but I was looking at the theoreticals too as well.
Okay. All right, I'll put it in. I just got to. Yeah. We'll tighten it up after the opening.
Of course.
Beautiful. Good job out of you. Good job out of the team. Wow. We're going to take a quick 90-second break and come back. Catch the opening bell. Go find your tie.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
Don't finish that song.
Yeah, what? That's Meg the Stallion. It's not safe for morning television.
Skinny waist,
body yada 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 body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bang, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Tomas, we are back, my friend. And you know what that means? The opening bell is imminent here in just a couple of seconds. Good thing you cut us short, Sadnov. You're a master at controlling time, Sosnoff. Even the S&P is up $6, trading closer to their highs than their lows, but a very tight range last night after earnings in Google and IBM and Tesla and CMG, which will be your problem. We really had a tight $20 range or less, actually, on the even the S&Ps. We're up 6 and change. NASDAQ up 66. The Russell's doing the opposite, down 10, and the Dow is down 300 and change. That's your weakest of the group. Sadnov, market's imminent. We'll let that open in just a moment here. Bonds are down 20 ticks to 112.23.
Ooh.
No bueno?
No bueno.
Yeah,
I didn't buy any more, but no bueno.
Yeah, I hear you. I hear you. All right. Well, now, there we go. We don't have to wait much longer at all, Sadnov. There's the opening bell. Volatility unchanged also. You got an unchanged mixed market, Thomas.
Unchanged mixed market.
We got an early ding in IBIT. There you go. You just got filled. You did a 1x2.
That was the trade from Thomas.
Trades from the research team. Yes.
I'm trying to
Even the
figure out when.
S&P's up 8, trading near their highs. What are you doing here?
Selling some futures.
Got it. It's pure directional play here, ladies and gentlemen. Sadnov putting it out there.
Ngawa.
We got the power. Really, Sadnov, that you're bringing back high school football circa 1973 right there.
Tesla down $25. Probably a surprise, right?
I would think so. Yeah, Tesla down $25 is a surprise. I mean, it opened closer to 332. It's trading closed at 332. It opened at 310. It's under 307.
IBM, definitely a surprise.
IBM down 22, I would say, is a surprise. That's what's hurting the Dow. Dow down 330 and change.
Yeah, down 22 is going to be a big one. Google, we are filled.
Even the S&P's up 1. Nice sale, Sadnov. You got them.
I did get them. Got them right where we want them.
Mm-hmm.
Yeah, this Tesla's not going to be as good as I thought. I thought it was going to be like a full winner.
Well, went a little bit too far here.
Yeah, they don't like it, man. Down 29.
No, they don't. No, they don't.
Oh, filled. All right, got lucky, got filled in Tesla. We made money, but not what I thought we were going to make. But it was about a 50% winner, and about a 50% winner. And Google, and IBM and CMG are going to be losers. We're going to go to IBM right now. I'm going to clean my deck. Go to IBM. We're going to have to roll down some calls in there. IBM down 26. Not pretty. I am short for 255.
What's holding up this market, Sadnov? What's holding up this market? You ask.
That's a damn
let
good
me
question.
answer that question for you, okay? Okay, thanks,
Did you
Pat.
think IBM was going to hit 255? Oh my God!
Not today. Meta up 9, Google up 6, Crowd up 2 and change, Amazon up $1.70 or so. The downside seems to be a lot stronger, but not represented by the even the S&Ps and the Nasdaq. Tesla down 27, IBM down 25, CMG down 7, UNH, you pig, down $6 and change. Coin down $2, Circle down 4 and change.
Yeah, UNH is not pretty. AVGO was up pretty big too.
AVGO up $3.34. Am I now reporting on $3 moves as pretty big? Okay, CNBC, whatever you say. No, you are right, Sadnov. It traded up to 291. It's 286 right now. Do you want to know why, Sadnov? Because markets are dynamic.
So we got a problem. Houston, in CMG.
Yeah, CMG, you can see here by its 13 or 14% move lower, $7 and change. Take that with your carne asada.
You know what's so funny about CMG is that
nothing right now.
Well, one of our good friends had the acronym CMG. And so every time I think
I completely forgot about that.
So
you just saw him.
I just played golf with him last weekend, and his acronym was CMG. And I forgot.
We could all these
and
years.
He used to work for me. So like, You know, like when I'm thinking, every time I think of Chipotle, I think of him.
Right.
You know, I can't get out of my head. Like, you know.
I don't blame you. You're right. I didn't put two and two together. Too bad Chipotle wasn't around back then. We could have called him Burrito or something.
Oh,
like
he
that.
definitely would have never chosen that acronym if he, you know, if it had been around then.
You ain't the taco I want to eat.
No, that's for dang sure. But the funniest thing is that, like, I could just hear people screaming across, "Hey, CMG!" Hey,
good.
pay attention, CMG.
Oh what do you think here, Thomas? We're holding up really on nothing here when you look at it.
I can't believe this boozer's still up.
Yeah.
It's one of those weird days. So I sold some calls in CMG. I rolled my calls down in IBM. So CMG is a legit loser. IBM is IBM's a small loser. CMG is a big loser because I decided to do something stupid in there. What was the other earnings place?
You had CMG, Tesla, IBM, Google,
Tesla.
American Airlines.
Tesla was a good size winner, and Google, how did we end up in there? Google was our best winner. The whole thing,
a big wash.
Just about a wash. Yeah. Trades from the research team. We filled IBIT. Nothing done in EWZ. Newmont Mining for the one dayer. Nothing done in there yet. Lululemon. Kind of feel like we should be filled there. Nothing done in Lululemon yet. And in Oracle, taking a look at what is the Oracle trade? It's a strangle. We're a little bit away. I think I put my market in too high. Lulu's the closest of all those.
Yeah, I mean, markets are a little bit tight. The markets are tighter now than they are pre-market.
Yeah. Worst performers for us so far this morning are
present company excluded.
CMG and bonds.
You knew that was going to be the problem.
I forgot about that. CMG and bonds. Best performers so far today, Google. So it's kind of an earnings morning for us.
Yes.
Surprisingly, it hasn't been an earnings morning. And tonight, what has earnings? Just, you said, just Intel?
Intel and NEM.
Oh, NEM. That's a tough one. Can we just take a quick look at Intel because we won't have time later. Intel is down 42 cents.
INTC with an IB rank of -9.
I guess.
Ugh.
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 Ugh. Let it go. Let it go. Directional play.
I gotta sell a couple puts in there. I gotta just sell some puts.
It's got to be a directional play.
It's got to be directional.
Yeah.
You got to sell the 22 puts and just hope you get lucky.
All
right, I'm off. I sold some in July. I'm working some in August, and I'll be done. I don't
Okay, my friend.
I just feel like
by me.
I sold some puts in there. That's it. Bonds, they're only down 15 now. Need to buy S&P's lower and sell bonds higher. The big move, I guess, is Tesla, right? Down 30, 28.
Tesla and CMG. Yeah. That would be it.
Yeah, let's see if there's anything else that's kind of jumped. IBM down 25, obviously. And that's probably it. And by the way, the VIX one day, remember I talked about yesterday how it popped up because they had earnings last night? 735 right now.
Yeah. Low.
Very low. All right. That's it. That's all I got, Mr. Batista.
Let's take a quick 90-second break. You want to?
Yes.
Sure you do. Of course you do. We'll take a quick 90-second break. Come back. We've got Hear Me Out with my man Dylan after this. We'll be back in 90 seconds. Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
That's right, Sosnoff. He's in the room. You're in the room. And we've got my man Dylan here for Hear Me Out. Dylan, thank you so much for coming on the show.
Always a pleasure. My second time around. It's very good. The more time I get with you, Tony, the better my life gets. The other guy, I'm not so sure. But the more of you I get, the better off I am. So it's nice
You're
to
the
see you.
first person I didn't pay that ever said that to me, but I appreciate it. Thank you. Thank you.
Tom, I also noticed that you're here.
Thank you. Thank you. I feel better now. All right, Dylan, we don't want to waste any time. Tony and I,
all right, let's
we have
go.
a plane.
Sorry.
Here's just a real public service announcement. The Bat and I are going to Denver. We'll be at the Summit Theater tomorrow morning. It's not too late to sign up. tastylive.com/events. Doors open at 8. Show starts at 9 if you want to come out and see us in Denver. And that's your last public service announcement for that show.
Mm-hmm.
We take off immediately following the show. All right, Dylan, let's do it.
Here we go. What do you got? Lay it on me.
We got a bunch of questions that our producer and our production team put together, and they're fun ones. Tony and I haven't even had a chance to look at them ourselves yet. And so here we go, John. Let's throw it up there. Jeremy Siegel. Oh, my God. Jeremy Siegel's back in the picture. Jeremy Siegel's about the University of Pennsylvania, the Wharton professor who's been around for literally ever. Jeremy Siegel made an interesting argument yesterday. He said Powell should resign and essentially call Trump's bluff. If the economy takes off, great. Trump gets the credit. If it craps the bed, then Trump owns that. What do you think about this approach versus the volatility and drama the current situation is having on the markets?
I like it. I agree with Siegel. I think it's a ballsy move. I think, if Trump wants to run the world, let him take responsibility for all the Trump's number one thing is to blame people for things that don't work and take credit for everything that does work. I think the more you can corner him to taking responsibility for everything that he does, the better off everybody is. And I think the sooner we can sort of get through this, what are we waiting for? If Trump wants total control of all media,
I'll tell you what's
I
wrong
think we
with
just
this.
give him control of everything and, create a domestic military force, let him just start shooting people, create a state-run media, create a state-run central bank. Let's see how he does. It'll be fun.
What happened to you,
Why
Dylan?
fight him?
What happened to you, Dylan? All right, here. Let me just say this really quick because I'm going to be really quick. I hate this idea because why would you do something just to...
Who wants to be the irrational, exuberant guy?
Who wants to do something so you can prove a point and yet hurt everybody else in the process of doing it? It makes absolutely no sense. I don't care if two crazy egomaniacs or whatever it is really are want to prove something or see who's right or who's wrong. That's not what this is all about. This is about the country, and this is about what's best for everybody. So I hate this idea, and I hate everything about it. And he's not the only person to say this. I've seen a couple people come out and say this. I hate just the whole concept of that. It makes no sense to me. But let's go to the next slide because I want to keep moving. Dylan, markets are at all-time highs, and we're celebrating tariffs of 15% instead of 25 or 30%. It's like being excited so we can save a cancer patient by cutting off their leg so they won't die. Structurally, the world has changed, but the markets seem completely unfazed. Why is that?
Because the U.S. dollar is down 20%, and so the repricing of risk as it relates to America's relevance in the world is reflected in the collapse of our currency, which allows our domestic equity market to remain prosperous.
What do you think about the repricing of gold? If that's been it's been a chatter, it's been talked about.
You know, I think that everything's. I think that the axe that grinds the wheel here is the U.S. dollar, and that the U.S. dollar has been reduced by a fifth in its value. It's probably the most relevant security instrument on earth is the U.S. dollar, and I think it radiates everywhere, whether it's a Bitcoin, whether it's gold, whether it's silver, or whether it's U.S. equities or home values or any of it. So I'm not sure what you mean when you say about gold. You mean that sell-off the other day?
No. It had to do with like just the gold holding its value up here because the thought is that, maybe gold plays a bigger role eventually than the U.S. dollar does.
I think that's logical. Yeah. I think it's true for gold. I think it's true for silver. I think it's true for Bitcoin. I think it's true for all commodities.
So, okay.
And I think it's also why the stock market performs so well is because all of the consequences.
Yeah, I mean, you see the whole purpose of this question, though, is because negotiated 15% tariffs after they were actually higher before that. But who cares? Let's move to the next slide.
Surplus U.S. government, $113 billion. That's your
Tesla
$27 billion versus 316.
Tesla sales were pretty bad last quarter, and the brand has become politicized. Regardless of your political affiliation, do you think this type of misstep is something AI would help to avoid? Will AI be able to stay focused on a business's core objectives and not get distracted? This is a really interesting question because I've heard this presented for many different companies when you have basically do we want CEOs that shut up? Do we want CEOs that are focused only on the business? Do we want CEOs that are vocal? It's just an interesting argument. Sometimes we get distracted and we have people who support us and people who disagree, blah, blah, blah. But if AI takes over even more and more white collar jobs, does that benefit the singular focus? Does that benefit of singular focus outweigh some of the job losses that may occur? It's a very tough question.
I believe that the primary job of a CEO is, I believe every CEO in the world has three responsibilities. 1, sales. 2, risk management, budgeting, where will resources be allocated? And 3, leadership in defining the culture of the organization. And it's not clear to me that AI is qualified to drive sales as an avatar of the company in the world. It's not clear to me that AI is qualified to generate or define the culture of the company, although I suspect AI might be very well qualified for budgeting potentially. So I think of the 3 major CEO responsibilities, that only one of the 3 come into the world where AI might make things better, which would be in terms of risk management.
I personally think, I'll get Tony's opinion in one second, but I personally think this would be an absolute disaster to have AI in any kind of management role. I can't. Is as bad as some personalities are and as crazy as some people are, I can't even imagine a worst case scenario than AI replacing senior management executives and board members and middle management, everything. I can't imagine a world that is less productive, and it would just be a complete disaster. Bat, what do you think?
I think Dylan said it excellently. I mean, Dylan, I've never been a CEO, but I would follow you if that was your main three goals, 100%. So I mean,
that's the job description for CEO in every company in the world: sales, culture, and risk management. I mean, that's honestly the reason why I believe the CEOs were so responsible during the banking crisis, because one of their three responsibilities was risk calibration. And if Dick Fuld or whoever the bank CEOs were back in 2009, they were the ones that said, okay, take another billion, take another, like they were the ones that kept winding up the tolerable risk threshold. And that can't be done without the CEO's approval.
Is there somebody that thinks it wasn't a CEO issue back in 2009?
Yeah, people do. Oh, it's the ratings agencies, or people took too many loans, people borrowed too much money. I mean, all this jazz.
Got it. Okay, let's go to the next slide. Part of the trade deal with Japan included a $550 billion investment. While details are still being worked out, some have described it as something of a sovereign wealth fund. The idea of a sovereign wealth fund was what is that word?
An anathema.
An anathema.
Unthinkable.
An anathema. Who the hell uses the word an anathema?
Some
be
producer
Josh.
really likes to
Gotta
screw
be
with
Josh.
An anathema. Okay, that's a word I've never used before. An anathema to capitalism. But we're moving away from a truly capitalist society with things like protectionist policies. So is a sovereign wealth fund a bad idea? And is the answer dependent on who's making the investment decisions?
So I am a Brandeisian.
I don't know. Is that somebody who went to Brandeis?
That's not a funny thing. That's not a funny thing. Okay. Judge Louis Brandeis was a big Supreme Court justice back in the day, way back in the day, but still a justice of the Supreme Court of the United States. And he had one operating principle that I subscribe to and I advocate for as a Brandeisian myself. And that was this: it is much better to have distributed decision-making and distributed resources such that investment and decisions are made as close to the problem that is being solved as possible. So the more you accumulate power and resources in a singular location that is at the greatest distance away from the situation you are dealing with, the more likely you are to have corruption, abuse, and bad decision making. I believe a centralized investment fund or sovereign wealth fund is ripe for catastrophic corruption and terrible capital misallocation, and it is a total contradiction of the very Brandeisian theories upon which I base my life.
I'm with Dylan. I'm going to sound smart.
You're a Brandeisian too, Tony?
Sure. Good enough for Dylan. I'll have the Brandeisian too.
Brandeisian.
The Brandeisian is not like a Bronzino. You don't order the Brandeisian. I mean, I once knew a girl that went to Brandeis. Does that help?
Yes. And Brandeis is named after Judge Louis Brandeis. I mean, come on. I'll send you guys the white paper. You'll love it. I mean, listen, forget Mr. Brandeis, or for Justice Brandeis, I should say. Consolidating resources is an anathema to the American way of life. The states' rights, distributed power. I mean, that's our entire country is based on the idea of distributed capital, distributed resources, distributed decision making. The very reason I thought the Republican Party didn't like big government was because I thought the Republican Party was an advocate for smaller government and more state power, although apparently when the Republicans are in control of the government, that opinion reverses, and then they just want to have all the power and get a sovereign wealth fund. But who knew?
Yeah, Sosnoff.
I'm going to pass on this one. That's too good. You're too good.
All right. Okay.
Let's go to the next slide. When you were at Bloomberg, for those that don't know, Dylan was on the news desk, the first on the news desk.
My first job. I was one of the first reporters ever hired at 22. I was part of the first team of reporters. Very exciting.
When you were at Bloomberg, when what I remember as the first meme stock blew up, it was a company named iOmega that made memory drives for PCs. I kind of remember it, but I don't think I ever traded it. Has the frenzy changed at all since then? And what goes through your mind and when you see things like Kohl's or Krispy Kreme make an absurd move higher?
I wish I owned it.
That's fair.
I
remember iOmega?
I remember iOmega. I remember more UUNet. Do you remember UUNet? UUNet was going to be it probably was actually the pipes of the internet. This is like, because remember you had America Online was like the big to do, and then Windows 95 was coming out. Remember Microsoft Windows 95 was going to be like a whole situation. Obviously, it came out in 1995. It was quite an exciting moment. And then you had your big America Online situation. Remember America Online bought Time Warner, which was kind of comical.
Yeah, it went into the S&P 500.
I mean, that was quite the moment. And anyway, that was all sort of its contemporaneous. The Netscape IPO, iOmega went off. UUNet, like I mentioned, was a big one. The difference now, I guess, is that I think that some of those companies probably had a little bit more there's more enterprise value, I think, back in the 90s. Now I really think that it's something just the crypto being the ultimate example, something can have literal, or especially not even Bitcoin. I'm talking like, Dylan coin or whatever, some cockamamie coin. Can go off with is absolutely. I mean, my first job was as an intern in the compliance department at Merrill Lynch when I was still an undergraduate, and I would receive all these lectures from these older compliance lawyers who still smoked in the office, because you could still smoke in the office then, and they would lecture me about blue sky in the 1930s and the importance of there being enterprise value and earnings and people and whatever, and we can't just be selling blue. And he's like, oh, it's called blue sky laws, kid. You can't just be out there selling a piece of blue sky, and it's illegal. They'll put you in jail, kid. You better watch it. Trying to scare me. And now I feel like half this whole situation is blue sky. So the crypto, everything, it's all blue sky as far as I'm concerned, and it seems to be all legal. So if anything, I would say, one, I wish I owned every last one of them, because why not? And two, I thought there were blue sky laws, but apparently not.
It's funny because Tony and I kind of remember the obviously, I don't remember iOmega, but I kind of remember,
You remember the moment, Windows 95, AOL, come on, Netscape IPO.
I was trading AOL when it went into the S&P 500.
Tony was trading in there. So I mean, obviously he remembers it. I had a bunch of friends actually trading in there. So yeah, we absolutely remember those times. I think that's a little different than the meme stock. I would compare meme stock more to like, the whole .com stuff. I think those are, that's a little bit closer.
Meaning pets.com and all that.
Yeah. Books a Million, pets.com, whatever. I forgot half the other ones, but WorldCom, all that whole group there.
Bernie Evers, remember that guy, the gym teacher turned global billionaire CEO? That guy was amazing. I love that guy. I think he went to jail.
I think he died in jail, didn't he?
It was not pretty. Whatever happened, it wasn't good. It wasn't good. But he was charming. Very exciting fellow.
Can I tell you my best story about WorldCom? So they ripped, when we started Thinkorswim, they ripped us off blind.
Please.
And they ripped us off blind for something, and they just completely scammed us. And because we were new, it's just connectivity stuff. They charged us like $35,000 or $40,000 for something that didn't even exist, and they were going to litigate against us. And And our lawyer said, you know what, just pay them and let's just move on so we don't have to deal with them. And I'm like, hell no. I go, these guys are a bunch of criminals. They're going to go out of business. They went out of business, never paid a dime.
You see?
Can I tell you my WorldCom story? Sorry, go ahead.
That's how to grift 101 right there by Tom Sosnoff.
Never paid him a dime.
So can I tell you my WorldCom story? So
sure. You got
my first big job, like my first big promotion at Bloomberg. I was appointed the mergers and acquisitions reporter, which the company had never had before. It was like the most prestigious gig you could have. You didn't have to write anything. You just had to go around and hang around with bankers and lawyers and find out things, And so that was a better job for me. It was like, oh, get me a place in Southampton and a full-time car and drive for an expense account. I'll find out what's going on. Anyway, the first story that I ever reported as the M&A reporter at Bloomberg was WorldCom buying CompuServe on a Sunday night, and I beat the Wall Street. And the first person to tell the world that was happening was your friend Dylan right here, not the Wall Street Journal, not the New York Times. And from there on, it's been nothing but gravy ever since, until I finally became a tasty trader. But there was the fork in the road was a Sunday night in the West Village in the 90s, when I found out over the phone from a man who shall remain nameless that, according to people familiar with the situation, WorldCom is buying CompuServe, and you're going to hear it from your good friend Dylan on the Bloomberg terminal. And the rest is history, sir.
It is exactly 9 o'clock. Dylan, that was a great segment today. Love this new segment. It's a lot of fun. Love the segment. Thanks so much for everything. And we will see you. I guess you'll be on overtime later, and we'll be back next week, the Bat and I. Everybody, we're going to turn the show over to Nikki and Mike. They're going to take you home for the last hour. Tony and I are heading out to Denver, and we'll see the whole crew in Denver tomorrow morning.
Safe travels, Dylan. Peace, everybody.
All right, bye, guys. Bye.
Thanks.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I got my Ted Lasso.
You actually have pants on.
Yeah, of course. I'm in school.
Huh, got it.
You're flexible.
Cool.
Yeah. Oh, nice. You are pretty flexible. Let's see you get that leg up again.
Oh yeah, he's really. Right now, my other leg is cramping.
I believe that to be true.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
There's a beast in the financial world.
and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Mikey, we are back, my friend. E-mini S&P 500 futures up 10 here. 6406 by the dip as always. NASDAQ up 34. You got the Dow down 190. The Russell down 12. Oil catching a little bit of a bid. 65.97 volatility futures sitting around 18. They're at 17.95. The bonds down 9 ticks. Gold down 26. Silver down 27 cents. Bitcoin unchanged. Interesting little market today we got. Well, we got a nice little market measure sponsored by the CBOE, testing the momentum with 0-day option trades. Are you ready for this one? It's a cool one. It's an interesting one.
I am ready. Yeah, the market is doing what it does, but we had some earnings that had some pretty big moves in IBM and Google. So we'll see if that continues. Actually, Google's selling off a little bit from the highs, but I think that'll be the story this earnings season. A lot of bigger moves than last quarter.
Ooh. Yeah, I think
the tariff stuff is in the.
I think the upside is muted. The downside is where
That's
where some of the risk is. I mean, we both played Google inside and up. It's a nice little trade there. IBM had some short delta there. That was a good one as well. Yours was better than mine, but
yeah, Tesla, IBM, both down 26 points. Pretty big.
Big move.
Pretty big. But yes, testing momentum with 0-day strategies. I'm intrigued.
So a good one. This is a follow-up to a segment that they did 2 weeks ago that was basically contrarian leaning. So they looked at just normal, either doing short put spread, short call spread, or an iron condor, 0 DT every day, non-discriminate of what the market is doing. The one that they did 2 weeks ago was being contrarian. So into a down move, they would sell the put spread. Into an up move, they would sell the call spread. This one is kind of a continuation of that sort of look, but on the momentum side of if the previous day was up, you would sell the put spread for the next day. If the previous day was down, you'd sell the call spread. So it's kind of a continuation momentum type analysis of these 0-day trades, which will be interesting to look at.
Let's do it.
Cool, let's do it.
Okay, the emergence of robust 0-day options markets introduces a new dimension to trading, distinct from the traditional longer-dated options trades, which we've seen, obviously. A lot of people in the YouTube chat, a lot of people in the office doing 0-day stuff.
Yes.
Difference in dynamics and opportunities necessitates a reevaluation of our trading strategies and mechanics. Recently, we delved into the contrarian approach, like Nick mentioned. However, the results were less than stellar. Probably because the market only goes up, but that's just save that for another.
Yeah, I would expect most of those, and because 0-day options, they only go back a handful of years, 3 years now or 2 years, something like that. I mean, I think they were post-COVID, were they not?
Yeah,
I believe so.
They opened the Wednesday, Friday.
Yeah, they had yes, and then they did them. Yes. I think it was post-COVID. So, I mean, most of that has been upside moves. So if you were ever leaning contrarian to that, you probably got your face ripped off.
Yeah, it's interesting. We've obviously had downside moves many times and to a strong degree, but the quantity of them is a lot less.
Yes.
Which is
not as much two-sided action.
Right. And I think, we'll see some interesting results in this one. But
yes.
In two-sided markets, when something doesn't work, you should always consider the opposite. And this week we will do just that. So looking at momentum following 0-day trades.
Yes.
So whatever the market's doing, that's where you are positioning yourself.
Yes.
We'll see what the fruits of that labor created.
Cool.
Alrighty. On the next slide, let's check out the study. So 2 years of data in 0-day SPX options collected every 10 minutes. So SPX, of course, is the product we're going to use. It's all encompassing. It gives you sector exposure. So
cash settled.
Yep. Cash settled, which actually is a big thing for 0-day stuff because you can, the risk is the risk. You're not assigned anything after the fact. So,
no overnight risk.
Yeah.
Yeah.
Even if an option's in the money or if a spread's halfway in the money, it still settles to cash.
Yes.
Considering 0-day premium at 9 a.m., plus or minus 5 minutes from that time frame, if the move from the previous SPX open to the day that the trade was placed was less than an expected move, sold a $10 wide butterfly. So there's your neutral trade.
Yeah.
If SPX was down by more than the expected move, sold a $10 wide call vertical spread with the short strike at the money. So an aggressive short premium play to play for a continuation of the same move that you just saw the previous day. If SPX was up by more than the expected move, sold a 10-point wide put vertical with the short strike at the money. So very aggressive, essentially risk one to make one setups, but playing for a continuation of the move you saw the previous day. And if it was an inside move, you're playing for the same.
Another inside move. Yep.
All right. What do we got? Repeated the analysis using iron condors and verticals with short 30 delta or 20 delta strikes and 20-point wide wings. So looking at wider spreads there. And then looking at the multiples of the expected move as a threshold ranging from 0 to 1.5, which only triggered 5.1% of the time. So most of the trades are going to be within that. At the money positions were closed if they reached 10% of max profit, while out of the money trades were held for 25%. So keeping the P&L targets pretty tight here, which gives you the ability to take a little chunk out of it here and there.
Yep.
In SPX, if you're thinking SPX 10 points wide or 20 points wide at the money, that's about $400 or $500 of max profit. So 10% is about 50 cents.
Yeah, give or take. Yeah.
If you're taking that off.
Yep.
All times are Central Chicago time and assumed to exercise at mid price.
Yes.
Beautiful.
Let's see what we got here.
Okay. Short at the money, 10-point wide wings with a 10% profit target. So
this is indiscriminate of the move. So this is just every day. So we're just looking at every day, short at the money, 10-point wide wings, 10% profit targets. You're doing the, one, the other, or the iron butterfly. This is just your metrics for all those. It's not a shock to see the call spreads being not good, considering the move that we've had over the last 2 years. The butterflies being, your best profit, net profit, but your lowest probability, which isn't a shock because they are lower probability trades. You have the put verticals, which are the highest win rate, kind of middle in terms of your average P&L, but your CVAR is going to be wide because you're only doing one side. So there's always going to be a gimme and gotcha, right? So you get your highest profit potential, but you're going to have, or the highest average P&L, but you're going to have your lowest win rate. You have, your highest win rate, but you're going to have your biggest and widest losses. It's very typical.
Yeah. And conditional value at risk with butterflies significantly lower than the other two because you have a lot more premium that you're collecting.
Total risk being a lot less.
Yeah. And this is, I think it's interesting to call out when you look at the win rate, 90% for the verticals with a positive average P&L, 80% with the call verticals, but a negative average P&L. That tells you that there were a lot more max losses with the call verticals when you're taking when you're literally basically if the market's up 20-30 points, that's a max loss.
Yes.
Even at the money spread.
The put verticals, they have, the CVAR is wide, but you can you can tell from the average P&L that you had a significant amount of winners. Whereas the call verticals, you probably didn't have, you didn't have as many winners and your losses were full losses. The put verticals were probably variable losses, 100, 200, whatever. They weren't full losses, whereas the call side was full.
Yeah.
Very nice.
Good stuff.
Yeah. So this is looking at the momentum trade here of, you're being directional every day. So this is just going with whatever the previous day's move was. Indiscriminate, right? Then we broke it up into based on the expected move. So 0.5 of the previous day's expected move, your win rate, your average P&L. Same with the directional moves where it was greater than the expected, and then the 1.5x the expected, which only happened 5% of the time. So not a ton of data there. You can obviously see that, playing the momentum with short at the money spreads is going to have a high profit potential, but you got to keep that with a grain of salt because it's hard to, you'd have to be like watching this every single day to play into this sort of metric because you'd have to look at the expected move from the previous day to apply it to today.
Yes. And if you're doing 0 days every day, it's not going to be a problem for you because you're going to be watching that and you're going to have a feel for the expected move day to day and whether you are at the expected move, over the expected move, et cetera, et cetera. But I think this also speaks to, the average P&L being highest when the move the previous day was high.
Yes.
Makes a lot of sense.
You get that continuation of a big move.
Even to the downside, I think it's, when we see a move like this in the market today, where we're basically flat, it's a lot harder to say, okay, maybe we see a continuation of nothing tomorrow. But if you see a 30, 40, 50 point sell-off today and you play for a continuation of that, maybe some dynamic in the market has changed that may push that market lower.
And these metrics, all of them are, there's very much like a pick and choose here because you have to go with the quote unquote momentum. You have to kind of look at the expected move and whatnot. All of these momentum type trades line up with very similar metrics to the butterfly itself. So, this is more selective and hands-on, whereas the butterfly is kind of like set it and forget it. And they basically line up with the same sort of metrics. Your P&Ls or your CVAR is actually higher with these trades than it is with the butterfly because the butterfly has less risk to begin with, whereas the P&L values, the average P&L, lines up with the butterfly. It just tells you that the butterfly is kind of the easier, less time intensive, less selective trade versus trying to play the momentum day to day.
Yeah.
Or the $10 wide spreads.
Indeed. All right.
Jump into the next one here.
Let's do it. Okay, so now we are looking at short 30 delta options with 20 point wide wings with a 25% max profit. So getting a little larger here.
Mm-hmm.
And in SPX, 30 delta, 20 point wide wing, you're probably collecting $400 or $500 still, simply because you're moving out of the money and taking on more risk. So 25% profit target, probably around $100 or so. So with the put verticals, 94% win rate, positive average P&L, $1,600 conditional value at risk. Call verticals, high win rate, but lower average P&L, and that tells you everything you need to know about the market that we're in. Yes. A lot more max losses versus winners. And then iron condors, basically a flat result, even though the win rate was positive in the 80s.
Mm-hmm.
And that tells you that, you didn't have enough neutral days to offset your losing days.
Yes.
Regardless of whether it was up or down.
Slightly positive.
Yeah.
Yes.
So if we look at the next slide, we can look at the directionality with these wider strategies.
Mm-hmm.
And when you're looking at directional every day, average P&L is nice and high. Directional when the move is greater than half the expected move. Average P&L $19, the highest one we see. And this one is interesting because your highest average P&L, regardless of win rate and CVAR, is when you have kind of an inside directional move.
Yeah.
Which tells you that volatility is likely lower. You're selling an out of the money spread. And if you get a inside expected move again, regardless of direction, you're still likely out of the money and having a winning trade.
Yes.
Whereas when you're placing this out of the money spread where you're taking on more risk, collecting less, if the directional move is greater than 1.5 times the expected move, maybe you're getting whipsawed here a little bit more. At least the results tell you that.
Yes.
So interesting stuff. Short 20 delta wings with 20-point wide defined risk wings, 25% profit target. So getting even further out of the money. Of course, you're going to have a higher win rate. And again, call verticals, negative average P&L. And it's really simply because your winners are not offsetting your losers that are max losses in these 50-point rippers.
Yes.
You're just getting destroyed.
You just have more risk on in general, which is why those numbers get bigger. But your win rate increases, and that's not atypical because you're widening out the spread. So you're naturally going to have a higher pop, but the higher amount of risk is going to be, the total risk is going to be much bigger, and you're realizing that a lot more with these big moves that we've seen over the last 2 years.
Indeed. If we look at the next slide, directional.
You can see again, all these numbers, they're like the just doing indiscriminately the iron condor every day performs better than trying to follow a momentum trade, and it applies to all cases that we've looked at and all the spreads that we've looked at.
Yeah.
Here.
And I think this one, the further out of the money you go, this is the 20 delta wide, 20 delta short option with 20-point wide wings. This is where your average P&L is highest when you have a greater expected move the previous day. And I think this tells you that this helps explain why when you are seeing a bigger move than expected and you're seeing volatility pop a little bit and you're selling that out of the money premium, that out of the money premium is very much reflective of that implied volatility premium versus a close delta move. Like when you're selling at the money spreads, you need the directional move regardless of Greeks. Your Greeks really don't matter in the at the money spreads. 30 delta, they matter a little bit more. 20 delta, they matter a lot. So in the situations where you're selling pretty far out of the money premium into an IV pop, you're going to get your larger P&L because you're also getting a nice high implied volatility boost, especially with bearish trades. And you can absorb with a 20 delta option, you can absorb a reversal to a pretty strong degree and still have a profitable trade.
Very nice.
Lovely.
Let's get to some takeaways here.
When selling at the money 0-day premium, delta neutral was king. Adding in any directional assumptions both increased risk and hurt long-term results. So this is nice to see where instead of cherry picking the direction and looking at the expected moves and doing X, Y, and Z to try and improve results, just setting it, forgetting it, performed better. For out-of-the-money traders, put selling was the overall most profitable approach to the 0-day options market due to the generally bullish long-term behavior of SPX. Makes a lot of sense. Trying to locate the best short strike and directional signals was finicky. However, with only short 30 delta options outperforming selling iron condors every day. So kind of blending your implied volatility exposure, giving yourself some space, and not being right up against the current market price. While attempting to follow momentum was more successful than making consistent contrarian directional assumptions, we may be better off trusting in the efficient market hypothesis. Ignore yesterday's price moves, focus on today's volatility and liquidity, and basically just playing for inside moves if you're doing iron condors.
Yes. So it's the mechanical, less thinking version of this trade. Very hard to play the momentum contrarian game with, 1 day's worth of price action.
And the nice thing with Iron Condors is it kind of encompasses everything. If you get a big move to the downside in a vol pop, your strikes that you can select to create your whatever delta Iron Condor is going to be much wider than the previous day too. So I like it.
Very good. Good stuff. 0-day research from the team, from the boys. Jacob, thank you very much for that. You want to take a quick little 90-second break, come back with Mr. Scott Sheridan live from the Tasty Trade World Headquarters right here.
Let's do it.
All right, cool. We're going to take a quick little 90-second break. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful. It was beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was.
Now the RV on RVTrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75. I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah. I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay. I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
oh, here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies? Excuse me? I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? What? Uh-oh, watch yourself. We don't want to get hit by a car. Oh. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? Oh. First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Mikey, we are back, my friend. We've got E-minis only up 7 now, a little bit of a sell-off from the highs here. NASDAQ up 30. You got the Dow down 194. The Russell down 17. The Russell, the weakest of the group after being the strongest of the group yesterday. Oil catching a little bit of a bid /CL 66.34 up $1.09. Volatility futures unchanged 17.95. You have the VIX itself at 15 on the dot. You've got bonds down 8 ticks, gold down 19, bouncing a little from the lows, silver down 16 cents, and then Bitcoin basically flat here at 118. But who cares about that? Because we have the ever popular, world famous, there's the DDT, Mr. Scott Sheridan from the Scott Sheridan Studios.
Good morning.
Good morning.
Did you guys play Google?
We did.
Or test? Well,
we did.
Big winners.
Yeah.
Big winners.
Big winners.
Earnings have been good for us.
Earnings. Anybody playing earnings the way that I think you guys play
Yes.
earnings, the way I would play earnings, that's good.
Yes. We avoided the pain in IBM. That was.
Oh, what IBM? I didn't even look at it. I never look at it.
We got the double $25 to the downside.
Was it?
Big move.
What was the expected move? 6.
Yeah, really low.
Yeah, I think it was much less than that. I mean,
What'd they miss on? What was the problem?
I didn't see the numbers there. I mean, the stock it's in the last year, it's gone from 180 to 280. So, it's still up.
They missed revenue.
So you guys are pseudo in that meme stock generation.
Oh yeah. I got Thomas making me buy open calls.
Right. So this is so there's a. Well, I don't want to give names because I don't want people jumping on these things. But there's a whole series now of new stocks that people are going after.
Yeah. They are piles of duty.
Right.
So they're piles.
Two questions. Where do you think this has to start somewhere? Right? Somebody's putting something on Twitter.
Yeah.
On Reddit.
Yeah.
We'll say so. Wall Street Bets is coming out and saying these.
Yeah. But it's moving.
What do you think the thought process is? It's just somebody's like, oh, this is going to be great. I'm going to jump on. It's going to be another GameStop, or it's FOMO, or they just don't know. It's fun. It's Fun.
Things move. You
right. So
participate.
you watch
you're part of a
watch
group.
a $3 stock go to 12 or 15 or 20.
Yeah, you laugh. You cry when it goes away.
When it goes back to 3.
Yeah.
So it's fun.
Yeah.
It's entertainment.
I think that's part of it. I will give you my other thing, my other thesis. And I've told Gus this too. You know, retail gets a bad rap, which I think, and by retail I mean retail trading. Retail trading was at the forefront of this entire V bottom. I mean, you, Mr. Public, were fading me the whole time. I'm retail, you know, up move the whole way.
Yeah, you weren't so confident at 4,800. Let's just go back and
No. Oh, I was screaming by the dip at 4,800. No.
Oh.
You guys
my
are
God.
fake. So I think. So here's what I think happened. I think retail jumped on the V bottom bandwagon. It happened again. You ride these things. Let's just say Nvidia all the way up to 170. You make all this money.
Then you get out. And then you wait for it to go back to 90, and then you load up again and you ride it back out. I didn't know it was this easy.
No. I think what happens is that retail traders are quite sophisticated, and they say, you know what, we rode this shit. Sorry, family show. We rode this to the moon. They take some of the profits, and they say, you know what, I want to gamble some of this. And they go to this junk they put house money. Exactly. And they put we're going to YOLO this. And then they tell all their friends, and all their friends are in the same boat. Because I have friends that have texted me about junky, Ion Q and Tempest and all these stocks that have gone from $5 to $60. And they're like, do you like this stock? And I'm like, I mean, dude, you're a 10X. Great trade. You saw this on some message board 2 months ago. Maybe you take some profits. And so I think that's what is happening. And it's it reminds me of late stage kind of COVID, where the same sort of thing happened, where you had the pigs flying, everything's at highs, money print to go burr, like that whole thing. And then you get a little bit of a pullback. That's why I'm a little cautious.
Oh, so you think there could be a little bit of a pullback?
Well, I think this is kind of the last.
So this is the froth?
This is like the last hurrah, where people get out, they take the money and run, and then they gamble a little bit on this junky stuff, and then you get a little bit.
And they only gamble what they can afford to lose, and then they keep the profits.
Oh no, some of them are degenerate. Yes. Some of them are degenerate, but I think the sophisticated.
I did have a great email from a customer today. Knowing that I have been working on the PDT change since 2018.
Yeah, which is amazing, but that's finally moving.
Well, I have every reason to believe that it will be done. We will have the change in place, I believe, early next year.
Really?
Yeah.
Like first quarter next year?
Well, my understanding, it needs to be approved what the proposal is.
Yeah.
It needs to be, which is great as it stands, needs to be approved by the FINRA board, which is going to be, I believe, in September. Once that gets approval, which I can't see why it won't, because the committee is in favor of it at the 4210, et cetera, et cetera.
Yeah.
Then it goes to the SEC. Now, the SEC has up to 8 months to approve it, but I think they're going to just
push it.
Just go.
Because they've been.
Then it's a question of how quickly can firms adopt. Now, for us, it's going to be like this.
Instant.
So it's going to be interesting to see what the decision is to say, okay, once it's given the green light, are they going to say it's 3 months, 6 months? I hope they don't say it's more. Are they going to say as soon as you are ready, you can go?
Yeah.
So I don't know what it's going to be. We'll be fast.
Do you think, I have two questions. Do you think they're going to just move the threshold to like $5,000 for PDT, or you think they're just going to remove it?
I don't want to go into the details, but effectively gone.
Effectively gone. Yeah. How does this apply to people that
DT calls gone? Day trade calls.
Really? For cash accounts too?
No,
that's because that's kind of like the layer two.
The DT call is the one that's really confusing for people, and I get it. The DT call is when you so you come in. Let's say you come in with $5,000 in buying power,
and you day trade over
and
that.
You make. No, you could day trade that all the time. You could keep so you could keep day trading that, assuming you're over $25,000. But I'm saying you have $5,000 in buying power. The problem is if you make $1,000 on a trade and then you day trade $6,000, now you got a problem.
Yeah,
because you're day traded more than what your start of day buying power was.
I've been hit with that before, and I'm like, what is this?
Nobody
What
knows.
is
It's so our Steve on the desk spends so much time trying to explain this to people because he's our go-to for DT calls. Anyway, what I think will happen, without going into too much detail, right now, if somebody wants to buy stock on margin in a margin account, you need to have 2,000 hours.
Okay.
So if you fall below $2,000, you cannot buy stock on margin.
Got it.
Not just with us. That's the rules.
That's the rules.
I think we might land in that area. You gotta have $2,000.
Okay.
Which is the minimum anyways for...
No. You can have a margin to buy stock on margin. I mean, you could have a margin account, put $100 in and trade options.
Yeah.
You could do that. So, but anyway, the point of the story was this person reached out to me and said, somebody's posting on the board that they heard that the PDT rule might go away, and they're ripping on saying, oh, there's no regulation. This is just the Wild West. I'm like, oh my God, I said, could you please stop? I've been working on this since 2018. They want this. This is a win for everybody.
For
you don't have to use it if you don't want to. There's nothing that says you have to trade more.
Yeah.
It's just
freedom,
so,
baby.
And the crazy thing is, I don't want to go over how insane this is, but when I tell people that you get one reset in your lifetime,
it's the silliest thing ever.
And they're like, okay, what does that mean? And I say, well, think about you live in Illinois, you get a moving violation, you run a stop sign, you go through a red light, you're speeding. That's your warning. No, that's your warning.
Yes.
Then that day, the next day, a week later, 5 years later, 10 years later, you get another one, you can no longer drive for the rest of your life in Illinois. And when I say that to people, they're like, the jaw's on the ground, there's this look of, what do you mean? How is that even legal? I'm like, this is why I started the fight, and I have a lot of people with me on the fight.
Yeah. Power.
We did it, power to the people.
Do you think, so anybody that's stuck on PDT right now,
We're going to clean it. It's going to be cleaned.
Wiped.
Again, my understanding is what they're going to say is, as of this day, sort of like what JB did. If you had a minor cannabis conviction, he cleaned like 800,000. Once cannabis became illegal in Illinois, he's like expunged, just gone. If it was minor.
Yeah. That's good, but we should put the real criminals in jail too. We've started to
no.
in jail.
Wait a minute, is this
the cannabis users? No problem, set them free. The criminals, real ones, we put them in jail.
Is this for Frankie?
That's for Frankie. Love you, Frankie. Love you, Frankie.
Is this for Frankie? You gotta give Frankie a shot.
Yeah.
By the way, cannabis. Have you been to New Buffalo?
I have not recently, but
it's quite the experience.
Thomas was going to go out there because his mom was here too. I met his mom, very nice lady.
Yeah.
They go up there.
Are you older than his mom?
He's getting there.
You call me young. You call me an ung. I am kind of in that range.
Right.
A little scary.
Okay, so yes.
Scary.
Go ahead. So
They go up there to buy cannabis.
So the funniest thing is,
it's really cheap there. You get the no tax.
No, it's
the tax is way less.
Crazy cheap, and there are a million of them right as soon as you cross the border. So the funniest thing is, I'm driving up with my son, with Max.
Do they have like competing like sign people outside? Like
no.
Sale.
As you're about 20 miles,
I wouldn't get
15, 20 miles outside. So for those that don't understand, this is New Buffalo, Michigan, which is just across the border from Indiana. So you go from Chicago through Indiana around the lake, and then you end up in Michigan.
It's like in what, 2 hours from here?
Hour 15. Hour 15, hour 20 from the city. Hour 15 from the city. So the funniest thing is, Max looks at me and says, I mean, for the 20 miles going in, every billboard is cannabis in Indiana. So he looks at me and he's like, Dad, let me get this straight. Cannabis is illegal in Indiana, but they're more than happy to take the ad revenue for the billboards to go across the state line. I said, yep, got that straight. So
funny.
It's crazy.
They're probably charging them a lot for those.
I'm sure that whatever.
Probably a surplus.
What's amazing is that you see, as a competitive market, as you see with anything, competitive market starts bringing prices down.
Yeah.
Right. So it's crazy how inexpensive.
Mm-hmm. Relative to here, because we have like a 30%.
And even what we have here in Illinois has gotten better and a little less expensive.
Yes.
I'm all in favor of the big taxes. That's what it should be.
Yeah.
Put taxes on alcohol, on cannabis, on cigarettes, on everything. You know, gasoline's a little rough, but if it's sin tax, I'm good with it. If you want to consume it, pay the tax.
Yeah.
Make it legal, pay the tax.
All right.
I'm done.
Fair. That's fair.
All right.
So what'd you pick up?
I'll tell you
Some
later.
good stuff?
Good stuff, though.
Some good stuff.
Yeah. So it's interesting because they got the top shelf and they work their way down. What they do, which is awesome, if you are a flower person, they call it deli.
Oh, they have like a deli bar of like
you can actually look at it and
I want a couple of those,
as opposed to if it's in a bag, you don't know.
Yeah.
Like you might look at the bag and go, I don't know. Okay, this looks pretty good, but I don't know what it is. And then you open it, you're like, oh damn. You get to look at it, smell, it's great. And it's just line it up. And if you want to buy, if you're into bulk, they got bulk.
I was in Michigan for coincidentally 420 weekend.
I'm sure that was a coincidence.
Oh, it was amazing. Well, I was up there playing Arcadia Bluffs early April.
Oh, nice.
And
is your shirt Kiowa?
Yeah.
I could see the logo. I couldn't read it, but I could see the logo.
He brought me one too.
Nice. He didn't take you to play, but he brought your shirt.
No. Okay.
So go ahead.
But yeah, I walked into the shop. They're like, if you spend $50, we give you this huge goodie bag of all this other stuff. I'm like, so if I do this today, if I come back tomorrow, do I get the same goodie bag? They're like, of course. So I went back the next day. I got like $1,000 worth of stuff for like $200.
Yeah, it's crazy. So just think about the profit. How much money must be in this? Because they're selling things for $1 or $2
it's all
or
cash too.
It's all cash.
Do they do all cash in Michigan? Well, I guess that's
Yeah, it's all cash.
Yeah, because countrywide is the
Well, it's all cash because
Banking.
it's illegal federally. So you could, I guess, take I'm thinking you might be able to take a credit card from a local bank, but that credit card even from a local bank is still going to go through a national
you go through
system.
Visa or
Right, it's going to go through a
something.
national system. So credit cards.
Yeah.
I mean, credit cards are no, but it's all cash. But they all debit cards or machines. So don't worry about it. Just bring plenty of cash with you. So it was funny because Max asked the bud tender who was helping us, he's like, what was your biggest sale ever? And he said he had a guy last year, $53,000. 53 grand, and he was buying the lowest grade stuff, just massive quantity. And Max is looking at him, and he's like, yeah, he had a Sprinter van. He has a gas station on the south side of Chicago.
Perfect.
So you turn 50, you turn 53,000 into probably 500,000. You just risk going to prison for a long time.
Yeah, I guess because you could sell it cheaper because of the tax. That's your skim.
Well, I mean, if you're buying, they had vapes. You could buy 15, 16, 17 vapes, gram vapes for $100.
Yeah.
Okay, so you sell those for $20. Easy. You could sell them for $20, $25, $30.
Yeah.
Easy. Don't think
Is that what they cost here if you buy them?
Well, the good vapes, 50 to $100, depending on what you're buying. And there you could buy 15, 16 for $100. So don't think about it. We need both you guys here on air. So don't think about a side hustle.
Yeah, those days have passed.
We'll avoid it.
Just be a consumer.
Yeah.
You just gotta go to Arcadia once a year, and you come back with a year's supply of whatever you want.
Romania?
Arcadia
Bluffs. Yeah.
Romania would be wild.
Yeah, I'm like, that's a strong move going to Romania. I'm like, I didn't hear that Romania had a strong cannabis culture, and you got to come through customs. So it's a strong play if you do it. And it's what's really crazy is you think about what you could do there, and then you go to a state that's illegal, i.e., Texas, and if you're caught like with anything, done.
Yeah,
you're a baddie.
Yeah, can't gamble there either on the apps.
They have big poker. But they're rooms that you go into and you don't, there's no rake, but they're clubs and you pay like an hourly fee. But I think big one's called the Lodge. Look it up.
Yeah.
I'll hook you up. I'll tell you.
Oh, I'm a okay poker.
I think I'm going to the World Series next year.
Max played this year.
How do you do?
Didn't he win a satellite? He won
he bought into it, but he made it to day 2. Went out at I think 1,900, 15, like around 1,500 he got paid. But
he got paid?
No, he didn't. I mean, he was out there for 3+ weeks playing a lot of stuff. It's crazy. If you want to play that window, if you want to go out there, because the main event, it's the World Series is the main event is the $10,000.
Yeah.
And he said it was really interesting because last year he said he might go, but it's a big buy-in and wasn't really sure. And when he got there, he's like, the field, he's like, his EV was extremely positive, but he played in less expensive tournaments where he's like, my EV is not good here because I know I'm up against much better players. But the $10,000 one has the allure. People want to come play.
Yeah.
And you have a lot of people coming in on satellites and they're like, hey, I want to take a shot. You win, I think, 10 or 12 or 13 million for the first place.
Yeah.
And if you didn't see who won, the guy came back from less than 2 big blinds. Somewhere along the way, not the final table.
Yeah.
Somewhere along the way, he was down to less than 2 big blinds, and he ran hot and got it.
He had one of the craziest runs ever this year because he won the 50K.
Correct.
Too.
Correct.
He's won that before as well, and
What's
a lot
his
of
name?
pros,
Misachi.
Michael Mizrachi.
Mizrachi.
But yeah, a lot of the pros say that 50K tournament that he won is the hardest to win, and he's won it multiple times.
And I guess they put him in the World Series. I'm sorry, the Hall of Fame.
Yeah.
And it was great because if you watch the rail, everybody who's at the final table gets like, I don't know, 10 tickets or whatever.
Yeah.
And people are going crazy. It's great. It's fun. There was a woman.
Oh yeah.
5th, I think. 5th. I mean,
it was the highest finish ever.
It was the deepest run for a woman. She was I believe Spanish. I don't think she plays professionally anymore, but she just said she was going in and having fun. That's cool.
What's the percentage that like pays out?
12, depending on the tournament, 12.5 or 15.
Okay.
For any tournament. It depends on the tournament. It's 12.5 or 15. But if you look at the payout, it's this, and then it goes like that.
Yeah, it's probably
It's so top heavy.
Yeah.
But it's still like a 3x.
You get
cash.
I think this year was 20 was the minimum cash, so 2x.
Okay.
I think.
All right.
But it really, because they just do this.
Yeah.
Yeah, and then it just gets.
I got it. So, all right. We can take phone calls. Should we do the business? Should we do business?
Let's do business.
Yeah, let's do business. We'll skip the phone calls for now.
Top 20 symbols going through the system. First 40 minutes today. No broad-based indices or futures. On the off chance that Tom is listening. Tom, for you, number 20, TQQQ at a 0. For everybody else, this is interesting. There are 4 negative IVRs on this list.
It's probably all the Mimi.
Tesla at a -5, Google with an L at an 18, Amazon at a 20, NVIDIA at a 10, IBM at a 15, Goog no L at a 19, CMG at a 1. Did CMG have earnings?
It did.
What was that? I missed that one.
Not good. Down $6, 11%. Big move. Ever since the split.
Right.
Dead. Once you split.
Dead. It's no more fun.
50 to 1.
AMD at an 11, TSLL at a -10, Meta at a 14, PLTR at a 10, Apple at a 22, HIMS at a 25, GLD at a 17, OKLO at a -2, UNH at a 50, WFC at a -1, iBet at a -41, Netflix at a 1, and number 20 for Tom, TQQQ at a 0.
iBet it.
There were 5. I'm sorry, there were 5 negatives and 1 0.
Yeah.
What is that telling you?
I mean,
Well,
the fact
it's
that there's
Real cheap.
and there's leveraged
Everywhere.
products on the top 20. That's wild.
Right.
Well, that's what happens when vol gets low. People look for the junk. They look for stuff that's moving. They want the high vol.
Like, where's MicroStrategy?
That's true.
This must be one of the
MicroStrategy.
first times it hasn't been on the top 20.
I don't know. They now have there's 15 different MicroStrategy spin-offs. They got
Right. What is ASPAT? Is the Ethereum version?
No, I'm talking about but that is the Ethereum Treasury, but MicroStrategy has all sorts of different I forget the ticker names, but they're
they created other tickers?
they're just
MSTL,
C shares, preferred, dividend preferred, there's all sorts of
What could go wrong?
Good question.
Yeah. It's
everything's gonna be fine.
It's an interesting thing. That one I think can go wrong. Bitcoin, I got a little more confidence in.
Bitcoin?
Yeah. You're not a Bitcoin guy?
Not.
Really?
No. Not a believer. I need to see a use case for it. I still have yet to hear a valid use case. Great for trading.
The use case is the money printer.
Because you're long?
No, the money printer. Just money being printed all day.
Devaluation of the dollar.
Devaluation of the dollar.
But really, the
money being printed.
Yeah.
Okay, but that hasn't been a problem yet. So let's see where we go. I mean, listen, we have an issue, no question about it. There has to be a generic use case in my mind for it before I'll get behind it.
Well,
Meaning, you literally, it'll be Apple Pay. You just walk up, go ding, ding, and you're good to go. Then all over it. Love it. Cash gone. Use this. You can't have a cash or cash equivalent asset that can move 5-10% a day. It won't work.
Yeah.
I know. You could go to a stable coin. I got it.
Yeah.
I got it. So
the stablecoin legislation will be the first tie-in between cash and speed of transactions.
Which you can now do on the platform.
Yes, you can do stablecoins on our platform.
Monday.
And stablecoins.
Which are all coming soon.
Yes, I'm a fan of stablecoins.
Yes.
I am.
Makes perfect sense.
Yeah. But
especially we're not international, but we have a lot of US people, and they're like, this is going to be amazing for international people because you don't have to do the wires anymore.
There's no barrier. There's no time. There's no money. You just do it.
And markets these days are moving so quickly. Like you want to have the ability to deposit, draw, do whatever you want instantly,
correct, and trade.
Yeah,
totally agree. But that's when I should have been more specific. Stablecoin, I see value in. I'm still waiting for Bitcoin, Ethereum, and the others. For me personally, before I'm jumping on the bandwagon, I need to see adoption from, globally where you can use it as a real currency.
Do you know how many Ethereum Vitalik gave Tom and Tony when they were on the show? Didn't he give them a wallet?
Did he? Well, they have no idea where the wallet is.
Yeah, no, it's gone. I was just asking if you knew how many were in there.
I think that might be revisionist history. Did he give them something?
I thought that was part of it.
I hope.
I think that was part of it.
Well, no, they have no idea. They have no idea where the key is.
Yeah. No, it's gone.
Gone.
It's in.
Yeah.
But he was on the show when Ethereum was like
nothing.
He
was starting it.
They were just starting it. Yeah.
Which is actually insane.
Insane. Again, I keep saying this, but when we started Tasty, we were at the Merchandise Mart, and there was a kiosk for Bitcoin at the food court. And I have a picture. It was $275. And I'm like,
why not?
I should buy a few of those. I'm like, where's it going? I'm like, forget it.
Damn.
Hold on.
Okay.
I'm going to try it.
Is that? Oh no. Aye.
Aye.
All right.
That
was it.
Well done.
Thank you.
So we'll do calls tomorrow.
Yes, we will do calls tomorrow. We'll be in studio. I don't know. You don't have to be.
I will not be in studio.
Okay. I know. It's
Fridays.
Summer Fridays.
Fridays. My day.
Fridays.
My day from home.
So you gonna do golf in the afternoon? Got a little golf round?
Who's asking?
I haven't got the invite.
Entirely possible.
I was just one. The last invite I got was.
I will take you guys out to play this summer. How's that?
Thank you, Scott.
You can hold me to that.
Okay.
Perfect.
Well, the last one I got was Donnie on a Sunday, 6 a.m. tea time at Thunderhawk.
Okay.
It's 2 hours from the city.
And
I'm like, Donnie, are you going to sleep there overnight?
And not only that, and then I'm sorry, but it's a 5-hour round. So you'll come
With
out.
Donnie? No.
Any public course. Maybe it's 6 o'clock. It's not, but you go off at 9 or 10. It's a 5.5 hour round. Here's the good news. You come to the club. We'll have lunch or breakfast.
They space you out at the club. You don't.
And then we will play a long round of 18.
Okay.
Is 4 hours.
Perfect.
That's a long round. We should be able to play 3.5, depending on.
Depending on who? What? Me? You?
I'll be fine.
I shot an 81 at Jackson Park last week.
Did you? For 9 or 18?
18.
For 9. That'd be bad.
Sorry.
My best round ever. Okay. 81 is pretty good.
All right.
It's a dog track though.
All right.
It's fun. It's fun.
Beautiful.
Is that it?
That's it for us. We'll see you tomorrow. Everybody, thanks for tuning in. We're going to take a quick little 90-second break. Come back with Liz and Jenny. Not at the SIBO, but they're on today. So.
No, Jenny's not on.
No Jenny. TP?
I don't know. Who's on?
Yes, TP.
Jenny's not on. I'm not divulging where Jenny is, but she's not local.
Oh, good for her. TP and Liz coming up next. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the 20 plus years you and I have been working together, our trading has really evolved.
Yeah, no question.
Completely.
Yeah.
And one of the things is that We're not married to a strategy.
No, of course, yeah.
If we can do something better, we will do it better. One of the misconceptions there is about being a professional trader is that we do such complex strategies, and that's just not the case. What we do are simple things very frequently every day. That might be taking 50% profits, that might be rolling a position to a different expiration or a different strike price, that might be selling some premium to improve the cost basis of a losing trade. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hello, everybody, and welcome to the Red Shirt Thursday edition of TP and the LD Show. TP, thanks for joining me again. I'm very excited for today's show.
Yeah, I had to wear a, I don't know if it's a compliment. It's not a complimentary color necessarily, but I had to wear something other than red because I know I don't want to seem like I'm taking Jenny's place.
There you go. Fair enough.
She's very touchy about that sort of thing.
She
and
is.
you know, she has a sense of ownership with you and Red Shirt Thursday. So I want to make sure if Jenny's watching, I'm not muscling in on her territory.
I mean, she is watching. She's always watching us. So I think it was a pretty smart move on your part.
She's tough. She's tough.
Do you know what is so funny? Okay, so if you notice my background, I'm live from the SIBO right now with all the SPX guys behind me. I just got a message from a lot of the people that I used to work with. And I worked with a lot of the people that are still on the trading floor, but some of them have gone. There's a CBOE SIBO reunion on Sunday.
Oh, no kidding.
If you want to fly in, TP, I can take you to the SIBO reunion.
I don't know anybody left from the CBOE. And I used to trade at the Board of Trade. I don't know anybody left there.
I know.
I mean, they were all a little bit older than I was anyway when I started. So they're either dead or whatever, or retired or something.
Yeah.
So where's it going to be? What are they going to do?
It's at a local pizza place. It's actually, they're coming to me. They're not even in the city. So I was like, I don't know if I'm going to go or not, but it's on Sunday afternoon. But when I was texting with some of my friends who are gone, now the person who was texting me was a broker. So TP, this is like the weirdest relationship you've ever had with somebody. When I was face to face, so his name is Kenny, and I stood literally, he was here and I was here for years. So at one point, you'd like this. I loved his wife. I loved his daughters. His daughters were in college, and they would call him. He'd be on the phone like this. And I would be like, just give me the phone. Just give me the phone. And his wife, Michelle, I would be like, what do you need me to work on all day long? Because I've got 8 hours staring at him. Yeah.
That's funny. Yes. You know what's interesting?
But you do. Like, you form relationships.
That when they did, when they did parties, when I was trading on the floor, it was always the brokers that would host them.
Oh yeah.
They would go to some bar, some little whatever, and just and they only went to like 2 or 3. It wasn't a lot, it wasn't a common thing, but the brokers would host them. And we always thought, well, that's because they were always part of a little bit bigger organization with more money than the market makers had. So we were happy to get the free drinks and appetizers.
Oh yeah, for sure. It's so funny. But yeah, so there is that's why in homage to the, I figured I'd change my background. You're in an undisclosed location. I figured I'd take you to the SIBO floor.
Yeah. So I was talking with John, our producer. I was going to have some entertaining background of the Texas Hill Country, and he just shot all the ideas down.
Oh yeah,
he said, no, TP, it's too disruptive. Can't do it. So he gave me this. It looks like I'm in Florida. Looks like I'm in a condo on the beach, which is nice.
It does. It does look like you have a condo on the beach. I like it.
So I sold my iron butterfly this morning.
Oh, you did. Do you want to pop in the platform and you can tell us what time you did it?
Yeah. We can go. Yeah. So.
Here, let's pop. John.
I can't do my platform, but
John, our super producer, let's pop into my platform so we can see what are your short strikes on your iron butterfly.
I did the 65.75 and on the call side, and the 50.60 on the put side.
Okay, so you separated it by a little bit. Now you're taking a little bit of pain. I'm going to guess you did it at 9 o'clock.
Yeah. Yep. I took in $7.50 credit.
And then did you put a closing order to take 10%?
Yes, it's 670.
Perfect. Yeah. And then you just gotta walk away.
Yeah, well, that's basically it. I mean, what's my max? So if it settles up here, what's my max loss? I don't know, a couple of $100. I'm not particularly. I don't want to lose $200 on a trade. I don't like that, but that's part of the business. Like you were saying yesterday, Liz. If I take that $250 loss today, that's Thursday. Tomorrow, chances are I'll be able to make another $70 back. Monday, $70. So keep doing this over and over again. So by August 1st, if I had I've been doing this for a while, but if I had started today, I'd be up money. That's the point of this strategy.
Correct. And it's funny because, and that's why this is kind of a fun trade, especially for not newer viewers, because this is your drawdown is so low in this that it only takes a couple days of 10% wins to make it back, which is what I like.
And I think this is the beginner strategy.
I think so too. Well, I mean, I started.
No,
but yeah, glad on this.
the only two people in the industry, Liz, that would talk about the SPX being a beginner product, we're the only two people. Oh no, start with something small and reasonable. No, get in there, start with something and it's not the easiest thing to execute trades in. So you're going to learn fast how to get filled, right?
Yeah.
How much do I need to give up? Do I give up a nickel, a dime, whatever? Typically it's a nickel, but the point is, if you can start to see how money is made, and like you're talking about yesterday with your son, a college kid making $50 is life-changing.
It is life-changing, yes. And all of his friends are trying to make so much more. They're swinging for the fences in futures, and they're getting their butts kicked. And JD's just being like, I made $50, made $50, lost 200, but well, actually he's making 80. So in this particular, it just nets out to be 50. So he's making $80 a day. If he's collecting $8 and you put it in for 10%, he's making 80. So then when he loses, when you net them all out, he's making $50 a day.
Sure. And the thing is, I think it's important for new traders to understand how to take smallish profits.
Yeah.
And then you can begin to scale it. Okay. Then you can start to say, hey, we have Jack Tucker who'll do, 10 iron condors. I'm not suggesting that necessarily, but you can start to look at other products then and use the same types of strategies. That premium selling works, that defined risk strategies work, that hitting singles spaces is what works.
Yes, it absolutely does. It absolutely does, TP. And that's why I love having you on here to edify it. Now, just to kind of go over today's schedule, if that's okay, we are going to be taking live tweets. Put the hashtag LIZJNY, and TP and I will go in there and do that. While I'm in here, I want to manage the love trade that I put on yesterday that did not go according to plan. And I also wanted to take off my SMR just because this is just some cleanup while we're in here because it's hard to put this on. This was an earnings trade gone awry. I actually want to do LMT too. This was, oh, wow, I got assigned on this. Okay, so there's three things we had to look at. LMT, this was a spread that wasn't, I'm going to go backwards just because. So we put this on for earnings. We put this on for earnings, and it was just a put spread. If you take a look at this TP, this is a
5-point put spread.
5-point put spread. I got assigned on it. I did not even know I got assigned. So the capital is going to be a little bit crazy in there, but all I'm going to do is close this as a package. If this happens, your risk does not change. You might get a scary email saying you've been assigned. You now have 100 shares and your capital changes, but your risk does not. It's holding $6,000.
Is the same. Your P&L is the same. So even though it's like, oh my gosh, I got hit on the short put, and what do I do? My loss, is the max risk still the same? Yes, it is. If you close out the long side, which you're doing right now, and then sell the stock, it's like closing the put spread.
And here's what I did, TP. Maybe you can walk through this with me because I think this is a good learning lesson. So I think the scary emails are scarier. The P&L is the same. But if I'm going to go in and I'm going to close it as a package, you can close one side, then close the other. I'm just going to do them together. So I'm selling the stock and selling the put. But I know my put is the 442.5. And so it should be right around 442.5 because there's almost no extrinsic value in the call. So I know I'm not going to try to sell it. When I originally pulled it up, I can't try to sell it for 442.75 or anything like that. It's going to be 442.51 if I'm lucky.
Yeah, right.
Or 49. I might have to give up some.
Yeah. So the issue is that now you're trying to close a deep in the money put with 1 day to go, and there aren't people clamoring to trade that put. In other words, people aren't all over themselves. Oh, I want to trade the 442.5. So you've got to work with the market makers a little bit on that. That's the problem you run into. It's not bad. Your risk doesn't change. It's just you have to work the order a little bit. And in those cases, sometimes you might want to split the two trades up. In other words, sell the stock, then work to sell the put. To be a little bit more, if you want to be a little bit more aggressive with it. But that's your call as a trader.
That's your
So I'm going to try for parity. I'm going to try to close it for 442.50 and see if we can get filled. And then I'm going to penny it down if I can get filled. Whoa, I got filled. Parity. Now, I think it's because there is maybe a day left, 1 day left. They think parity, we'll take it. We'll close it for that. So we got filled at parity.
That's awesome. That's awesome.
Okay.
Let's take a look
Next.
at Love.
Yeah, Love was in Jade Lizard. Love is down on earnings. We have the 36 put and it's trading 33. So I'm going to go into, wait, no, hold on, not in the right thing. Love. So going to go to the trade page, open it up. I don't have to worry about this call spread, but I will buy back one just because. And then I'm just going to roll this put out in time. So I'm going to buy back my 36 put and I'm going to roll it. I'm actually going to take it all the way to out to the 57-day September.
That's didn't sell the 32 halves.
I'm just going to sell 35. I'm taking it down by $1 and I know my break even on this is 34.
Okay. Yeah, I mean, what you can do, there are a couple of different ways that I would treat a stock like Love that I wouldn't treat LMT. LMT is a $426 stock, right?
Right.
Margin requirements on the long stock are big. Love, a little bit different, $33. If all you did was sold a put in there and said, I'm bullish on Love and I'll sell a put, okay, great. And now the stock's down, okay?
Yes.
Yes, if you were going to take delivery of the long stock, if you were still bullish and you were comfortable being long stock and then maybe sell calls against it, the Love margin requirements, the capital requirements aren't nearly as big. A modest-sized account can actually take the stock. I don't trade that way necessarily, but you can certainly do that.
TB, I got a question for you. I know you fought the good fight on the pattern day trading rule, and now I need you to fight one more fight for me, okay?
Yes, ma'am.
So you were saying it's a $33 stock. It's a little easier to, like you said, we have a small account here, to take the stock if I wanted to. But at the end of the day, the stock is still more expensive than just having that short put, even if it's a synthetic thing. So if I take and I buy the stock and I sell this 35 call. So that's the exact same position as this in the money put. It's holding up $1,500, okay? And then, but if I just sell this put and I'm going to resell another one, it's holding up only $659. So as a trader, I would prefer to roll my puts than ever take that stock and sell the call against it, even if it's the same trade.
100%. What you're doing is a much more capital efficient way to get long Love, okay? And that's why even if you started with a short put and you want to take delivery of the stock, okay, you can do that. Sell calls against it. It's just your capital usage is going to be higher there.
Yes.
Maybe you're okay with that, and that's fine. You want to keep it simple. But to be a cap, look, the margin requirement is what? 40%? On that short 35 put as buying the stock is?
Yes.
Do I remember correctly that
it's typically like 20, it varies by the stock, but it's usually about 20 to 25% of the margin of, because it was $1,800 and so it's $600. So it's about 20 to 25, 30% of what it is.
So if it was $1,800, it'd be about 30% or so. And part of the reason is that it's an in the money put, so the margin's a little bit higher for that. But so there are different ways to skin a cat when you get hit on a short put or when your short put is in the money. And so I can't control which way the stock goes. I don't know. Maybe you can, Liz. I don't know. But I can control how much capital I put in on a trade.
And with the smaller price products, I don't mind giving it the old college try. This was a loss, right? So I could just be like, I just took a $200 loss and move on. I rolled it out in time, improved my strike by $1, and I'm giving it the old college try. Could it continue to go down? Sure. Will I have to fight this for a while? Possibly. But if it stays right here, it takes a little bit of a bounce, I might be able to get out for a scratch. I'm not trying to make money on this trade. I'm trying to lose less.
Can I make an interesting point about our last 5 minutes of discussion?
Yes.
Neither one of us asked why Love was down.
Oh, no, we didn't.
Okay, it had earnings. All right, well,
were the earnings bad? I don't know, and I don't really care.
Yeah.
Okay.
Okay.
Whatever the reason why they pushed Southwest down 11.75% today. I don't know because even if I knew what it was yesterday, I wouldn't necessarily have shorted the stock. Do you see what I mean? In other words, I don't know how the market's going to react to anything.
They could have beat. The earnings could have beat. They might have, and it's just how the market reacted.
Right. Oh, how many times have you seen that, Liz? Where the company will beat earnings and the stock's down.
Yes.
Okay.
Yes.
Okay. I don't know. Oh well, the what do they call it? The guidance for the rest for the next quarter. The guidance didn't look good. Okay, whatever. That's why I don't think about the why. I look at the what.
Yes, that's correct.
Anyway.
That is correct. Okay, speaking of things that have gone down, look at this. Tesla has taken a turn, down 10%. They had earnings yesterday too, but now we've got negative rank. Just keeping us moving.
It was up a little bit last night. It was up about $1 last night, and they just puked them this afternoon.
Was it?
It was. I don't know when they actually released it, but when I was closing up shop here, I looked at Tesla, and it was up. It was up around, I don't know, it was up like 80 cents or $1. Maybe that was ahead of.
And sometimes I can glance at the chat. I'm not always in there, but T-Port in the chat said IBM beat and it's down huge. He said it's down big. I'm not going to put words in his mouth. But it's down 8%
beat earnings?
Yes.
Okay. Right. So you tell me, and I don't want to be argumentative about this, but you tell me what value there is as a trader in trying to look at revenues and profits and PE ratios and forecasting and blah, blah, blah. You tell me, Liz.
I don't see it, but I think the market is so much smarter. Just kind of, we kind of touched on this the other day. When the market tanks or when we're looking at something and all of a sudden you have a big move, I don't know why it already happened. The market is so much smarter and so much faster that I or anybody else is. You can't get in front of it. You have to just be with it. It's very fun. You just have to be with it.
Yeah, and so the point is, what's more important to me is that Love has a 12% IV rank, or IBM has a 12% IV rank. Love was a negative
on the down move, a negative
or something.
Yes. Okay,
that's what I look at. All right, Liz, you got an agenda.
It's 10:21. Administratively, I want to make sure we get to the questions because we promised we would get to these, but I do want to close SMR. We're at 84%, and I didn't have a GTC in, so I just want to make sure this gets closed.
I took my SMR off yesterday. That was a good trade.
Did you? That's good. So SMR is a nuclear stock. So I want to see what OKLO is doing. It's up $9. Wow. Okay, so all those are up. Okay, TP, are you ready for the questions? Now, I'm running it. Helmet on. What we can do is go back and forth if we need to jump in the platform to explain, because we get a lot of comments and emails back, especially about our show, where we will take market measures and we will take questions and we will show what we're talking about instead of just saying, oh, that's what we mean. So we can kind of bounce back and forth. So I'm going to let you guide me on that. But here we go. Questions with TP.
So these questions came from a customer we have, a viewer we have, Fabio in Italy, which just shows you we have a global audience.
And his questions were pretty good.
They're very focused. They're very sort of very practical questions. So Fabio is a fairly experienced trader. Kind of still learning a few things. We're all learning, but have some specific questions, and it's great because he's not alone. Okay. He is not alone. Maybe you don't have time to write up the questions for us. Maybe you have other things to do. I get it. He took the time to write these questions, and I thought when I read them, a lot of people might find these useful.
Oh, there's one. I'm on the edge of my seat for you to answer. So one of them could have been Love Liz. Okay, you ready? So here is number one. When looking at options skew on the platform, what exactly are you analyzing, and what kind of information does the skew provide? Okay. So I'm actually going to go to the platform.
Yeah, let's look at Tesla, or let's look at We could look at Oklo, but let's look at Tesla.
Okay. So,
all right, Tesla's down massive. Let's open up the September options. So what I do when I think about this, so let's explain what the skew is. So if you go over to your columns, Liz, and change maybe volume over to implied volatility.
There we go, implied volatility. Okay.
Yes. So all I ever do is, or really what the skew is the fact that different strike prices each strike price has its own implied volatility. Okay. There's no one single overall volatility that prices Tesla's September options. So what I do is I look at, let's say the 270 put has a 46.8% implied volatility. The 265 put has a 47.41% implied volatility. The fact that those two volatilities are different is called skew. It looks like a U, kind of a shape, right?
Yes.
Skew does not tell you which way the stock is going to go. It does not do that. It is not a directional indicator. However, it is where the market sees risk. Okay? So, the way I do it, the old trick I did before we had all these live numbers is stocks at 303. Okay? 303 is kind of in between 300 and 305.
Yep.
So let's go down 20 points from 300 and look at the 280 put, and it's trading for 1155, and up 20 points to the 325, and it's 1485. Wait a second. So what this is saying is that the out of the money call, the 20 point out of the money call is trading about $3 over the put. This is unusual for a stock. Most of the time, the risk is pointed down. So what this is telling me is that the market sees the risk is to the upside. Doesn't mean Tesla's going up. It's just they think that there's more risk on the upside than there is in the downside.
And I mean, I would argue that it probably had this skew yesterday, and Tesla's down 10%. So I'm going to assume it had call skew yesterday. It doesn't say which direction it's going. It's just you're getting paid more for that top side. And TP,
right.
And that's a great analysis of this. And I like that you said regular skew. And whenever we talk about regular skew, I sometimes like to use an index because it's always glaringly obvious in an index, meaning that the puts have a higher volatility than the calls. And the implied volatility goes up in percentage as you go down in strike price, right? That's a regular skew.
Right. And so until some genius comes and finds a single volatility price all the options, we're stuck with skew. And that's okay. That's okay. But that's what skew is, and that's what I look for. And the point you made, Liz, is where am I going to get rewarded? Okay. Where's their extra option premium, right? In this case, it's in the calls. That's all. Yes. That's all it tells me.
Yeah, I like it. That's a very, very good analogy there. Okay, so that's number one. Let's go to number two then here, TP. This has been super fun. So this is the one I want to hear your take on. What is the difference between volume and open interest, and is there any correlation between the two? And before you answer that, I kind of want to give you a little bit of context on where this might have come from Fabio, okay? Okay. So if you do, I'm going to open up the 0 DTE, and I'm going to go back to open. No. Where's my volume?
Yep.
Where is it?
It's right there.
There we go. I was on top of it. Okay. So here's your open interest column and here's your volume column. So we've been getting, and I went to the SPX 0 DTEs. So when we're on the trading floor, we keep an eye on these because you can see what's trading. So if I just go to just the at the money's right here. So you have an open interest of 2,000, just under 3, and a volume of 44,000.
We've
Right? So the volume is what's trading today. So you can take a look. And so we've been focusing a little bit about these on the trading floor. Now, keep in mind, and TP, I want to hear your take on this. But if I understand correctly, volume is almost doubled because if it's in and out, like say everybody's doing, say it's me and you, and these are our iron condors. And because we put these iron flies on, 44,000 of our friends did the same thing, right? So what if, is it doubled when you're in and out and you get out at 10%? Does that double the volume?
Yeah. So let's explain a little bit, and this is where it gets into the mechanics a little bit. So if Liz and I do a trade, Liz sells a put in the SPX, and I buy that put from her. Okay,
yes.
Just one lot.
Yeah, say we do the 63.75.
The volume is 1. Okay, you and I traded one contract. You bought it. I bought it from you. You sold it.
Okay.
The open interest would also be 1, okay? If there were nothing else going on, if you and I were the first people to trade it, okay, the open interest would be 1. It means there's one contract out there, somebody's long it, somebody's short it, that they might just let it go to expiration, or they might try to close it before expiration.
Okay, I have a question before you go forward about this,
yes.
And I think you're going to dispel this. So I agree with you, then the open interest would be 1. But open interest is static. This will not change intraday. This is how much was traded as of yesterday, correct? This is the only one that can move. Okay, I just wanted to be clear about that.
That's exactly right. So you're not going to see open interest calculated live. The exchanges can't do it, okay? Or they could do it, but it would take a lot of reporting, extra reporting. So what you're seeing is right now that 63.75 put traded 1,900 contracts. Okay. Now here's what can happen.
19,000.
19,000 contracts. Now, Liz, here's what happens. If you and I close that 75 put with each other, we're the only people to trade it. I buy it back from you and you, or you buy it back and I sell it to you again, the open interest drops to 0. So what that 19,000 can be are some people closing what yesterday were 1 date expiration options, and now today are 0 DTE options. There's closing trades in there. There's opening trades in there. There's buying and selling in there. Just like you said earlier, Liz, if I sell that iron condor, I just opened up 4 trades and there are 4 transactions that get reported as volume. If I buy it back, that's another 4 transactions that's calculated in volume. But here's the difference. When I buy that iron condor back, it may not be with this person who sold it to me.
And that's why this doubles. So this could have been 10,000 or 10,000 traded in and out. Maybe they're out of it.
So there can be a correlation, to answer the question, there can be a correlation when you're looking at options with 60 days or further out in days to expiration, where there's not so much in and out trading yet. There's still kind of, there's still building activity there, and where traders start putting stuff on, and the volume is kind of reflected the next day in the open interest. A little bit more correlation there. But when you get to these 0 DTEs, I don't think there's a correlation.
Can I show you something? And I'm going to see what happens. I haven't looked at it in a while, but we put this in. We put it in as a placeholder, okay? So this is August with 29 desks. It's pretty far away, but there was huge volume in this spread one day, huge volume in this spread one day. So Jenny and I bought it. We spent 20 cents or 40 cents or whatever it was just to keep an eye on it, okay? So this is SPX August 22. So I'm going to clear this out. I just want to see, because I feel like this will, there we go. Here's our trade, and it's very low. It's down here somewhere, but there was huge volume in it. So take a look at this. So the open interest is staying. We saw 67,000 of these go up. And so the volume, nothing's happening with it today. So this is the exact opposite of what we saw in the 0 DTEs.
Right. And so that's why I'm saying don't think of it as necessarily a correlation. I would treat it as 2 separate things, Liz. When I see high volume, it means that I might be able to get my trades executed. Okay? In other words, it's a trading thing. Can I get filled here? Right.
Do you think when you look at something like this where you're seeing, and I mean this is nothing compared to a lot of the volume that you'll see. Sometimes you'll see 2,000 open interest and hundreds of thousands in these. So do you think? So we have a tendency to look at them because that's what traders are trading. So you'll see wrapped around expiration. So these round numbers will sometimes gain some traction. I mean I know every day is an expiration, but around your normal expirations, the round numbers gain some traction. So it causes us to look at them being like, does somebody know something that we don't know? There's lots of people trading that line.
I think it's part of our reptilian brain liking those round numbers. We like ones and zeros, things like that. But what you're talking about, and you hinted at this a little bit earlier, is the max pain theory. When you bought that put spread with 29 days, when they had that huge open interest in, what was it, the 5,200, 5,225, whatever it was.
It's so low. We don't know if they bought it or sold it. We don't, but we couldn't afford to sell it because it was a $50 wide in SPX.
Right.
So in order to keep an eye on it for show intensive purposes, we bought it for 20 cents instead of sold it.
So what that is called, there are a couple of different names for it. I call it the max pain theory. So, and I've traded this way before, and it sometimes works. It's kind of fun to look at the SPX, in the SPX. But what it says is that when people buy, when there's the highest open interest is where people, in other words, retail customers, have bought a bunch of options. It assumes that retail customers are buying the options. The market will try to punish all those retail traders for buying the options by settling the index right at their strike price, where their maximum pain, their maximum loss will be. Okay? That's maximum pain theory. And sometimes we'll see it, they try to pin strikes, in certain stocks around expiration. They will the stock tends to hang around, like you said, round numbers. Why is that? I don't know. Maybe it's real, maybe it isn't. I wouldn't necessarily bet the ranch on this stuff. It's more of a nice to know.
It is, yeah. But it's, for me, this is fun. I like to see where the volume is going. I love it. So, and it's totally it's the zero DTEs that change the game, because then you can't go back the next day and see what happened because they're gone.
That's right. So it's all this stuff, really, even if you don't trade the zero DTEs, there's so much information in them. Okay. There's information in every single option price. And the way I look at it, I don't want to get off on this too much, but the option price is like a big spider web. You touch the spider web in one area and you feel it, the spider feels it across the web in the other area. Each of these options across the zero DTEs all the way out to the leaps are connected in certain ways. And it's really cool when you think about it.
Yeah, that is super cool. That really is. Okay, so that's that one. Now let's keep going. I think we've got a couple more here, and then there's a big one. Is there any correlation between gamma versus extrinsic and extrinsic value?
So gamma is the Greek that tells you how much your delta is going to change when the stock price changes 1 point. Okay. Intrinsic and extrinsic value. Intrinsic value is just the difference between the strike price and the stock price or index price. Extrinsic value is what's left over. In other words, with the SPX at 63.74, the 63.50s are out of the money, and that $1.45 is pure extrinsic value. Is there any correlation between gamma and those numbers? Yes, there is. Okay. So options are non-linear, meaning it's not just, always stock moves down 1 point, option moves up 1 point. That's not how they work. They change how sensitive an option is to a change in the stock price, or change in volatility, or change in time is a moving target. Gamma tells you how much your delta is going to change. Gamma is highest at the monies. Okay.
You can see that. I changed it to gamma and delta here, so you can see this is how much your deltas are going to change. And I mean, honestly, I'm going to go farther out in time because this is.
Liz, pull up love for a second, if you don't mind. Pull up love for this example, because a smaller stock price is going to be easier to see.
Yeah, there you go. Because you can see big, and the zero DTEs weren't easy to use because they were 2s and 1s instead of 9s and 6s.
Right. So the gamma is highest for the at the monies. Okay. In between 32.5 and 35 is where 33 is, and 8.5 or so is where the gamma is, compared to 6, then 3, then 2 as you go out further out of the money.
Yes, on both sides it goes down. You're closest to at the money.
Also, what's also highest at the money? The extrinsic value. Okay, so if you look at the right now at the stock at 33, in between 32.5 and 35, 32.5 puts versus 35 calls, that is the richest strangle on the board. Okay.
Yes.
So the 32.5 puts and the 35 calls. The 37.5 is cheaper. Okay, because because extrinsic value also drops off as you go further out of the money. Okay, so yes, there is a correlation between gamma and extrinsic value, not really intrinsic value. I wouldn't make that leap. You don't have to. There's no value in making that leap.
And you are very eloquent in the way that you speak, but we get asked about extrinsic and intrinsic all the time. And an option has the same. So if you're going to go to the 30 line, I just go to the out of the monies. The out of the monies are 59 cents at 63 cents. So I'm going to take the mid 61 cents. That's the extrinsic value for both sides. So I always say the in the money option over here, you minus the extrinsic value. That's the math portion, right? So it's just math. You have to take the extrinsic value out of it. What the strike price is, that's the math portion of it. But the extrinsic value of each line is the out of the monies.
And that has to be true, Liz, because of put call parity. If that weren't true, if the extrinsic value of the in the money option were different than the out of the money option, there would be an arbitrage. And yes,
there is really no arbitrage, is there?
Dividends. I'm not talking about that, but there would be an arb if they were different.
And if there is an arb, or if there is a chink in the armor, the market will find it immediately and correct it.
Instantaneously.
Yes.
And this is why I like high frequency trading shops. Okay. The people that look at little, they take in piles of data, right? It's not a trading job. It's a technology job.
It's a technology job. Yeah.
And they look for tiny little arbs like that, like pennies, right? And they do it thousands times a day. People complain about those high frequency trading shops. Oh, they're ruining the market. No, they're providing liquidity. And the tighter they can keep that put call parity, the closer they can keep those extrinsic values, the tighter the bid-ask spreads can be, the easier it is for people like Liz and me and you, the viewer, to trade. It keeps our slippage down.
You know what, TP? I'm really glad we're doing this because this is stuff that you and I take for granted until somebody asks us about it again.
Right, and that's one of the downsides to us. Let's say we've been doing this so long, it's hard for us to remember sometimes what it's like to start out. Yeah. We can talk about calls and puts, but like, what's this gamma number? The hell?
And the
what's open interest, right?
So, and you know what's crazy, TP, is when I first started, I had literally, so before I went on a seat, the things that I needed to know were my synthetics, right? Synthetics 101, understand all the synthetics and what they create, and the Greeks. That was it. It was all I was armed with. And then you got to go in there and work from there. So like understanding the theoretical Greeks and understanding synthetics were all I was taught before I was put on a badge.
Yeah. Right, because traders learn in dog years, and if you don't learn pretty quickly how to make money, you don't last.
Oh yeah, for sure.
If you don't pick it up quickly, you don't last. All right, what's the next question?
Okay, let's keep going. So we've got next one is, does the platform show a break-even price before sending out an order? And
let's take a look.
Well, here, you know what? I'm just going to go to IWM just because they have single point strikes. So I'm going to say if I'm going to sell a 217 put in IWM, I think this is where the break-even price is. So if you take a look at this green bar, it'll show you exactly where your break-even price is right there. I don't know that it says it when you're sending out the order, and it doesn't.
No, where the green bar, I can't. Where's the green bar, Liz?
So the green bar is right here. And so, I mean, this is terrible for people that are colorblind. So the green bar stops at the strike and then it turns gray from 217 all the way down to about 215.10. And that makes sense because I'm collecting 190 for it. So this is where your break even is. If you wanted to see it again, I'm just going to show you this. You can go to the curve view analysis and that'll show you where your break even is right there, where this flips down.
That's exactly right. That's where I was going to point people towards. Is it's a little, because I'm old, it's a little bit easier for me if I want to see what the break-even point was, is on this curve display for options. And this is what the guys use when they put out, Mike Recantine and Nick Batista put out the cherry picks every week. They'll take images off the curve because it's visually appealing. It's easier for people to see. I will speak for Liz and myself when I say that once you start trading a lot, the grid is a lot faster.
Well, and TP, I mean, sorry if I sound like I'm 107. We didn't have this. So in my mind, when I would be on the trading floor, I would literally be writing the graph in my head. You know what I mean? I'm using my hands because I had to do the numbers. I had to take 217 minus 190. What is that break even, right?
Right. And so there are a couple of things, but I do like the idea, by the way. If we go back to the grid page.
Table, yep, got it.
Table, thank you. That a column that says, break even point for buying or selling, that because the break even is the same for whether you buy it or sell it, right?
Well, no, it would be different. Your break even, you'd have to wait. Hold on, let me flip this over. Yeah, it would be the same.
It's the same.
Yeah, it's the same.
It could be a column choice. Show me the break even for this individual option.
There you go.
That would be an easy add.
There you go. That would be an easy add. So that is a good question, but that's the only thing that we have for the break even. But it is visually here. So to the platform's defense, it doesn't say the number, but it does bring you to there. These bars definitely differentiate, and that is the break even.
Yeah.
So they have it in two spots. It's not a column. I do give you that. Okay, this last one I put on here, TP, because I told this woman we talked through it, and it's a long one. So I wanted her question up here because anybody on Twitter can answer it as well. But long story short, she is doing Iron Condors Jack Tucker style. Okay. So in SPX, it's 0DTE Jack Tucker style. And when she moves her untested side, so if she's taking off the untested side, meaning the winning side, and rolling it up, her P&L looks very negative. And she said it would be helpful if you two can talk through this.
Okay. So.
Whoops, sorry.
What? If we load up, let's just load up an Iron Condor.
I want to see if I have an Iron Condor in anything because I hope I have a losing Iron Condor. Let me see. Nope. Because it would be real easy to show if I have a losing one.
So what happens is P&L open. Actually, you know what, Liz? You can go in and look at your love trade.
Okay.
I think that'll show you what we're talking about here. If you go into positions, where's love? So the P&L open right now is.
Oh, you know what? You're right because I didn't close the one. So it's as if I moved my tested side out. If you take an Iron Condor, and this is what I was going to try to talk through, but I don't have one in here. If you take an Iron Condor, you've got both sides. You've got the call side and the put side. Okay. So if the stock goes down and your put side's being tested, you buy back your call side and roll it down. You left your losing side, so your P&L looks crazy like a loss.
Right. P&L open is for your open positions. It doesn't factor in any closed trades. So let's keep it simple. Even if you didn't roll the trade, I've got an Iron Condor. And I close the untested side. I just close it. I don't roll it. I don't do anything. I just and that should be a winning trade. So I take off the untested side. It's a small winner, but I have this losing trade on the tested side. The P&L looks awful because my open position, which right now is the tested side, has a big loss. Okay.
And I think you're right using love, because this was, and I'm not saying I won on this trade, but the call spread won, right? I had a call spread and I closed one portion of the call spread. I just closed the short option because it was a penny, leaving the long, which is a negative. So the P&L will look strange.
Right.
I just wanted to tell, I forget her name when she sent this to me. If you go to order chains, it'll visually tell you, and you can do it back however many days you want, how you've been doing in it. Let me go to iBit order chains. Let's see what we've got here. And you can go back for 30 days, and this order chain up here will tell you with your closes and your ads. And this is something that we never had before either, knowing that you closed your winning trade and you have the losing trade still on. If you go to your order chains, which is you pop out the side, you can really take a look at what you really have, even if it's a losing position.
Yes. And you can pick through and see, okay, I sold the Iron Condor for this. I bought back the untested side for that. My net credit is and you got to do a little math, a little bit, right, to see what the net credit is now for your tested side and what, what the break-even point for that trade might be. But the point is that you've got to do a little bit of work and understand that you booked a profit with the untested side, that the P&L is just on the open trade. That's
and
it.
I think that's a
looks worse than it actually is.
It looks a lot worse than it actually is. I agree. Okay, TP, we got to the end of all the questions. We have about 10 minutes left. I am going to jump into Twitter, but I've got to ask you, because you are our resident expert. There's a lot of earnings again today. Intel has earnings, and we have a position in Intel. So Intel's been one of our longer positions that we've kept. We've been rolling this. It wasn't out of the money put. It is now an in the money put in the 22-day option. So I still have 60 cents extrinsic value. I think I just want to leave it. Is there anything you would do to protect this position if you have a synthetic covered call on Intel going through earnings?
No, I would leave it. The reason I'd leave it, Liz, is I can't tell you how many profits I've given up by protecting positions.
I agree.
Okay. Selling, oh geez, this put is hurting me. I should sell a call against it. The way you would defend against this in the money short put, which is long deltas, is adding some short deltas, which would be selling a call. Okay, like the 25 call. And it's not bad to take in 57 cents. Great. Okay. I have run into so many cases where that. And again, I'm not saying this is going to happen, but earnings come out and Intel is up $8. Okay,
yes.
Or
do you know how mad I would be if I sold that for? I get more mad about selling a call for 50 cents and giving up the profit potential than I ever will not getting that 50 cents.
This is where holding on to your original assumption is a lot of times the best thing to do. Trying to get cute with defending positions, like, okay, maybe I'll sell a call. Sometimes it works, sometimes it doesn't. And I don't necessarily see any benefit in doing that.
Sometimes, and I'm not going to do this because this is the show account and I try to follow the rules, but in my account, if especially something like Intel, it's $22, I'll lean in and I'll actually defend. I will try to defend it with the same side.
Yeah, get a little longer.
Yes.
It's like dollar cost averaging in options.
Yes, because it's a cheap way to do it. Okay, so good. We're all in favor. We're gonna leave this, but I'm gonna pop into Twitter because we've got about 8 minutes. I wanted to show you Mikey is building a dock. So Mikey, I think I should hire you.
Nice. Where is that, Mike?
I think he's in Wisconsin.
Wisconsin.
Yeah. The Polish warrior is very handy. Okay, so I went. This is going to be a speed round of Twitter because we've got 8 minutes and lots of them coming in. But this is Cupcake Trader. ES Ironfly done 10% in
Book
80.
It, Cupcake. Books will win them. Nice. I love it. I love it.
10%, 80 minutes. I love it, Cupcake. Okay. Jeff, thank you very much. This is what I love about what we do on this show. That's the strength of Liz and Jenny. You show your work. So kind of going back and forth, you and I could have stayed on those questions and just answered them in theory. And even every market measures, we try to show what we're talking about. I'll show the Ironfly. We'll show the things that they're talking about in each market measure. So thank you very much, Jeff. I appreciate that.
Yep.
Now, Frank the Great, I love calling him that. This is from Twitter. I have a covered strangle in now, sold for $50 yesterday and marked for $10 now. Would you close it or wait for tomorrow?
Now is a $990 stock.
This is one we're not even gonna look in there. They sold it for 50 and it's now worth 10. Close it.
I'm missing this somehow.
They sold a covered strangle for $50 yesterday, and now it's marking for 10. So if you sold something for 50 and it's only $10, you gotta close it. Yes.
Oh yeah. And it's 10. So you're booking a $40 profit. Take it.
Yes.
Move on. No, I thought he was talking about strike prices for a second. I didn't understand it.
Okay, and then Tesla started to sell off yesterday when Elon was speaking of the earnings call, and I appreciate this. Thank you very much.
Thank you.
Ajit, I love Ajit. Okay, so Ajit's coming in with
LMT.
LMT, thank you very much. This is what we had just closed that. There was a put spread that didn't go according to plan, and it gapped down on earnings, and it's been staying there. So thank you, Ajit. Now Keaton comes in. I've been chipping away with small winners all year, and I've been taking 30 here, 50 there. I think my biggest winner all year has been just over $100, and he's up $2K for the year.
This is how it's done, Keaton. This is how it's done.
I'm reposting this. Yes, I can't wait.
This is how it's done. It's because here's the thing. What he's realizing is that you can never, ever separate risk or profits and losses, risk and rewards. You will never separate them. The bigger rewards you want, the bigger risks you're going to take. That means, sure, Keaton might be making $10,000 in a trade, but he's at risk of losing $20,000. He doesn't want to do that. No. It's much more reliable to pay the bills to take $30 here, $50 there, $100 occasionally. That pays the bills. You are taking smaller risk, taking smaller profits, and surviving as a trader.
And you know what else, though, TP? And I think I failed to mention this sometimes, too, but I'm doing it with my son, so I got to talk about it here. I've got a lot of open positions in my account. If you looked at my account, I'm just got scrolling positions, but I'm okay with the risk in them, but it's still nothing in there. And my account's doing great, but it's not a win until I close it. Nothing is a win until it's closed.
Yeah. Now, the flip side of that is I don't like to use the term paper profits. That's why what some people who don't trade, who don't invest, forget even just putting money in a mutual fund. Oh, it's paper profits, meaning they're not real. No, those numbers are real live P&L numbers.
They are live numbers.
Taking the profits yet, but they're real.
But I'm risking by leaving them on. I'm risking a loss if it turns around. If say I'm bullish something, just take OKLO. I'm up so much in OKLO, and it's just a stock position, right? So what could happen is if I wake up and OKLO is down $30, which then I didn't. The only way to book a profit is to book a profit.
Right. So it's you can't count on it necessarily, and things can turn around. But if you want to hold the position, if your outlook on the stock hasn't changed, hang on to it.
Hang on. Yeah. No, I agree.
Hang on to it. Just like maybe you're bullish on Tesla, maybe you're bullish on Love, whatever, right? But that's the point about Keaton is small profits, small risk.
I love it. Okay, and then this is Mr. G. Good morning. I wouldn't believe it till I actually do the trading. Still haven't learned how to paper trade, but this is what AI has achieved so far. So Mr. G has been putting things in AI, and so far AI has come out decent. I don't really know what I'm looking at here. I'm not going to lie to you. He's just looking at profits and losses in AI. So
yeah, I'll take his word for it. By the way, paper trading is. Don't do it. Paper trading is you do not learn how to trade paper trading.
You got to actually feel the pain. And that's the only way to learn. Okay, we got to keep going because we have 3 minutes. So this is also from Frank the Great. Hi, TP. This is straight to you. How do you deal with a list of losses on a trot? What? Wait, hold on. I have a 100,000K portfolio and lose $500 each on 10 straight trades. How do you approach your next trade? That's a tough one.
Harsha, I would not change a thing. That it is what you're running into when you have 10 trade 10 losses straight, and you're basically following the rules, probabilities, and all that jazz, that you're running into a very unlikely statistical scenario. The odds are, I'm not saying your next trade is going to be a winner, but if you keep doing it, eventually it should turn around. Just like I'm looking at a loss on my iron butterfly today. Okay, it happens. Take it.
Yeah.
And I might lose every day for the next 2 weeks, but I will do it again the following week because the numbers play out that way. So it's you may want to tighten up your risk. You may want to pick your spots a little bit more in terms of volatility and IV rank, but don't change anything even if you have a string of losses. It doesn't disprove what the concepts are.
Yeah, right. And trade small, trade often. So kind of, you just can't quit. But reevaluate what you're doing too, just to kind of take a look at this. And this is going to be our last one for the day. Punished Pixels. Good morning, Liz and TP. Question on earnings trade. Using the weekly options to enter into an expected move iron fly the day before earnings announcements to take 20% profit on an IV crush. I used ChatGPT to backtest and the results are favorable. What are your thoughts? So if I'm understanding this correctly, they're talking about earnings trades like Intel or something that has earnings and doing an iron fly the eve of earnings and playing for a vol crush.
Yes, it's basically the same thing as doing that iron fly in the SPX. It's basically the same idea. You're taking a high IV product like Intel was or Love was yesterday, selling at the money premium, hedging it with slightly out of the money options, and then, taking a 10% profit. The difference between the earnings trade and the SPX are two things. First of all, it might be a little bit harder to execute the trade because SPX is a very active product. And you're not going to get the huge overnight moves typically in SPX that you will on an earnings stock.
So I'm trying to look, and is it still true that they say earnings vol is overstated versus understated? So you should get a crush in IV?
You do get a crush in IV. That happens. That happens.
So the earnings volatility overstates the move versus understates it 8 out of 10 times. So that's why I think ChatGPT is saying that. So the volatility is there because you could get a crazy move, but most of the time you're just going to get an understated move and a vol crush.
The other thing I would suggest, Punished Pixels, is ChatGPT is great, but Dr. Data's backtesting tool on mytastytrade.com is way better. Okay, I don't know what ChatGPT does to backtest. I know what our backtesting tool does. I would rely on that to test any strategy.
There you go. You heard it here first. All right, TP. I can't believe how fast these hours go. I appreciate you more than you will ever.
It's an hour already? Oh.
It's already done. We're done and dusted. But I get you tomorrow on Flame Shirt Friday.
Perfect.
So make sure you've got the shirt all ready for tomorrow. It's Flame Shirt Friday. RTP, thank you very much. Everybody out there, good luck with your earnings trades. And remember to trade small, trade often. Laugh with us, learn with us. Watch TP and VLD. We'll be live again tomorrow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler. And of course, she's not here yet. Katie McGarrigle should be joining us in just a couple minutes. But if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos, because that helps us immensely. And more importantly, just come chat with us live, because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get spent with my guy, Mikey Butler, and Katie McGarrigle soon. How are you, sir?
Doing great.
Yes.
Not much has changed since 9 a.m. Market's still where it's at.
Yes.
Bitcoin catching a little bit here.
Mm-hmm.
But yeah, we've got some trade ideas that we'll talk through shortly. But yeah, today I've had a decent closing day.
Yes.
So I closed the Google call diagonal. Is the 190-200 diagonal spread, long September, short the 1 day. That was like a $300 winner.
Beautiful.
IBM, the opposite direction, long the put diagonal, long September, short the 1 day, 10 points wide, same setup. That was also a nice winner. And then Southwest Airlines, that was a Katie trade.
Yes.
That was
you held it much longer than I did. I closed out for a small profit about a week ago.
It still works. But yeah, that was a put zebra.
Nice.
Seeing a nice sell-off today in LUV. So I took that money and ran.
Love it. Love it. Yeah. I as well took this morning, as well as just this week, this vol crush week, the opportunity to close out of a lot of positions. Had the Google crab trade in both accounts. Those were big, nice winners. Really hit that on the head there with an inside up move. So I took a couple $100 out of that in both. I also closed the IBM call spread yesterday into the close, because the stock sold off like $7, $8, and I was up $50 on it. I was like, all right, I'm going to take this money and run. Wish I had held it, but of course, sometimes that happens. Still a nice little win there. I also closed out of the Tesla call spread that I had part of the Iron Condor. I'm leaning long now with the at the money put spread, the 300 290. And then I kind of got bailed out on this Walmart call that I had left over from a diagonal or calendar spread that we had, where I was out, 60, 70 cents on it. Stock has had a nice little rally, took the money and ran there. Some of these stocks have had a nice move. You had a huge vol contraction. So I'm trying to kind of lighten up some of those, be a little bit more selective with some of my positions.
I hear you.
That's what you got to do.
Someone asking in the YouTube chat, any adjustment to the Tesla Iron Condor? So that was an earnings trade I placed yesterday, but no, the strikes I have are 300, 290 on the downside. So we're right there. You could roll it to September if you want, but you're not going to pick up much premium, and I'm totally fine here having some downside risk at 300.
Yeah.
And there's nothing to do with the call side. If you wanted to, you could buy it back for 20 cents, but it's not going to hurt you because if Tesla has a 20, 30 point rally back to the middle of the range, it'll be a profitable trade and you could just close it. But that would be the only adjustment is getting rid of the call spread.
Which is what I did. Yeah.
Keeping the put spread or rolling it out in time if you want to be more conservative.
Mm-hmm.
But yeah, I'm just going to do nothing.
Yeah. With these Iron Condors, we talk about it, you go a little bit further out in time into the August monthly expiration, you have some exposure to the earnings, you have exposure to the volatility contraction. This trade I did at a net, I did it at 301 yesterday, and then I bought back the call spread for 15 cents. So I'm in it for $2.86 credit. It's only marked at 425. So it's a P&L, I'm out $130 in marked loss right now. So it's not like, it's still a small position here, even though it's right at the money here. So I'm okay leaning a little bit directionally long here.
Yeah, you got a nice IV crush there, about 7-8 percentage points.
IV rank at -4.
Everything's negative.
Everything is negative. It's kind of crazy from the with Scott this morning. Bunch of negative IVRs on the board here.
Handful of them.
Yes.
But yeah, that's pretty much it. I have an SPX Iron Condor too. That's blown out to the upside. LOL, big LOL, capital LOL. So I need a 70 point sell off for that one. But these SPX Iron Condors that are 10 points wide, it's still trading for $250 less than max loss. So if you wanted to close it, you certainly could. But I'm going to be holding on to that because now it is just an embedded short delta position that I have in my portfolio. So there you go.
It's okay to have a little short delta.
Yeah.
All-time highs.
Every once in a while.
Very nice.
What's up?
Look who the cat dragged in.
Hey.
Surprise.
I feel like Hermione when she has the little time turner and then she shows up at Ron and Harry's.
We're glad you showed up.
When does that series come out?
They just started filming.
Is it going to be at the HBO, obviously, right?
Yeah. Yeah.
Early 2027. Oh my God. I'm going to be like 50 years old then. I'm going to be 40. Right? I'll be 40. I'll be 39.
Oh my God. 40.
But 40 is the new 30. I feel great. My Aura ring tells me that I'm 6 years younger than my actual age.
6 years?
You know what?
Yeah.
Mine says that I think I'm like a year older than I actually am.
Damn.
I'm like, come on.
Yeah. Damn.
What's that about?
We got to get you on the ganj, you know what I'm saying?
I have like back pain, so.
Oh yeah, you got it.
I'm like.
You got to go.
Yeah, every
to
day it's like which new thing. Yeah. Anyway, sorry for showing up late. I'm here now.
It's gonna be okay.
I was busy taking over the world,
Yes.
Naturally.
And the busiest person at Tasty is Miss Katie McGregor.
Thursday is particularly rough today. Back to back to back to back to back.
Yeah.
But we have Ming Hin for lunch, which
if we get any,
we will.
I told Chris Grace, I'm like, I might order Aberdeen for lunch.
What would you get? A wrap?
The Southwest chicken salad as a wrap.
Strong. They have really good food there.
Truly. It's one of my favorite neighborhood spots.
Yeah.
It is a good.
And now they actually do delivery because they don't really open until 4 or 5.
Yeah.
Good wings.
And they have Montucky cold snacks, which is another little hidden gem.
Yeah. So I think that might be in my future. Give myself a little treat.
You should just go there, take a couple shots,
They don't open till 4. So
yeah.
On most, I believe on most, like maybe on I don't know. They're usually not open yet. Maybe on Fridays they do like summer Fridays. But anyways, it was great to hear about your trades as I was sneaking in.
Yes.
Shout out Southwest.
Yeah.
Covered that zebra.
Woo woo.
Nice little pullback.
Damn, that's a big move.
Big old candle. I think I got out maybe too early. Let's see. If I would have held out a little longer, I would have made an extra $100.
Damn.
But hindsight's 2020.
Yeah, I mean, 11% move on a non-earnings.
I think it was earnings.
It was earnings.
I think it had earnings this morning. I believe so.
Yeah. I don't know.
Yeah, you're right. Weak travel demand. What are you talking about? I just booked a Southwest flight.
Did you?
I'm shipping off to Boston. Yeah.
You're such a little traveler, man.
I mean, I had like 80,000 Southwest points, and I'm trying to get rid of those. So.
Trying to close that credit card?
Yeah, because I just got the United Club card.
Get on that.
Yeah.
Big boy.
Yeah. Very nice. I didn't get the invite for the fight this weekend. What the hell happened?
I didn't get that invite either.
UFC?
Yeah. Remember we talked about it last weekend? You're like, I'm going to let you know what we're doing.
Oh, yeah. I mean, I sat at home and watched it in isolation.
Yeah.
Lame.
However, when we're in Seattle, there will be a fight on Saturday night, so we can watch that together.
Oh, okay.
Very nice.
Nice. Coming up real soon.
Literally, August 10th.
Woo!
Less than 2 weeks.
tastylive.com/events.
Yeah.
Crazy.
The trio.
It's going to be glorious. Question is, are we going to go back to the world's largest bowl of pho spot?
We might
Really
have to.
bookend our lives? Because we went there like 8 years ago.
Yeah, we went there in 2019.
Yeah.
Was the last time we were there. Before the world changed. Before crude oil went negative.
Yeah.
Before everyone was wearing masks.
Before everyone was wearing masks. Before all of the pandemic stocks were bopping around everywhere. Before Roaring Kitty.
Wow.
What a time.
What a time.
For babies.
Seems like it was a different world.
Was.
Yeah.
Yeah, we're weathered. Now.
Weathered.
We're battle tested at this point.
Yes.
We've been battle tested.
Yes.
We've seen some stuff.
Yeah.
Yeah, absolutely. But
Yes.
yeah, no, other than that, I have not. What have I covered anything else? Southwest. Let's see. Covered Netflix the other week. I think that was last week, though. I've been super light, so definitely down to see what people are doing in the chat.
Cool.
Share your ideas.
Very nice. Then should we get to them? Should we get to
Could.
we should
certainly
trade
could.
ideas?
Let's get to our trade ideas.
Let's do it.
A little something.
Mikey, is that like a Wingstop sponsorship on your sleeve right there? It looks like it.
does,
It kinda
actually.
does
It
look
does
like
look like that. Yeah, it's not a Wingstop. Let's get this in there. It's not a Wingstop. It's I guess it's the logo for something. I don't know. But it's a Kiwa Island shirt. So I don't know. I'll have to look into this.
It's all good. You guys
Anywho.
both look great.
Thank you. So do you.
Thank you.
Katie.
Trying.
July 24th. We are a hop, a skip, and a jump away from August, which is insane.
Cray.
Cray.
Oh, we need the click,
Cray, for
the
real, for
remote in Adam Sandler.
Classic.
Just pause.
Speaking of Adam Sandler, Happy Gilmore comes out tomorrow.
Ah.
The second one, the newest one.
Nice.
The remake.
Yeah.
It's gonna be glorious.
I heard that MJF, which is like a wrestler, is like his son in the film. I don't know.
I don't know.
Speaking of wrestlers,
I don't
did you
know
hear
that.
the sad news?
Hulk Hogan.
Hulk Hogan passed.
No way.
Yeah.
Dang, we're losing legends left and right.
Yeah. Tell your boy that my thoughts. He is in my
Or
thoughts.
with him?
Yeah.
Yeah. All right. I'll pass
Thoughts?
that along. I'm sure he's sleeping right now. He's got
Really?
that summer teacher life.
Ah.
Oh yeah. Living it
Deep
up.
sleep.
Getting lit all night long, and then just sleeping all day.
Worships in the night.
Yeah.
Just literally, I go to bed at like 9:30 tops. 3 a.m. Still no sign. Yeah, different lives. It's all right. Good for him.
Ships in the night.
Yeah.
Yeah, let's get to some trade ideas. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to the Tasty Live channel. You'll see this video front and center. You can throw in your trade ideas questions along the right-hand side chat. But first, tree trade ideas. Let's kick it off with some coffee, shall we?
Ooh.
Coffee.
So yeah, Starbucks is down 2 points right now, about 3%. I was just looking at stocks that are down today and stocks that I don't think will stay down forever. Starbucks is one of them, and they have earnings next week. So this is your classic pre-earnings pump setup where I am buying the call diagonal spread a week before earnings. They have earnings July 29th after the close. So middle to later of next week. But Starbucks is down to $94. It's another low IV product. 35% IV is really low. So I went out and I bought the 95 strike in September, and I sold the 100 strike in the August 1st cycle, which is the weekly cycle that contains the earnings announcement, and collected about $1 and change for that short option. So this is a really small trade, 5-point wide diagonal spread, $3.16 I was filled at. And yeah, you can get a little bit of a better price now, but this is one where if we get a rally back to 95 or 96 before earnings, we can take this off for $100 or $150. But if we hold it through earnings and we get over 100, it'll be a nice $250 winner. So
I joined you.
Sweet.
I needed some long delta.
There you go.
Got filled at 313.
Starbucks.
Starbucks by me is closed. It's been closed for a hot minute.
Whoa. What are they doing?
Couldn't tell you. It's been closed since late March, early April.
Really?
Yeah.
Huh.
I thought it was because our CMO left and that was her Starbucks. I'm like, oh, like you stopped ordering iced tea and therefore they had to go out of business.
It's possible.
Yeah.
Sometimes it'd be like that.
Yeah. I joined you.
Cool.
All right. Little kind of teeny Johnny trade, but I'm here for it.
Yeah.
I'm mad about it. What about you, Nick?
I got a little funky one in OKLO. This is one of the nuclear reactor stocks, a small nuclear, gonna power all.
Degeneracy. Is this a degeneracy trade or?
Somewhat.
Okay.
But everybody's been asking, how do you play this to the downside? It's hard. It's hard to be on the.
Sorry, you do. You
want to play into the call skew, but it's like basically cash secured. So it used a lot of capital to put that sort of trade on. So I went with the downside crab trade to get a little bit of extra juice to squeeze from the downside premium. The skew is very heavy to the upside. If you are bullish here, you can do some really wide crab or ratio trades or really anything because there's just so much skew to the upside.
Yeah.
I'm going to take a little shot to the downside though. So I'm buying the 70 put. I'm selling 2 of the 60 puts in the August expiration, buying the 50 strike put just to cap the downside risk and reduce the buying power used on the trade. You're selling about $2.50 of extrinsic value on the downside. So it's a pretty hefty amount. Again, the skew's on the upside. So this sort of setup on the upside is going to be a lot cheaper than what it is on the downside. But this is one of the ways that you can get some short delta here, a little bit of positive gamma. You need kind of just a small pullback relative to what the stock has done. I think it's up like $15, $20 in like the span of 2 days, 3 days here. I would look for, a couple $100 in profit here. I moved the risk profile here is moving it all the way to August. So, your best case scenario is probably like $500. I would be happy taking $100 or $200 out of this. It's a cheapie, uses 500 and change in buying power, which is just the debit that you paid on the trade. It's a spicy one. I'm also in SMR. I have a call ratio spread in SMR, which is another one of the small nuclear power companies. I'm kind of all over the place in these.
Okay.
Selling premium.
Yeah. Trying to catch lightning in a bottle type thing.
All right. I might bite. I will check. I shall see.
Sounds like a chicken out.
A chicken out. Don't reverse psychologize.
I was actually thinking about that. She was like immediately in the Starbucks one. She's like, followed you. And then for yours, she's like,
check
on it.
No, you've been good to me lately, Nick. I'll give you that. You got me in some crispy trades.
Yeah.
You know.
Crispy, I don't know if Thomas would approve of that slang.
Oh, to Thomas Furta.
Yeah.
Furta Thomas.
Yeah, I think there'd be something for bussin'. Some bussin' trades.
Is that still a term?
Still going. He had bussin'.
Unfortunately, I'm not. Well, actually, maybe fortunately, I'm not part of that. The whole bustin' generation. So I don't know.
How old is he? Like 19?
21.
21.
21.
Have you guys talked to him about what it's like to like go to college bars these days or anything like that?
No.
No. Good
But
answer.
We were talking to Glenn because Glenn was kind enough to remind us that he's out of the country.
Yeah.
Yes.
For our Wednesday show. And we
Yes.
were like, "What are you doing?" And he sent us some pictures. And
He's partying in Amsterdam.
He was partying. So that was nice to see what it's like to be 20-something in Amsterdam right now.
Yeah. Good for him.
Living
Glenn
the
works
dream.
hard. I'll give him
He does.
that.
Yeah.
So
That's right.
he can live it up in Europe for however long his vacation is for.
It's a great time to be alive. over
Yeah.
there.
Also, I just have mad respect for Glenn as a former, high school art nerd. He is an art connoisseur.
Is he?
He used to work at like Christie's auction house.
Really?
So literally, like because we sit by each other.
I might have to hit him up.
Yeah.
I gotta.
Am I trying to get
Nick-
hired, or are you trying to get some art?
No.
Nick might have found a call option.
I I don't want to toot my own horn, but I have an eye for the arts.
Yeah. Yes.
But no, he does have something. He has something that could be something.
Yeah.
That apparently the person who sold it to him didn't realize what it was. But
it's sold. It's from the 70s. It's the 70s, like very Art Deco-y. 4x4. It's huge. 4
Art
feet.
Deco, but the 70s.
Yeah.
Interesting. Okay.
But you saw the signature and you're like, "What's this?"
Yeah, I was like trying to find
Google
it.
image search.
Yeah.
Found the person.
And it could potentially be a very famous Chicago artist.
Nice. Yeah, definitely tap into Glenn when he comes back.
Yeah. So
Yeah.
excited.
Now you know.
Very exciting.
He's your guy.
We'll see. Yes. So
And-
I'm gonna have to hit him up.
All I get is like crap that people in my apartment complex want to give away. Deal.
For free.
Some BS. All right, I won't delay the inevitable. I am going pretty simple here by just looking at a short delta yet defined risk play in the euro. Take a look at a chart of the euro. You've seen, obviously a little bit of a run up relative to the US dollar. So I'm just looking at a long put spread here, just a simple set and forget type trade. I am long the 118, short the 117 put spread in September. I paid around my max loss, which of course is 575, and slightly a little bit more in terms of max profit. And you can kind of see where that came from based on where the price of the euro, the 6EU5 contract was trading relative to where I put these strikes on. So yeah, pretty simple. I'd be happy to get like $200 out of this. Just need a pullback over the next 43 odd days or so.
I would say I followed you, but I'm already in it. I'm short a call spread out of the money, and all of my Tasty FX positions are long the dollar. So
Okay, there you go.
I am with you.
There you go. Yeah, I mean, you can totally use like the static micro euro future as well. It's about $375 in buying power. Obviously, more undefined and more of a static trade, but do you?
I just
Lots
got
of
in.
ways.
I got into the Tasty FX short euro dollar.
There you go.
Position 0.04 size.
Okay, yeah, and that's the one like where you can kind of trade the different sizes there. So can definitely check that out. The next follow-up question we always get asked is, well, what about the corresponding ETF FXE? Literally no premium in the options, so not really something I would dabble in. And if there is premium, the markets are like very wide. So stick to the futures options, maybe look at and consider the micro futures contracts, or look at the actual FX itself. Available on Tasty Trade. depending on which device you're on. If you're on the desktop, there is a tab for it. If you're on the web, it actually is the drop down of the logo on the platform.
Very cool functionality.
Yep. And mobile coming soon.
Yes.
So lots going on. Trying to get everything to trade all in one place.
Beautiful. It's a beautiful thing.
Yeah, totally. So that's that on that.
Cool.
That's that on that. You smell this Ming Hin coming through the floor, through the door?
Yeah, what if I was like, sorry guys, I was actually late because I was just inhaling.
I would respect that. I would respect
beef broccoli.
You had like the orange chicken on your face.
Yeah, if you were just making yourself a plate.
You got a little soy sauce stain right here. Okay?
I wouldn't blame you.
I gotta be careful with this shirt.
Yeah.
Yeah.
It's white.
You're gonna have to do like the napkins
The bib.
all around the yeah.
The bat bib. All right, lovely. Free trade ideas. Posted to the follow page. Check it out on Tasty Trades platform. Popping over to the YouTube chat now. Andrew got 100 shares of UNH from being assigned. I've been selling calls at the cost basis around 325. Not much juice left in these calls though. Should I go to September? I kind of think you stay in August because they have earnings coming up next week. So you kind of want to be in the higher IV, especially if you have shares. You want to be in the higher IV area. If you go to September, you'll still get a little bit of a vol crush, but if there's a rally in UNH, they're gonna gain value against you. Or August, they likely won't because the vol crush will be a lot more apparent.
Tough call.
Yeah.
Selling calls into the lows is always tough.
Yeah. But yeah, I think I would probably stay in August, especially if you have shares and you're willing to hold the shares. Thanks for the love, Zebra. And Katie.
Huh?
Love, Zebra.
Oh, yeah,
How are
you're
you?
welcome. Whoever it is out there. Sorry, I was dissociating for a second.
All right.
I don't have many brain cells left after this week, if I'm being really honest.
It's okay.
Huh?
What is my email? Just send an email to support@tastylive.com.
Yes.
And I will stare at it.
You might answer it too.
Yeah. Mark it to my attention.
Yeah.
And I'll
Yeah.
answer it.
Yeah.
If you give your Cash App, maybe you'll answer it quicker though.
Oh.
Damn.
Just
that's
kidding.
We answer the emails there.
Small but scrappy team.
It's the same team.
Forever and ever and ever.
10 years and running.
10 years running.
Yep. Fantastic.
TSM call diagonal.
Thanks so much.
-5 IV rank. Had a little bit of a pullback here. That's tough. I mean, you're right at highs. What's NVIDIA doing? NVIDIA.
Well, you're at highs if you have the current chart set up. If you drag the y-axis,
yes, you make it.
Flatten that thing out. Now look, all of a sudden you got plenty more room.
TSM call.
This is where we're at. Dragging the y-axis to make it look less of a rally. Yeah, I mean, low IV rank, it's cheap. Even if you're playing to the upside or downside, it's certainly cheap to do so. So yeah.
Yeah. I guess I could.
Classic setup.
I have some short delta in the semis. I have SMH. I have a put diagonal spread. That's out about $200 or $300 at this moment. NVIDIA, I have like this broken wing butterfly-ish on the upside. I bought in the risk here. So I'm like kind of neutral / bearish the semiconductors at this point. So I'm going to pass on the upside TSM position.
How about shorting Caterpillar? The
Haven't
old
touched that in a long time.
Wow.
The old straight up 430 stock price now. Crazy.
Yeah, that's got to be a 52-week high.
Yeah. This is another one. It's 27% IV, super low. I think you look no further than a defined risk diagonal or crab trade or calendar. There's just not really much of a reason to sell undefined risk premium here when you're collecting very little for a lot of buying power.
Yeah, about a 20-point expected move into earnings. Do like the 410, 400 maybe.
Yeah.
September, August. Put you right at, the expected move on the downside for earnings. I'll give it a try. I'll try.
So pre-earnings dump.
620 got filled below the mid price.
620 for 10-point wide.
Yes.
Cool. What's your most capital intensive trade that you have open right now?
Ooh.
Good question.
Probably my Robinhood position that's like 20 points in the money. But other than that, like my bond position, Palantir, I have a strangle in there.
Yeah,
I usually try to keep it like up to 2,000 is probably like the higher end.
Yeah, mine's an IBIT.
Yeah. That's got a little
Using about 3K in buying power, but that's a nice trade. And then AMD, both undefined risk positions. Everything else is defined risk.
I'm even across the board. Everything I have on right now. I'm super light, so full disclosure, everything I have on is under $700 in buying power.
It's good. Small.
Yeah, but I'm looking for more, so maybe I'm gonna take a look at your Caterpillar trade you just put on, and then see what else everybody in the chat be talking about.
Yeah, I'm long the September 410 that short the 400 in August. A little bit of short delta.
Okay.
How exactly is UVIX price decay? If put credit spread is in the money and you roll it, does the risk stay the same or change due to the decay of the potential splits?
So, I mean, the spread width, if it's the same width, is going to be the same risk. The options split in the same way the stock splits, so it doesn't get, your risk doesn't get bigger, but I don't know exactly how this one, it's a 2 times long, so there's going to be a lot of drag to this, obviously. So it's just not something I would sell put spreads in. I'd buy calls, call spreads if you want to, but you don't want to be.
Yeah, you're looking for a rip higher, but if that rip higher is paired with an IV increase, then the put spread's not going to move too much.
Yeah.
You kind of want that long call delta.
That gamma.
Which is the same for pretty much all of these volatility products.
Yes.
But yeah, we don't trade them really because they're leveraged. They drag down aggressively.
Cost to roll.
Yeah.
And right now the contango is quite steep. 18 to 19, 20%.
Anyone else put in a Tom travel trade? I assume that's the downside.
I've had it. I'm bleeding out. Death by paper cuts every single day.
Yeah, I have a 15-point wide put diagonal in SPY that I put on yesterday. Just as like a macro portfolio hedge, because everything else is pretty much bullish in here. So we'll see.
Mm-hmm.
We gonna see.
Dwayne followed your 6E position. Nice. Harsha's short a now 950 100 covered strangle, which expires tomorrow.
Ow. Which one? 1115?
950 1,000 expires tomorrow. Would you hold on or get rid of
short
it?
The 950,000. I mean, you got to be pretty
definitely profitable. Yeah.
I mean,
nice rally today.
Hey, you're up $4,000.
Sold for 50-ish and marked for 9-ish.
Yeah.
Yeah.
I would take the money and run.
It's great. Great trade. But yeah, $600 through tomorrow. I mean, your downside risk is your downside risk is in the shares, and your upside risk
and
is
you have a junky put. You have a dollar put on it.
If anything, you buy back the put and you leave the call.
Yeah.
But yeah, great trade.
Yeah.
And then yeah, if you wanted to keep something like this on, you could roll it to August or September and just restructure it.
Mm-hmm.
And You could literally reset it and move that. You could move the put way down. You can move the put down like 50 points and the call up 50 points. Or leave it the same.
Yeah, whatever.
And still pick up another $1,000.
Yeah.
Whatever you want to do.
It's a nice trade.
End phase, credit put spread.
The stock is a pig.
Mm-hmm.
Although my short put has not moved, which is kind of nice.
Yeah.
I have the 35 strike put in September. Sold it at 277. It's currently marked at like 295. So
Yeah. Yeah, I think if you're doing a put spread there, I think you either sell the 35 or the 40, and then you just buy the 25, which is the first, it's the last strike down that has a bid still.
Yes.
So 10 points wide, 15 points wide.
If you're in a margin account, it probably makes sense to just sell it naked because the leverage you get spread, if you do like the 40-25, you'll use $1,500 or about 700 and change versus, I guess, the 700. But if you did the 35, bought the 20 or something like that, use a little bit of extra buying power.
Yeah.
Michael looking at the IBIT short put, September 58 strike. A lot of open interest there.
September
Certainly is.
58.
There's open interest at all the strikes.
Yeah.
But yeah, 58's right at the expected move. Totally fine with it. I have the strangle on at 65.75.
I bet right now.
Get yourself some IBIT.
And do
Get
it.
yourself some.
Poor man's covered call, diagonal spread, maybe something like that. Volatility is relatively low, so
See.
I should say it's very low. Volatility is very, very low.
Yeah.
There's no vol, shockingly.
All right. We're going to see.
Anna, give us more info. If you have a covered call already in play, out of the money, what's the give me gotcha if you sell a put at the same expiration? If it's a covered call, straight up with an out of the money call, if you sell a put, it's a covered strangle, like the one we just talked about. In now, where you're willing to take another 100 shares to the downside to reduce your cost basis, dollar cost averaging that way, if it's a covered call.
You'll be using more buying power.
And you use more buying power.
Yeah. Because your call is covered. So if you sell the call against 100 shares, you don't use any additional capital. If you went and sold the put, now you're naked a put. So you'll be using additional capital. Covered call, naked put.
Will UNH ever recover?
Never.
I think so. I saw something where the PE ratios for healthcare like at 0.
Yeah.
Like it's basically a sector that's been left while everyone.
It's one of those that yes.
So will you see a sector rotation back into healthcare?
Yeah.
Probably. When? Couldn't tell you. But yeah, this one
Magic
is.
8 ball that gives you that information?
Unfortunately, I left it at home.
Yeah. Well, if you find it, you let us know.
Yeah.
Yeah. But yeah, I think when if and when it happens, you might see a pretty quick recovery. Because right now nobody cares about it. But once it starts rallying, then it gains interest in the market, et cetera, et cetera. So we'll see. Let's see. What are we planning to do with the corn position? Short call will expire tomorrow, and then long didn't move at all. So
I just got an at the money put spread, so that must be you.
It is me. I have the 424.50. I closed the other one, so hopefully you saw that. But I had the 420, and I sold it for $168 of profit. The one I placed on the 8th. Sold it 10 days later. So I still have my initial one, but if you still have that one, that should be profitable, or maybe a scratch. But this one I have, the 424.50, I think it is time
to say goodbye.
No.
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 Not yet.
I mean, I just need to figure out. Okay, so this is.
I hate these calendars in the futures. You get all
It's
goofy.
once it's done now because it's like if I turn into a vertical spread. If I turn into a vertical spread 10 points wide, I'm only picking up 80 cents to do it. So I think I'm just going to leave the long option for this one. The 421, 424.50. But the 400, 420, if it's a winner, I think you just get out.
I prefer just the
Or just
short
like
put spread,
Yeah.
short call spread, play the
Essex.
direction. The futures, they get all goofy, get all weird strikes, spreads.
That's forward curve.
Forward curve, etc.
UNH crab for earnings.
Ooh.
The 300 September and then the 315, 325 shorts.
In the August 1st.
Yeah.
315, 325. Yeah, I'm long here. I have a short put spread that's now in the money. So I am directionally with you. But
Don't want to add any more.
yeah, I think I have this. I have one in my Johnny Trader account too. So I'm right at the money. I have the same directional assumption as you. Up.
I like the
Probably back to 300 because it has just been sitting at 300 this whole time.
I like the 300. I like the 15 by 10. Gives you a little more upside room.
Ooh.
It's nice.
Spicy.
I'm so hungry. Every time someone says crab, I'm like, God, it sounds
Crab rangoon?
There are some crab rangoons out there.
No.
We probably won't get some.
I think we will.
Yep.
I have faith.
Thursday's
I'm going nuts on this.
I know.
Today's
well,
leg
you
day.
can have my portion.
Today's
it's leg day too.
So it's just magical.
Ming Hin, quads, glutes,
straight to the quad.
hammies.
Quadzilla over here.
Shoot.
We're trying.
Go for it.
Growth.
Growth mentality.
Yeah.
What do they say? Ass moves mass.
Yeah, that is what they say.
That's what one of my favorite fitness instructors always says. Ass moves mass.
Anywho, if you're looking for something like UNH, try CRM. Ooh, Salesforce.
CRM.
Is it finally
Such
going
a
down?
trigger word around here.
Oh yeah.
I don't know why we keep going back to it.
Remember we tried shorting Salesforce like when it was
Yeah,
at 380 and now it's just dead.
Jeez, Louie.
I could do something here. 52-week low, 230. Maybe do a little put spread right around there. Still so cheap.
I know.
September, 25 points out of the money is not even. It's nothing.
Just do like the long call spread, but
It's like then again, do I want
just buy an out of the
$500?
money call spread? Like
Maybe. Yeah.
just buy like the 290, 300 for $200. I don't know.
That's a tough one.
Yeah, toughie.
Out in September. I don't love it. It's no vol anymore.
Thick thighs save lives. That's
Thick
another
thighs
good one.
save lives.
Thank you, Aaron. Yeah, I'm not touching CRM.
Yeah. I'm a pass.
Done with it.
But thank you.
Looking for a long crab trade in Oklo. Any recommendations?
I'd just do kind of similar to what I did, just on the upside. I would go 40-ish delta, let's say like the 90 strike in September, you play for a move to like 100-ish. And then here, you could do the 100 strike or the 110 strike. I guess if you had to define the risk, you'd do something like the 100, 110, that sort of setup, go closer at the money. In September, do the 75, and then you can go to August, sell 95, 110. You're missing strikes on the upside, so you could do this as like a unbalanced. You sell, 2 of the 90s, buy 1 of the 110s. Use a little extra buying power, but it's cheap. For a 15-point wide call spread. You have 15 points of upside there.
Yeah. And Dwayne, looking for more info on crab trades, I just linked you, but it's literally just a symmetrical butterfly where the long option is pushed out in time.
Yes.
That's literally all it is. It's like a diagonal spread butterfly.
Yes.
Calendarized ratio butterfly?
Yeah.
Isn't that where the name comes from?
Yeah. Calendarized ratio butterfly.
Yes.
CMG, ooh. Naked short put, 65 strike.
Ooh. Basically stock now.
When did this thing split? I'm so late.
This was like over a year ago.
6 million years
Oh,
ago.
well then.
The stock got killed.
Jeez.
This is on earnings.
Yeah, look at that. Fell out of bed.
Yeah. Yeah, I do like just a little short put here.
Yeah, where are you going?
Putty, a 45.
57?
September. And this gotta be. Let's see.
Yeah, and then there's a call spread on top of it at 47.5, 50. So
big move.
The call spread's basically worthless, trading for 50 cents. So yeah, this one's tough, but you basically have shares of stock. And there's not much you can do until the stock recovers if you're holding onto it, because there's no premium there at your cost basis.
I'm gonna do a little putty there. How much worse could it get?
Then the gong strikes.
Yeah.
Yeah, I might look at something in there too. The zebra is a little expensive for what I would want to pay for something that's just almost like an engagement play, but
Like you do a cheapy like long the 45 in September and short the 47 in August. Like you might make 50-ish bucks.
Yeah.
Get a little $1 or $2 up move.
Yeah.
For $100, like it's a cheapie.
I like the zebra, but is there a similar strategy if you want to have 50 deltas instead of 100? You're probably looking at a diagonal spread.
Yeah. Poor man's cover call. I mean, a poor man's cover call will set you up with around 50 deltas. So if you, CMG is a tough one, but if you go to like a, 70 delta for the long option, sorry, I'm in August for this one. September, 70. So you did buy the 42.5, and then in August, you'd be selling, 30-ish delta, 47.5 or 47 or 47. These ones will net you out, 30 to 50 deltas in the short term. If you get a move higher, you'll pick up deltas.
And yeah, for Chipotle, it's kind of insane. There's no premium here at all.
Yeah, it's dead.
I was going to say you could throw on a call ratio or something, but
no.
There's no reason to. Anyone playing the copper move? Thinking of selling some call spreads?
I have an iron condor, so I am in it.
To win it?
Yeah.
Yeah, call spread at 33 days out. What do we got here? 661. Wow, this is big.
I'm wrapped around 5 and 6.
Yeah, I mean the smallest spread is still $1,000, $1,250. It's big. But sure, if you want to sell a call spread, you can pick up $400 or $500 right at the expected move for the most narrow. Is Tom in the air yet? Probably not. Soon though.
Yeah, probably right around now.
it's a suspicious question.
Yeah.
What are you trying to do? Just
Well, we're waiting for the down move. It's because Tom, once he gets in the air,
that's right.
Volatility
Yeah,
comes
he's a
back.
Mikey.
You
He's
do
Mikey
have
type.
you have 4 cents of an uptick, 4 ticks in volatility.
Okay.
Markets are,
Sensing that there's been a disturbance in the force.
yeah, the disturbance in the Sosna force.
The Saz force.
Yeah.
It does have like a 4 for 4 hit rate.
Is your dad like sick of traveling with him already?
I think he's sick of him already just in general.
In life, yeah.
Yeah, just in life. I think he's sick of him, but
Yeah,
Yeah, brings the family. Has to sit in the back, you know.
Oh, he's bringing the family.
I think so.
Okay.
I don't know.
And he's not busy with whatever Vinny does these days? Fishing, hockey,
Yeah.
everything?
No. Summer, you know?
I feel like
School's out for
hockey's-
summer.
School's out. Oh.
What grade is he going into?
He'll be a sophomore.
Hell yeah.
Oh, getting his permit this year, huh?
Sick.
Pretty wild. Did I tell you I took him out driving?
I was gonna say, did you teach him? Are you teaching him, or is your?
It was
dad-
terrifying.
Oh, I'm sure.
It was the scariest. It's one thing to be like not only sitting in the passenger side of your own car with the new drivers. That's like a weird thing. Like my car, I'm like, ooh, this is weird. But you have no pedals or anything to
there's
stop
no like
it.
that emergency brake that the driver's ed teacher.
Yeah,
has.
yeah. There's none of that. So there were a couple times where I had to like grab the wheel and be like, brake, 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 brake. You know, like that kind of thing where you start. You know, you grab the wheel and you start like, okay, you got it. Like brake, brake, and then they don't brake it. It's like brake, brake, brake.
Yeah, what are you doing, buddy?
Yeah.
What do you think's gonna happen?
That's why the old school emergency brake.
Yeah.
Those were always nice. You
Yeah.
could just rip those up.
Yeah.
Did you take him to a parking lot?
No, we were just like around the cul-de-sac and
Oh, okay.
so there were like things that there were cars.
Yeah,
parked.
there was like moving
So I was a little-
vehicles, or there was vehicles and obstacles, if you will.
Yeah, it was. Yeah, he got the hang of it. He's got a little. We got to work on his turning. He kind of just turns as if there's like never going to be anything there.
Yeah.
like it's just like I'm just going to turn here and just.
Yeah. You got to learn how to time like your acceleration too.
Yeah, you got to get more of like a right angle type turn, not just like cut the corner, like it's like a race car driving.
Yeah.
So that was kind of we were working on that a little bit, using the brake as you get to the turn and making the turn. So yeah.
That's cute.
Fun time.
I'd probably be in a similar situation. I'd be grabbing the oh shit handle.
Yeah.
You know?
Oh yeah.
Stress.
Yes.
Stress.
Spiking.
Fun though.
What do you think about a deck short put? 57 days out, earnings play.
Ooh.
Decker
Outdoors.
Yeah, so you're at like the 85 or 90 strike. Sure.
52-week low at 93.
Yeah.
What's the earnings? When is earnings? 24th after the close. That's today.
Yeah, I think it's fine. I think you just have to be comfortable with taking the shares. If you're selling undefined risk for earnings where you have no control over what happens after the market closes, you have to be willing to take the shares or have the risk of the shares.
Doom and gloom over here.
Just
Take
saying.
the shares.
If you don't want the shares, then just sell a put spread. But yeah, I like that. I like this idea. Do we ever do the 1-1-1 trades? Sometimes you do.
Yeah. I do them as like ratios, but I think they usually, the question is probably for the E-minis or the micros or whatever people are doing with the 1-1-1.
Downside 1-1-1s?
Yeah. As always, just
got to keep the small
size.
Life is easy when you can withstand a lot of variance.
Yes. I think I'm going to do a diagonal spread in DAC, the 105, 115.
Wow.
I actually might move this to the 110
Okay.
and make this a cheapie. Yeah, that's what I'm going to do.
115, yeah.
110, the 115 you're selling at $200. Like
Yeah, I mean this is big. You're buying in the 60-day cycle. You're buying IV that's 15 points of an expected move, and you're selling a 12-point expected move in one day.
Closing only. Okay.
Maybe because of the massive IV. I don't know.
Yeah.
I'm looking at something in SPY to capture some downside. The 1-1-1 could work. But I like the diagonal spreads there. Especially when IV rank is negative. That means option prices are cheap relative to last year. So I'm already in the 630 long September, 615 short 22 day. For how many dollars? $850 for a 15-point wide.
And they're getting
Get any
cheaper
kind of
by the
sell-off.
moment.
Yeah. If you get any kind of sell-off, it'll be a nice $200-300 winner. But yeah, downside diagonal, downside calendar, I think it's totally fine. And that's the end of the chat.
Beautiful.
That-
Lunchtime.
Chat. Time to go eat some
Please.
Rangoon.
I'm gonna eat it all.
Give me some orange chicken, please.
All right, send those vibes into the universe. That wraps up this
Crab
edition of
Rangoon, just one little crab rangoon, please.
That wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Nick at Trader Nikki Bat. Don't forget to sign up for all of our live events at tastylive.com/events. A couple more road shows with these guys. A couple more road shows for Dr. Jim, for Tom and Tony, as we mentioned. Let's go eat some whatever's left. Good luck. Good trading. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
We're back. It's still Thursday, July 24th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater, as this week of Westwater continues. Thanks for coming back, Thomas.
Anytime.
Yeah, it's another interesting day in the market. We're on the other side of Google and Tesla earnings. Elon Musk commentary during the conference call not providing any sort of optimism or support for the stock here in the short term, painting a picture of a weaker path for the next few months as they go through various adjustments in the business. But Google came out strong, and so that juxtaposition is in play. The Nasdaq slightly higher here. The Russell a touch weaker overall, and so unwinding those gains from yesterday's session. But Thomas, there are some signs of excess creeping up into this market. I can't ignore that. I know I'm talking out of both sides of my mouth because while I'm playing for something, perhaps a pullback in August, I also reinitiated some NASDAQ longs yesterday, thinking that this thing could still squeeze up a little bit more. But the signs of excess are here. We're going to get into them shortly. Before we do, a quick brief check-in at the CME FedWatch tool because Donald Trump will be visiting the Federal Reserve later today to inspect the overrun of costs for the Fed's renovations. It's only the 4th time in history that the President of the United States will have made the trip over to the Federal Reserve. FDR did it once. You have Ford do it because his friend is being sworn in as the Fed governor. George W. Bush goes, and now you have Donald Trump making his way over to the Federal Reserve. Perhaps some of the reasoning is because the market doesn't think the Fed is going to do anything anytime soon. When I say that, we could still be about 2 months away from the first rate cut. If things trend in the current direction, maybe not so much. July odds are 2.5%, which is nothing. 2.6%, which is still nothing. Thomas, September 63.5. Now, early this week when you called this out, those cut odds were a little bit higher at 66%. So I suppose the market taking everything in stride, saying that there's less of a reason to cut rates in September, but only at the margins. Do you think that today's meeting at the Mariner Eccles building between Powell and Trump is going to yield any sort of interesting headline that could move these odds?
I don't think so. I mean, what was it? Lutnick already made a comment again. I don't know. I mean, the longer it goes on that you're going to fire him, you're not going to fire him, I think it becomes more noise over time. So I'm not expecting it to, be as substantial as to elicit a market reaction. The rate cut bet odds, I'm more focused on what the actual economic data is saying. So like things like jobless claims this morning, we had a pretty good jobless claims report. They fell for the 6th week, going to the lowest since mid-April. So that's pretty good news for the labor market. So perhaps the concern is going to shift more to inflation, how these tariffs are potentially going to raise prices.
You mentioned the jobless claims today. They are good. These are the lowest weekly claims that we've seen since April, and you can't use the excuse anymore that, well, it's the holiday week or right after the holiday week. These are just good numbers. And we, by and large, see good numbers when it comes to the PMI. PMIs for the composite reading, 54.6, up from 52.9. The services, 55.2 versus an expectation of 53. up from 52.9. The blemish, of course, is manufacturing, 49.5 versus 52.6 expected from 52. But net services are the larger part of the economy, and PMIs are extending further into expansion territory. So if we're thinking about a growth scare this summer, coming around in August when policymakers aren't here to help, that's probably not in the cards. The data aren't triggering it yet, unlike last year this time when they did, and unlike in February when the PMIs did. So the economy is actually heating back up, Thomas?
Yeah.
Or stabilizing? Maybe the Fed doesn't have to cut.
Yeah. Why do you think the manufacturing is weak given the low dollar? I mean, isn't a low dollar supposed to help manufacturing? What are we seeing
That's
there?
a great question. You would think between the tariffs and the dollar weakness, this would be incentivizing a bit more production here at home, although we know how much it takes to open up new factories and break the ground. So I need to dig through the manufacturing PMI subcomponents a little bit more granularly. But my first guess would be that if we think about input prices for the manufacturing process, steel and copper in particular, those have already shot up and adjusted to tariffs and to the news of the trade deals, right? Copper had its big move higher 2 weeks ago. Steel has been moving up all year long. American steel trading at a premium to grades of steel that are overseas in Shanghai and London because of the tariffs. So American firms that are in the manufacturing sector, they've already had to bear the cost of these higher input prices, whereas everyone else is still downstream and has yet to fully see the effects. That would be my guess.
Yeah, no,
in the short run.
That makes sense, I think. I think that makes sense. Yeah, it's just a lower dollar. You know, it makes our goods cheaper for, foreign nations to buy. So no, I was just thinking about that earlier, but I think that's probably the best explanation for it.
With respect to this Federal Reserve meeting today, just for the calendar here quick, it says 4 p.m. is on the White House. Well, this is according to rollcall.com, but the president's schedule says he's visiting the Federal Reserve at 4. I think it's worth noting that the Fed is still in a communications blackout window. And like we saw with Powell earlier this week, he was very circumspect, did not describe anything related to monetary policy or implications for next week's Fed meeting whatsoever. Powell opining on monetary policy today in any form or function as a result of this meeting with Trump would be a breach of those. So Powell may just sit up there with a straight face if Trump tries to pull him into a public press conference or something. I don't know if we'll see something materialize. Unfortunately, it's 4 Eastern, Thomas, which means it's very possible that we don't get any comments until about 5 Eastern, right when the futures market closes, and we could stare down a potential gap for the Friday session. I digress. Stocks mixed today. S&P extending gains here, up 64, 11.50. Now it's a 15-handle run. NASDAQ up by 0.35%, 23,393. Thomas, are you surprised that the market is paying more attention to Google than Tesla, or does that make sense given how this market is riding high on the AI theme still?
Yeah, I think Google, probably, Tesla has lagged all year. It hasn't held the market back in, the lens of sentiment. Whereas Google, I think a lot of this is, pushing up. If you look, Google's having a good impact on XLK, while Tesla is really dragging down XLY today. XLY, the worst sector performer. Technology is up there in the top 5. So, I mean, you have to consider technology is a bigger weight than discretionaries. At least I think it is last time I checked. So just naturally, you're getting a little bit more impact from these Google earnings versus Tesla.
It's fascinating because as well as the S&P and the NASDAQ are doing today, you have a Russell which was attempting to break out yesterday, falling back inside of its range. Now, the uptrend that we've been highlighting off the lows in April, here in June, maybe we want to make a slight adjustment to account for the most recent touch in July. But even being generous with that, this is a market that still couldn't quite break out thus far. Among the ETFs that we track here on Futures Power Hour, only 8 of the 25 are in the green. Top performers, financials, next best tech, and then semiconductors. On the other side, home construction, home builders, discretionary, retail, materials, telecom, all names that have been flying a little bit higher over the past week or two, as we've had some good distribution and breadth expansion, they're all receding with today's events and efforts. So the Russell IVR, though, is what really piques my interest the most at 3.2. I can't recall the last time we saw volatility that low in this product. In fact, going back to February, maybe, when we saw IVRs that dipped into the 10s. But how do you when you're looking at a Russell that looks like it just potentially failed to break out and volatility is this low, what does the chart tell you? What should you be doing?
I mean, I think it's still slated to go higher. So
what gives you that conviction or lack of conviction?
I mean, just the technical trend is holding up well. Volatility coming in so much. I mean, 3 is really, really low. I don't know. I mean, if there's a volatility expansion, you'd assume prices are going down, of course, but I think it's still going to go higher, personally.
It's an inside day today, and taking a step back, we bounce off of the 1 week moving average here in the Russell. The volatility contraction in the NASDAQ, you're now looking at negative IVRs, negative 6.5 IVR. In the S&P, it's negative 5.9. Just to visualize that on the VIX here for a quick second, you can see that we're moving down to cycle lows, almost have a 14 handle here on our lovely VIX. VIX futures, same story. Over here, we're sitting right near the low, although this is more of a doji than anything else here today. So perhaps volatility futures are signaling that volatility is reaching a low point. This is it's really easy just to look at this market and say, volume's low, volatility is low, there's positive technical drift. I'm going to keep riding this high. And you know what? I'm doing that too again. I got off the train Monday. I got back on yesterday in the NASDAQ. Hopefully it works out. I'm still leaning some short deltas in the S&P, which isn't doing so hot today. But I am seeing signs of excess in this market pop up everywhere, which is why the confusing picture of the rock on the screen appeared in the green room, John, for the producers. Ethereum, there was an Ethereum rock today. Ether Rock 59 sold for $300,000, 82.4 Ethereum. Just to scale back out here, CTA positioning for U.S. equities is in the 90th percentile. And then we think about VIX seasonality here. We're basically here on the chart. This is the period of the year when volatility tends to start to expand again. So we're selling Ethereum rocks for $300K. Volatility is at its seasonal low point. And we have stocks that are very crowded once more. I feel like Icarus right now, Thomas. It's the only way to describe my equity longs. I feel like I am flying into the sun, and it's going to bust apart any moment.
Yeah, so I mean, for me, this says you should cautiously be long, weighted pretty light, get some exposure to the long side, but also keep a lot of cash on the sidelines for when this volatility does increase. We're only a week away from August, then we get another jobs report, potential indicator for volatility, even though the underlying labor market indicators are pointing us towards it not being an event. So maybe we'll need to wait for the inflation data or something else where I think there has to be a trigger to spark this seasonality you highlighted.
I mean, it's a really fair point, because if you're thinking about the mindset, and maybe I'm falling into the trap of thinking things have come too far too fast, which I really try to avoid. That's not a thing in my head. But I feel that pull right now. In part, the reflection that I'm getting to is in early April and throughout May, as we sit here on the show a number of times to substantiate why we were getting long the market, it feels like it was a market where people were being penalized for not being long. Because every day that you were short, the market was going up a little bit more. Every piece of bad news wasn't wearing us down. And so you're basically being forced to cover and then chase into the end of the quarter to make up for the selling at the start when everyone abandoned ship and all of a sudden the market has its V-shaped recovery. And so it feels like a lot of people right now are kind of trained, like they've been conditioned into thinking until something actually bad happens, I just have to keep buying. And all this news and rumors and story, it's just noise, as you mentioned, with respect to Powell. We keep talking about firing Powell. The first time was a shock. The 50th time, we're like, okay, that's just now one of his bits.
Right.
So yeah, it's going to take the wolf to come. The market's in boy who cried wolf mode again. And when we're in boy who cried wolf mode, you need something tangible to knock us off our feet. So my best laid plans of volatility expansion and pullback in August, a lot of people are looking for that. The path of the pain trade may actually be higher still yet.
Yeah, no, I mean, earnings are mostly done for the week. We do have Intel today, which if you're looking at SMH, I don't know. Intel has, it's lagged SMH this year. So my view is that it would have to take something really bad to have a negative reaction for Intel. But I had the same view on Tesla, that it was already a laggard this year, and that, even a bad earnings report was going to just be pretty much a neutral reaction. So it looks like investors for Intel, what they aren't focused on is the actual numbers. They want to see the plan from this new CEO going forward. And he's already done a few things, saying they're going to, abandon the 15A or something technology and move towards the more advanced technology, really start putting more money into it, which will help them compete in the long run, but it's also going to probably result in some write-downs that could hit its numbers pretty substantially.
If the NASDAQ breaks out from here, similar to the measured move that we looked at previously, 22,800 to 23,100, that brings you up to 23,400 or so. Technical analysis is not perfect, but measured moves, it's math. So you round out Monday, that's why we got out of the longs. There's a new range that's formed. A new target would be if we go through, say, 23,440, 430, you now have another 330-point range that if you break out to the upside, you can justify 23,760 or so as an intermediate target. So that's what I'm working with here, Thomas, looking for a little bit of a push higher over the next week, log the 23,700, short the 23,850. It's working a little bit today, but I'm going to need some juice here if this really is going to work. I'm going to keep on my August 1st and August 31st S&P 500 puts. If we get a squeeze in the short term, works out, and then hopefully the market crashes down after I'm able to get out of the position. But it's hard to ignore. Strength is persisting.
So you're selling puts?
No, I'm long S&P 500 puts.
Oh, okay.
August
that's
1st,
your insurance you were talking about yesterday, right?
Yeah, so I can continue to be a, Icarus and fly into the sun short term. Whereas if volatility expands and this thing has a 2% down day, those other options should do quite well and subsume whatever losses I take on continuing to play these short-dated NASDAQ call spreads.
Okay.
I would like to get into the Russell, but yesterday's failure leaves much to be desired. Bonds are rallying back here. What an interesting 24 hours for the bond market, particularly at the long end of the curve, where we had seen a very good 20-year auction yesterday. One of the best auctions that we've had of the year in some time in my memory. Bid to cover ratio above the prior meeting, above the 6-month average. It stops through by 1.6 basis points. Foreign demand is very high. So even on the other side of the US-Japan trade deal and the rumored US-EU trade deal, which, as the White House said yesterday, is still just speculation, the market was happy to help finance the US government. So we see a little bit of weakness yesterday. It stops. Today there was some more. We've reversed all of the losses at the long end of the curve. ZB now is higher by 4 ticks on today's session. And somewhat curiously, we're finding support right up against that 1 week and 1 month moving average now. So maybe this market is not stretching into substantially higher yields just yet. Notes they are still a touch softer, but having rebounded sharply off the lows. The volatilities are coming in just like in equities, Thomas. What are you doing here?
Well, I'm still long call spread ZN and ZB. They're not, of course, doing well over the past 2 days. I was really thinking they were starting to work up until Tuesday. And, the past 2 days has put some pain on these trades. So I haven't been sure how I'm going to handle these trades. Ultimately, I think bond prices are going to rise, but we got to the middle of this range and then we sold off. And now I'm a little just stuck here with these positions for now. I think I'm going to have to wait until next week to make a decision on them. They got 29 days left, so I'm going to have to do something next week here.
So like a rally into 111.5 again in notes, would you use that as an exit opportunity?
Yeah, I would use the next big up move just to get out and then wait a while to reassess the view on bonds. I'd be doing better if I was in an iron condor here, but I did not go with that option. So
sure, and that's not doing great, terrible. It's working so far. It's not a huge trade. 29 days to expiration right now in ZNU5. It is something that I would have to roll next week, and the whole idea is if we're sitting at the midpoint of the year-to-date trading range, that seems like a decent place to put on an iron condor, short iron condor position. Worth noting, 6.6 IVR, so not the greatest volatility, although compared to what we're seeing in stocks right now with its negative IVR up on the board, maybe this isn't so unappealing after all. You're risking 2.5 to make 1, but the profit's still above the buying power that's required. So when I break this down, it kind of feels like oil insofar as we're not in a window where there's a ton of volatility in the market, but absent some tail risk, these things kind of feel stuck, and they've been trading stuck absent tail risk, like in Iran, Israel, or tariffs on some chalkboard in the White House Rose Garden. It feels like it's the right thing to do still. I wish there was more vol. I wish it was a 60 IVR instead of a 6 IVR, but the trade's the trade. The technical setup persists. The only other option, as far as I can tell, Thomas, is maybe this is winnowing into a triangle, which if it was, then perhaps the trade would be to look for a vol expansion and just general move outside of the consolidation. Maybe someone else out there thinks, this isn't going to hold. Something's got to happen in rates. I don't want to play the short iron condor. You could do the reverse fly, which would be basically buying at the money options and selling the selling the wings. It gives you more convexity, but vol needs to expand and prices need to get unstuck. You're risking, 3 to make 4, 58% probability of profit. So the different ways to crack this nut, for me, it's going to be the short iron condor. I don't foresee that this particular window of time of the next, even though it's 64, and we'll call it 64 and 21 out, add 40 days to where we are today through Labor Day. I don't necessarily see bonds or notes doing something substantial before Labor Day. So it makes sense to me to play for the range.
Yeah, and it's, the treasuries, I think the demand really isn't going to come in until we're getting past this tariff stuff. The Japan, deal happened. It removes some uncertainty, but yet, treasuries are still moving lower today. One headline from Bloomberg, I'll read it off. It says, dollar bonds from some of Europe's biggest public sector issuers are now trading at yields below comparable U.S. government debt, an unusual churn that underscores the diminishing appeal of treasuries. So, there's more demand for these dollar European bonds, which are still rated very, very high, but not quite as, traditionally seen as risk-free as treasuries. So, is it debt concerns in the U.S.? Is it the tariffs? A mixture of two, probably. So the debt concerns aren't going to come off. The U.S. is still on track to spend more. But the tariff concerns can dissipate as we move forward.
Yeah, it's a really interesting article or piece of news that you flag about foreign companies not turning away from dollar-denominated debt, because one of the main reasons that companies do so is that their cash flows are in U.S. dollars. So, for example, if I'm a Canadian oil company that most of my revenue comes from the United States, it makes sense for me to issue debt in US dollars to avoid any exchange rate risk. My cash flows coming in are the same as the cash flows that would be going out, same exact currency. Okay, so I'm getting paid in US dollars and I can then pay down my US dollar debt with the US dollars I receive from selling oil. If they were issuing that debt in Canadian dollars, they're selling their oil in US dollars, and now there's exchange rate risk because they have to convert it back to CAD to pay down their debt. That's one of the reasons why companies do that, because it's predicated on the idea that there is going to be ample business with America, that you're going to keep receiving US dollars. And if you think in the future that trade between your company and the people in the United States, businesses in the US, the government, the country at whole will be smaller, then the appeal, the need for issuing dollar-denominated debt is reduced because you have, well, not as many cash flows in US dollars coming back your way. Canadian companies aren't selling as much oil into the US market now, so they don't need to worry about those dollar liabilities, right? Interesting scenario. Not sure how it affects stocks broadly or bonds broadly, but we are holding up here today, Mr. Westwater. So notes have a 6.6 IVR, bonds a little bit better at 10.1. Quite frankly, when the difference in those IVRs is so small, retail crowd needs to lean on the fact that ZN is a smaller product than what we're thinking about for our ZB counterpart. It's literally half the size in overnight margin, in buying power, right? If you're looking at ZN, the tick value is $15.62.5 for ZB. It's 31.25. I don't think a 4-point difference in IVR is enough to substantiate going into the bigger of the two. So ZN still remains approachable. At these levels, TLT is probably the better bet than ZB for most retail traders. And I know this is a future show, but again, always trying to find the most effective way to express a view and then ultimately manage that risk.
Yeah.
Thomas, rates here unchanged. Do you have any big call on rates for this year? If I think things are going to stay unchanged through Labor Day, what reason would you see come about to get my view to be wrong? Why would my trade not work out?
I think it's going to be inflation with the labor market staying strong. So, you know, we've already seen the rate cut forecast weaken throughout this year. If we're on that calculus, you know, what's going to change it when the job market is staying pretty strong, and inflation, the bias is tilted towards, you know, seeing at least a temporary or one-time bump sometime here in the next few months. So I mean, if that happens, I mean, bonds could definitely keep in this weak or weakening trend from where we were back in April.
The CPI report came out last Tuesday, right? Last Tuesday, the 15th. CPI in the U.S. was 2.7% on the headline year over year. Core inflation was 2.9%. According to the Cleveland Fed, as it were, we're looking at inflation on a month-over-month basis that's no higher than it was in June. And likewise, a slight tick up on the year-over-years for July. But these month-over-month rates, that's what we have to watch. Because if at 0.16% all the way up to 0.24%, you're talking about annualized inflation that's in the 1.9 to 2.9% range. It's not comfortably wrapped around 2%, obviously, but you're starting to get into the territory where 2% is on the event horizon if inflation were to continue down this path. So we're going to need to see more from tariffs to offset the weakness in the housing market. And today's housing data, yeah, we bounced back a tad. Wasn't
Not
great,
enough.
right?
Yeah, I mean, there's there's so many buyers that have been waiting for a long time. Why wouldn't they wait just a little bit longer? You know, I mean, if you waited this long,
yeah. Why not a few more?
Months?
And at this point in time, right, if thinking about the housing market here, spring is supposed to be the hot season. People like to, my wife's in real estate, people like to move towards the end of the school year. They list their homes in spring, they sell in June, July, they move into their new home. That way for the start of the school year in August or September, they're situated. We're at the tail end of this run now. New home sales for the month of June up 0.6%. That's after the 11.6% month-over-month decline previously. So we think about the home builders here today struggling. There's no V-shaped recovery. There's no V-shaped recovery in home building yet. So higher rates, they're sticking around. If you've been waiting this long, Thomas, I guess wait a little bit longer. Wait until next spring to try to move.
Yeah, I mean, if rates come down in the winter, I think that behavioral, trend might go out the window a bit. But yeah, that's a good point. You have to, if you're a buyer, what rate are you actually waiting for? I guess that's going to be dependent on, the difference between households. But yeah.
I mean, I keep going over this with people in my town because there's a lot of conversations about building more housing around here, and I'm very much in favor of that. But I use my own situation as an example. Given the numbers that we were in at the house or what we purchased it for, an hour mortgage rate, relative to where it is right now. I called up my mortgage broker, a guy by the name of Kevin Fitzpatrick with Chase a few weeks ago. And I said, just run some numbers for me. If I wanted to take out the same mortgage, given the home's new appraisal value at the current prevailing mortgage rates, how much would my all-in be per month? And it is not double what I'm paying now, but it's pretty damn close.
Yeah, it's a lot of money. I mean, if you're saying home prices are going to go up a little bit if you wait longer, it doesn't, you're getting more benefit if rates come down versus just the home price rising maybe 2-3% a year.
Yeah, the home market is just, it's broken. It's not great right now. Median and average sale prices for homes, they've been skyrocketing, although this is the one point of pullback in this report. The average sale price is now 401.8K. That is quickly approaching the lowest level that we've seen since the start of 2022. So the weakness has been persisting. That's what's bringing down inflation right now. OER, the OER component is bringing down inflation, not the tariffs, where we see in core goods, we're getting a little bit of a bump in the night. Okay, Thomas, we need to keep plowing forward here. We need to make our way into the metals market, which yesterday's trade deal pseudo announcement with the EU pricked gold's bubble at the top right as we approached. As now we're into the GCZ5 contract, where it would be near 3,500 an ounce. It's where the highs in April and May, and then again in June were carved out. Before we go on to silver, where you and I have a little bit more vested interest right now, what do you take all of this to mean, considering volatility has likewise fallen off a cliff here? 15.8 IVR is gross in gold and probably doesn't portend good things for the price action.
Yeah, I mean, I think it's a yields-driven story. You saw gold go up when treasuries went up earlier this week. Now we're falling as treasuries go down. So good jobless claims data. You're getting more skepticism on a cut coming in September. Higher rates, lower gold. It's just your typical gold story here.
The folks who have been selling the puts have been doing better than I have. The folks who have been doing the short iron condors have been doing better than I have here. Maybe that's just more of the churn that's due. In that event, though, yesterday we called out, and I do want to go back to the GCV5 contract real quick. Yesterday, the level that we noted here, we go down to that 4-hour time frame. It's basically 3290. 3290 is where the market, the past few sessions, was peaking out, and yesterday where we fell into. If we're below 3290 here, doesn't feel right, Thomas. probably means that we're going to get that deeper pullback. And thinking about the active contract now, the ray here from the swing lows that we have post Liberation Day, gosh, this looks like the zone of support if the rally is going to sustain itself. Otherwise, you start to lose a lot of support in this market here. And technically, given how crowded of a trade this has been the number one trade this year. You can't rule out that there could be a deeper setback as people take profits in gold to help finance positions and other things that they feel are undervalued. If trade policy is now set and we don't have to worry about tariffs moving every few weeks.
Yeah, a drop to 3,200 would not surprise me if we break those levels right there.
It's starting to look a little ugly. You can't, I mean, that's starting to look a little ugly. It could, triangle in an uptrend is a continuation pattern, typically. There was a great review I did years ago. I mean, I read this review, but they went back through each asset class and they looked at, they used a computer program to highlight technical patterns and look at the hit rate percentages when you saw certain technical patterns appear based on the threshold. So like a triangle meant this and a head and shoulders pattern meant that. And when the criteria were met, it was labeled as that pattern. Continuation triangles like this and uptrends or downtrends, something like 71% of the time in their study from 1987 onwards in the S&P 500 would see this kind of pattern move higher, but that's 71%. It does mean 29 times out of 100 it's not going to go that way. Maybe this is one of those times, is the point I'm getting at. So statistically, probabilistically, you favor upside when you have bottom left to top right into a symmetrical triangle. But there's still a possibility. So, Thomas, let's just play a game here. If we wanted to be a little bit cavalier and say a bigger setback in gold is coming, and you say 3,200 is possible, for folks to express that view, you could get a 5-to-1, 4-to-1 risk to reward out at 63 days, looking for a long put spread down there. If you wanted to take the gold's going to decline view, so you're going to do the typical, I'm going to sell a call spread instead above recent highs. Let's say you go 35.25, 35.50. It is a 63% probability of profit. You're risking 3 to make 1. It's not a terrible trade setup. So there are multiple ways to crack this nut. Being bearish, I personally don't like selling calls or call spreads, given the fact that if volatility expands and price goes up, you get whacked real quick. But it's out there as an option. If this thing is topping, there is a decent trade that can be put on the board. I'm not there yet, so I'm not going to put it on, but it should be flagged as an option.
Yeah. I mean, I'm not going to do that either right here, but I think that's they're not decent. They're decent setups.
Quickly over to silver, where volatility, like in gold, is pulling back in. And the chart, while holding up for now, you can't dismiss this may look a little bit toppy-ish if we get below 39. I rolled out yesterday. I didn't see a reason to keep playing on the long side here, Thomas, with 30 days to go. We had another 0.5% move to the upside, and I think I ran $100, maybe less than that, $75 on the silver call spread that was working. I need much more upside convexity than that if this thing is going up by 0.5% at a time. So I ultimately shifted my position out into SIZ5 and thinking about the structure of the trade here, it made sense to go into the 96 days versus 63, if only because if we were taking a look at the long 42, short 43 call spread, the difference between that at 63 days versus it at 97, which was yesterday, now 96, it amounts to basically $100 in additional risk as max loss to get myself another 30 odd days of time for this trade to work out. I think that's worth it. So I'm going to play this long, but I wanted to give more extension up here. And if we're going into the trade deals are happening, gold, silver lose potential edge in the short term, it's no reason to be long on short-dated calls that are in the money. It's just playing with fire to give up a good trade. So kicked it out, pushed it back out of the money. 96 days to go, Thomas. End of October. I feel like that's plenty of time to work with.
Yeah, that's a lot of time. I was actually looking at the 67 or the 63 day, but now that you say the 96, I was looking at call spread, right, pretty much at the money, risking a little less than one to make one at 51 POP. So yeah, going out to the 96 just adds like 100. So I think I might do that there. Put that on.
There are multiple ways to crack this nut. Unlike the notes earlier where we had a really nice max profit exceeding the buying power, this is risk defined, but it's not an iron condor. So you see here that the buying power is a little bit heavier, about $2,300 for an average retail trader. That could be big, and given the liquidity in some of these strikes, Thomas, I'm looking at the 96 days right now. No volume in the 39 strike today. 2 trades in the 40. This is why I frequently say SLV or TLT when we talk about the long end of the curve. They might be better ways to express these views, if only because there's so much more action. Even further out in time, when you go out to this around the 90 days, you see thousands of trades being placed. Deep markets, a lot of open interest here. You lose the ability to get out at any time because of the futures market being 23.5, but this might be worth the trade-off to have more confidence in exit liquidity.
Yeah, I mean, the 2,500, that's a little big for the account I'm doing. The call spread I put out at the one at the money is more like 2.5% of my buying power. So I don't like to go over 3% on any trade. So that just makes more sense for my account there.
Yeah. You've been talking about copper recently. Let's just take a quick gander into the world of copper. Yesterday, you were lamenting the fact that the market had continued to go higher after you got out, but now we're finding a second day in a row where on approach to 5.90 or so, the market's seeing an ample opportunity to get out here. What do you take about this? It's a 65.1 IVR. Unlike gold or silver, vol has been creeping back up here in copper for the past few days.
Yeah, I got out of my I think I had a call spread on in copper, a long call spread. I got out on Tuesday. I thought it was, a pretty good place to get out. I booked a little bit of profit on it. I thought we were coming up to that recent swing high. We'd start, getting the profit taken. It looks like now we're starting to get that. Traders were waiting for a little bit more there. So, if you were looking at this with fresh eyes, I'd be pretty hesitant to get long right here. Alternatively, you have decent IV, so if you want to, sell a call spread, try to play for some sideways or downward movement. I don't think that's a horrible idea.
I mean, what's the risk? We go to 100% tariff. We're at 50. Isn't that what's going to happen in a few weeks?
Yeah.
And there are, again, big contracts. If I wanted to go 10 cents wide, 5 cents wide up here, and sell a call spread at 63 days, 58% pop. Not bad. A little bit more reasonable than silver, risking basically 1-to-1. If you want to be a top caller, there's something to do. That intrigues me. Yeah, right. That intrigues me. I want to see a little bit more. See a little bit more here. We're not quite. Now let's get back to 573 where we hit these highs on the 4-hour chart. You can see here when we go over to right there, support, July 22nd. So you get below 573. I know that's, we're talking about 9 more cents from here, but then the trade starts to look a little bit more reasonable if you're trying to sell call spreads and call a top in copper. Trump could easily say that there's no tariffs going into play, right, for the copper?
Yeah.
Wouldn't that be something? Would copper go right back down to $5? Maybe. So I just see the risk to reward here that this being a tariff-induced rise, that if there's an opportunity to get short ahead of August 1st, we can't rule out that he's going to kick the can or come to some sort of arrangement like he did with Japan and Singapore and Indonesia and yada, yada.
Yeah, definitely a non-zero chance that happens.
I would have a hard time thinking that they accelerate from here. Like he's going to go to 100, 75% tariff on copper. Okay, energy bounces kind of, sort of. we had a market that was, we're still sort of higher. Doesn't look great for crude, though, which has given up all of its daily gains. We hit a high of 66.39. We're back down to 65.50. The volatility has fallen out of this market today. We had a high IVR of 23 on the session. We're now down to 6.6. The low is 2.5. Thomas, is the short iron condor trade dead now? Have we officially wrung out all the volatility from Israel-Iran?
Yeah, I think so. I mean, yeah, just yesterday we were at a 23, 24 IVR. Now it's 6. I don't really see much to do with oil right here. I was looking at it earlier today. There's just not a trade here for me. I don't know if you're seeing anything.
I mean, I'm still going to short iron condor. CLV5, thinking about the post-Liberation Day low. Israel-Iran war high. Midpoint is 64.20 or so in the CLV contract. So playing around those levels, I think, makes some sense. We'd have to have something substantial happen to dislodge prices again. And when we think about how oil was trading prior to all of this, you're getting a few dollars of wiggle on either end. And then you get your gross scare and the tariff talk. You get your Iran war, and then it's over. And you go back to meandering. The volatility is not great, but let's say we wanted to look at this with fresh eyes and put it on again today. Same trade, 58, 56 on the short put spread side, 73, 75 on the short call spread side. It's still a similar enough risk to reward. The buying power to profit ratio isn't great. 4-to-1, between 3 and 4-to-1 risk to reward at a 62% pop. Yeoman's work. I think it's still worthwhile. I mean, that's why I'm doing it. I still think it's worthwhile.
Yeah. I mean, the thing is, I would have expected to see crude do a little bit better. We had the 3.2 million barrel draw from the EIA. We have Russia saying they're doing a fuel export restrictions for some countries, except for, former Soviet states. We had some pipeline disruptions in the Black Sea. They've been resolved since then, but it's not reacting on the upside to some of these bullish headlines in the way that I would expect. So I don't know. I mean, you'd expect a Japan trade deal comes out, the EU trade deal optimism is growing. I would expect to see a little bit more out of crude here.
You would think so. Maybe they're going to announce an SPR refill or something sometime soon. That would be a nice change of pace. Natural gas bouncing back a little bit, but well off the highs. You can almost see plainly here on the chart how we hit the previous swing low, where I got paper hands before the rally back, 3.2 or so. We rally back into there overnight. And then during the U.S. session today, we've been pulling back in. Natural gas looks real ugly. Volatility is coming back down. I'm still sitting short iron condor here to take account of the volatility, but that's disappearing too. Where's the vol going today? High IVR 65.73. We're now down to 29.7. Vol's decimated today. Everywhere. Except for copper.
Yeah. I'm long natty gas. I'm long a MNG contract. And what else? Long MNG, and I am short the V contract and NG at 3. So I'm pretty confident we're going to hold above 3 here. The micro contract I'm a little more nervous about because I wanted a bigger bounce back to happen today. We were up a little more this morning, kind of selling some strength here. So, I'm not too excited about that micro long anymore. And, we're down even more right now. It wouldn't surprise me if we ended unchanged during the red today. I mean, I might have to take the micro contract off here before the weekend, but I'm going to leave the put spread on NG on for now.
Let's wrap this up and head over to the world of currency, where the dollar is firming up a little bit today. We find ourselves on a day where the ECB made its rate decision, where they say that they're not on a preset course. They kept rates in check. Deposit rate 2%, main rate 2.15%. They're on a meeting by meeting basis now. So forget your forecasts and projections about what the ECB will do next. In any event, there seems to be a little bit of a hawkish tilt to the commentary, all things considered, because they are done with their rate cutting cycle. So the euro here pushing up slightly now by 0.01%, but the pound down by 0.41, the yen thankfully off by 0.25. This is quite the area that I'm watching this reversal, Thomas. Rally right back up into the 1 month, and now we're getting this nice looking shooting star. This tells me that maybe this rebound post-Japanese elections is over, and that would make me delighted. So you know what? Let's eye this up. 0068.42.9 is the 1 week moving average right now. That's 9 pips from here. Below there, I think there's a compelling case to be made with a 6.5 IVR. It's time to look out in time and go out to, say, 71 days and think about some of those downside puts, which are probably underpriced, all things considered, given the risk that may lie ahead over the next few months and the yen's overall situation. This is still a crowded trade. Z-score still north of 2. Takes time for these things to work out. We're not making last year's mistake. So with the 7.6 IVR, we get the sign that the market's turned. We have an opportunity to get some put exposure that's pretty cheap. May even go further out of the money because the play here is for vol expansion in the end, but we can size up a 3.5, 4, 5 to 1 risk to reward. I will take those lotto tickets every day of the week.
Yeah, I'm looking at this too here for going a long put spread. I like the 71 days out. I'm just not sure which strikes I'm going to do, but I'm probably going to put this on today. I think you're right. It's looking like this rally is finishing up here. 3 intraday moves over that EMA, failed to get over it. So now I think just the selling has to come in here a bit.
And what's interesting about the dollar broadly is as we face the return to the declining trend line from the February and now June swing highs, we're not breaking back into the downtrend yet. Kind of like what you just noted with the yen, where we were trying to get above the 1 month now for the 3rd day in a row and failed. The dollar's been knocking on the door of returning into its decline, but hasn't been able to. Maybe that's meaningful. Maybe the fact that the euro is up today can be ignored because the 2nd and 3rd largest components of the dollar index are down, and it's not exactly a world in which you're seeing yields scream higher. Yields are a little bit lower at the long end. They're a little bit higher at the short end, but it's not a huge twist. So, Thomas, let's dream a little bit. I know that you're long the pound, but if this were to be a left shoulder head, right shoulder carving out here, you would want the right shoulder to be below the left shoulder. And that's exactly what we're doing here today. So the number for me, the 1 week, the 1 month, 135.20, 135.28, below both of those, you're then technically back below the uptrend that goes all the way back to the January and April swing lows. That could be a canary in the coal mine that maybe dollar weakness of the past few days is wrapping up. And the yen, the pound, maybe even the euro, due for another swing to the downside and more dollar recovery, which, again, still the most hated trade in this market, believe it or not.
Yeah,
calendar.
That's kind of why I want to get a trade like shorting the yen that will, counteract that being long the pound if the dollar does that.
Calendar for tomorrow is not too busy. Durable goods orders are definitely the one to watch. Durable goods are items with lifespans of 3 years or more. Airplane parts, automobiles, washers and dryers, dishwashers. People, businesses only make these kinds of purchases when they feel secure about their financial future, because typically these kind of purchases require large capital outlays or debt. And if you're going to take on debt to finance something, you have to be certain you have cash flows coming in to pay off those debts. So to that point, durable goods orders expected to crash by 10.8% month over month. That's dramatic. That's after a 16.4% month over month increase prior. These are people front running the tariffs. This is now the retraction because people have spent their money on the big ticket items. You want to know why the PMI manufacturing is coming back in, Thomas? Maybe this is it.
Yeah.
Folks have spent the money.
Yeah, this will be an interesting one to watch for sure.
Way more interesting than any other data release this week as far as I'm concerned. But you know what, Thomas? We're done with this for today. We'll talk about durable goods tomorrow when you're back on the show because the week of Westwater continues. We have Mike Butler today. So we will see you tomorrow for Futures Power Hour. Thank you for stepping in once more. For everyone else, though, we're taking a quick break. We have Dr. Jim Schultz coming up next here on Tasty Live with From Theory to Practice. So get a cup of coffee, some water, some food, and tune back in. We'll see you later today.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Jim Schultz, and this is From Theory to LMNT sponsorship. So in today's installment, we have the watermelon salt. And so I got to be honest with you guys. This guy it's a solid number 4. Like, it is a very, very solid number 4. Like, it's way behind citrus, way behind black cherry lime, way behind even the grapefruit salt that we had the other day. So it is a solid number 4. It's going to be your Hunter Dobbins. It's going to be your Richard Fitz. It's going to be your Rich Hill for my Rich Hill fans that might be out there. It'll get you a couple of innings, but it's most likely going to get shelled. So welcome to the show. I'm glad that you are here. If you're watching over on the Tasty Live Network, then that's amazing. But if you want to join the discussion in real time, you can pop on over to YouTube and join the conversation. You can hop in the chat. You can communicate with your brethren who are also watching the show. You can celebrate if you faded all of my earnings trades yesterday. You can commiserate if you actually thought it was a good idea to follow my earnings trades yesterday. But either way, it is usually a good time had by most. And of course, a little housekeeping, we are extra long today. So we're going all the way to 3:15 Eastern or 2:15 Central. So from your vantage point, that could be a gimme. It's most likely a gotcha. But either way, that is what is on deck for you all. So extra long show. John, bring us into the market. Let's take a look at what's going on here. We've got, we still got a market. Yeah, we got some things. EME S&P is up 14 on the day. You've got the risk-free instrument doing some risk-free things, up 84 on the day. That would be the NASDAQ futures, which is an extremely, extremely high-risk product. You've got the boomers down 190, and you've got the Russell 2000 futures index down 21 on the day. And yeah, you got bonds up a little bit, you got notes down a little bit, you got oil up a little bit, you got UB40 up a little bit, you got the shifties getting beaten up a little bit, down $25 on the day. Got the British pound is down, got the euro is down, got volatility is down, which makes sense given the fact that the market has been so strong. The Bitcoin bros, I mean, they can't be stopped, up another $200, up to 118,000, which I think is actually a bit lower than it was just the other day. So maybe they can be stopped or at least slowed down a little bit. And then of course you've got the spot volatility, the old VIX down 27 cents on the day, down to 15.10. Now, if I'm not mistaken, this was actually in the 14 handle just a little bit ago, like just a little while ago, maybe 10 o'clock, 11 o'clock, whatever. It was 1490 or 1480. I mean, man, that is some wild stuff. Like if we go to the VIX here and I look at the chart of the VIX, you can see, man, look at that. Like we have to really zoom in. I have to zoom all the way in. This candle's so tiny. And it's so far down. Look at that thing. So the low today, okay, it was 1495. So it didn't quite get as low as 1480, but man, these are some lean times. These are some lean times for us as premium sellers. Like this is not what we want as a high volatility premium seller. This is not what we want as, waiting for, implied volatility rank to be elevated to sell premium and establish new positions, try to take advantage of the market's natural tendency to contract from a volatility standpoint. But this is the other side of that coin, or maybe even the same side of that coin, right? The market usually contracts from a volatility standpoint. Again, we've talked about this ad nauseum. The whole network is basically built on this, right? And so we want to take advantage of that, but we want to do it by, trying to sell some of these spikes. Like maybe you sell that spike, maybe you sell that spike, right? Maybe you sold that spike and you got absolutely gorilla smacked. I mean, you never know. You never know when the perfect spike is going to be to go ahead and sell the premium. But generally speaking, when volatility does indeed expand, that is the time to establish new short premium positions. So the fact that the VIX is now 15 and was 14 earlier today, like guys, please stop me. If I start complaining the next time the VIX is 27, if I start, hemming and hawing and lamenting over my positions, getting whipsawed and getting this and getting that, when the VIX is 32, please stop me. Somebody come and get me, because man, this is brutal, brutal stuff with the VIX at only 15. And yeah, so volatility is obviously low and moving lower as you are. Let's see. Let me see here. If I go to, yeah, okay. Where am I at? I see you guys trolling the earnings trades in the chat, which is pretty funny. Okay. So what I'm going to do, let's go to the earnings trades. So from an earnings trade standpoint, because we've got an extra long show today, so we've got nothing but time, man. You got EME S&Ps at 6410. You got the NASDAQ at 400. I mean, this is some crazy stuff. This is some crazy stuff indeed when it comes to what might be going on. So, oh, wait a second. Hey, John, do we have the right screen share up? Oh, I see what you guys are saying now. That doesn't look like that's my account, John. That looks like that's something else with natural gas. I'm looking at the YouTube screen. Ah, beautiful. Thank you. Okay, you guys in the chat, man, I appreciate you guys. I appreciate you guys very, very much. I thought for a second I left my stealth account on, and I was like, oh, y'all can't be seeing the DGen behavior that might be going on behind the scenes. I'm going to keep that to myself. But I don't trade natural gas, not even as a DGen. So I'm like, that's not me. And so thank you, John. Thank you very much. Okay. All right. So let's go ahead, and we already did the market commentary. It may have been on the wrong account, but it doesn't matter. I promise you it will not serve you in any way, shape, or form. Let's go into the earnings trades that we have on. So the earnings trades that we put on yesterday: Chipotle, Google, IBM, and Tesla. all you really have to do is track over to the right, and whichever trades are getting hurt the most are going to be the earnings trades. Boom, Chipotle hammered, right? Boom, Google actually up a little bit of money on Google, right? So that one kind of bucked the trend a little bit. But then you've got IBM hammered, Tesla hammered, absolutely bamboozled across the board. So we hit 1 out of 4. Again, I don't know how many times I have to say this. If you just do the opposite, like, you are going to be in such a good spot. Like, you are going to be in such a good spot. You're going to be paying your debt down faster. Like, Dave Ramsey is going to be proud of you. Like, it's just going to be nothing but strawberries and sunshine for you and your family and your heirs and your lineage and your legacy. Like, your legacy is going to be so much more impactful if you just do the opposite of everything I do. You would have been 3 out of 4 yesterday and had a small loss today in Google, which is basically nothing. But let's talk about these earnings trades, because we need to deal with these, obviously, since they are indeed in the portfolio. And so Chipotle, Google, IBM, and Tesla. So let's talk about IBM and Tesla first, just because these guys are both going to be fairly easy. I mean, I'm going to muster up 6 to 7 minutes of, fairly, low quality commentary, but it's going to be fairly painless nonetheless. IBM, we put on a butterfly here for, so a butterfly, if you, let me think, where was I? Lost my train of thought. Man, and I had a bunch of blueberries for lunch. There it is. Okay. So we had a butterfly on for Tesla, and I'm sorry, IBM, man, guys. We've only got 70 minutes left, right? So this is going to be, don't worry, this is going to be over before you know it, right? So we've only got 67 minutes to go, and then we can all just kind of move on with our lives. But if we can struggle together through this struggle sesh, IBM. So IBM down $21, right? We played a butterfly to the upside. So 285, 3025, and 320. And you've got the stock down to 260. And again, I mean, we talked about this yesterday. Nobody knows what IBM still does. Like, sure, they're going to weave AI into their conference call just like everybody else. I mean, Chipotle, they weaved AI into their conference call. Didn't exactly work out for them, because robots or not, those chips are still coming out 3 days stale. Like, that is just not going to change no matter what technology you might apply to the situation. But IBM, they can't get out of their own way. I mean, obviously a pretty brutal drop for IBM stock, down $21 down to 260 here. And so for our call butterfly to the upside, sadly, there's nothing to do. And so this is what you sign up for when you do an expect to move butterfly. So just to be very clear, if you do an expect to move butterfly, the way that I like to do them, they're not creative. They're not innovative. There's no zigging and zagging after the fact. You basically put it on, and it either works or it doesn't work. Now, of course, there can be some decisions to be made along the way, like, if it's only working a little bit, is economically significant, like things of that nature. But when it comes to you totally missed the mark, you follow Dr. Jim, so it completely backfired on you, those kinds of things, it's pretty much just a let it go out the pasture type of situation. It's pretty much just hey, I took my shot and it didn't work. Like, I took my shot and I missed. And so this would be, the basic kind of default setting for a losing expecting move butterfly. You do nothing. You do nothing. You lose the debit paid. This is why it's so important to control your risk on these trades on order entry, with the assumption, with the expectation that if this does not work, it's going to assume max loss. So you don't want to be going into these trades, with 5% of your account, 10% of your account, 20% of your account, whatever. You want to keep the size, very modest. Generally speaking, 1 to 3% of your account is usually pretty good. Now, if you have a lower amount of capital, like 10,000 or less, then oftentimes you do have to kind of push up the upper boundary of that range. But for most traders, 1 to 3% is going to be a good level to kind of live. So for IBM, there's nothing to do. Unfortunately, we've just gotta let it go. Tesla, same thing. Absolutely, unequivocally, same thing. Now, I heard that the Tesla numbers. I don't know anything about IBM's call. I have no idea. But I heard their Tesla numbers were actually really good. Maybe I misheard. Like, maybe the subreddits were letting me down, but they don't usually let me down. Like, again, if you want quality information, where do you go? You go to Reddit. Like, if you're Googling something, what do? You Google, hey, how to fix my dishwasher, Reddit, right? How to start my car, Reddit. Like, you're not just going how to start my car. Everybody's going how to start my car, Reddit. Like, how do I mirror my iPhone to my TV? Reddit. I don't want to know what Google thinks. I want to know what Johnny Pools 47 in the subreddits thinks. And so when it comes to Tesla, I thought that their earnings were good. I thought the numbers were positive, but apparently the conference call was a train wreck. And so, I mean, did you expect anything else from an Elon-led conference call? Like, is it ever like buttoned up and not a train wreck? Like, it's got to be just an absolute just circus, man, that conference call. But nevertheless, either way, the reaction function was not so great for Tesla. Like, investors, down $30, traders, investors, basically everybody, the algorithms, whatever. And so, again, upside call butterfly, and it just didn't work. There's another stack of cash. I mean, it's a pile of ashes now. It has indeed been cremated, and it's in an ashtray somewhere. And so we paid $4.96 for it. It's marking for a nickel. I'm just going to let it go out to pasture because you never know, man. You just never know. Like, we are one Elon tweet. We are one Elon Trump tweet value pack away from this thing being back. Now, unfortunately, we've only got a day left, so it's probably not going to happen. But I don't really see the point in taking this off and maybe saving a nickel, like a literal nickel. Like, that doesn't – well, I mean, a nickel in the options world obviously is $5 in the actual world. And so some of you might say, hey, that's economically significant. Like, I can respect that in this situation. It doesn't make a lot of sense to me because something crazy could happen tomorrow. Some news could drop. Maybe you get like a Tesla GM merger, right? Maybe you get like a, Tesla just acquired Toyota or whatever. And so if that were to happen, then, that might actually be negative for Tesla. But anyway, you get an outlier move to the upside and this thing could be back. It's probably not going to be back. I'm not going to bank on that, of course, but there's no reason to take it off. So this guy is going to join IBM in the afterlife. And we're going to put this guy out to pasture as well. So that's Tesla and that's IBM. Both of those guys are going to disappear after tomorrow. And we've essentially taken maximum loss on both of them. We lost $365 on IBM and we lost $496 on Tesla. So that's a total of about $8.50. And so we lost about $8.50 and we're drinking, the watermelon salt, which again, it's a very clear number 4. For those of you that are also LMNT consumers, let me know what you think, because there's only 4 options, right? There's citrus, there's black cherry lime, there's grapefruit salt, and then there's watermelon salt. The citrus is number 1, the black cherry lime is number 2, the grapefruit is number 3, and the watermelon is number 4. I don't really think this is up for debate. I'm pretty sure this is just common knowledge, but I'll be very curious to hear your thoughts if you have indeed also tried or had the LMNT cans. I can't comment on the powders. I can't comment on the sticks. I've never tried the sticks. Autumn loves the sticks, and so she might be making me switch to the sticks because these are getting too expensive. And I'm like, well, listen, how am I going to get this sponsorship if I'm not willing to pay the piper on the front end? Like, that's how this stuff works, man. Like, do you not understand how the world works? And so sadly, our LMNT can days could be coming to a close here soon. But Tesla, IBM, there you go. All right, so now let's talk about the other two that are actually showing signs of life. These actually are showing a wee little bit of a heartbeat. So number 1, let's talk about Google, because this guy actually worked. And so we actually nailed the direction of Google. Now, here's what's fun, or not really the direction, because there really was no direction. We did a strangle that was skewed slightly to the upside. And what happened? The stock basically went nowhere. It went slightly higher. You can see it's up $3 here today. That is quite literally the perfect possible move for us for this strategy. And it should be maybe no surprise that of the 4 strategies that we did, expecting move butterfly for Tesla, expecting move butterfly for IBM, short put for Chipotle, and short strangle for Google, you could definitely make the case that the short strangle for Google was the most strategic of the bunch. Obviously, short put and short strangle are more strategic than expecting move butterfly. So those are just directional shots. You're playing a hunch, you're taking a side. Maybe you get paid off, maybe you don't. But there's not too much you can do kind of after the fact from an adjustment protocol standpoint. Short puts and short strangles, there's a lot of things you can do. And you could easily make the case, and I wouldn't necessarily disagree with you, that a short strangle is more strategic than a short put because nobody knows what's going to happen in the short term. I mean, we can all agree that markets are going to drift higher over time, at least if history is any guide. I think that's a reasonable assumption to make. And so that's the assumption I'm going to continue to carry forward for at least the foreseeable future. And so for that reason alone, I mean, a short put makes sense in the long term. But In the medium to short term, nobody really knows. So maybe selling both sides is more strategic than just selling one side when you compare a short strangle relative to a short put. And so it maybe is no surprise that of the 4 strategies that we did, the one that was the most strategic of the bunch ended up working. It was the only one that essentially worked. I mean, Tesla and IBM are both going to be gone and essentially, kind of go out to pasture here in a day. Google's looking really, really good. I'm actually not going to close it right now, just because, you can see I chose the September cycle, very similar with Chipotle here. Chipotle is also in the 57 days to go September 19th cycle. And for these trades, I was really just using the earnings call as a Kickstarter to a normal trade, to a regular trade. And so by regular, I mean, I'm still going to target 50% of max profit. I'm still going to maintain that same profit target because now we've got expecting move butterflies to pay for. We've got LMNT cans to pay for. We have so many things to pay for. I can't get away with just taking 30% on this trades. Now, of course, that's famous. Those are famous last words, because when this thing reverses course and we're down $3, it's going to sting maybe a little extra. Maybe a little extra salt there in the old wound, but for right now, we're gonna sit tight and we're gonna do nothing. And so for Google, we're off to a really, really good start, and so now we just let time kind of tick away. All right, now what about Chipotle? This is an interesting one. So if you've seen the show for any length of time, like if you've seen the show for the last couple of months and you've come back, hey, welcome back. And I really, really, really appreciate you guys so much, so very much. You guys are the reason we can do what we do, so thank you guys so much. The short put is my favorite strategy. It is my favorite short premium strategy. I like it more than a short strangle because I think you have a little bit more optionality with the short put than you do with the short strangle. Now, you can make the case that, hey, if the market goes down, like short strangle versus short put, and this is actually a pretty good case now that I think about it and I process it verbally with you all. The reason why I like a short put is because if the market goes down, just like we have with Chipotle, if you want to, you can just hold the short put. Like if you want to, you can just say, hey, I'm going to hold this thing similar to how I would hold long stock. I'm okay holding an in-the-money short put. It gives me more delta to play any rebound in the stock more effectively. I'll get more, bang for the buck on any recovery in the stock, more so than I would if I moved the put to, at the money or moved it out of the money by rolling out in time or whatever. And so that makes a lot of sense to me. Okay, with a short strangle, if the same thing happens and the stock goes down and the short puts in the money, you're essentially in the same situation. You're in the same situation, but now you're in a better situation because you've collected some premium on the call that you sold to go alongside the short put, if that makes any sense. And hopefully it does make a little bit of sense. So you could make the case that with the short strangle, you're actually getting everything you get with a short put and then some because of the extra premium that you collect by selling that call. So if the short put goes in the money, it puts you in an even better position than a standalone short put would be in. All of that is true. All of that is correct. I'm not going to argue any of that. But there's still one gotcha that is there, and it's the key difference between the short put and the short strangle. And I'm not necessarily classifying this as a better or worse conversation, as a you should do this and don't do that type of conversation. It's just about making sure you're aware of all the things that are in front of you, like making sure that as you traverse, the pathway forward through the forest is like, okay, there's a gimme, there's a gotcha, like there's a bear trap, there's a an obstacle, there's a a little bunny trail, whatever. It's like all the things that are in front of you, as this analogy breaks down very, very quickly. With the short strangle, though, you have that short call, so you have risk to the upside. Like you have risk to the upside if you leave it on. Now you could make the case, hey Jim, if the market goes way down, I'm going to leg out of the short call, so I'm not going to be in that position anyway. So okay, that would be a fair point. But if you leave that short call on, now you still have upside risk, you still have whipsaw risk, and that can be really, anybody who traded through April, like Liberation Day, and Liberation Day, 2.0 apparently is coming up here on August 1st. I have been told again by Johnny Pools 47 and even Johnny Pools 48. Like they were both pretty active in the subreddit that I was consuming just yesterday evening. And so when it comes to trading back in the spring, it's like, man, there was lots of back and forth. There was a lot of whipsaw. People got hurt on the way down and then they got hurt on the way back up. And so to some degree, that's trading. To some degree, when you sell premium and you adjust aggressively, that is what you're signing up for. But to another degree, it's like, okay, can I be mindful about this? Can I be somewhat thoughtful about this, this potential whipsaw risk? And for me, that's why I think I like the short put more than the short strangle. But this is very much a 1A, 1B conversation. Like, this is not a citrus versus watermelon salt conversation where there's a very clear winner between the two. It's kind of a citrus black cherry lime. It's like, okay, we could put both of these guys at the top of the rotation, and they would both be solid choices. And so when it comes to short strangles and short puts, there's a quick little, it's like 6 minutes, maybe not super quick, but relative to what I normally do, it's fairly efficient. And so when it comes to this short put though with Chipotle, so what are we going to do? So with Chipotle, I think we're just going to hold it. So again, this is one of the huge benefits that you have with a short put that goes in the money. When you have a short put that goes in the money, one of the options you have in your back pocket is I can just hold it. I can just hold it the same way that I would long stock. And again, the chips are 3 days old. The chips have been stale for the last week, but we all know this. This is not new information. The market has processed this. The efficient market hypothesis has digested this for years now. This is not brand new information. Like, this has been out there for at least the last 7, 8, 9 years. And so I think the market is finally going to realize, all right, listen, I'm okay with the 4-day-old chips, but just keep pushing out that level of guacamole and I can look past the chips. Like some of you were saying in the chat, I was scanning it after the show yesterday. Some of you were saying you bring your own chips to Chipotle. I'm like, that's a power move, man. That is a 100% power move. Oh my gosh, that's so funny. That is so funny. But anyway, with Chipotle, let's just hold it. Let's just see what's the worst that could happen. What is the worst that could happen? I don't really want to sell a call and now I've got, the whipsaw risk to the upside. Let's just sit tight. This is one of the beautiful things about A, controlling your position size, B, having a strategy like a short put, and C, having a longer term bullish bias. And so it's like, man, we've had Starbucks for 6 months in this portfolio. Maybe Chipotle is going to join the ranks. Like maybe Chipotle is going to just become, one with our long stock positions. And so that's what I'm going to do with Chipotle. Let's just sit tight. I don't feel like there's any reason to move super quickly when it comes to that. So we sit tight on Chipotle. We're going to sit tight on Google, which also looks good. And then there's Tesla and IBM, obviously. And so, yes. So what I want to do now, man, I see you guys in the chat. Look at you guys. You guys are trolling me. You guys are trolling each other. Like, I mean, I scramble. Everything's in the house. Ash Finn's in the house, man. Sam L's in the house. Ash Finn's a Braves guy. And so, yeah, it's been a tough go for you there, Ash. But I appreciate you, man, being part of the show, being part of the network. And so that's amazing. Joel James in the house. Brandon R's in the house, man. T-Port. D-Lo's in the house. Man, Mark's in the house, man. Look at you guys, man. You guys are amazing. Brian Dowdy's in the house. Bert Earp is in the house. That's an amazing name. If that's your actual name, that's quite a pull. It's not quite as good as Anthony, but it's in the conversation. Like, you're an honorable mention, when it comes to just the awesomeness of a given name. So let's go into, let's look at IWM, because believe it or not, in the sea of red and the sea of stacks of cash that are no more, we actually do have a winning trade. We actually do have a winner on here, which is IWM. So IWM is down a little bit today, which is helping to recenter our short strangle rather nicely, I might add. And so you can see we're up, about 67 cents on the day, which is super nice. And so we're right at about 50% of max profit now, like almost exactly. And so I really feel like it's time for this guy to go ahead and be put out to pasture, but in a positive way, like not necessarily in a negative way. And so I think IWM, this is what you want. I think we looked at this just recently, so I'm not going to do it again here now. But, we were never tested on this. I mean, the strikes were never tested. They weren't even sniffed. Like, the strikes were nowhere near the action, basically, for the entirety of this trade. That's exactly what you want. When you sell a strangle, that's the 100% best case scenario for you. The stock is obviously going to move at least a little bit in either direction, sometimes a lot of it. But when volatility is higher and you wait for IVRs to be elevated before you sell premium, you can typically widen out your strikes more so than you could if volatility were at a lower level. In fact, I would make the case that in a ceteris paribus world, if everything else was equal, then you can always widen your strikes out in a higher volatility environment relative to a lower volatility environment, because that is almost quite literally the definition of higher volatility. Higher volatility means the market's expecting bigger fluctuations, bigger moves, and so option prices are going to rise as a result of that, which is going to allow you to collect more premium, which means if you were targeting the same level of premium, let's say $5 or $4 or whatever, then you're going to be able to go further out with your strikes to collect the same level of premium, quite literally by definition with higher volatility. So for IWM though, yeah, that's a pretty solid trade, and there isn't even anything more that I can say about this. So that's how we have quite literally run out of things to say. Let's see. Let's close this guy down. Let's quite literally close this guy down for the 7th time now. Let's see. If I go into, I feel like Gary V. I feel like Gary V's a literally guy. Gary V is a quite literally guy 9 times every minute. 9 times every 2 minutes. Now, I went through a phase in my life where I was like, man, this Gary V guy is unbelievable. I've kind of, I don't want to say I've outgrown Gary V, but I've kind of outgrown Gary V a little bit. But still, I think Gary V is amazing. I think he's a great. Plus he's a fun personality. And so let's see, $1.40. Man, I gave you guys a Dave Ramsey reference today. Man, I gave you guys a Gary V reference today. And I obviously gave you guys some watermelon salt LMNT, which I probably wouldn't get it. I probably would just leave that one on the shelf. So let's see, $1.41. Let's go for it. So, all right, no takers there, $1.41. Let's see here. Let's try $1.43 maybe. Let's just try to get out of this guy. No takers at $1.43. Man, they're really coming to get me here. Oh, there we go. All right, fill there, $1.43. All right, perfect. So we're out of IWM. The other trade I wanted to take off today is actually this boomer spread. So this DIA call spread, the Dow Jones Industrial Average. I wanted to take this guy off because we're getting very close to 21 days to go, which of course will be tomorrow. 21 days to go in the August cycle, and we are up about 75 cents on the trade. You know, I mean, I've talked about this many times before on the show. You know, is this economically significant? Is it not? You know, that's the question you should be asking yourself when it comes to, you know, trying to figure out if you want to take a trade off early, or if it hasn't hit your profit target, what do you want to do and things like that. For this trade specifically, 75 cents is pretty economically significant. I don't think that too many people are going to scoff at that and say, I don't know if that's quite there yet. I mean, that's 75 cents. It's $75 in the actual world. And so I think most traders, even at pretty much any account size, are going to say, yeah, that's a really nice trade. Like, that's a nice trade. Let's not hold the risk any longer. We can redeploy more capital. I mean, next week, we got a big week coming on down the chutes with more earnings. We've got Uncle Jay next week. We've got so many things that are happening. And then, wait. Yeah, that's right. Man, hold on. Let's take this off. Because, yeah, next week is crazy now that I think about it. So let me close this guy down, and then let's have a very short – let's have just a quick, brief little discussion about the craziness of next week. It'd be like 18, maybe 19 minutes. So if I do 377, that's fine. Okay, so we got filled at 377. Okay, so next week – let me bring up Tom's watch list right here. So there you go. There's another 19 cents towards the second Range Rover. If you sort by earnings, which we've done right here, then you can see next week. I mean, look at all these guys, man. So here you go. We've got oh, wait a minute. Hold on. I thought the earnings were done this week. We've got American Airlines, which was this morning. Right, they're down $1. That makes sense. If you're still flying American, like if you're still flying American Airlines by choice, when you can choose Delta and you can choose even United, which is a clear second behind Delta, but it's head and shoulders ahead of American Airlines. Man, I don't know, how did we miss this the other day? Because this was the easiest slam dunk I think I've ever seen. But nevertheless, we move forward. So American Airlines, we missed it this morning, but then today after the bell, or tonight I should say, Intel, INTC, really? They're still in business? That's amazing. $22 a share. They're down going into earnings, which, I mean, I think the investors are finally starting to figure out, like, wait a minute, this company's still around? I'm going to pass on this. I thought earnings were pretty much over this week, and I guess they are, because I'm not going to do anything. I want to leave my capital dry for next week because we have so many things to do next week. So many things to do. And so next week, you can see, yeah, you've got BA, which is what? That's Boeing, I guess. BA, I think, is Boeing, right? BA, Boeing. Yeah, you've got Procter & Gamble on 729. You've got Starbucks on 729. You've got Visa on 729. And then on 730, you've got Meta, Microsoft, and Qualcomm. And then on 731, you have Apple and Amazon and Roku. And then, of course, on 730, you also have the USA earnings presented by Jerome Powell. So you've got, 730 is going to be a crazy day. You've got Meta, you've got Microsoft, and you've got USA all on 730. And then on 8-1, man, not only is this potentially Liberation Day 2.0, but this is also non-farm payrolls. Like, we've got the jobs number on in the morning of 8/1, and I've been looking at the history books. Like, I've been combing through, kind of the previous prints and the previous numbers and whatever. From every estimation that I can find, this is the most important NFP print that we've ever had. This is the most important NFP print that the market will ever have to digest. And it's going to have to do it on the heels of all of these earnings, and Metas and Uncle J's and Visas and whatever. Man, next week is going to be crazy. So anyway, don't miss the show next week. We are extra long on Monday and Tuesday next week as well. And so that'll be kind of fun, or maybe not, depending on which side of the aisle you might be on that one. But all right, let me see here. Where are you guys at, man? Where are you guys at? So let's get into some comments. So I want to surprise and delight somebody. And you know what I'm going to do? I'm going to surprise and delight. Man, look at you guys. You guys really came to play today. This is going to convince or persuade the YouTube algorithm into thinking that this is some quality programming. So, man, that's some awesome stuff. But let me surprise and delight somebody. I'm going to grab somebody almost near the very end. So you probably put this comment in thinking there was no way I was going to get to it, but here you go. Saving Ferris, thank you so much for joining the show. I appreciate you, my friend. I'm going to answer your question, or at least hopefully give you some things to think about. Saving Ferris says, Dr. Jim, please, can you tell me what are the cons of having wider spreads other than the obvious max loss and margin impacts? Okay. There are no other cons. Like, you outlined the two major gotchas that exist with wider spreads, whether it be a wider vertical or a wider iron condor, which is, of course, just a combination of two verticals, short put spread on the bottom, short call spread on the top. And so usually when a trader is doing, a $5 wide spread, let's say, and they're having some success, and then maybe their account grows or they add some capital to it or whatever, and they want to begin scaling up. This is a question that I get all the time, pretty consistently on a regular basis. And you didn't ask this question specifically, but it's so closely related to what you brought up that I wanted to make sure that we addressed it. If I want to scale up, should I increase my number of contracts, or should I increase the width of the spread? Because both will essentially, allow you to scale up. Both will essentially put more capital, to work and, increase your maximum loss and increase the risk tolerance of the position and things like that. And the answer almost always is to widen out the spread. And here's the reason why they're saving Ferris, because you've already answered your question yourself from the standpoint of, what are the main gotchas. That's it. I mean, it's, it's more risk, and it's a higher margin requirement. Like, if I go into, let's say I go to SPY, right? And let's say that I'm trading SPY to the upside. Let's say I'm a bear. Let's say I'm trading SPY to the downside, right? And I'm saying, hey, let me do, I'm in September with 57 days to go. Let me sell a call spread. So I'm going to sell, the 645, 650 call spread. Actually, no, let's go out even a little further than that. Yeah, I'm going to sell the 650, 655 call spread. So this guy sets up really, really well. $1.92. So you're risking a little over 3 to make 2. Right? So this is basically your classic plain vanilla Betty Crocker vertical spread setup, where you are collecting about 1/3 to 40% the width of the spread. I like to be closer to 40%, but some of my own brethren on the network like to be closer to 1/3 the width. I mean, obviously, all things being equal, we would prefer higher credits, but all things are never equal. So you have to give something up. You have to figure out what I want to give up if I want more credits. And usually you have to give up a little bit of probability. And so I'm okay doing that, but I can respect someone who might say, I want the higher probability with slightly lower credit collected. That's totally fine. But the way that this trade sets up Saving Ferris, and everybody else for that matter, this is a pretty good setup for this trade. $1.92. My pop is 63%, which is really good. P50 is 77, which is also really good. And so all of this looks really, really good. Okay, so now you're like, okay, this is a trade that I used to do, a month ago, 6 months ago, yesterday, whatever. Now I'm ready to scale up. How should I do that? How should I consider scaling up? Well, the two options that you basically have at your disposal are, I could just tick up the quantity from 1 to 2. And so now you can see that my probability didn't change. Pop is the same, P50 is the same, as to what it was when I was just at a one lot. Credit collected is the same. Break-even point on the trade is going to be the same. but now my maximum profit is of course going to be, 2x what it was on the previous screen, right? My maximum profit is just going to be double, and my maximum loss is just going to be double what it just was on the previous screen. In fact, here's how you guys know the show is going off the rails today. Let's go to the curve view and let's look at this, because I think this is going to be a really, really nice visual representation of what's going on. So if you look at the curve view here, you can see that my break-even point here is right around, it's obviously going to be, whatever my strike is, so whatever my short strike is to be exact, plus my credit collected. So if I take 650 plus 192, it's going to be 651.92. That's going to be my break-even point, which that is where, the green meets the red here on this little visual representation on the curve view. And so this is all really nice. This is all well and good. Okay, but let me show you how things change if I go back to a one lot, but now I widen out my strikes. Instead of doing a 650, 655, I do a 650, 660. So now you can see how things have been altered. So now I'm collecting 343. So now I'm actually right around 1/3 the width of the strikes, but my probability has ticked up a little bit. My P50 is about the same actually. And so my break-even point is also going to be a little bit more favorable than it was with just a one lot, or I'm sorry, with a two lot at the same strikes as the one lot was at. So, it's gimmies and gotchas, right? I mean, it's pros and cons. And so obviously, with the two lot, you are able to get, more bang for your buck in terms of the original strategy. But when you widen out the strikes and you're able to collect more, relative to the width of the strategy, because you saw we were a little bit closer to 40% the width when I was just at the tighter strikes. But because of the pricing dynamics, when I actually widen out my strikes, I lose a little bit of relative percentage of the width collected. Like right here, you see I'm only collecting 343, 342 relative to $10 wide. So I'm losing a little bit of the bang for the buck, I guess you could say, when it comes to the credit collected relative to the width. So that would be another gotcha, I suppose, that we could add to our list here. But the probability is a little bit higher. Not much, only a couple percent. P50 is about the same, maybe a little bit higher now. It's floating around, of course. Break-even point is a little bit improved. So I usually like to see people widen out more often than they double up and scale up by increasing contracts. I think there's a time and a place to increase contracts, but I think the first move that you should make when you begin to scale up because of capital, because of experience or whatever, I think it should be widening out, because what begins to happen, saving Ferris and everybody else, is the wider you go, the more naked the strategy feels. And one of the things I've said on this show so many times before is, if you really want to build something that has consistency, that has some reliability over time, that has smoothness over time, undefined risk is going to be the thing that's going to do that. I know it sounds backwards. I know it seems counterintuitive, but if you feed it enough data points and you actually take a bit of a leap of faith in a way, you will see this and feel this for yourself if you give it enough time and you give it enough observations. And so the wider you go, the more gradually you're kind of moving towards that end goal, whereas doubling up or tripling up or whatever on the same strikes with just more contracts isn't really moving you in that direction, which in my opinion is the direction that most of us should be trying to move towards. And so hopefully that helps there, saving Ferris. It gives you a couple of things to think about at least. And so now let me get off the curve view because it's kind of making me anxious being on the curve view for so long. So all right, let's see where it's an amazing piece of technology, but it's hard to teach an old dog new tricks. All right, so where are you guys? Let's go all the way back to the beginning. Man, look at you guys. Look at you guys. Man, I appreciate you guys. Sam L's in the house. What's going on there, Sam L? Doc, the earnings oracle. Yes, 3 trades to 1. That's right. Follow your own advice and do the opposite. You're golden. I'd say a small victory dance for the Googs is in order. Yes, and then I guess Taco Thursday didn't hit for those Chipotle earnings. No, they did not. You were right. The 3-day-old chips finally caught up to them. It looks like the shareholders are heading to Taco Bell until next earnings. Yes, maybe they are. It's funny. I certainly do kind of engage with the George Costanza philosophy, to where there will come a time, maybe pretty soon, since I'm pretty ice cold right now, when I'm just going to start doing the opposite of what I would have normally done. And then that leaves you guys in a really, really tricky spot, because you're like, well, wait a minute now. If, if Dr. Jim is doing the opposite of what he would naturally do, should I now tail him, or should I do the opposite of his opposite? Like, it's kind of like, I mean, I know that you know, and I mean, you know that I know, but do you know that I know that you know? Like, are we at that level? Like, you've got to figure that out for yourself. And so I'm not quite there yet, because I'm still feeling pretty good about next week. I think we're going to turn the tide. And so we're not going to do that just quite yet, but maybe soon there, Sam L. Sam L goes on to say, Doc, how we doing on the Ghost pre-workout and that LMNT hydration? Got the watermelon today, LMNT. Again, solid number 4. Only thing you're missing is the Genius shot. Yes, the old Mike Israetel deal. 23 grams of pure protein and just 100 milliliters. No carbs, no sugar, no fat, and only 90 calories. That's amazing. I haven't tried one yet. I don't really – Mike, he's a little over the top for me. I think that he's very talented, and his comedic timing is like A++. Like, he's very, 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 very funny guy. But he's a little over the top for me with the vulgarity and things like that. So I don't do a whole lot of Mike Israetel anymore, but I respect him, obviously, for his knowledge. And I haven't tried a Genius shot, but I may have to give it a go one time here pretty soon. So Scramble Everything says, hey, Dr. Jim, it looks like your Lions, my Lions. Nah, man, I'm not claiming the Lions. Absolutely not. Are falling apart at training camp. Good. Because we're Dolphins, baby, ride or die. Like, it's Tua all the way. Like, Tua is going to carry us through the first 2 games before he gets hurt, like you've never seen before. Like, it's going to be quite a spectacle. And so let's see. It's going to be a long season if you keep up with this injury bug. Yeah, don't care. Don't care about the Lions. If they go 10-1, then obviously they're going to be my squad. Scribe Everything says, Sam L for no less than 7 to 9 minutes. That's the victory lap. I'd say we clocked in at about 7.5 minutes on Google there. So that's right about the average. Brian Dowdy says, hey, Dr. J, I didn't do the opposite of you, and you still don't. I don't know why. You keep coming on here, and you're like, man, I can't do it. I can't bite the bullet, but I'm telling you. And everyone else that might be watching today, if you're serious about hitting your financial goals, like if you are serious about hitting whatever financial independence looks like to you, I'm giving you the ticket to paradise. I'm giving you the stairway to heaven. Like, I'm giving you, all the things that you're looking for. They're right here. You just have to do the opposite of what I do. But Brian says, I have no regrets. Oh, well, that's good. Glad you got that SPX winner before lighting those stacks of cash so far. Yes, me too. Because again, these LMNT cans, like, I'm going to have to show, Autumn, she doesn't care about stories. She doesn't care about narratives. She certainly doesn't care about any B- humor. She wants to see results. She wants to see cash on hand. Like, if I want some LMNT cans, like, I'm going to have to be picking up some Uber shifts. I'm going to have to be doing, double shifts in the cheese department at Publix. Like, she's going to need to see some results. And so, but I appreciate you, Brian. Brian says he's not even going to get to my question. I did. It's only because of the extra long show. Because right now, we would be done with the regular show right now. The regular show would be done and dusted, and I will have gotten to 2.5 questions. But we press on here now that we're kind of into the overtime session of the show. And so let's see. T-Port's in the house, says a $10 0 DT iron fly came in. $135 each, $190 of risk each. Man, nice trade. That's some good stuff. Let's see. Oh, Ash in the house says, here we go. I don't know how anyone likes grapefruit. Are you talking about grapefruit in general, or are you talking about the grapefruit LMNTs? Because I'm kind of with you on grapefruit in general, although I used to eat grapefruit a lot in college. I really enjoyed it quite a bit because it was kind of one of those things where I'm like, this is nasty. But then it's kind of like, if you swallow the frog, it just gives you like some motivation, and it kind of gives you a little bit of a chip on your shoulder for the rest of the day, which is not necessarily a bad thing. And so that was my philosophy in college. But I can respect the fact that you may not want to go grapefruit today. But the grapefruit salt LMNT is actually quite solid there, Ash. So I would give it a look. T-Port says 4 out of 4, almost T-Port, but we did salvage the winner in Google, and so not quite 4 out of 4. But MP says, I love the watermelon salt. Really? That's amazing. So give me the rest of the ranking, MP. Like, I have to know where you're at. Like, are you just going to completely reverse course here? Like, are you watermelon salt, grapefruit, black cherry lime, like citrus? Like, let me know. At least tell me that citrus is your number 2, because it's amazing. Like, citrus is amazing. And so, wow, I'm shocked though that you like the watermelon salt. Brian says, question for you. How have you been assigned on a naked call from a strangle? How does this work when I don't have the shares? Yes, I certainly have. And if you watch the show for any length of time, you're going to see it happen. And what I normally try to do, now I can't always do this, because if like my buying power is like totally crazy and I got Scott Sheridan like showing up on the property, like I've got to kind of tidy some things up before the show. But if the times when I get assigned, they don't happen that often, but they do happen. And just like they happen to you, they happen to me. And so I actually use those as golden opportunities to unwind the assignments on the show, to unwind the assignment like live on the show. And so I've done that several times before in the past. If you pop into the Google machine and, punch in, Tasty from Theory to Practice, unwinding assignment, like you'll find several that I've done in the past live on the show. So you can actually see it happen. Like, cause it's a very, it's a little scary experience the first time or 2 or 12 that happens to you, to where it's like, man, my buying power is all crazy. Like this is all crazy, whatever. I've got these weird positions on now. Like, I've got shares here, I've got shares there, whatever. And the couple times I've done it on the show, I've been able to show you all that it really is just a couple clicks. A couple clicks, you're able to close the position. Everything is back to normal. Nobody's coming to get you. Like everything is going to be okay. But when you see it for the first time, it can be a very, very scary and eye-opening experience. But when it comes to short call specifically, what happens? You're just short some shares. And so as long as you have the buying power and the margin to hold those shares, and of course you have the account type, you can't hold short shares in an IRA. So if it happened in an IRA, you'd have to clean it up that day, I imagine. But as long as it's a regular margin account or even a cash account, whatever, can you hold short shares in a cash account? I'm actually not sure. Maybe you can't even hold short shares in a cash account. That's possible. But margin account, for sure, you can hold short shares. And so as long as you have the buying power, you can hold the short shares as long as you want to. Not too different from long shares, honestly. And so, yeah. And so hopefully that helps a little bit there, Brian. Let's see. Dilo says, does anyone know why a ticker will be set to closing positions only? Good question, Dilo. And that's usually when there's something crazy going on with that stock or with that index. And so, like, I know, like, back in, like, 2021 with all the GameStop stuff, I mean, GameStop's got set to closing only for short periods of time at certain brokerages. I can't remember if it happened at Tasty Trade. It very well may have. And so I can't remember. But I know that was one of the tickers recently. GameStop, AMC would be another one. Maybe there's one today. I don't know. Maybe Open is kind of in the mix. That's possible. Like when there's tremendous risk in that underlying, then the brokerage firm may decide to go closing only. And that's a risk judgment on their part. And so, of course, if something happens at Tasty Trade and you are unsure why it happened, just email support at Tasty Trade and tell them that I sent you. Like, tell them that, hey, Dr. Jim told me to email you. Like, why is this set to closing only? And they will give you an explanation. And that's the thing that, honestly, I think sets Tasty Trade apart from, most, if not all other brokerages, is the customer service. Like, they'll get back to you within probably an hour, maybe even 30 minutes. And so, yeah, hopefully that helps there, D-Lo. Let's see. T-Port says, last one's left in the sampler case. Oh, of the watermelon salt. Yes, 100%. Sam L says, Doc, it looks like Intel needs a miracle for earnings. Yeah, just to stay afloat, just to remain solvent. I didn't even know they were still in business. That's what I'm saying, man. Like, I'm shocked. I mean, have we not moved on beyond this? Like, have we not all graduated beyond Intel? Like, I mean, now we're doing, I'm doing, GeForce RTXs. I'm looking down at the sticker on my laptop. Now it says Intel next to it. And so I'm like, all right, maybe Intel needs to be there. I'm not sure. But yeah, we'll see what they have to say today with earnings. Sam L says, just throw on a downside trade so the shareholders can at least enjoy their Friday. Yes, I wish I could. But I do have to be somewhat mindful of the stacks of cash I have available to light on fire because, I'd like to keep at least a few. We've had, believe it or not, we've had a decent first half of the year. And so I'd like to finish relatively strong. Like, we don't have to go out guns blazing, but I wouldn't mind, some kind of positive result for the second half. And so Brandon R., or Emmett Morrison, I should say, says, Dr. Jim pushing the LMNT again, wondering when the sponsorship kicks in. I don't know, man, but it hasn't been yet. I can assure you of that. And I don't know that today is going to necessarily help us because I'm just being honest with you guys. I'm just being real. Watermelon salt, it's not their best. It's not their best effort. But again, citrus, the black cherry lime, amazing stuff. Brandon R. says, hey, Dr. J, I have an AMD inverted short strangle. 815, a 130 call, and a 140 put. After many rolls, I've collected 1042. It will be 21 DTE on Friday. Would you adjust here before earnings? This is a great question. Brandon, let me bring it up. Wow, look at SPY's IV rank, negative 5.9. Wow, that's really, really crazy. And so let me explain what that number means. I'll get to your question, Brandon. We still have plenty of time left. For people that are brand new and like learning the space and learning about implied volatility rank and whatever, you may not know what that means. And you may be wondering, hey, what does a negative implied volatility rank means? Well, implied volatility rank means this is where implied volatility, so the IV is relative to the range of IVs over the last 12 months. So in other words, if you see an IVR of like 50, that means that the current implied volatility is at the 50th percentile of the range of all implied volatilities over the last 12 months. So basically the midway point. If you see an IVR of like 80, that means you're at the 80th percentile, so very close to the high end of the range. If you see an IVR of like 10, that means it's at the 10th percentile, so at the lower end of the range, and so on and so forth. Okay, so what does it mean if you see an IVR that's actually less than 0? Well, that means that the implied volatility right now is so low that it's actually 5.9% lower than the previous low over the last 12 months. So this tells you that volatility, I mean, suppressed doesn't even do it justice. Like the volatility right now is so extremely low that this is not a great environment to be selling volatility in terms of in the major market indexes. Now, if you want to sell volatility for earnings, of course, we do that all the time. If you want to sell volatility in some non-equity products, I think that can make a lot of sense too. And so, yeah, but that's what a negative implied volatility rank means. But anyway, let me get back to Brandon's question. It's a very good question. So you've got AMD, you said, right? Yeah, AMD. You got the stock at 162, and they have earnings coming up when? August 5th. So you got about 2 weeks to go. Okay, so 2 weeks until the August 5th earnings, and you've got a 130 call and a 140 put, and you've collected a little over $10. So you have a $10 wide inverted strangle. You've collected just over $10. So just to make sure everybody's on the same page, this means that your best case scenario is a scratch. You've collected 1042. The width of the inversion is 10. Your best case scenario is you come out of there with 42 cents. Because the best case scenario for any inverted strangle is the credits collected minus the width of the inversion. That's only going to happen, though, if you carry it all the way to expiration and the stock is between your two short strikes. So that's, you need two numbers of the combination lock to both come in there to indeed kind of, walk away with, the 42 cents. So I think we can all agree that that's very unlikely to happen. So we don't usually stay in all the way to the end like that. Okay, you're in 815, you said. Okay, so let me go ahead and 815, 22 days to go, right? Because you said 21 days to go is tomorrow. Let's see, 130 call, which is going to be this guy. And then the 140 put, which is going to be this guy. Yeah, so, okay, so you're down about $25 on the trade. Okay, so a couple of things. So number one, taking this trade through earnings is a real gamble. Like you are playing with fire. The potential for a catastrophic situation is very real. So I just want to make sure that you're aware that this is, the potential for, taking an underwater, undefined risk strategy into earnings, into any earnings, even if it is, Procter & Gamble or McDonald's or whatever, some company that's been around for General Electric, whatever. The potential for something really bad and catastrophic to happen is always there. It's always there for every strategy, but it's especially there and it's heightened when you have a position that's already underwater, like the one that you have. Okay. Taking that thought one step further, though, we're not talking about Procter & Gamble. Like, we're not talking about General Electric. Like, we're talking about AMD. Like, we are talking about AMD here, where this thing, it could be 200 after earnings. It could be 210 after earnings. That would not be that crazy. Just because, AMD, NVIDIA, like these guys are so ingrained in the AI space, the semiconductor space, that if, they present results that investors love and traders love and everybody loves, and the robots that they themselves are making also love, then you could be in a situation where it's 230, it's 240, and now it's like, okay, right now you're sitting on a $25 loss. That is not, insignificant. Like that is a loss that's going to sting. It's still only 2.5x of your credit collected. So it's still, in terms of like something that you can recover from, definitely within that category. Absolutely in that conversation. Personally, I would not take this trade through earnings. I just would not do it. Now, do you want to hold it for a few more days to see if it can come back? That's going to be your call. I mean, the whole thing is going to be your call. Okay. I mean, I don't love that either personally, because you're getting into the spot now where implied volatility, you can see it's really low right now. The IV rank for AMD, that's going to start ticking up, would be my bet. That's what normally happens for about the 14 days before earnings. And we're right there, right about the 14-day mark. And you're at 21 days to go in the cycle anyway. So I really feel like everything is kind of nudging you, Brandon, towards taking it off. You take it off, you eat the 2.5x loss, and you move forward. It stings. It hurts. It's obviously wiping away, a number of winners that you've had, but it's not something that you can't recover from. It's not something that's going to really, really, really do a lot of damage. And that's the thing that we as premium sellers, that is the big chink in the armor. That is the thing that can do the most damage. It's going to be, the 5x losers, the 9x losers, things like that. Like I just recently had Oracle. Like, here, I'll even show you. This is such a good question, and I know that this is something that a lot of traders, have to deal with. So I want to spend a few extra minutes on it. But if I go into Oracle and I go back, this was just in the last couple months for sure. Like, here you go. Like, this is the whole trade package, I think, right? Yeah, it looks like it. So there you go. I mean, this really, really, really stung. Where is Oracle today? Hold on. If they went down, I swear. Okay, no, they went higher actually. I don't think they were at 240 when we took it off. And so, man, yeah. So this is actually a great point. This is a great point. Now, I don't know. Now, Oracle had like 7 straight earnings calls for like a week straight. And if you watch the show, on June 10th, June 12th, whatever, you saw what I was talking about. They just kept reporting earnings. It was amazing. And they just kept going up after all of these additional earnings reports. And so we ended up eating, you do the math there. We collected about $10. We bought it back for about 44. It's a 3.5x loss. That's a big, big loss. Big loss. But because of the other things we've done this year have worked out so well, we've been able to move forward. We've been able to move beyond that. And still we're having a decent year. And so I would want the same thing for you from the standpoint of, if this thing gets away from you, it can be really hard to come back from. And so there's a real-time example, something that just happened to me within the last month. And so, Brandon, I would close it. I would close it pretty soon. Hopefully that helps a little bit. Joel James in the house. What's going on there, Joel James? Dr. Jim, I went to Chipotle today, but they were not open. Just a sign on the door saying they went bankrupt, and then a few stale chips on the ground, as kind of a remnant of yesteryear. And apparently so, right? Chipotle down $7 today. It's some crazy stuff. Some really, really crazy stuff. But we're gonna hold on. We're gonna hold on for dear life. And so T-Port says call the trade desk. Sometimes this is just a liquidity precaution. There you go. You could also do that. Thank you, T-Port, for chiming in there. Man, that's what I love about this show. That's what I love about this show. Like, again, I love it. I love it so much. But you guys, I mean, we are a community, man. Like, we are, there's some camaraderie here. And what's amazing is I know I don't get to as many questions, and we joke about it, whatever, but it's because I want to give you guys my full thoughts, the ones I do get to. I want to give you guys, my full thoughts, and we have some fun and we do whatever. But you guys are amazing, and I see it after the show. Most days I scan the comments when the show's over because you guys are always good for a couple of laughs coming back to me my way, which is amazing. And so you guys are great, though, with jumping in to help each other, which is so awesome. And I really, really appreciate that. And so thank you guys for the new people that might be, watching, and the new people that might be, emerging from the shadows who, were a longtime lurker and now they're hopping in the comment section. You guys are amazing. You guys are so amazing, and you help them out. And I just wanted to say thank you to those of you that do that when I'm not able to get to the question or whatever. Sergio says, greetings, Dr. Jim. I told my wife about you and found your video with Autumn. You said Arnold's book got you into buy. Oh, yeah. Yes. Yes. I know what you're talking about. Yes, that's on my YouTube channel, my personal YouTube channel, which is not that hard to find if you want to see some, some cringeworthy stuff. But yes, there's a video of me and my wife kind of on our old couch in, I think we were in Chicago. Maybe we were in Charlotte, actually. I can't remember. But you said Arnold's book got you into bodybuilding after your accident. That's correct. Could you share how it shaped your journey? Well, I'll tell you what. So Yeah, so just a quick little story. I think I've shared this before on the show before, but just in case you weren't around for that, I was in a major car accident. It was Christmas night, 1999, and I'll save all the backstory. But I was just in a major car accident. My buddy was driving. He fell asleep at the wheel, crashed into a tree, and I was asleep. Like we had been out all night and whatever. And so he crashed into a tree. There wasn't any drinking or anything like that, but he crashed into a tree. I was sleeping. Anyway, I woke up in intensive care like a week later. And so apparently it was really, really crazy from my friend's vantage point because like there was glass and blood everywhere and whatever. And I mean, it looked like I was gone. And so, I mean, they had to use the jaws of life to get me out. Like it's crazy stuff. And so I actually broke my right femur bone. I have a rod in my leg. I've had it in there for 25 years now. I also lost the hearing in my right ear, so I have no hearing in my right ear. I haven't had it in 25 years. Thankfully, my left ear does work pretty well. So most of the time, it's pretty normal for me on a day-to-day basis. And, it's been said before that for every gimme, there's a gotcha. Man, you're driving on a long road trip with your wife, and she's got a lot of things to tell you that you're not necessarily interested in. Kind of works out pretty well from my vantage point. But anyway, I digress. Again, the delta that she sees the show, 0. There has never been a more 0 delta trade on the board, I can assure you. But anyway, while I was recovering with my broken leg and getting used to, having lost the hearing in my ear, I read Arnold's book, like his little, not the Encyclopedia of Bodybuilding. Obviously, I've read that a million times, but his book. And it got me so fired up to get into bodybuilding. And so the rest is history. I've now competed for many, many years. It's been a few years since I have competed, but I think I'm going to be back on stage next year with all the old guys. Now I get to beat up on all the old guys. And they're going to probably look at me saying the same thing. And so it's going to be fun. It's going to be a good time. But Sergio, thank you for asking. Let's see. Mark says AWO trade worked again today. AWO, is that just like a shout of emotion, or is that an actual stock? Yeah, I'm assuming that's some kind of shout of emotion. So nice job there, Mark. Good trade, my friend. Let's see. Harsha, here we go. Harsha says it's even timestamped. It's 2:02. So this is literally 1 hour ago. Right now it's 3:03. Harsha says it's 2:02, so the delta of you seeing this is 0.4. And here we are, my friend. Here we are. Have a short strangle in Upstart for EP with 0.2 delta, thinking of neutralizing delta with long 75-85 call spread in August for earnings. So you have a strangle in Upstart. You didn't share the strikes. That would have been really, really helpful. Thinking of neutralizing delta with a long call spread in August for earnings. Okay, if you have a strangle on, and you want to neutralize the delta, that's totally fine. I would actually make it much simpler. I would just roll the strikes. Again, I mean, Upstart, I can't tell, what your strikes are on the strategy. But, hold on. Maybe can we figure this out? Yeah, okay. So you're probably tested on the call side, right? Because the stock has been up so much in the last couple of weeks. And so I would be rolling your put up. Right, you could roll your put up. That would neutralize your delta. You could roll your put up and roll your call up while also rolling it out. Maybe you could do that for like a net credit. If you want to kind of recenter the whole thing, that's also perfectly fine. You said it has earnings coming up, I think. Let me look at this. Okay, so it also has earnings on 8/5. Yeah, okay. Same rules apply here for you, Harsha, as was the case with that was Brandon, right? Yeah. If you're really underwater on this trade, I don't love the idea of you carrying it through earnings. If you want to go for it, then go for it. It's obviously your call at the end of the day. But again, I feel like you're just inviting the opportunity for disaster more so than you do with like a regular trade in a regular situation. So I would not do that. But as far as neutralizing delta, I would just roll the strikes that you have in the strategy. I wouldn't necessarily start weaving in other strategies because I don't think it's necessary. You could of course achieve the same objective, but I don't know that it's necessarily needed. So hopefully that helps a little bit. Gregor V. Dubs in the house. Dr. J, my Tesla put spread is right at the money because I guessed the wrong direction, so I rolled it to next Friday for a big fat credit. There you go. Modified the tasty mechanics? Not necessarily. Talk to you next Friday when it's a big winner. There you go, man. It's all about confidence, and it's all about hope. Like they say, hope is not a strategy, man. Hope is your best strategy. Hope should be your go-to number one strategy. And so I love it, man. I absolutely love it. And no, you didn't modify anything when it comes to the mechanics. I mean, what you said was right at the money, which that's usually the case. When you have a vertical spread on, that's right around at the money, which the phrase we like to use on the network is it's on the dance floor. That's when you're typically able to roll for a credit if you want to. So it's not really giving you a P&L. It's not really giving you anything economically significant, as I would say. And so because of that, rolling for a credit makes a ton of sense. So I like the trade. I like what you did. I think that's a good job. And so Mark says, TMC breakout above 8. Here we go, man. We're breaking out on some penny stocks. Man, let's go. Let's go. TMC. $8 stock. Man, look at this. And look at this chart. Man, that thing is like, that looks like a crypto chart. Man, look at that thing. That's some good stuff. But Mark says, what's up, chat? What's going on there, Mark? I appreciate you, my friend. And then Christian says, whose account is that? Yeah, I don't know whose that was. That may be John's account. John may be scalping some natty gas. And then, okay, here's where you guys, are you sharing the right screen? Which that helped, by the way, because I'll glance over, and if I see something like weird happening in the chat, it helps me notice that in the moment, so we were able to kind of make that change. And so thank you guys so much. Let's see. Scramble Everything said basically we are on audio only show today. No, thankfully we salvaged it. So a big shout out to John and the team and everybody back there, James and Paul. I mean, you guys really, I appreciate you guys so much. Sam, T-Port says low IVR, a good time for in the money long leaps for poor man's covered calls. Yeah. I mean, I think so. I mean, low implied volatility is a good time for, this is actually an interesting question because poor man's covered calls, regular covered calls, poor man's covered puts, regular covered puts. You can make the case that they're actually well suited for high volatility, just like a lot of the other things that we do are suited for high volatility, because the centerpiece of the strategy is not necessarily the long shares or the long option. It's actually the short premium portion, in my opinion. And the short premium portion is going to flourish and it's going to prosper more so when volatility is higher. All of that is true. I have no problem with that. The issue that I have actually is when I start thinking about when volatility is high, when volatility is elevated, there's so many things to do. There's so many things to do. Strangles, puts, ratio spreads, jade lizards, even vertical spreads, whatever, that I'm not really looking to do a covered call or even a poor man's covered call. To me, that's a low volatility strategy. To me, that's going to be the thing I tap when volatility is low, when the VIX is 14, whatever. So I would go, so yes, T-Port, I think low volatility, your leaps, your poor man's covered calls, your poor man's covered puts, that would be the time to do it. And then Sam L says, Doc versus technology, an eternal struggle. That is correct. But again, today we got saved because of the team right there at the Chicago HQ, and they did it, man. They rescued the whole thing. And so thankfully it wasn't the audio only version of the show. And so let's see. Mark says, Emmett, what's up, sir? Oh, here we go. The euro trade goes above 118 to holding again. If we hit 117.99, I'm short futures again, but long for now, sir. Good stuff. Got Mark and Emmett. I like it. Ash in the house, back in the house. Bert Earp in the house. Man, that's some good stuff. And then we've got, let's see. Scramble Everything likes the Dave Ramsey reference. And so there you go. I appreciate you very much, my friend. And so I appreciate you so much. Mark says, I don't think Dave Ramsey is down with trading options. No, he's probably not. But that's kind of like, what's so funny about that? So it's kind of like, what am I thinking about? It's kind of like, I think we lost the platform there, but that's okay. That's fine. Oh, there it is. It's back. It's kind of like, Warren Buffett. That's what I was going with. It's kind of like Warren Buffett. So with Warren Buffett, right? Like he's just buy and hold guy. It's Buffett indicators. It's whatever. It's this and that. If you actually look at a 10K of Berkshire Hathaway, you will see a line item that says, I can't remember how they actually label it, but he's selling premium. Like he's selling options. Like he's selling options against his long stock. Like, and I don't know, they may be just short premium positions from the beginning, like short puts or whatever. But it's so funny to me. It's so funny to me that homeboys out there talking about, if you don't understand this business, if you can't explain it to somebody in 30 seconds, like don't invest in it, only buy things it's like, yeah, okay, buddy. We know behind the scenes you're slinging some strangles. Like we know behind the scenes, like you're watching Tasty, you're waiting for IVR, and boom, you're selling that 35 delta put. Ramsey might be doing the same thing, man. He might be watching this show right now. I love what Dave Ramsey's doing. I think that what he's been able to do for people is really, really good. I obviously don't agree with a lot of what he says, like strategically, but it doesn't matter. It doesn't matter at all. That's what makes a market, as they say. And so anyway, I digress. Let's see, where am I at? Brian Dowdy outs this hurts to see Dr. J with those stacks of cash lit on fire successfully. Hey man, it's more of the same. It's just par for the course. But don't worry, we are going to start reversing our own thoughts and feelings here pretty soon when we pull the George Costanza strategy. Emmett says IBM made a lot of people's pockets a little lighter this morning. Yeah, probably so. That's probably true. Let's see. T-Port, Dave Ramsey, pay cash for college. Yeah, that's going to be a tough draw for a lot of people. But thankfully, college is going away, so it won't be a problem one way or another. Let's see. Brian, I didn't play IBM. Dave Ramsey, go to trade school. I think you're talking about Mike Rowe now at that point, which he's also very solid. And I mean, his strategy, his idea of like trades and like AI is not going to replace a plumber or whatever. I think he's 100% right. I think he's 100% right when it comes to that. And apparently there's a huge shortage of that. Now, obviously, and you may have gathered this by just looking at me or listening to me, I'm not exactly, much of a tradesman, some might say. And so maybe I'm speaking out of turn here, but I think he's right. I think he's, in terms of the future, it's like, man, I don't know how. I think we got some time before the robots start coming to fix your AC unit. I think we got at least 12 months. And so let's see. Joe says, hey, Dr. Jim, I'm feeling the pain with you today. Well, it's good to know I'm not alone, my friend. Thank you for being here. And thanks for just being a part of what we do. And so I appreciate you very much. And so let's see. Scramble says, IBM Strangle was hurting. Rolled down the calls this morning. There you go. Now flat, going to the close for a green scratch if possible. That would be awesome, man. That would be really, really awesome. Mark says, he's talking about the Euro stuff with Emmett trading the higher range. And then Mark says, Dr. Jim started it and we degens run with it. What did I start? Did I start something? Man, I hope it was worthwhile, whatever I got going. And so Brian says, why are we talking about Dave Ramsey here? This is about education on trading. That's a fair point, Brian. But hey, man, I know that you're part of the core position now. Like, you're part of the core position, and nothing's off limits. Nothing is off limits. Not on the network, not on my show, not for my tangents. Like, so that's just kind of what you sign up for, man. Like I always said, you got to know what you're signing up for, and that's what you get. And so let's see. Sparky Dog says, let me park CMG next to our friend BBY. Yes. And you know what's cool about that, Sparky Dog? Thank you, Paul and the team, for getting the portfolio back up. You can see that BBY and CMG, they're right next to each other in the portfolio. So they have cozied up. They are now BFFs. They are now best buds. And so, they're just going to be together for a while now, I think. They're in the portfolio. And so let's see. Scramble everything. Says Dave Ramsey popped into the chat. That'd be hilarious. Oh, that'd be so funny. Soul Train says Ramsey versus Saz. Saz in the second round. Yeah, it would depend on what the topic is, of course, right? Like if it is strangles, I think Tom will probably just edge him out slightly. It'll probably go the full 12 rounds, but I would say Tom will win that on points. But if they start talking about like debt reduction and like personal finance stuff, Tom's gonna get embarrassed. Are you kidding me? He's gonna get embarrassed. He hasn't traversed amongst the peasants. It's been decades. He doesn't know what it's like to live as a real person. And so no, that would be, I would pay money to see that, actually. That would be great. And so let's see where I'm almost out of time. Man, I see you guys though. Brian's in the house. Scramble everything says he heard about the B- humor and thought he could do better. Yeah, he probably can. It's a pretty low hurdle, but man, speaking of low hurdles, we're done. We're done with the show. We made it. I can't believe that we made it. Right? We survived, stacks of cash getting lit on fire. We survived, other people's trading accounts on the show, and we made it through, man. I appreciate you guys. I appreciate you guys so much. If I missed you today, please come back tomorrow and drop something in the chat early, because it increases the likelihood that I get to that question, as you have seen on today's very show. But guys, if I can ever help you in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11.
It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody. Happy Thursday tonight, and we're going to look at some charts together. It's a good day. I was just glancing at the screen over here. Even though the NQ is up 100 points, every single one of my shorts is in the red, which is cool. That's how I like it. So defy gravity here, folks. A lot of earnings last night, a lot of action from that. Tonight, kind of boring, just Intel. Kind of has been washed up from 1999. That's about all we've got. But next week, we've got a lot of stuff there as well. I've got a fair number of charts to show, so let's jump in. We begin with a spider, which, goodness gracious, a lifetime high. How about that? Who'd ever thought? It just keeps tromping higher day after day after day after day after day. And yeah, yet another green bar. One day this will end. It's very hard to know when, right? I mentioned the Indu yesterday by way of the Diamond ETF. I'd said, even though the Diamond was at a lifetime high, I wasn't sure about the Indu. And that was right. The Indu isn't quite at a lifetime high. It is very close. The peak was way back in December, on December 4. We got exceptionally close to that on the 31st of January. And we are as close as we've been since then today. But for the moment, it's just kind of a triple top until such time, should it happen, that we zip past that 45,073.63 level. So there it says, not quite lifetime high, but awfully close. And of aid to the bulls continues to be the most persistently supported sector, thanks to the government. Financials, XLF, the banks will never be allowed to fail. Here's XLF at a lifetime high on both an intraday and almost certainly a closing basis. So the banks are doing just fine, and which is why we're $37 trillion in debt. So congratulations. China, I've decided to short. This trend line is just too tempting. It's not a huge position, and it's a pretty liberal stop loss. This line right here, I think about 40 is a fat enough range to not get zapped out prematurely. But not only is it the basis for this top here, but it also just happens to align nicely with the intersection of that trend line. And this trend line I keep referring to basically extends for the entire history of the financial instrument FXI, and we're getting very close to it now. So shorted FXI today with a stop at around 40. Small caps are down more than 1%, which I appreciate. We have pushed yesterday to the highest recovery level since the plunge took place. We are well below lifetime highs. In this instance, the lifetime high was around 243. We're trading around 224 now. So that's something like 10%, something close to that. And so sticking with that short, and it's exhibiting some very, very richly appreciated weakness today. As far as those earnings last night, a lot of dynamism. In some cases, it would explode higher than collapse or vice versa. A lot of fake outs going on. Let's thumb through the four big ones. ServiceNow, which is NOW, has been persistently strong. It had a report that people cheered. It opened strong. It's still up, although it has been selling off all day. The peak today was over $1,000, up at 1050. We're in the triple digits again. It sunk from 1050 to 991. So a good day, a green day, but not what they were really hoping for because it was much stronger early on. Alphabet, GOOGL, This one also opened quite strong. It is not at lifetime highs. It did not even manage to seal its price gap from the day after its lifetime high, and it's been selling off all day as well. So, the NASDAQ's still up, as I said, triple digits right now, but Google is not helping as much as it had earlier. Tesla is down hard. After the report and after the earnings call, it was very robust, very stable. It was down maybe $1, maybe $1.50. I guess it started to sink in and people have been dumping it. So we're down about 8%, around $26. Our old friend, the Fibonacci, though, is still doing his job. I'm referring to these two lines right here. And you can see that, just imagine this being kind of the goal, those lines. So it's just wild movements here, wild, and from wild to mild. It gets milder and milder and milder, and then it's kind of found a happy equilibrium at our old friend, the Fibs, which act like a magnet for this thing. So we're going to be hanging out around $300 or so after that dump. And then one last one, which I've been pretty persistently bearish upon, although it's not a great pattern, was IBM. And IBM had a lifetime high back not too long ago, about a month ago or to the day, and it fell hard today. At one point today, it was trading the same level it traded in January. So half a year of progress undone. And my only bearishness on this was related to the fact that I have kind of an analog going here. Had a nice bullish base, long rally, and then it fell to pieces. And there's another big bullish base, long rally, and it seems to me that the falling to pieces part has begun. But these things can take months to unwind. I think the big quick move is today. If, we're one short, I think now would be not a bad time to cover. Although I would have said the same thing about CNC, and that just is falling day after day after day after day. So some stocks are just kind of fated to crumble for a long time. But this was a sudden drop, and I imagine it will try to recover in the weeks ahead. Over in quantum land, always interesting. QBTS, which is sort of my favorite, is down just a little. It's off about 1%. But its compadre is not doing so well. Quantum computing QUBT is down about twice that much, 2.09%. And I noticed, interestingly, hadn't really seen this before on Rigetti computing. It also has a nice price gap like so, 17.55 right there. There's the gap. And we seal it almost to the penny a couple of days back. And now we're sort of stuck under that zone. But with, on the heels of Texas Instruments yesterday, that big tumble, NVIDIA still doesn't care. NVIDIA continues to push higher, almost certainly another lifetime high close. And yeah, there it is up there. So pushing to levels never seen before and well above $4 trillion. In contrast to this, on semiconductor, which did feel the heat from TXN yesterday, is falling more. This is down 7.31%. And I've mentioned this a bunch of times because of this pretty well-formed top. It's not squeaky clean. I give it about a B- or so, but it's finally doing its job. XME, the metals miner, finally falling after notching up lifetime highs recently. The peak was yesterday, and it slipped some today, so we've undone yesterday. We're pushing into Tuesday's action here, and this doesn't get interesting until and unless we crack below this blue line. I went ahead and shorted this earlier today, and we'll see. This has been a very sharp ascent. I mean, we're looking at decades of data here, and you can see this is just like a virtually vertical push higher. And I won't show it again because I've shown it so many times, but the XME GDX ratio chart strongly suggests if there was a pairs trade, be bearish on XME and bullish on GDX, the pure precious metals miners. As far as some short positions here and there, just kind of a mishmash to thumb through, some interesting things going on. BP, British Petroleum, you've seen this before. We've got a whole series of reversal patterns here. This one seems to be still in play. I've got to stop, as usual, at that dashed red line. Carnival, CCL, another dashed red line right there. We got very close to this recovery peak, and we're weakening away from that a little bit. 31.52, so short CCL. Core Weave, I've mentioned this cute little round at the top here. This is a very young chart, hasn't been around but for, a couple of months or so. It doesn't look very dramatic, but it's already lost a third of its value, and this is not a happy looking chart. This looks very prone to future weakness. Carvana, CVNA, turning south. I appreciate that too. Tighten up the stop like so, and we're down today, lowest we've been in a couple of weeks, so we've lost almost 4% on Carvana. RH, better known as Restoration Hardware, this is down almost 4%. And I probably, if this keeps slipping, I'll probably want to tighten that stop up. That's a really loose stop, but that's moving the right way. Dick's Sporting Goods, DKS, down about 2%. Here we also have an incomplete topping pattern, but I'm using this dashed red line here as a stop loss. FMC, which I think is a defense manufacturer, and we've got an enormous top on this one, and we're turning away from this dashed red line here, which is my stop on that one. A couple more. Hims and Hers Help, HIMS. This one rallied mightily yesterday, and the stop on this one, I would say, is this gap at 61.52. Tiny position on this because this is a very volatile creature. So this is, by far my smallest position, but just kind of for fun. And then one other one, not very heavily traded, but I really like this reversal pattern. JB Hunt Transport Services, JBHT. There's the top right there. And I've tightened up the stop on this one a little bit to 154.72. Ooh, this is weird. I've got like 2 minutes left and only a couple of symbols. Geez, maybe I should tell you like a little bit about my childhood or something. Usually it's just a mad rush. Anyway, a couple of more charts to glance at. Here are the cubes. Now, since we have the luxury of time, I'll just say a few things. The cubes, which back in the day was QQQQ, but now it's triple Q. These were introduced back in the final year of the internet bubble. And so these peaked here, and the internet bubble itself, the top is illustrated here, which was followed by a collapse. Now, considering the everything bubble we've had, this is just like, a wart on a mouse. It's like nothing. But this was, at the time, calamitous. And I remember, there were books printed about, I forget the exact figure, it was like $3 trillion bear market, which these days, like one stock is worth more than $3 trillion. So, but they were talking about the entire loss from all stocks everywhere. But that was the bear market, and we had a bullish base established here back in 2002. And it was a pretty good rally from that. Then the real bullish base was established after the housing bubble right here, and it's been up ever since. I mean, this was transformative. We are at another lifetime high today on this, and just up it goes above the trend line, and there's nothing bearish about this chart, except that it's really, 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 really high. There's no pattern, there's no reversal, there's no trend line break, there's no nothing. There's nothing bearish about this chart. It's just extremely expensive. Intel, I don't think, will be neither here nor there with respect to affecting anything. This was the NVIDIA of its day. That ended back in 2000, and since then, it's just kind of slogged along. And more recently, for the past year solid, it has been basically a $23 stock plus or minus a couple of bucks. It is boring. And I suspect it'll be so after hours too, but that's the only big one this afternoon. Now it's the bottom of the hour. So I shall say farewell. We'll wrap up the week tomorrow. Thanks, and good luck. Bye-bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights. and some life-taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's going to take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
I hope they don't subscribe to cherry bombs. Oh, no.
You better scrub your phone, honey.
Oh, no.
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships, because life gets in the way.
Guys, with women it does.
Well,
it takes work.
Men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's...
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit?
You would not know.
So I said, I have to see what this is like. And it is a boat-worthy apparel, so I'll ship it down to Florida. But I just wanted to be like my man Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend. We've got E-mini S&P 500 futures not really moving all that much. They're up 15 handles right now. They've had very, very tight intraday range here, about, we'll call it 30 points, a little less than that, 26-ish points of an intraday range. NASDAQ up 104. You got the Dow down 250 and the Russell down 25. The Russell, the weakest of the group after being the strongest of the group yesterday. Oil catching a little bit of a bid, /CL 66.21, up 96 cents. Volatility futures have remained steady right here at 18 or just under 18. The VIX itself at 15.18. Bonds down 7 ticks. You got gold down 22, silver down 13 cents. Bitcoin having a little bit of a rally in the second half of the day. It was down to start the session. We're at 119 and change on the spot. The futures at 120. It's been, as some would say, the dispersion trade.
The old dispersion trade. Yeah, I mean, it's a sad market out there.
Yes.
However, unfortunately, looks like we're in for some of the same tomorrow. Only a 24-point expected move through tomorrow.
That's what happens when VIX gets to 16 or below.
Oh, no. We've got a single-digit 4 and 5 day E-mini reading, 8.8%, 9.7% in IV. I haven't seen that in a little bit, but that's what you get with a negative IV rank.
Yes, VIX 1 day. I've had some people point this out to me. Below 10, a very low mark here on the VIX 1 day. You do see it typically increase into the close just because of how it's calculated. It looks at 0 and 1 day options. So you do tend to see a little bit of a move higher into the close. That is not atypical. But yeah, it's been a little bit of a grind fest today. Some of the movers after the close yesterday, you had earnings in Google. It's currently up $2. It sold off from the high. It got up to 197 and change. IBM has been down 20 to 25 pretty much all session. You had Love, which had earnings this morning, $4 and change. There's another one that I'm forgetting. Tesla. How could I forget Tesla? Got down to 300-ish. It's up about $5 from the lows. 341 cents was the session low. So a little bit of a move there. Some of the bigger movers in the market as a whole, if you look to the upside, as I said, kind of the dispersion trade of some of these lesser names. T-Mobile had earnings. I think a couple of these other ones were earnings moves as well. LVS, I think, had earnings too. Not the sexiest names on the upside here. On the downside, you got a lot of earnings stocks as well. IBM in there, Love, Tesla, but definitely a mixed bag. It seems like it's a 50-50 split with the market just grinding higher, no vol, no nothing.
Yeah. Someone in the YouTube chat, Edward, saying, guess a negative reading in IV means the current observation is not included. It actually is. It's telling you that the current reading of IV is lower than the last year. Any print in the last year.
Yes.
So a 30-day aggregate, let's call it 15% in SPY, that is lower than the previous low that we had over the last year.
Yes, and all those numbers. So if tomorrow's volatility is at or slightly higher than what it is now, and when they are looking at the IV index, which is a VIX style volatility for each individual equity, if tomorrow's volatility is slightly higher, it'll be a slightly positive number. You might have an IV rank of a 1 or 2 or something. That's how you'd go from a negative 10, or like IBIT has negative 38 IV rank. If volatility is at or slightly higher tomorrow, it'll be a 1 or a 2, something like that. If volatility is lower, it might be, a negative 1, a negative 2. It's not going to stay at negative 38. So it adjusts to basically whatever the high and low range of volatility is. Good call out there.
And on the flip side, if you see an IV rank over 100, it's telling you the same thing. It's telling you that the current reading is higher than the previous readings for the last year.
Yes.
But these days, you're probably not going to see that.
No.
Until something happens.
It doesn't. The market's telling you nothing's happening.
No, it's sad. Very sad.
Earnings tomorrow, I could really only find one interesting name. It's Intel. They saw as a favorite. I think there was one other too. NEM is in there. Newmont Mining. So I actually do have a Newmont Mining position on in my Johnny Trader account. I'm just short the calls at this point, but they're in the August monthly expiration, I think around the 62.5 strike. Newmont Mining, 21 IV rank. Intel at about an 18 here. Intel trading at 22.72. It's chopped around here. Do you have any interest in either of those names?
Not really. I mean, Intel is near the lows. I fear for Intel. I feel like in my mind, Intel is like the same as IBM, where it's just kind of the fringe tech. But
IBM
It was.
That was a double until it
wasn't.
Spanked after the close yesterday. Yeah.
But yeah, someone in the YouTube chat asking about AN for earnings.
AN.
AutoNation. It's we don't really trade these stocks with no weekly expirations. For earnings, I think it's tougher for short premium stuff because you don't have the weekly that you can sell premium in, like for a diagonal spread or something like that. But
look at these markets. You got,
yeah. Without even opening the options chains, I can tell you that these markets are not liquid because there's no weekly options.
You got no weekly options. You got volume in single digits, open interest, a handful of contracts. These bid-ask spreads, you could drive a truck through. They're $2-3 wide at some of these strikes.
Even the stock is $1 wide. That's.
Oh yeah, there you go. Well, 340,000 shares traded on an earnings day.
Yeah.
That tells you all you need to know about it. Unfortunately, not one of the more liquid names. Speaking of liquid names, please send us liquid names to trade with trade ideas. You can bring fun trade ideas because we'll be hosting the show tomorrow.
Please make them fun.
Please make them fun, and we'll
Spicy.
we'll actually do them, because we're a little more fun, as John said today.
Yeah, good job.
tastylive.com/fastmarket.
Yes, it's pinned in the YouTube chat as well if you're there.
Pinned in the YouTube chat. Send us your trade ideas. Mikey and I will be looking those over, trying to get a bunch of those on, if not all of them, for Fast Market tomorrow. One of my favorite segments of the week.
I mean, the peeps have done well. I feel like a lot of times where we do the trades from Fast Market that we like,
instant.
They're pretty good.
Yeah.
Like we've had a pretty strong win rate with those.
Yes.
So keep them coming, please.
Yes.
And yes, if you're wondering why we're hosting the show tomorrow, it's because Tom and Tony are gallivanting around Denver, specifically at the summit.
Yes.
So you can still sign up. Doors at 8, show starts at 9, and you'll be back by work by 11. Or you can just skip work, go to the bar, grab a brew. That's what.
Or have one at. What do they? They're serving alcohol at their event, I think. Maybe or no? It's kind of early.
9 a.m.
It's 9 a.m. So maybe not. You could do a mimosa or some Bloody Mary. What if you had a Bloody Mary bar? That could get dangerous. Get the crispy candied bacon in there, some pickles, some olives.
That could be something.
Next year, we'll put that.
Next year, yeah. But yeah, sign up if you haven't. If you want to go.
Yes, and we'll be in Seattle, August
10th. That's right.
For the whiteboard tour.
Indeed.
It's not the Nicki Bat tour. It's the whiteboard tour.
Next year we'll get you the Nicki Bat tour.
The Bat Cave.
Yeah, we'll find Bat Cave venues.
We'll find the deep dark somebody's mama's basement or something.
Dungeness venues.
Yeah, we'll just sling diagonal spreads and YOLO calls. Just go nuts.
Yeah,
it'll be fun.
But yes, the Crocodile in Seattle. It will be a blast. Sunday, August 10th. We'll see you there.
Yes.
Yeah, it'll be myself, Katie, and Nick. Join us for a grand old time. tastylive.com/events, totally free. And yeah, that's that.
Very nice. E-mini is only up 9 right now. I think this is the biggest move we've seen all session. NASDAQ up 91. They've been very, very muted today. Kind of a surprise with where volatility is. And, it shouldn't be a surprise given where volatility is at 18 here on the VIX futures. The VIX itself, 1527. And telling you a big old nothing burger. 6,400. I mean, we got a pin there for another day, right?
I think so. It would make sense. Yeah, 6,400. The narrative is in.
Yeah.
6,400 pin.
11% implied volatility into tomorrow. 24 points. And that's even less than what we did today. Unbelievable. All right, so nothing in Intel. I think we've both kind of waved that off. I was looking at August, maybe selling, the 22 puts or something like that, but I don't see the upside here.
Yeah. And it's tough. I mean, if you sell the put for $1, you're gonna make 50 cents and you have, let's call it $500 of risk if it goes down. $3, $4, $5.
This is a Tom trade. Tom would have gone right at these 21.5s, sell them for 35 cents.
Yeah.
In the one day.
However, if you're keeping it defined risk, these options are really cheap. Like if you're just doing a tiny diagonal spread.
You want to be long or short stock, you just buy an in the money call, in the money put.
Sure. But yeah,
cheapy.
Diagonal, $2 wide diagonal spread is $1.70.
Yes.
And you can make $100 on that. So he did the 22.
Oh, there is the chat outed him. He did the 22 in the one day. Oh, okay. A little more risk. I like that. 50 cents.
Okay.
See, I thought he'd be right at this 21.5, 30 some odd cents. Oof.
Yeah, he did the 22 in the one day and the 22 in the August.
Oh, laddered puts. Look at that.
Wow. Calendarized short laddered puts.
There we go.
Love to see it.
Some other big movers on the day. NVIDIA up $2 and change here. You had Google earnings come out last night. had a little bit of talk of expanding the CapEx for Google. You would expect that to be into more chips. And so you see a little bit of a bid in some of these stocks, AVGO as well. It was up $5 or $6 more yesterday after the close. So not as at the higher end, but the SMH, which is the semiconductor ETF, has been nothing but parabolic there. Some other movers, Amazon is one that kind of caught my eye today, busting out towards highs. It was up $4 or $5 at one point today. It's only up 3 and change now. Earnings in the middle of next week. Are you thinking more of the same, like in Google, of an inside up?
Yeah.
Tesla's kind of the outlier of the Mag 7 group in terms of risk.
Yeah. The others are, super mega tech, and a lot of them are off of highs. Like Amazon has recovered nicely from the lows, but it's still 10 points off the highs recently. But yeah, I feel like that's going to be the story. I think you'll see some bigger moves. You might see some bigger moves to the downside with some risk that was being pushed out to this quarter because last quarter was a mulligan quarter where everyone could just be like, I can't tell you anything because of tariffs. Like literally that's what almost every company was saying. But now the tariffs are there. The landscape is more clear. But yeah, I'm definitely going to place a bullish Apple trade.
Apple is a pig as well.
Yeah, like if you have a product like this that's well off of highs, especially if you think you'll see a rotation into something like Apple.
Dispersion, Mikey. Come on, that's the FinTwit word of the week. Dispersion.
But yeah, that'll be my favorite trade if it works out, because it just feels good when look at a stock like Apple, you're like, okay, I'm just gonna get long this, and then if it goes up, feel like a genius.
Think happy thoughts.
Yeah. Taif Tozi waiting for AMD short puts and Nvidia short puts. Looking to pull the trigger tomorrow or Monday. Yeah, it's tough to. You had your moment a couple days ago when it was at 150.
Mm-hmm.
But yeah, these are just ripping higher. Nvidia yesterday, 2 days ago, same story. That was the day. Generational buying opportunity at 165.
I was thinking of doing something in NEM, but it's just like even going out to September maybe. But these markets aren't great. I don't love it. E-mini's up 10. You got the NASDAQ up 91. You think we get any movement tomorrow? You think they're going to give us a 24-point range tomorrow? Is that the best we can look forward to?
Let's pump that up.
Because we have the Sazonov plane trade coming.
Give us a 50-pointer.
Yeah.
60, 70-pointer.
Aren't we due for a little, I think I saw some stat. It's 6 straight weeks of up closes. I think we can actually pull that up. Let's see.
Someone in the YouTube chat actually was talking about how we're at all-time highs. 20% of traders will blow up their accounts. What do you think of this? Well, it depends on what you're doing.
What does that mean? At highs they do?
Let's say you're making money, you're loading up on leverage, you're like, this is easy, everything's gonna keep going up, and then it doesn't, and then boom. But yeah, I mean we're kind of doing the opposite. We were loading up into the run we've had. We were surprised at how quickly the run happened, but now I've been just removing risk and kind of somewhat hedging, more neutral. I did place a downside trade in SPY, but my capital at risk right now is extremely low.
But that's exactly what you should be doing.
Yeah.
As markets go up, you take profits on long delta. You have volatility contracting, so there's less opportunities. Stuff that you sold is decaying quicker. You're taking all that's trading. I did forget to mention CMG. One of the bigger movers of the session. It was certainly not a inside move for CMG. It's down $7 and change right now. They really gotten killed since the split. The split kind of just dulled everything. So the stock was trading like around 52-ish. So a way that you can see the expected move is to just look at the 52 straddle yesterday. So I'm just adding $7 onto the current stock price, puts it at 52 and change. We can even use the 53. It doesn't really matter. We can use the 53 here. So this 53 put was trading at like, let's call it $2.50 ish. And this call was trading at, about $2, we'll call it, just because these spreads were probably wide. So it's about a $4.50 expected move. It's moved twice that into today. So very, very big move in CMG. I went out to September. I sold the 45 strike put. I don't know. You can't fade the burritos. Extra guac.
It's here to stay.
Yeah, I don't think
it's a staple in society.
Yes.
But yeah, I mean, big move to the downside. 7 points, 13%. It looks like they cut same store sales forecasts. But I mean, we saw that with IBM too. They missed revenue. Their forecasts were weak. Is this a slowdown people were calling for?
They lost the CEO to Starbucks, which is moving higher. That was your trade today. Getting long a little Starbucks.
Yeah, you can't.
Honor of Jim Schultz.
It's just another stock that's well off its highs. Where if you can weather the storm, I think there's some play there. But yeah, small little pre-earnings trade. The 195 call diagonal. So I bought the 95 in September, sold the 100 for next week. Earnings are in 5 days. So playing for a little pre-earnings reversal of this move today.
Yes. E-mini's still down, only up 10. Next week you have a couple earnings, or I should say a lot of earnings. UNH, Boeing are on Tuesday before the market opens. You got UPS in there, Spotify. We're getting to the bulk of earnings season next week. Visa, Starbucks, Booking. Those are a couple of the names on Tuesday after the close. On Wednesday, before the open, you have MO in there. I know some people trade Generac. You got Etsy in there. Interesting. High vol there. Meta, Microsoft, Robinhood, Carvana, LRCX. You got Qualcomm. You have ARM. All of those are on Wednesday after the close. Thursday, you got even more too. So before the market opens, you've got like Roblox, which I've been short for quite some time. I would like to see that one have an IBM move. CCJ, if you're into the uranium stocks, you got Norwegian Cruise Lines, MasterCard. And then after the close on Thursday, you've got a whole bunch of names as well. I think you've got Amazon in there, right? Apple, Amazon, MicroStrategy, Coinbase, Reddit, Net, play Cloudflare. You have Roku in there. You got some big names coming next week as well.
Indeed.
Yes.
Yeah, I think next week will definitely be
Is that when we get the volatility spike?
Probably.
Next week.
I think one of the big name stocks will have a big red day.
Which one?
Not Apple.
Not Apple. So you're playing an Apple up. I agree with that.
Is it Thunder?
I don't know. It could be like the ceiling falling or something.
Could be.
So Apple up. Microsoft, what's your feel there? Microsoft, I think, is early August.
Yeah.
No, and Microsoft's
at end of July, yeah. But yeah, Microsoft's one of those where you have to take the y-axis and stretch it. Because that thing's going to 600.
This is how you make yourself comfortable getting long something, is you just kind of drag the y-axis here.
There you go.
And then you make the,
now it's flat.
So now it looks like we haven't gone anywhere. Like it's been a nothing move,
It's one of my favorite exercises. When I'm bullish, but I don't like the way the chart looks.
Yeah, you're like,
I move the chart.
Let me change this a little bit.
Yeah.
Yeah. Quick little trick for the peeps out there looking to sleep better at night on their YOLO trades. Speaking of YOLO trades, a lot of those came back to earth today. Open door up 12 cents here. It's had some two-sided action, but when you look at the high option volume list, which is under the liquidity here, you go to high option volume. A lot of the ones on the downside here, Clover, SBET, Oscar, Webull, you got Rocket Lab in there, you got, Wendy's. I saw some people did this one, Replimune Group. I mean, they've kind of come full circle here, except for Kohl's. up $1 and change. And then the uranium stocks, Oklo, has been one of the fast movers of the day.
Yeah. Oklo, SMR.
Yes.
Mooning.
We got some peeps that like trading those things.
Yeah, I think it's, it makes a lot of sense in terms of where is this energy going to come from that's going to keep this AI train going.
So those stocks,
small-scale nuclear reactors, renewable, sustainable, cheap.
Those stocks have gone nuts too. I know a Nancy favorite, VST, has been going nuts to the upside. GEV, which is GE Vernova, they had earnings the other day up $80 and change. So that part of the AI story is certainly moving as well.
Crazy.
Yes.
Crazy.
E-mini's up 9 here. Are we going to get to 6,400? I think we got to pin 6,400. How much time we got left? We got 3.5 minutes to get to 6,400. You think we close there? That would be up 4 on the session. You're not buying it.
I think we'll get there tomorrow. If we don't get our proposed 50, 60, 70 point sell-off, I think we'll pin 6,400.
Tomorrow close or above or below 6,400?
Below.
Below.
Anything.
Okay, so we get a little bit of weakness tomorrow.
Yeah.
Oh yeah, I'm with you.
It has to happen. At some point, it has to happen. Maybe it's tomorrow.
Yeah.
When nobody's expecting it, with a 20-point expected move, come on. It's insane. It's nutty. Only 80-point expected move for the rest of the week, next week.
So the Russell, the biggest mover of the day. The other big mover is the Dow. Just looking at some of the Dow stocks here, you can pull up this watch list as well. Is that Thunder?
That's absolutely Thunder.
Oh man,
Emmett's in Chinatown. We're about to get smashed with some rain.
Some of the bigger movers, the upside in the Dow, Amazon, CVX, and NVIDIA. You got Walmart in there, Microsoft as well. On the downside, you got a lot of the big names that had earnings after the close yesterday. IBM down 7% and change. You got UNH down about another 4 or 5%. Nike getting killed today. So certainly a little bit of weakness there. And this is price weighted. So those stocks that are at the top here have a bigger weighting relative to the lower price stocks. So that's why UNH has kind of weighed on the Dow for the last couple months, going from 700 to 300 in just a couple sessions here.
Yeah. Edward saying not doing anything till we have a down move. That's fair.
I hear you.
That's a nice.
It's hard to wait though.
Yeah, it's hard to wait. But if you can do it and have a nice conservative, patient view, and you've got some other things going on, maybe you're watching a little baseball, maybe you got something else.
Yeah.
But yeah,
touch some grass.
Go
not
outside.
While it's pouring out.
Yeah. Go watch the quarterback series on Netflix. Get prepared for football.
There you go. It is hard. It's hard to remember that the market will be open tomorrow and that there will be new opportunities at all times. You don't have to push them all in all the time. You don't have to be full bore every single time.
Sure.
As we get into the close here, you got E-minis up 9. They have not moved a point. NASDAQ up 80. You got the Dow down 283. The Russell actually selling off here into the close, down 30. I think this is actually the low tick of the session. It is the low tick. You got oil at 66.21. Hasn't gone anywhere. Volatility futures upticking to the high of the day. Everybody get your scared pants on. 18.15 here, up about 20 ticks. Bonds down 5 ticks. They've actually rallied from the lows. That's nice to see. I'm sure that helps Tom on the plane here. Gold down 23. You got silver down 18 cents. Bitcoin 118 and change. So we're playing for a little bit of downside tomorrow. That would help. Is it a one-day thing?
You're getting your move right here, 6,400.
6,400. There we go. As foretold, somebody's not here to put that out there, but yes, 6,400 on the dot.
8 seconds.
There's nothing like a sub-million contract day to lull you to sleep.
There it is.
We're
so close. 1 point away. We'll give it to you.
I think I was pretty close there, but
we'll give it to you.
No volume, no volume, no vol, no nothing. Dispersion trade, full effect. But that's it for us. You're gonna stick around for overtime. You'll be joining Chris and Dylan for that. So everybody stay tuned for that. But we're going to take a quick little 90-second break, come back and do this all in the morning tomorrow. We'll see you then. You're listening to Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We're back. This is Overtime. I'm your host, Chris Vecchio, here in New York. Dylan Radigan in Milan. Mike Butler in Chicago to round out this trading week. Mike, thanks for joining us. Ilya should be back next week, assuming New York lets him go. We're here for the rest of this hour. Markets close at 5 Eastern, 4 Central. If you are watching us on the platform, Tasty Trade, on the website, tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you're trading. Mike, I think you're on the chat today, so say hello to Mike Butler here during the show. It's a record high.
Hello, Mike Butler.
Hello, Dylan. How are you?
Hello, Mike Butler. Very well, very well. Nice to see you. Sorry, you were working there, Chris. I do apologize.
It's a record high close for the S&P 500, although not without a late day sell-off that kind of takes some cream off the top. The NASDAQ likewise closes higher, although not near where it was after the Google earnings yesterday. Tesla struggles on the backside of comments made by Musk during the earnings report. Bonds are able to recover after slightly dipping lower. Metals slightly weaker. We go to the dollar, which is firmer. ECB did not cut rates today, and they said they're on a meeting-to-meeting basis moving forward. So their cutting cycle appears to be finished. Outside of that, Intel earnings are now out here after hours, and they are as mixed can be. They beat technically on the revenue guidance. However, the earnings per share is negative. And we see the share prices are trading slightly higher here right now as we turn to the charts. Mike, I'm assuming you're the earnings play guy here. Great timing for that to go off. You're the earnings play guy here for Intel, I assume, because I'm not trading it. I don't think Dylan is either. You have any view on Intel as we make our way into the show?
I did not place a trade there. I placed a trade in Tesla, just an iron condor there. That's a scratch. Yesterday, I did IBM to the downside, and then Google to the upside. I sold it on the open before it sold off. So I literally did the best I could in those three situations. Tesla I still have on, but Intel, I didn't place any trades there. I think Nick sold a put, so if it stays right here, it'll be just fine. But these $20 stocks, they're low priced and there's not much to sell there in terms of premium. So I just stayed away from this one. But yeah, interesting to see it up on the mixed news. I would have assumed it might come down a bit if news wasn't great.
It's not the numbers that drove Tesla lower yesterday, guys. It was Musk commentary. Tesla stock was fine before the earnings call. It seems that Musk is warning, if you take him at his word, that he's warning that the next few quarters could be bad. Period of transition. Ultimately, maybe some of these tax credits going away could hurt the underlying business. Dylan, you, me, Westwater, Ilya, we've all been people who have said fade the noise in Tesla. But this feels like perhaps a different kind of noise now. Elon Musk not being as braggadocious as he usually is. Should we be buying the dip here in Tesla as folks like Dan Ives are saying we should?
100% yes. 100% yes. I mean, I don't know anybody who's ever gone wrong buying the Tesla dip. The obvious caution to my sort of brazen, confidence is that it obviously can go lower. So, whether you buy this dip or whether you wait to see if there's more of a dip in the offing. I mean, the question is, what's a dip, I guess. But in this particular instance, I think that Tesla is always a buy the dip name. And to your point, the dip was not a function of the numbers. It was a function of the guidance, effectively. I mean, listen, from a trading perspective, do you buy the dip? I have no idea. From an investment perspective, is it good to own Tesla? No question, yes. And so I think reflexively, anytime you get a Tesla sell-off, you want to be certainly taking a look. I mean, again, sell some put spreads with some room for error. You don't have to be right on the number there. You can give yourself at least one standard deviation to the downside, and get yourself some duration to sort of let this thing play out.
Mike, I think that's an excellent point. Dylan says go out to the one standard deviation move. The 57 days might be a little bit too rich, but going to 43, that puts you closer to the 26, 260, 270 short put spread if you want to go out to the one standard, getting closer to under 70% profit, giving this some room to run. Mr. Radigan, our low of 273.21 on June 5th. That Thursday, that's when Elon Musk is accusing Trump of a whole variety of things on Twitter or X. That seems to be a low that you could work around and place a trade around. You can get a pretty decent risk reward just under risking 2 to make 1 if you want to sell a put spread right now in Tesla.
Yeah.
Is that something you'd be interested in, Mr. Butler?
Yeah, I think it's totally in play, especially into a big move like this. But I totally agree with Dylan. I think you have to categorize some of these stocks. And Tesla is a Mag 7 stock with a lot of public interest, and a lot of people want it to go higher. So if you think about that for all these other stocks, like Apple's another one I was just talking to Nick about. Like Apple, I will 100% be buying into for earnings and beyond, just because it's like, okay, you have this massive company that has not participated in the rally. Would you be surprised to see a rotation out of maybe a Microsoft or NVIDIA into something like Apple? Absolutely not. I think it's totally in the cards. And to Dylan's point, like if you're investing, buying a couple shares here and there, I think it's a higher probability than 50%, in my opinion. But if you're trading it, you just got to be careful, keep your risk small. In Tesla, if you're going with a put spread instead of a short put, for example, if you are just protecting yourself from a continuation of this move. But yeah, I think it's when you're approaching a near low for the year, like we haven't gone really below 270-ish, like you said, for many months. If you can get down there, if you place your strike there now, you have yourself kind of a psychological floor there at the very least.
one of the items that I saw that came out about Tesla, which is really interesting too, they got rid of 75% of their Bitcoin holdings in mid-2022. So even though Tesla's crypto holdings on their balance sheet grew from 722 million to 1.24 billion a year ago, that's not because they were holding on the entire time. They actually jettisoned Bitcoin near the lows. So that's not, maybe that's something as well. Either way, though, the Tesla put spread looks interesting at 43 days. We can get this queued up for tomorrow morning. I think it's worth, well, we're not going to accept, it's after, okay. So we'll have to wait for tomorrow. Either way, though, doesn't really matter to me. Tesla, the robo-taxis, we can listen to the story Musk is spinning us. Where's FSD? Still not here. But at 305, given where we've seen lows carved out, I mean, I think 270 is a bit of a floor. 270 is the floor post-earnings last time. It's the June 5th swing low. It's something to work with. Let's go to the index level, though, here, Mike, because NASDAQ didn't have the kind of day that the S&P 500 did yesterday. Today, it feels like it was a little bit more catch-up after Google. We're just hovering below all-time highs. Our friend Dylan Radigan here has been egging me on to get back long the market, which after a brief 2-day reprieve as sitting on the sidelines in the NASDAQ, I did jump in yesterday afternoon. Am I right to be looking long here, or am I crazy with the NASDAQ at 6.4 negative IVR to try to chase this up for the final few seconds?
It looks scary to get long here, but all you have to do is drag that, click and drag the right axis, bring it down. There you go. Now you got plenty more room to run.
Oh, this market's been flat for a few weeks.
Oh, we need Mike.
Why didn't I think of that myself?
No problem. Thanks, Mike. There you go.
But no, to answer your question, I think it's hard to believe that the market will continue higher. I mean, but at the same time, if you look at the VIX, we're in the 15s again, and we've done plenty of research on this showing that when we get to these mid to low teens in the VIX, it tends to stay that way for quite some time. And if it's staying here in the 13, 14, 15 range in the VIX, I have to assume that the market, while it can still have choppy days and sell-off days, the general consensus in a low VIX market is up and to the right. So I think, again, you keep your risk small, you pick your spots. If you're trading options, if you're looking to get into shares, like maybe you're trying to buy Tesla, like today's obviously an 8% sell-off in Tesla. So I think you keep the risk small still, but yeah, I'm playing for up and to the right until something happens. But this is also a point in time where my options positions are very small, and I have a lot of cash on the side waiting for something to happen. So
what are you waiting for, Mike?
I don't know. I'm still playing it to the upside in a lot of these stocks, but I just layered on a downside diagonal in SPY, but that's defined risk. And I have a lot of other bullish positions that would offset that. But maybe it's next week's earnings. We have a ton of earnings in a lot of these big name stocks. Maybe one or two of them just completely fall out of bed and sell off aggressively, but we'll see.
Mike, this was the research that you were mentioning. I haven't actually updated this on my end, so technically this is through July 30th of last year. But you talk about like what's the optimal strategy in these markets. When the VIX is between 10 and 15, being long stocks produces a lower volatility of daily returns and a higher average daily return than being short a strangle. So if we talk about a market where volatility is low, volume's low, right? You kind of just set a trade on at the money calls, a little bit out of the money. You're long the futures. You're just long the index, right? And then you go fishing. It is that playbook. The only thing that really bothers me about that all happening is, and I do need to go to Twitter here. I can't help but feel like there are some signs of excess in this market today. Guys, an Ethereum rock sold for $300,000 today, 82.4 Ethereum. Now, yeah, that's probably money laundering or a wash trade or something. Okay, but we also have CTA positioning for U.S. equities in the 90th percentile right now. And if volatility follows its typical seasonal path, this is a 20-year average of the VIX, this is about the time of the year where volatility starts to trend up again for the next 3 months. So, Mike, when I say I feel I'm chasing this thing higher, Icarus flying into the sun, okay, 90th percentile positioning and VIX seasonality around the corner, it does make me nervous. It makes me nervous being long in this market.
That's fair. Totally fair.
Dylan, why should I ignore all those stats for nerds?
New tax, which is a new piece of legislation that massively enriches the wealthiest people in America to dump billions and trillions of dollars into assets and drive them higher at the same time as inflation rises, which only supports equity prices and the collapse of the U.S. dollar. I think that the primary risk of the Trump administration resides in the currency, and I believe that the primary benefit of the Trump administration resides in the stock market.
Well, S&P does continue a little bit higher here today. It's only by 0.11%. The Nasdaq's up by 0.34. Mike, the Russell was really weak today after it looked like it was about to break out yesterday. Do you have any good rational rhyme or reason why the Russell here is there a way to cover the divergence, right? Should Russell outperform the Nasdaq moving forward? Is that the trade or is that dead?
I'm not sure it's alive. I mean, if you look at the watch list, the Russell 1000 or just any of the Russells, you can look at the microcap, the mid cap, but you can see the net change on a handful of products are over 10% to the downside today. So it's being dragged down for sure. Likely Chipotle plays a role there. They had earnings and they're down 13%. But yeah, I mean, when you look at the NASDAQ, the shiny thing that everybody wants, the AI stocks, the traditional tech stocks, I mean, it's hard to, and I think that even creates even more pressure to the downside in something like the Russell, because it's like, well, why would I want to be in these other stocks when I can be in NVIDIA, Google, Microsoft, Apple? I think it's a harder sell to be in those products when you have this new revolution in AI kind of pulling the NASDAQ higher, pushing the NASDAQ higher.
Something to keep an eye on here. Donald Trump has arrived at the Federal Reserve to take a tour of the Marina Eccles building's renovations with Fed Chair Powell. And apparently they are bickering in front of the press right now. So one thing to keep in mind about these comments that are coming out here, the Federal Reserve is in a communications blackout window right now. Policy officials are not allowed to comment on monetary policy. So if Trump gets up there and starts saying that Powell needs to lower rates, Powell needs to cut rates, he's too late, Powell's probably just going to sit there and take it. You can't really argue about the state of the economy at this juncture. But it's an important visit, Dylan, because it's only the fourth time in history that a Fed chair has visited the Federal Reserve itself. FDR, Gerald Ford, George H.W. Bush, and now Donald Trump. Is this a unique event because it's the fourth time? Is this the paradigm shifting? Are we in a new world order now? Or should we ignore this?
New world order as it relates to what?
Federal Reserve independence is dying.
I mean, not yet, but I think that the agenda of the executive office is to take over the central bank, to take over the media. I like the idea of just letting Trump take over everything. Just let him use weaponized security to kill whoever he wants. Let him control the central bank, and let him control the media and just see where it goes. Like, why bother resisting at this point? I think it might resolve itself more quickly if we just let him control everything.
Are you sure you didn't watch that episode of South Park last night?
No.
Are you sure?
But I just say you just let him rip.
Mike, my low stakes conspiracy is that Trump's going to see last night's South Park episode and he is going to bring about all sorts of AI regulation to the space.
I mean,
that could kill the NASDAQ rally.
What was the poly market on whether he would mention it or not? What did it end up at? Strong number?
Does the chat know what we're referencing right now?
Maybe not. Maybe not.
There's a 0.0% chance that I'm ever going to watch the South Park episode. So if you just want to paraphrase it for our mutual benefit, I'm happy to sort of.
I like my job here, Dylan. I like my job here, Dylan Radigan.
Okay.
Let's just say it wasn't positive. It wasn't positive.
It wasn't positive as it relates to what?
As it relates to Trump. But
Thomas Westwater was asking me, he's like, oh yeah, I can't wait to watch this. I'm gonna watch it on the train ride home. And I said, Thomas, you should not watch this episode on the train ride home. you might get people might start asking questions on the train ride home.
They might send the armed security to run the interrogation on you.
He might not be allowed back on the train for a little while if he watches content like that. All right, so we have a chart here in notes and bonds where there's a little bit of recovery at the long end of the curve today. It's interesting action where instead of short end rates sticking or falling and long end rates going up, that's kind of the opposite of what occurs. Mike, I don't think that we are conceptualizing any chance of the Fed cutting next week. Do you have any strong feelings on the Federal Reserve meeting on Wednesday, July 30th?
I agree with you. I think there's a 0% chance that they cut rates. I've been saying, like, prove me wrong. Like, show me a cut. I don't think we're getting a cut this year. We're projected to get 50 basis points. There's a 42% chance that we get 50 basis points by December. But the probability of doing nothing has been just increasing every single time I look at this thing. Like, even in September, we were at a much higher probability to get a 25 basis point cut, and now we're at a 40% chance that we do nothing again. So I don't know. Show me a cut if we're going to get it, but I feel like they just continue to kick the cut down the road.
Is that a problem for stocks, Dylan, if the Fed doesn't give us a cut in July or September?
Yeah, I think it is. I mean, I think that the market is hoping, expecting, I think it's pricing and anticipating rate cuts in the fall. I think that the confidence of that expectation was meaningfully diminished by the June inflation numbers. The CPI and PPI were horrendous. And so I don't think they're as expected as they were before the PPI and the CPI came out. But I do believe that there are strong expectations for rate cuts in the fall. But I think more than that, I think there's expectations that whatever happens with tariffs will be relatively moderate. So, I mean, I think the biggest question right now, and I think that the stock market is still expressing extraordinary confidence. I mean, you saw the sort of extortion racket that Trump announced today, where he said no European luxury cars will come to America unless the American drug companies reduce their prices. Some sort of convoluted effort to pressure, I guess, European drug makers to raise their prices, I think was the solution there.
I think that's the solution. Yeah.
It's like either fuck the Europeans or cut American prices. Excuse my language, but it's some sort of mafia logic where it's like, at least we can destroy Europe even if we can't save ourselves. But I guess my point is that whatever comes out of the negotiating table in Washington, I'm always impressed by the stock market's relative confidence to hold its value, and basically the stock market's relative indifference to whatever Trump says. But I do think that underneath all of that is some expectation for a rate cut at some point in the near future.
I'm seeing a tweet here that Trump punched Powell, but that can't be true.
Not everything on the internet is true. A lot of it is, but not
is
everything.
Anything on the internet true, Mike Butler?
I think there's a handful of stuff that's true, but Twitter,
like a broken clock that's right twice, kind of thing.
Yeah. Oh man.
They look good in their hard. They look really good in their hard hats. Touring the building.
I can only imagine the tension between the two there. But yeah, I don't know. I feel like give us a rate cut if we're gonna get one.
Sorry, is Senator
How can I give you a rate cut when they've got tariff-driven inflation?
I don't think they can. I don't think they will. I think they'll just keep pushing it.
You don't think it'll happen this year at all? Do you think that that's a reason to sort of be less optimistic for stock price? In other words, if you really think there's no rate cuts in 2025, don't you think that means that both the bond and the stock market are incorrectly priced at this particular juncture?
I think it could be a reason for the market to come down a little bit. Yeah.
So,
Man, it's tough to be Chris Vecchio, I tell you. You got the poor guy. He just wants to get short on his birthday, go to the beach. He's got babies. He's got a nice bakery in town. He just wants to have a cinnamon bun, and he's stuck in this conflict because he's got me just tweaking him. I'm like, come on, Vecchio, we can do it. But I mean, all we got going for us, brother, is the Trump legislation, which is not nothing. But if earnings are behind us, and even the Musk guidance is lousy. I mean, maybe we're on the wrong side of history here, sir.
Being long, we're on the wrong side of history?
Yeah, for the summer. If we're not going to get rate cuts, if there's going to be tariffs, tech earnings are behind us, inflation is back, and all we got going for us is the biggest tax giveaway to the rich in the history of the world. I guess my concern is if Mike Butler's right and we're not getting rate cuts in the fall, I think that's a problem between you and me and everybody else watching this podcast.
In 2024, we enter the year with expectations for the Fed to start cutting in March, right?
Yeah.
Sure.
We didn't cut in March.
No, we
didn't.
didn't.
That got pushed to June.
That
We didn't cut in June.
That was a problem.
In August for like 5 days.
Mm-hmm.
Right. And then we rip off that August bottom, and then the Fed gives us 2 cuts in September. But there wasn't a problem for the market. And the market at the end of June was closing on the highs after 2 big meetings, the quarterly meetings in which they produced the summary of economic projections, didn't give us a rate cut, even though we were expecting one several months out. I think the context matters, right? If the Fed comes out and says, listen, inflation's still sticky, the unemployment rate is 4.1%, and the economy's still growing north of 2%, this isn't an economy that we need to cut into. I don't think the stock market's going to look around and go, well, corporate earnings are holding up better than anticipated. Consumers are still consuming. I don't think that we care about the cuts, honestly. I don't know. Personally, have you guys been investing in the stock market or trading long stocks on the basis that the Fed's cutting rates soon?
No, but I look at the rate cuts as an indication of the underlying macro expectations for the cost of capital in a way that is supportive. Does that make any sense?
Sure.
That there's that there's a tailwind baked into the whole situation of rate cuts this fall.
Okay, so then is the risk over the summer? If we know that the Fed's not going to cut in July, Mike, and we know that there's not a Fed meeting in August, then doesn't that make the risk not just for seasonality and the VIX to go bump because it's now the 8th month of the year, but because we have a trigger? We've been waiting for these cuts. We have 125 basis points priced into the end of next year to be cut. And we have to come to the realization that money's going to be more expensive, and than Ilya and people like him will be okay.
He's foaming at the mouth, I'm sure, if he's listening. Maybe he is, maybe he isn't. But yeah, I mean,
I hope he is.
If you look at some of so we had a couple of earnings come out. So Texas Instruments, random name, but they dropped dramatically on weak earnings outlook. Chipotle, same thing, weak future forecasts. And then IBM, same thing. So we're kind of seeing some of these companies either make revenue and have a weak forecast, or miss revenue, have a weak forecast. We're seeing weaker forecasts down the road. Do you think this is kind of pricing in everything we're talking about? And maybe all it takes is a couple of big name Mag 7 stocks to really have a bad earnings report next week, and that kind of starts the tumble.
Right. Well, the real issue is the guidance, right? I mean, to your point, that was the exact point you were just making, which is if everybody's going to guide lower consistently and meaningfully, and you're not going to have rate cuts, now all you've got is a tax giveaway.
And all you got is the tax giveaway. The bottom 80% don't see the significant amount of, tax hike, if you will, from loss of services and the change in rates that go across the board. That's not going to really bite until the end of next year. So, in fact, if you think about the politics of it, really probably good timing for the midterms for Republicans, all things considered. The bite doesn't happen until 2027, at which point the midterms are over. So for a lot of folks who are going to say, oh, yeah, all these cuts are coming, your cost of living is going to go up because you're losing Medicare, Social Security, it's not going to be wound down as quickly as some may be suggesting it will. Is there a Jack Welch angle to all these companies, though, Dylan? This isn't.
Obviously, there's always a Jack Welch angle, which is guide lower and beat, guide lower and beat, guide lower and beat.
But why not just throw the bathwater out right now? Like, just get all the bad news, guide lower now before the tariffs come. It's a freebie, right?
Look at that IBM chart.
Well, IBM had a run. Yeah, it was up from 213 to 295 in the span of 3 months. I mean, if I'm an executive, what juice do I get from guiding higher right now? Like, I have to be really confident in this environment to say I'm going to guide higher. And if I have any uncertainty, I can let my share prices take a haircut for a little bit. I mean, Texas Instruments is down 13%. That's not nothing. IBM's off. Texas Instruments was off 30% yesterday, so that's not nothing. But it's back to where it was trading, 6 weeks ago at the beginning of June. That's not exactly world ending for the company. And if they now ride out this third quarter and the tariff costs aren't materialized, they're not going to beat on everything. They've just lowered the bar for themselves. And it feels like there's, as we've been discussing here on the show, there's 3 stages for how companies are going to handle the tariffs. First, they're going to kill all their, they're going to try to supply chain manage. I absorb some of the costs, you absorb some of the costs. Second stage is where they kill promotions, sales, price matching. Target did that this week with Walmart and Amazon. Third stage is the revenue management, right? So now you've lowered the expectations for everyone. You remove the deals, right? The market's not overcooked on your outlook. Now you start to raise prices. Hopefully volume doesn't fall off too much. And now you've kind of like insulated yourself from the tariffs to a certain degree. Expectations management's part of that. So I don't know. I look at a Texas Instruments. The 4.9 IVR doesn't make it any sort of appealing to me. But the fact that we're sub 200 again, approaching 175, there's a little bit of a gap here in the low 170s. This is an interesting opportunity for a company that's been very, very strong. Share prices, up 30-something% from the low. That's not for no reason. I think there's a game of chess being played is what I'm saying right now. Because there's no incentive to say that you're going to have a great quarter with the tariffs coming. It's one way to lose your job.
No, and I kind of like. I mean, I'm not silent for no. I'm reflecting on your logic, which is because basically what you're saying is this is just more reason to be a bullish, because not only do you have the super tax break, but you have an incentive for the top 100 CEOs to be as negative as possible coming out of the June quarter because of the tariffs, to try to reset their equity price to perform well in the second half.
Yes.
Mike Butler, what say you? Seems pretty logical from where I'm sitting.
If you parlay that with the Santa Claus rally, now we're talking.
Yeah.
Because at the end of the year is always, you always hear those sleigh bells.
That's Trump's thing, right? Didn't we all say, oh, yeah, now that the market's back up, Trump's going to feel like he can play fast and loose with tariffs a bit more? He wasn't feeling that way in early April after they went into effect. The bond market's getting yippy. Now the stock's at all-time highs. Like, okay, he's playing with some house money right now. If the stock market goes down 5 or 10% from here, in his point of view, like, okay, so we're still higher than we were when I was elected. He can still spin that. Why wouldn't CEOs have the same approach? This is free money. You just got to push to all-time highs. Get the bad news out of the way now, lower expectations, and everything that comes after here is gravy. So maybe the call is Texas Instruments to close the year. Maybe that's the play right now. We go out to the end of the year, 148 days. Now let's go beyond there. Let's go to 176. A return to I mean, look, we can take a move back to where we were last week. 176 days out, risking 1 to make 4. That's really cheap, Michael.
It's not expensive.
You're going full Michael, huh?
Yes, Dylan Fur. That's what I do when I'm serious around here. I give full names, no nicknames.
Yeah, you're going full Mike. You're like, I really like this trading position, Michael.
I mean, it's the same thing with BT. Well, the same thing with the BTU position. When volatility was on the floor, looking for an out-of-the-money play to go back to basically where we were around Election Day, 176 days out a few weeks ago, it kind of felt like a little bit of a layup. And that's working well right now. It's still a 9 to 1 risk to reward, Dylan. But when we have these volatility contractions and some of the big names have come back in, if we're in the process of reducing our capital exposure into the market, as Mike and other, quite frankly, as I've taken into my own trading style, having listened and learned from some of these other more options-oriented folk around here over the past few years. But when it's really sunny like this, it doesn't mean go lay out in the sun. It means it's time to go inside and get hydrated. You take some trades off the table. You start getting your capital dry so that when the volatility storm eventually comes in, you're prepared. And if in the process of reducing equity exposure, it's like, you only punch a few lotto tickets around here just to have in my back pocket some longer term ideas. I don't think that's a bad way, a bad approach, especially if you're going to step away for a few weeks, by the way, which is we're in that window now. I could tell you here, we have this thing in town where basically the first 2 weeks of August, no one plans any community events because just no one's around. It's not even worth it.
Where are they going?
Just traveling, right? It's kindergarten orientation is like the 3rd week of August. So families like to do their travel before then, apparently around here. And just thinking about that, schools are starting soon, right? Most schools go back into session mid-August, early September. This is a period of time where people may want to take capital off the table. And if you want to take capital off the table because you're traveling, you're going to be on vacation, you're just taking time off for work, and you don't want to worry about the market, longer dated exposure if you still want to have skin in the game. Don't set yourself, right? Dylan, Mike, I don't know if you guys do this. I sometimes go on vacation, but I have a trade on, and then I spend my entire vacation day looking at the market.
Misery.
That's the sickness.
Pure misery.
Yeah, you and Nick are the same. Nick's like, I can't disconnect, and I'm like, I don't even know where the market is right now because I'm fully disconnected, enjoying this beer in Scotland. We went to Scotland last year, but
nice.
Yeah,
and apparently you had beer.
We did many tenants. Strong beer out there.
Sure, it's a fine beer. It's a fine nation or region. How do you feel about Scottish independence? You have an opinion there?
I don't. I'm not informed enough. What's going on
But
there?
you're good with the beer.
I am.
Dylan, you don't think that I have an opinion about former Scottish Prime Minister Nicola Sturgeon on the...
I mean, do you have an opinion on Scottish independence, Mr. Vecchio? Sir?
I'm absolutely all for Scottish independence.
And Catalan independence?
I don't care as much about that because we weren't a vestigial state of Spain, but we were a vestige of England. I think that's as far as I want to go, given who our parent company is.
But once you spring Scotland, you got to spring Catalonia.
Yeah, why not?
And once you spring Catalonia, you got to spring Bavaria.
Bavaria's got to go.
Which would be southern Germany among friends.
Rejoins Austria. Got the Austria-Hungary region going.
City states.
Oh, bring back city states. Okay.
Munich will run the
everywhere.
operation in Bavaria. Barcelona will run Catalonia. Edinburgh will run your Scottish Empire. And once you free Scotland, the Catalans and the Bavarians, you only have one choice, which is to free the Lombards, because they're bankrolling the whole lazy state of Italy. So then Milan's going to have to spring loose. And then you'll just have a few small, extremely wealthy nations, and everybody else can eat dirt.
Am I rooting for Scottish independence? No, I got mugged in Scotland once, so I have mixed feelings towards the country. It's interesting.
You know, Scotland is oil rich.
Is it? North Sea, of course.
Quite so. And Anyway, back to our regularly scheduled programming before I totally disassemble the European continent.
That's fine.
Forgive me.
I get a lot of emails for my commentary about European ice and air conditioning on the show. Although I would remind everyone, having AC and ice does make us better, so you can still wear that hat. Dylan, I don't know how you guys do it over there in the summer without AC and air conditioning and ice in your drinks.
For the one thing, we actually have ice and air conditioning in every apartment, in every room in the house, temperature controlled and glorious. And so the primary way that we do it is we just actually live in reality as opposed to some sort of delusional fantasy of idiotic Americans who don't actually think that we have air conditioning, with all due respect. And so by virtue of having the air conditioning and the ice, we don't suffer any of the issues that you might suggest.
Would you like a chance?
Did I just insult Americans? I didn't mean to do that, by the way.
Would you like a chance to just fact check your stats on how many homes in Europe have air conditioners before I?
You know what? I would. It's funny you should ask. I got my phone right here.
Okay.
And I got my Chat GPT is one of my 4. I got 4 things but if you look at my phone, at the bottom of my phone, I got a language app. I got to learn Italian. It's a pain in my ass. I got a travel app, Kayak, because I fly all over the place all the time. I got a hotel app, Hotel Planner, because I'm always staying in hotels. And then I got 4 apps. Chat GPT. Let us find out what should the question be, Vecchio? What should I first should I condition it?
What percent
are
of
an
homes
expert. You are an expert
in HVAC.
In HVAC in Europe. I love ChatGPT. I love it. Best $20 I spend every month. Okay, so I got myself an HVAC expert in Europe. And what's the question, Vecchio?
What percent of European homes have air conditioning?
European homes. Butler doesn't get to hang out with fun people like us all the time in public. Hang on. What percent of European homes, this is so much better than Google, by the way, have AC? Is that the correct? Do you approve of the question, sir? What percent of European homes have AC? Stand by. Sure. Calculating, searching the web, analyzing.
This is important stuff.
Not great. Not great. The numbers are not very good, sir. I'm looking at a 7% number in my home nation state of Italy. Don't like it. Spain, they're talking 41%. I like that. UK, 3%. Shame on them.
Those are low numbers.
Man, those are terrible numbers, Mike Butler. I shouldn't open my big mouth. What percent of apartments in central Milan have AC?
Look at this in Europe.
I stand corrected.
Look at excess heat death in Europe compared to North America, Latin America, or even Africa. Right? Europe is nowhere close to as big in terms of population as Asia, and yet it nearly has the same number of people who die from heat death every single year.
I stand corrected.
This is not because I'm anti-European. I want our European brethren to enjoy modern civilization and not die from heat during the summer because it's too hot outside. Install AC. And you know what? I'm glad this is becoming a really good topic. This was published 2 days ago. The new hot topic in European politics is air conditioning. We're making progress here on Overtime, Dylan Radigan. The jihad continues.
You know that air conditioning is a #1 issue with global warming because the electricity, the amount of carbon emitted to produce the cooler air is actually creating the thermal insulation that is thus causing a warmer environment. So there's a negative feedback loop between the rising temperatures and the carbon load that is being produced to do all your fancy air conditioning because you're some big rich fancy American with your big bakery and your summer vacations.
Well, I would quote Singapore's founding father, Lee Kuan Yew, who considered air conditioning one of the most important inventions for all of civilization, saying, quote, "It changed the nature of civilization by making development possible in the tropics. Without air conditioning, you can work only in the cool early morning hours or at dusk." And obviously, the first thing he did when he took over Singapore was he installed air conditioning in all government buildings. And Singapore is what it is today for decisions like that visionary had. So bring AC to Europe, Dylan.
And the Earth, by the way, is at a carbon load and an average global temperature that is the highest it has ever been, as a result of all your fancy air conditioning just jacking the atmosphere full of carbon. So thanks for nothing, pal. Why don't you get a fan? Why don't you take a walk? Why don't you wake up a little early in the morning and have a cup of ice water?
Dylan, I did wake up. I woke up at 4:15 this morning and couldn't go back to bed, and so I watched the new episode of South Park. And then at 5 o'clock, I tried to go back to sleep.
Did you?
And I had these AI images of Trump wandering through the desert seared in my brain. So I couldn't go back to sleep.
Okay, so why don't you tell me about that South Park episode? Because right now I'm in a beautiful room full of air conditioning, so I'm very open-minded and ready to hear any new information that might help enlighten me and give me a better life.
Guys, I think that we just made Dylan. I think we just made your shoe company all of its money. All of your shoe stores have air conditioning and serve ice water with like those little cucumbers in them.
Are you coming to Fashion Week in Paris? We're going to run just pure air conditioning and ice water and really expensive sneakers. Plus, you got to buy a plane ticket to Paris. So it's not a great deal, but you get a fine shoe.
Oh, well, I'll look into it. I'm sure my 30-week pregnant wife would appreciate if I just abscond to Paris for a few days.
She'd bring her. One lady doesn't like a weekend in Paris. Show me a woman who's not happy to have her.
She's in grad school right now.
And charming husband, such as yourself, to take her to Paris for the weekend to buy some fancy Italian shoes. Come on.
Dylan, if life were so easy, I'd be there right with you.
I mean, once you make all that money on your Tesla long position, I don't think it'll be an issue.
Yeah, I'm a corner Tesla. True. Mike, what's your view on the metals up here? Dylan and I have been chewing on this for a few days. We haven't heard your thoughts recently. Gold, silver, copper, go to the miners. You can go to the equities like FCX, dealer's choice.
Yeah, I've been trading the gold butterflies consistently, and we're about to have one roll off. I had a put butterfly on the downside that I sold for $250. That should expire worthless. And then I have a gold and the V contract, a iron condor there that's up a little bit, but just kind of playing for more chop here in this range. It hasn't left this 200-point range in many months, so I'm just playing for more of the same.
Come on, Mike Butler. I mean, how often do you even join us? I need a definitive point of view on gold and silver. My boy Vecchio has jacked me into the silver position time and time again.
Well, silver
usually to my benefit.
Yeah,
usually to my benefit. Usually to my benefit. I have to be honest. For the first time in my life, I want to buy gold. But if Mike Butler doesn't like it, or should I say Michael Butler doesn't like it, I'm not sure I can go forward.
No, I like long precious metal. I like long gold, long silver. I think if the story is, and if you believe that the dollar will continue to be devalued, then you want to have these assets, even if they're at highs. So I've just been playing
Let's take it another step further, Mike Butler. Do you believe the U.S. dollar is fucked?
Eventually it will be, yeah. When you leave
as a PG-13 program, we can say that once on air.
Okay, I'm sorry. But I mean, that is a correct opportunity to use the phrase, sir.
But yeah, I mean, when you think of how inflation is not going anywhere, and if you leave the value of a currency in the hands of human beings, it's going to get devalued over time. So yeah, if you're looking for something.
Over time, we're down 20% in 6 months, brother.
I know.
I mean, this is not over time, nothing.
Yeah.
It's a disaster.
It's not good. It's not great. But yeah, I think Bitcoin, gold, silver, those are nice assets to have in an environment like this.
How about a little dollar bounce, a little something for a friend? Maybe somebody earns dollars and lives in Europe. Do you care about him?
I do. But yeah, it's been tough. I've been trying to
Not
buy
that much, apparently.
I've been trying to buy the dip here in the dollar too. I'm trading the Tasty FX currency pairs. I'm short the Aussie dollar. I'm long the dollar franc. I'm long the dollar shekel. I'm short the euro dollar. So I'm right there with you.
Okay, so you
It's just
at least you
impossible.
feel it's. I mean, my man Trump has really got the dollar by the neck. You know what I'm saying?
It's not great.
But it's not good.
The dollar today, it tries to break back into its downtrend from the February and June swing highs. It doesn't quite get there, though. I mean, if we were back under 97 during the show, we would say that the bounce is dead. There's no more hope. All hope is lost. We're going back down to the yearly lows. Hide your kids, hide your wife, yada, yada, yada. You know,
Call
best
your
laid
mom.
plan. Yeah, exactly. Call your mom, tell you love her. But that's not this. Even the yen, which has been a thorn in my side this week, we go back to that daily chart, the past 3 days in a row, trying to push to the 1 month, and we're closing below it every time today. A nice little reversal candle there, so perhaps this is something to work with now moving forward. Volatility is really low. That's not the case, though, in the euro or the pound, where volatility is higher. So I suppose for typical Tasty traders, Mike, if we're looking at the currency futures here, you have your euro, your pound, even your Canadian dollar with IVRs that are right near 50. That's more of the typical selling call spread, selling put spreads, short iron condor, short strangle viewpoint. I myself think that if we're going to be directional in the dollar, you want to do it in the low volatility products to buy something a little out of the money. So I'm still playing for 0068, 0067. I'm not enthused, but the dollar short is still among the most crowded trades. And so thinking about the second half of, not this week, we're already in the second half of this week, but the remainder of this month, long gold, long mag 7, short dollar are still the three most prevalent crowded trades, according to Bank of America Fund Manager Survey. So at some point, something's got to give, at least for just a small bounce and rally.
Yeah.
Dylan, quickly here, is the dollar story, is this the main thing to watch as the barometer for Trump? Forget the bond market, forget stocks. It's currency.
The dollar is the referendum on America through the lens of the Trump presidency. It's not the stock market. It's not the bond market. It is the dollar. And the dollar is, not to use a previously used word because I've used that word. So the dollar is in decline. And it is in severe decline. And it is a notable issue that is a direct reflection of a collapsing confidence in the relevance of America. How about that?
That's fair enough. So we've covered gold, silver, dollar. We've talked stocks, a little bit of bonds. We've talked some earnings here as well. We do now have the video of President Trump giving our Fed chair a hearty slap on the back here as they wind their meeting down. I love him to lower interest rates and gives him a slap on the back. Markets don't care because Powell can't say anything. Maybe that's the good news for tomorrow, guys. Trump didn't go to the Federal Reserve building today and fire Powell. If he really wanted him gone, wouldn't he just do it there and then? Maybe he's not getting fired ever. I personally don't think so. This whole story is so ridiculous to me. The funding overrun for the building is a pretense to get rid of him. Come on. That's just, it's the worst. It's the lamest thing I've ever seen. Dylan, I want you to take us out here. Give us something to talk about for the last 5 minutes that's been on your mind that I haven't.
Like I haven't said anything already today. Listen, I mean, you're really putting the burden on me here, but I'll tell you what. America is a demographically and economically dominant nation. I do not believe the dollar will collapse. I do not believe the dollar will decline significantly from here. I do not believe Donald Trump represents a material risk to the future of the country or any president. And I do believe, I like the thing that I most enjoyed about today's program, which is a thought I hadn't had previously, was your comment that you believe that there is an active and dynamic indication of sentiment from the giant company CEOs to portray their expectations as cautiously as possible. in order to endure whatever equity losses are available to be had now, such that whatever happens in the third and fourth quarter, that it is seen favorably. I think that that is actually a positive for the market overall. I think that the fact that there is an incentive coming out of the second quarter for the big bosses to come out and say, listen, it's a mess. I can't make any promises. You never know. My God, I don't even have air conditioning in Europe. whatever their comments are, is really just a pretext for a more optimistic environment. So I think that that's probably the most optimistic thing that I heard in the last hour of discussion. The most concerning thing was from my good friend and neighbor, Michael Butler, who can frequently be found drinking beers in Scotland. I don't know about frequently, occasionally be found drinking beers in Scotland. And he is rather ambivalent. No, he doesn't think, I would even say, does not think that we are necessarily going to have rate cuts this fall. And I think that rate cuts this fall are sort of taken for granted. And so the most optimistic thing that we're sort of dealing with right now is the possibility of lowered second quarter guidance setting up rallies in all of these stocks because of the little beak pounding that they're going to get coming out of these second quarter calls, with the most negative dynamic being the absence of rate cuts in the fall. And I would like to note that according to ChatGPT, 55% of the apartments in the city of Milan where I live do have air conditioning. And so I live in a small pocket of air-conditioned air in a continent that is absent this very thing. And so don't hold it against me that I'm sort of stuck with the cognitive bias of my own lived experience, and so I'm oblivious to the lack of air conditioning in the very nation state that I reside.
Mike, we have 2 minutes left. What's grinding your gears here?
Not much. I would like. I would like.
No problem. This guy's no problem. This guy.
Yeah. There's no problems here.
Why do you feel so? How about that? Let me rephrase, Mr. Vecchi. Then why do you feel so good about the world, Michael Butler?
I'm just an optimist. I think I like to look at the good side of most things. But no, I think I actually do agree with everything we've said here in terms of maybe these companies accept a little punch from earnings just to set themselves up for outperforming later. But yeah, I don't think we're going to see rate cuts. I'm going to stand on that. I don't think we see a rate cut this fall. I think we
doesn't that mean dollar buy? Doesn't that mean you like the long dollar? If you're not going to have rate cuts, isn't that dollar positive on the margins?
I hope so, because I'm aggressively long the dollar in a myriad of different ways. So we'll see. So I guess that's my thorn in my side, the weakness of the U.S. dollar. That's what it is.
Weakness of the U.S. dollar. You know, we've lost a lot of celebrities this week. This is what's bothering me. The
Hulk Hogan situation, that hurt me. The Ozzy Osbourne, and we got all kinds of problems.
Yeah, the Hulk Hogan one in particular, like as some may imagine, his and I, our politics don't line up, but I had the pleasure of meeting him once in person. My brother grew up a Raiders fan. I have no idea why a kid from New York grows up a Raiders fan, but he was
Al
begging
Davis, come on, Howie Long.
Yeah, my brother,
awesome.
my
Marcus
brother born
Allen.
in 1991 was thinking about Al Davis and Howie Long.
I don't know. Maybe like their uniforms, bro. Pirates, black. I don't know.
Well, the furthest east they were playing over the next 2 years was Indianapolis. So my dad flew my brother and I out there for like a dad-son trip to go see the Manning Colts take on the Raiders. And when we were standing in line at Indianapolis Airport, Hulk Hogan was in front of us. And he was massive. So he let me do some pull-ups off of his arm. He signed some autographs. He chit-chatted with my dad for 15 minutes. One of the nicest celebrities that I've ever met. I've met a few. Run into Amari Stoudemire at a club in New York City, bumped into him, spilled a drink on him. We had to buy him a bottle for his table. It was a whole thing. But Hulk Hogan was a nice guy. So rest in peace to the guy who brought
He was a good man. Hulk Hogan was one of the greats. Come on, rest in peace, Hulk Hogan. We love Hulk Hogan. Come on.
With that, overtime's out of time. We'll be back Monday, same time, same place. As always, right after last call, 4 p.m. Eastern, 3 Central. So for Dylan Radigan in Milan, Mike Butler in Chicago, I've been Chris Vecchio in New York. Good luck trading. See you soon.
U.S. retail sales data seemed to surprise higher, but for some strange reason, we'll get into what it was in just a moment, bond markets and the Fed didn't think that this was necessarily good news. So what does this mean going forward, and how does this set us up for the market's perception of the U.S. economy as we get into the second half of the year and start to think more acutely about economic growth? That's what we're going to cover here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And the markets, to be sure, certainly liked today's retail sales report. And indeed, that seemed to be the cue for stocks to launch higher. But nevertheless, one does have to ask the question and look under the surface, how is the U.S. economy actually doing? And those details are perhaps not quite as encouraging as the markets thought they were. Here's the performance that we see, and here is around where we get that retail sales report right here. We can see once we get it, the S&P 500, the Dow, they inch higher. It's a similar story for what we got in the Russell. So the markets did like this data, and at the headline at least, it certainly seems to make sense. Why? Overall retail sales up 0.6% compared with a 0.1% consensus. And indeed, as you look down kind of the various permutations of this data, you see that the control group better, even if you exclude autos here, it's a little bit better, although not by much. The gap narrows to just 0.2% from this gap here. So autos obviously an important consideration here, but nevertheless, the numbers look in all better. In fact, this increase in the year-on-year reading up to 3.9% was the first uptick in 4 months for the year-on-year rate. So on the face of it, these are certainly encouraging until you look just a peek under the surface. Here's the breakdown by category, and you can see here's retail sales. Here you can see they fell over the preceding 2 months, down 0.1% and 0.9%. Here's the 0.6% increase. And the thing that really stands out immediately is this motor vehicle component. And to some extent also building materials and equipment, which is why it's not just a story of one category per se. It's why even when you take autos out of the equation, you still get this little increase, although it's much more modest. But this is really the main story because motor vehicles are between 20 and 22% of the retail sales total, which of course makes sense. Cars are one of the most expensive things that retail buys. So, not surprisingly, it's a very large part of the tally here when you take the amount of money spent against units moved. So, what you're looking at then is a situation where, to be sure, this very potent increase of 1.2% in June is an understandable way to power retail sales to better than expected results. To some extent, the 0.9% rise in building materials is likewise a standout, but it still is a smaller component of the total. It's really this motor vehicle bit that is the driver, given how important this is for the headline tally. But consider that this comes after 2 months of significant losses. a 0.7% decline in April, and an eye-watering 3.8% decline in May. And when you add all that up together, what you end up with is retail sales, at least in motor vehicles terms, that are on net down about 3.3% in the second half of the year. Or in the second quarter, rather. In other words, the 1.2% rise is nowhere near enough to offset these losses earlier in the second quarter, and that, of course, is echoed, albeit with some diluting in the overall numbers. So retail sales, on the whole, actually fell over the course of April, May, and June. And that, of course, sets up an ominous sort of a backdrop for what GDP data will do, because already in the first quarter, if we discount all of these shenanigans with front-running the tariffs, this 40-ish% swing in imports and the stuffing of all those imports into inventories, which then gives us this surge in the investment component of GDP. It's how you end up with a nominally negative GDP number in the first quarter. So take all this noise and let's chuck it. Because as a lasting thing, it's obviously not a factor. This is front-running of tariffs that have since arrived. And moreover, when you take these components and you consider how much of GDP they account for, but for these wild swings in the high double digits, which are very abnormal, all these components add up to a pittance in the overall calculus of GDP. By far the biggest component is household consumption. And what we saw was that in the first quarter, it was the weakest since back here, going back almost 2 years. And we end up with a story now, given this guidance from retail sales, that seemingly points to another weak set of consumer numbers in the second quarter, which, of course, given that this accounts for such a dominant part of GDP, 68, 69%, depending on the quarter, is telling us that the underlying economy is actually slowing and slowing considerably. And perhaps this is why, in the wake of these retail sales numbers, Fed policy expectations actually move to a more dovish setting, despite these ostensibly better than expected numbers. We end up with a little bit of a trim on this year's rate cut outlook. We're to 38 basis points now, so we're not quite sure we're going to get a second cut. Markets are now fully baked in for a single 25 basis point cut. They're 13 basis points in the direction of a second one, so that's narrowly better than even at 52%, but only just so. But the real disparity is for next year, where the markets are growing increasingly dovish, including today, which is how you get this net more dovish move in the sum for the outlook between now and the end of 2026. For next year, we've moved out to 73 basis points, which essentially means we've all but completely discounted 3 cuts next year, whereas the Fed only sees 1. And so the markets are clearly signaling here that what this retail sales data means is that in a optics sort of way, this probably means that there's maybe a little bit less scope for rate cuts this year. But this does not change the trajectory of economic growth in a more positive direction. It just delays rate cuts and pushes them downwind. Because indeed, the weakening of the economy continues all the same and is in fact made more apparent by this data. Tellingly, in this context, the Atlanta Fed's GDP Now estimate of second quarter GDP numbers that takes in incoming economic data and then feeds them into this model that's updated sometimes daily as long as we have data to look at that is relevant. We now see it was revised lower today, not higher, on the basis of this data. And that's largely, if you actually see what the Atlanta Fed flagged as the reason for the adjustment. And here a quote is perhaps most appropriate. The Atlanta Fed very directly says that what they did was downgrade personal consumption expenditure expectations. So the markets looked at this, as did Fed economists, and collectively came to the conclusion that in the wake of these apparently better than expected retail sales numbers, the consumption piece for the second quarter looks worse, not better. With that, we get another view of where consumers' heads are at, going now into the second half of the year, with the last bit of notable event risk for the week, the University of Michigan Consumer Confidence Survey. And here you can see we saw a very spirited rebound off these COVID equivalent lows. These, of course, were the post-COVID bottoms in sentiment here. And not surprisingly, sentiment was declining as inflation expectations were rising as a consequence of the pandemic's many disruptions. And once inflation started to fall, once the Fed really started to lean into rate hikes, you can see this is, of course, the beginning of 2022 right here, where the Fed really starts to hike. Once that starts to have an effect and inflation expectations decline, sentiment improves. As you get the advent of tariffs at the beginning of this year, inflation expectations surge and have in fact surpassed at one point the COVID peak. Sentiment craters. Fast forward to the June survey and the decline in inflation expectations from 6.6 to 5%, looking 1 year forward in these numbers. That gives you a potent jump in sentiment. As we look ahead, we can see the overall index is expected to nudge up just a touch, but expectations looking forward 6 months or so, as well as the assessment of current conditions, a little bit weaker in the forecasts. And perhaps that makes a bit of sense, warns that actually the headline figure might disappoint. And that takes us back to these inflation expectations as a driver of sentiment. Now, we just saw earlier this week that although the overall CPI report looked encouragingly normal at first blush, and the increase in headline inflation matched expectations pretty much exactly, 2.7% increase in the headline from 2.4. The thrust here came not from services where inflation already is the most dominant, and that's not surprising. Services is the biggest sector in the economy, but from goods, suggesting that the impact of tariffs is starting to appear. In fact, here's the change in monthly contributions to year-on-year figures. We can see the overall headline figure rose by 0.3 percentage points. That's from 2.4 to 2.7. But the thrust here is 4 times larger on the goods side than it was on the service side. If we actually look at the momentum of prices rather than just their levels. When we then got the PPI report, that seemed to continue. The goods component in PPI saw its first large increase in quite a while, and the largest since back here, January. So this is now a very sort of straightforward appearance for inflation linked to tariffs. We can obviously see that goods inflation has been basically non-existent going back for 2 years until this. Moreover, if we look deeper into the price dynamics here, we find that at the very beginning of the U.S. supply chain, at the intermediate demand level, before goods essentially go from who initially begins to have them at the wholesale level, then moves them on to final distributors that then put it out in stores and, of course, make it a retail-facing item. At the very beginning of the U.S. supply chain, margins got absolutely smoked 3 months ago. In fact, this is the biggest decline in wholesalers' margins since back here in 2013, the worst in 12 years. And for the subsequent 2 months, those margins didn't exactly keep pace, but they continued to deteriorate, suggesting that wholesalers are eating inflation costs, ostensibly from higher input costs around these tariffs, without passing them on to consumers. This is, of course, or even to final demand distributors, so wholesalers downwind along the supply chain. And in fact, as we look at corporate earnings reports, we see companies attesting as much. So with all of this in the inflation data, there seems to be a meaningful risk that consumers have noticed that the price of stuff seems to be heading higher, and that the thrust there seems to be significant and more notable than it's been in quite a long time. Now, if this feeds into these one-year inflation expectations and we get a nudge up here, given how this has been the driver of sentiment for the better part of 4 years, one would expect that sentiment would then deteriorate and give us a disappointing outcome, which would then, of course, make the second quarter story that much more ominous. If consumption is as weak as it appears in the first quarter, and it looks like it's on a pathway in the same direction in the second, if not worse, then all of the growth concerns on display in the first half of the year, they have the capacity to become still more acute. Now, you might say, what growth concerns? Stock markets hit a record high in the first half of the year, and that's certainly the case. However, as we keep going back to here over the past several days, notice that in the first half of the year, stocks, whether you look at the S&P or the NASDAQ, rose only a touch more than their normal 6-month average, but those gains were absolutely dwarfed by a dramatic US dollar sell-off. The dollar fell 9% against the yen, almost 40% against the euro, over 25% against gold. And so, if we consider stock markets up 5.4 or 7.9% up, it's important to remember they're up in dollar terms. Factor out the influence of the weakening dollar on inflating these asset values and express them in any other major currency, and you end up with a loss for U.S. equities in the first half of the year. Meanwhile, for all the fire and fury in the Middle East, crude oil fell 9.2%, and the front end of the curve continued to price in rate cuts. Front end yields fell. And whatever happened in crude oil clearly seemed to suggest that the markets are more concerned with demand destruction than they are with supply being disrupted. And so, again, just a small look under the surface, and we end up with markets in their price action telling us we're not concerned about something cataclysmic. In fact, this whole sell America dynamic is obviously not something that stands out, because clearly the decline in 10-year yields suggests that investors are perfectly happy to lend to the U.S. sovereign at favorable rates, because their faith and their confidence in the faith and credit of the U.S. government is unshaken, despite recent events. But that, in fact, what they're still seeing is rate cuts and demand destruction. And, of course, against that backdrop, a weaker U.S. dollar makes quite a bit of sense. That dollar weakness then is not about jettisoning U.S. assets, as the 10-year would surely attest. It is about getting ready for an easing cycle against the backdrop of something that starts to smell like a recession. And so, with that in mind, if you then get aggravation of these dynamics as you head into these numbers, and if they disappoint because inflation expectations here tick higher, the story for the second quarter starts to look a lot less resilient than perhaps the nominal dollar-based equity market levels valuations would suggest. With that, we have today's episode of Macro Money. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go from there. We are going to be off here next week, but Macro Money will be back the week after. In the meantime, I'll be surely still commenting, because I can't help myself, on the platform formerly known as Twitter, and on Blue Sky at Ilya Spivak. If you're watching this on YouTube, like and subscribe. In the meantime, happy trading.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Got a little bit about vending machine cars, Carvana, we're going to touch on today, get into the weeds, the details about that. But before we do, Gus, what's going on, brother? How we doing? Tuesday.
Yeah, excited to talk some Carvana. Aaron and I have become quite the Carvana bulls.
I know.
In the last 24
Unintentionally.
hours. Unintentionally. We just started having a conversation and figured out we love this company. So excited to get into all of it. But yeah, I'm doing well. It was all my positions are up today. This was an interesting day. I've been talking for months about how long Delta I am. And so usually that means that if my portfolio does really well, that means the market is also doing really well. Weird day where there wasn't any cataclysmic move in SPY, but just pretty much everything moved the right way for me. So I can't complain.
No, I hear you. A lot of movements today, a lot of volatility. We had a pretty aggressive sell-off. I think yesterday we had a pretty big rally yesterday, pretty much consolidated for a couple hours, sold off into the close, had a continuation to the downside today, and then pretty much rallied since there. So we'll see what we get. The portfolio was looking really good the beginning of the morning, and then towards the end of the day, as you know, I lean a little bit of short delta. So whenever the market's ripping to the upside, probably, you know, it's going well on your end. Whenever the market's ripping to the downside, it's going well on my end. So that's kind of where we're at. But I'm excited to get.
We gotta both just start being neutral.
Or we're hedging.
We gotta both just start being neutral. That's true. Somebody has to be right.
Right.
Somebody has to be having a good day every day with us.
Exactly.
Time to turn on your Errol Coleman chart settings. Real. You guys ready for some candles? You can't tell the difference between. It's awesome.
Oh yeah. Pretty much. Oh, is that the black and white? It went over my head.
The black and blue, yeah.
Black and,
is that what it was?
Yeah, it was either black and blue or black and purple.
It was white with black and blue, yeah.
It was easier to see. If anybody doesn't know, I am not colorblind, color deficient. It's where you can see colors, but depending on the shade, it looks like a completely different color. So
I just don't
for
understand
a little context.
with that in mind, which I did know, but with that in mind, how in the hell are colors that are hard for me to tell the difference between easier for you? What does that even mean?
Right. No, I mean it's I still don't know what's going on over here. But what's going on, guys? I hope everybody else is doing well. I know. See, Luis used to love Carvana stock. It's what I was saying earlier today. I was like, that man loves Carvana stock. He's probably the one pushing this thing higher. So we'll touch on Carvana. What's going on, Big Deal? Emmett, Bob, everybody. Anything new before we get into the segment for today, though, Gus? I mean,
man, Rocket Mortgage.
Rocket Mortgage, it's ripping.
It is ripping.
We could touch on it on Thursday. I don't know. We'll see what else pops up until then. But
yeah, it's true. But I do have a long 3 DTE 20 call in Rocket Mortgage. That thing has been moving like crazy, and especially post market today. Shout out Wall Street Bets for getting involved with that one. But yeah, that's kind of been my main point of excitement for the day outside of this Carvana stuff that we're going to get into here.
No, I mean, I love it. We'll see how Rocket Money pops off for the rest of the week. I know Tom's been touching on it too, getting into some of those things, but let's get into Carvana. Does anybody watching right now have any thoughts on Carvana? Owning the whole stack is a headline for the day because Carvana is doing some things a little bit different than others might. I mean, they're stepping into a new territory. And they're trying to squeeze profit margins in areas we haven't seen competitors do. So any thoughts right off the bat on Carvana, or what were your original thoughts when you heard about Carvana, a vending machine car thing? What is that?
Well, yes. I mean, as a car vending machine company,
right.
I always thought it was kind of just a novelty thing, something they're trying to sell cars a slightly different way, take advantage of some novelty, and kind of sell you an experience as well. You get to go to the vending machine and watch your car come down, and this feels like this thing out of the future. But what we've started to stumble into here, and as we're about to get into in the slides, is that they are way more than a car vending machine company now, obviously, which was no secret to either of us, but they're buying and selling cars online. And so that led us to the question of, man, everything is online. All shopping is going online. Brick and mortar is dying fundamentally. I mean, across the board.
Right.
And so why would you not be interested in the company that's now selling cars online? That's a new frontier of online purchasing, something that isn't widespread yet, but I feel will be. So yeah, excited to get into it.
Yeah, I mean, right off the bat, I thought Carvana was one of those things that was like, it's kind of gimmicky. It's like, okay, we had Redbox. That's kind of how we got into the conversation yesterday. We started talking about Redbox, that vending machine type model, and then we thought about Carvana, like the vending machine vehicle model. That's how we circled around to that conversation. But it sounded gimmicky to me before I looked into the details. I'm like, I've never seen one of these before. Luis kept bringing it back up every other week, maybe every week, and then paid a little bit closer attention to it. So that was kind of my thoughts when I first heard about Carvana. But we can get into the slides here.
Hey, Lone Sofos, good to see you in chat. We would love an hour. We would love an hour-long show.
Oh yeah, we would love it. We would love it.
we appreciate everybody making noise for that. But yeah, Carvana, buy cars from people, essentially, however they so choose. Trade-ins, direct purchases, lease returns, fleet operations, and most notably, I mean, I believe one of their largest revenue segments is just, purchasing cars straight off of people.
Yeah.
This matters because they are cutting out traditional middlemen. We're going to say vertically integrated like 100 times in the next 30 minutes. Everybody strap in. But vertically integrated, it reduces their acquisition costs. And with all of these different channels to acquire cars, it gives them great inventory liquidity. And as we're about to get into in a bit, it helps that they don't need physical dealerships to house all of these cars at. So yeah, it's full vertical integration. Cars in, cars out, most of it happening on the internet. And I mean, sidebar, one of my close friends just sold his car to Carvana, which was another part of what spurred this conversation for us originally. But he had nothing but amazing things to say about the experience. He said they beat the market price somehow. They just sent him a little lockbox, threw his keys on the side of his truck, and they came and picked it up. It was super seamless. That's in the middle of downtown Chicago, probably one of the hardest places in America you could possibly
100%.
have to put a car on a truck.
That's a testimonial right
there.
That's an ad.
It is
in Chicago.
Yeah, but it works. This this stuff really works, and they are able to somehow give better prices than the market a lot of times when you're trying to sell your car.
Yeah. Pretty much what Gus is saying is if you guys haven't seen the company like myself yet, it is real. It exists. It's not just photos or AI, but they're doing things a little bit different, trying to cut on costs, different model, trying to cut out that third party middleman, which a lot of businesses end up doing. So
yeah, and I think Scramble hit the nail on the head in chat here. The vending machine is the ad. The home pickup and delivery is the bread and butter. And that's true. The vending machines, you drive by them all the time and you're like, oh man, look at these cars way up in the air.
Right.
They don't really care if you buy from the vending machine or not. They just want you to be aware that they're there.
Right. I mean, it's great marketing. It gets your attention for sure.
Absolutely.
Yeah. We can go ahead and jump to the second slide here. Inspection and reconditioning. All vehicles pass through one of Carvana's IRC facilities, inspection and reconditioning centers, where they're cleaned, repaired, and prepared for resale. So I mean, right off the bat, in-house again. They're trying to do everything themselves. They have a little bit more leverage.
Yes, and this is no different from what a conventional dealership would do when they receive a car. But the difference is that Carvana is able to do it at such quantity. They are able to, instead of just having one dealership where you have 3 people who are your cleaning people and you have 6 cars come through a day. I'm sure that there is a large facility somewhere with hundreds of people that work at it that are handling all of these things, and it makes for quicker turnover. It makes for cheaper cost. It just works better at scale.
100%. And again, like we kind of just mentioned, at scale, the scale and consistency are hard for smaller players or dealer groups to replicate, because it's like, if that's the case, why not just do it? Or why weren't they doing it 5 or 10 years ago? I guess there's a little bit of a bottleneck there.
Well, and it's also, I mean, we discussed this yesterday when we were talking about doing this segment. It takes a lot of infrastructure setup. You have to do, there's a lot of capital required up front to actually establish the infrastructure that you're able to do this. Because if the closest service center was in Des Moines, Iowa, and Chase sells his car to Carvana and they have to take it all the way out there, all of a sudden you incur a bunch more costs. But all they have to do is go out to Oaklawn and they're there. So, yeah.
Convenient. Third slide here, retail sales. What are they talking about retail sales, Gus?
Yeah, retail. We lost it there for a second. That's all right. Anyway, yeah. So pretty much full online platform here. The vending machines still do exist and you can go, but pretty much 100% online through Carvana's platform, which is very robust. If you've never done it, go poke around like you would with Zillow or something sometime when you have a second. 360-degree photo tours, vehicle history reports, financing offers. They show you the Carfax.
Sold.
Yeah, they show you the Carfax.
I'm sold.
So yeah, and as I alluded to earlier, they don't have to have physical showrooms that they keep up and maintain and keep ready for people to come to. That keeps your overhead way down. I mean, when you just buy some huge tract of land in the middle of nowhere and throw thousands of cars on it instead of having to have this nice street-facing dealership that can only fit a few hundred cars.
Right, and then again, I mean, opportunity cost. It's like
and location does not matter. They can keep these cars wherever they want. The very, very cheapest place.
That's another good point. And just to piggyback off of that, I mean, with the brick and mortar style, I mean, just traffic in general is going to be an issue. Getting noticed, like you kind of just said, and then on top of that, being able to use all that funding. I mean, it takes a lot of infrastructure to build, and you need capital to do that. I mean, you can use that in the technology that you need to do these 360 video cams, whatever you use to show off those vehicles. I know whenever I was looking for a new place out here in Chicago, even just being able to look inside a building without having to physically be there is just completely different than 10 years ago. Not that I was looking for a place for myself 10 years ago, but I mean, those things that they have set up to where you can go and check out the unit. I don't even know what they're called, but it's those cameras.
Yeah, like the 360 cameras.
360 cameras,
you'll see people use them like on motorcycles, like on the stick 100%. Or whatever. That's the more popular use case. But yeah, they absolutely work for this, and it's only getting better. And you can just augmented reality your way through the whole place. It's very impressive.
Yeah.
And then the last point, enhances conversion, and that's true. And the UX is just so good, because if you're shopping for a car, typically you have to go to, you're looking online. Obviously cars are available online, like you can see what different dealerships have, but still the process is going to be find a car you like. You're restricted to cars that are just within a 2-hour radius of you. You got to find one that you like. You got to go out there. You got to test drive it. You got to go through all the rigmarole of haggling with whoever, and then, do the title, all that stuff, and it all has to be done at a physical location. And if you go there and you test drive the car, or you figure out the price is different or whatever, and you don't like it, you have invested a lot of time and for no return. Whereas with if you go on Carvana, you can look at 50 cars in an hour if you so choose, and they're all available to you, and you take out all of that headache. So it is just, it's just way better user experience than typical car buying. Car buying is just a stressful thing. And I feel like this takes a lot of the stress out of it.
100%. And I think, runner up is buying cars. I mean, moving and then moving homes causes a lot of frictions, and that causes something where people don't want to do those things. So if you can create something, you can create a solution that reduces a little bit of that friction. I'll go buy the car. I'll go do this if I have the means to do so, or I'm not going to push it as much as somebody typically might. So if you can reduce that friction, I mean, consumers are going to love that convenience.
Well, yeah. And I mean, now that I'm privy to how nice this is like absolutely an option I would explore the next time I need it.
And well, on top of that, a very close friend of yours had a great experience. That word of mouth is powerful too.
Yes, which, absolutely. I mean, that word of mouth is a large part of why we're sitting here preaching to the masses. So yeah, exactly. It's all word of mouth.
Financing. Carvana underwrites auto loans in-house. Oh, we can jump to financing. What a little quick there. My fault, guys. Carvana underwrites auto loans in-house and securitizes the loans for resale to investors. So in-house, again, we're almost coming back to they do everything in-house. It feels like that's the theme of all these slides. They earn interest income on top of the profit. So Gus and I were sitting down yesterday talking about how is Carvana increasing their profit margins larger than their competitors. And on top of that, we were talking, I was like, maybe they're not even profitable yet. And then I think we went back and did our research. They were profitable this Q1 of this year
was their first
time.
Quarter. Yes.
Right. So, I mean, they're doing well. So we were like, well, where else are they making some money? I think 77% of their profit margin came from buying and selling vehicles and fees, if I'm not mistaken. And then the other 20 to 23% came from things like having everything in-house, like their own financing and things of the sort. So controlling the financing, data from the transaction, and they're going to be able to keep all those little details and not have to outsource or split any of those fees for the middleman. They get to keep everything.
Absolutely, yeah. And as you alluded to, what we discussed is how are they able to beat the market when they are buying a car from you, and then also beat the market when they are selling a car to you. And it's because when you do in-house financing, you could do those things at the same price.
Right.
You could buy a car for 40 grand and then sell it for 40 grand. But if you finance it on 4 years at a solid interest rate, you're going to make money on that vehicle.
Absolutely.
And so that's a major advantage that Carvana has over the competitors as well, is the in-house financing.
Right. Last slide we got here for Carvana. Delivery. This has to be like the cherry on top for Carvana, because this is like you're building out kind of a new infrastructure. Hopefully this works well. The delivery is the last part. If someone has a bad experience on the delivery portion, they might not choose to use you again. So I'm excited to get into this slide.
Yeah, absolutely. So yeah, you buy a car on Carvana, they can bring it right to your door if you want, or if you would like the novelty of a vending machine, that's also an option. They'll put it in a vending machine for you and you can go pick it up. But they, again, vertically integrated, own most of their logistics network, which allows them to, have tighter control over all of these things, lower cost per delivery. You're not outsourcing. You're not relying on availability of whatever trucking network you're contracting. Instead, it is just their trucking network. And that extends to every different facet of the business. No dealership delays, no showroom wait times, no other friction. Again, just the stress I talked about with buying a car. It sucks. Nobody likes doing it. You got to go there. You got to put on this whole facade that you don't like it, so that they won't jack the price up on you. And then you got to do the negotiation and see what you can make happen. And it takes out all of that. And not to mention your entire shopping experience. You also already know if you're pre-approved. You straight up, you have your budget from Carvana. They're saying this is what you can afford, and it just makes all the guidelines that much easier. And so, over time, delivery density in metro areas reduces marginal delivery costs. That's absolutely true. If you can put 5 cars on a truck and go deliver all 5, that's cheaper than putting 1 on a truck and go and deliver just that one. And it's a big snowball as more and more people use Carvana. I was about to say the dumbest thing in the world. I was going to say it'll become more and more profitable. More and more people use it. No, their margins will increase as more people use it, which often, especially in businesses at scale, is the opposite of what happens. You'll see margins get smaller as you start to operate at quantity. But this is the opposite, where as there's increased adaptation, their margins are actually going to grow more.
To your point, though, I think the more people use it, not necessarily maybe the more it will become profitable, I guess. I mean, at this point, yes, because they're headed in the right trajectory. But before, depending on where that curve is pointed, scaling at the wrong time can either get you there quicker, regardless of which way that's in.
Yes.
But anyways, I know this really just sparked our curiosity yesterday, Carvana. And I think looking at the numbers don't lie. So it did shift my perspective a little bit on just the overall. Not that we care about the underlying, we just care about the IV, risk reward, probabilities, those kind of things. But from a fundamental level, I'm not gonna lie, it did shift my opinion or just outview on Carvana or those type of business models other competitors moving forward.
Yeah, and it's only, obviously this is large, but it's only a $50 billion company right now. That's still plenty of room to the upside.
Just a small loan of $1 billion.
just something little, but yeah, it's only a $50 billion company. I mean, that leaves plenty of room for expansion. It's not like they're starting to hit the ceiling, and it's not like traditional car dealers have even started to at least immensely feel the effects of Carvana. But I do think that is a shift that we will see happening the same way that your Macy's, your Kohl's, your Target, your Dillard's begin to fall by the wayside. I think that we could see that same sort of trend happen with car dealerships over the next 5-10 years.
Yeah. So yeah, Luis, what's going on, guys? What's going on, Luis?
Luis,
Carvana,
Mr. Carvana himself. You missed our whole presentation.
No doubt. We can go ahead. We have a couple minutes left here. We can go ahead and jump to the platform, kind of see what's been going on over there. I know RKT was popping off a little bit over there today. I know Thomas had some calls on that, so he's going to be happy if we sustain any of that movement at the after hours. Other than that, anything significant catching your attention?
I didn't realize it was my screen we're on. Yeah. Let's see. I got the rocket going. Yeah, a little bit of exposure to crypto. I got some ETH. I got this IBIT. Bitcoin moved a little bit today. That made a nice move for me. But yeah, just a lot of green across the board. I'm still bag holding this UNH. Surely it'll recover sometime, right? It's not like their CEO died.
It's got to at some point.
Yeah, and then Surf Air actually got a little bit of life right up running into close there. Got back over $5 for me, but yeah, nothing super exciting. I do have 2 Wall Street Bets plays open right now, which is 2 more than I would ever like to have open at a time. But yeah, I'm short Kohl's. This is post Wall Street Bets pump. Right. I'm gonna play that on the way back down, and then yeah, Rocket, as we alluded to, has just been absolutely ripping to the upside. Look at this thing. Closed at 1601 today. We're up to 1680, touched 1725 in after hours trading. So hopefully this will open tomorrow very profitable for me. Theta is going to take a nice bite out of it, but we will see what happens.
Kohl's is another one that just goes down and under. It's one of those that's like, yo, I forgot about Kohl's. Yo, I haven't heard about Sears in a while. Yo, I haven't heard about, and Kohl's met its demise from the stock market point of view.
Malls, really. Like in a broader context, malls are just dead, which is kind of a shame.
Yeah. I mean, whenever you went to a Kohl's or were familiar with the Kohl's growing up, was it in a mall or was it separate?
I would say in large part it was in malls.
Was it? Okay.
Or at least in some kind of large strip center.
Right, 100%.
I don't know that I've ever seen a freestanding Kohl's, but yeah, like Dillard's and Macy's especially, like those are mall destinations to me. And yeah, if you're not in a high foot traffic area now, malls just aren't viable.
No, I mean, it was a hangout spot in middle school. I think we touched on this not too long ago. But I mean, I don't know what the change is. I know we have the e-commerce, we have this, that, we have consumer behaviors have changed too, but I don't know. Those brick and mortars.
It used to be sweet, man. Your mom gave you $20, right? let you go run around.
You left with a new T-shirt, lunch from the food court, and maybe like some type of knick-knack. That's all you needed.
Yep. You go into like Spencer's with your friends and fucking just giggle at everything.
Just giggle.
Yeah, exactly. And yeah, that entire concept has largely fallen by the wayside, as I said, outside of high foot traffic areas in cities and stuff.
100%.
Malls are still a viable option, but
QCOM. Take us through QCOM. What's been going on over there?
Nothing is what's been going on. This company, so frustrating. We just have like one retest after the other of this 170 to 180 range, and it never finds a breakout. It's so annoying. I mean, look at this. Look how many times we are testing 180 through here, and I've just never managed to get the breakout move to the upside. My most vulnerable position in that regard is this August 15th. That's 24 DTE now, which dang, this year's going by fast. But 24 DTE 170 call. That thing probably dead in the water. We'll see. I'm giving it till the end of the week. We can reevaluate from there. But it did take a nice little dip right in here. Well, no, sorry, that's Liberation Day. I'm on 1 day candles now. Right in here, rather, earlier this month. So while it was down near 150, I did get short a 130 put, which I feel good about. And then I also have a 250 leap, a little bit of a gamma play into June of next year. But yeah, I'm waiting on the breakout. This isn't a TA trade. I like Qualcomm as a company. I think that they're kind of the sleeping giant in the AI space right now. Snapdragon is being used by everything. Snapdragon is going to be all that Android has to integrate AI into their phones. They have an exclusive contract there. I think all that's going to do really well. I just think that, especially in this day and age, hype matters a lot and the media matters a lot.
Right.
And so it's just going to take a few earnings calls to like finally assert to people that this company has the legs. But I do think there's future upside for it. I need this breakout so bad. And it just keeps trying and never moves.
If it's going to be affected by any type of AI news, I know Wednesday Trump is going to be having he's going to be unveiling the AI action plan on Wednesday. So I know I'm going to be taking a look at like the NVIDIA position that I have on just to see how that might affect any type of underlying that might affect like chips, AI, anything in that category. So I know that'll be Wednesday. Maybe we get a little bit of a shakeup and QCOM starts moving a little bit.
Yeah, sidebar about Kohl's. Yes, the Amazon returns counter is definitely busier than
I did peep that. That's crazy. I did see that right
Yeah, and I think that that's a very smart move that they made. I was actually working at a UPS store in high school when they first started taking the Amazon returns at Kohl's, and I remember thinking it was a good idea then, and I think it's a good idea now. I mean, you have to find a way to get people in the door somehow. I know that JCPenney did a partnership with Babies R Us, I think, try to stimulate some activity there. But yeah, the big box retail stores are just kind of coming apart at the seams.
Oh, it's rough.
But anyway, to your point about AI, I became privy to the fact today while writing an article about IBM that this company has been having an insane year. I didn't realize the absolute tear that IBM was on this year, better year than Meta, Microsoft, and NVIDIA. I mean, this is insane. It's done 30% so far this year. They have earnings coming up tomorrow after the close, but yeah, just quite the run out of IBM here. They're quietly doing a lot of stuff with AI, which makes sense. I'm kind of kicking myself for not seeing this like so much sooner because IBM, they were the first ones to AI. I mean, like I remember watching Watson on Jeopardy in 2011. Like that was a big deal. And that was like the first time I ever heard the words artificial intelligence was right around that time. And so they were obviously at the forefront. I should have been more wise to see that eventually they had to catch up in the AI space. But yeah, IBM having quite the year. Boomer stock, as I like to call it.
No, they're moving. Let's go to check out the options chain real quick. What are they looking like? Earnings after the bell, July 23rd.
Yeah, what you want?
August 15th, just real quick. Let me hop in there. Not bad. Just seeing what that was looking like.
Yeah, not bad. Nothing's too wide. I don't have any particular ideas for earnings.
No, I'm not going to do anything in earnings. I might look at some type of post earnings, see how it digests.
Yeah, it's possible. If I was going to do anything for earnings, I would trade it to the upside just because they've been having this good year and I think their financials are going to be good and it's in this little mini breathing period right now. So I feel like there's more potential for it to move to the upside than the downside, but I'm not going to play with it. But yes, if there's some kind of overreactionary move, or I mean, especially if it takes a downside move after earnings, I'd be very interested.
I'm really just hung up on that unveiling of the Trump AI action plan, just to dissolve some of that uncertainty. It's just right tomorrow, and then on top of that, we have earnings for IBM. So I think these next 24 to 48 hours is going to be pretty telling for the AI space in the short term, at least.
Yeah, absolutely. IBM Watson was the first artificial intelligence. I'm being taught by chat. Scramble everything you bought at 120, brother. Why didn't you text me? I would have been right there buying it with you at 120. Great investment at 120. Obviously, well over.
He's like, yep, old news.
But yeah, I should have seen that coming. That one missed me. And I was just joking with Nick Batista earlier today because my last semester in college, which was less than a year, 7 months ago, more or less 8 months ago, I had a class, I forget what it was called, maybe public finance or something like that, but it was essentially just a stocks class.
Right.
And we like day one was like, what is equity? We barely got on derivatives at the end. Like last few days of class, we talked like call and put.
What was that whole thing? Is that what everyone talks about when they're talking about we did this thing with stocks? Is that what you're referring to?
How do you mean?
You said you did something with stocks equity 6 months ago in school?
Yeah. Like I had a class.
Right.
Yeah.
And how was that? How did that class go? Is that same stock class everyone talks about they took, or is that a different?
I don't know what you're talking about.
I feel there's a class that people take and they're like, so like Liz and Jenny were even up and they're like, my boys asked me what stock they want me to tell them for their class because they're having this gaming class. And then Terrell did it when he was in school, my little brother. So I was like, is that the same thing or is this like an actual class? What am I missing out?
Interesting. We certainly never had to make a pitch. It was actually something that I outlined on the show a few times while I was doing it. But yeah, we did have a like semester long competition where we had a paper trading portfolio on Market Watch and everybody got, I think like $250K to start. And there was a bunch of regulations on how you could use it. But I wound up winning that thing because I had, I believe, Yang, which is the Chinese 3X inverse ETF, and they did a 12-to-1 split. Yeah. But Market Watch did not. They didn't
update it.
Yeah, they didn't update it. They didn't update my shares. It was an inverse split. That's what it was. They did a 1-to-10. So the share
price.
They
didn't update the data, or they didn't update your.
They kept my number of shares constant. They did a reverse split, a 1-to-10 split. So the share price 10x, but it did not divide my shares by 10.
Wow.
So then all of a sudden I made like it was insane. I made like $1.7 million on this $250K portfolio because Market Watch was stupid. But Anyway, my point is that that entire class, my professor, he was an older guy. He had been in the pits for like 20 years, and then he was just teaching for fun, basically. But he would always, when he needed an example for a stock, he would always use IBM.
Really?
And every time he would throw out IBM, I'd always kind of chuckle at myself and be like, nobody trades IBM anymore. Nobody cares about IBM. Say Apple or something. Like, get with the times, old man.
Right.
And what do I know? This the old man was absolutely right. IBM to the freaking moon. So yeah, just I've been kicking myself for that, because around the time he was talking about IBM, it was probably like sub $100.
A few minutes before we head on out of here, I seen a comment. Possible PDT rule elimination next year. Thoughts on that? It's about time. I have a hard time believing personally that they put something in place to protect us from ourselves in the first place. I have a hard time believing that. So I've always been a proponent of, I think that's a pretty stupid rule. I need your quick take before we hop out of here.
Yeah, I mean, it's not going away. They're just taking it down to 2K is the requirement instead of 25K. So like, sub like 8% of what it was before. I think that's right. And I mean, I think 2K is like a pretty fair amount of money.
I mean, that's the same amount you need for a margin account.
My concern is that 2K, I feel like if we're going to go 2K, we should just eliminate it entirely, because 2K feels low enough to me that if you are the type of person that rule is trying to protect, and say you have like $1,200 that you want to trade with, it seems to me like people are going to be more inclined to be like, oh, I'll just deposit the extra 800 and get to 2K.
That's a good point.
And then I'll be able to.
But at the end of the day, I want to take the conversation. Is it even about our safety in the first place?
Sure. You're saying is it just us versus them situation?
I'm saying, was that put in place to protect us in the first place?
I think so. I do think so.
You do think so?
Yes. I mean, I think that is the goal. And as someone who's blown up a number of accounts trying to day trade with a small balance,
100%,
I can absolutely see why it exists. But at the same time, man, it's a freaking free country. If people want to blow their money, and the big thing to me is just with all of the gambling legalization, it seems ridiculous that we still have this thing on finance.
Well, that's my
safer and much more predictable.
That's my point into the fact that I don't think it was for safety in the first place, because you allow us to do X, Y, and Z.
What do you think it was for? What's your conspiracy? I mean, are you saying that it's just like the
I will come back with a supported argument here on Thursday. We are running out of time here, but I don't think it was for our safety. And I'll touch on that a little bit more on Thursday.
Yeah, we'll have to pick this back up on Thursday for sure.
Anything else to add before we hop on out of here, though, guys?
Yeah, no, nothing. PDT rule elimination will result in a lot more blown accounts. I agree, but also that's just a lot more learning.
But I mean, I think that capital is going to be lost anyways. I think us being able to sign $50,000, $100,000 worth of debt at 18 is a sign that, I don't know, I think I see a conflict of interest when it comes to, for your,
Sure. I mean, I think people should be able to do whatever the hell they want with their money. Yeah. And I do think that blowing up accounts is how you learn and get better at these things. So maybe letting people blow up their $500 accounts a few times before they have the 25K is a good idea.
But the thing is, I blew up my $500 account already when I was in college. I feel like it's almost I feel like it's not going to matter.
Well, yeah, and with Polymarket and with sports betting and with all the gambling legalization and everything, there is a million and one ways to lose your money. Why are we protecting people 100%. From just this one?
Lastly, when I was in college and I was trading, I would over leverage because I only had 3 trades in a week. So it caused some bad habits in other areas too.
Sure.
So
it's a good perspective.
Yeah, I think good conversation. We'll circle back around to it on Thursday. Absolutely. Thanks for taking the time to hang out with us today. We'll see how Carvana pans out. Carvana long term, I don't know. We'll see. That's going to do it for today. Thanks for hanging out with us, and we'll catch you in the next segment. Peace.
Hey, trader friends! Welcome to the show. It is a wonderful morning on the 24th, and I'm joined by a better version. Ta-da!
Oh, he's in the comments already. He's not going to like that. He's not going to like that.
I'm ribbing him this morning. And what a beautiful morning it is, Scotty.
It's better than it was an hour ago, that's for sure. Look at that. Brightening up. Fingers crossed.
Yes, I did. It was fatal. I changed my coat this morning to my raincoat. And of course, my pass and everything was in there. But it's all right. Producer Phil came in to rescue me, like
Absolutely.
the knight that he is.
As he always does, bailing us out on a daily basis.
Morning, Rich. How are you? Morning, Maturin. Sunny Thursday. You're in Valencia. Always probably sunnier there than here. Funky Gibbon as well. Parky and Kemi and Fried Tuck. Right. You are in for a treat, trader friends, because we've got Scotty on one of the coolest days of the week.
Good morning, everybody. Yeah, interesting times.
So many things happening overnight. Shall we go to overnight action? Because we had so much on. Let's do the coming up first.
Yeah, let's see what's on today.
All right, Scotty, drive us through it.
Right, you got Ange and I with overnight action until 8, then the opening bell, which should still be there. Hopefully it's still in one piece. Fast markets 8:15. Then Aaron and Martin with under the macroscope. See what they did there. Very good. Angeline doing the all sessions at 9. Q&A with Ange and producer Phil, and then decoding crypto episode 1. Now.
And there will be episode 2 tomorrow.
That will be an excellent way to wrap up the week as well, especially with what's been going on in Bitcoin after crypto week last week.
I know, right? Ethereum as well, moving very fast indeed, moving higher. Those of you wanting questions to be answered, please slam them here in the Ask an IG, or even better, hit the like and subscribe button and put them in the chat box over here so that Phil and I can get to it in the next few hours. Shilling Warwickshire, good morning to you as well. And Derek and Neil Brewster. Where are you, Monkey Man? Where are you away with the numbers? I have not seen you just yet.
He's obviously going through. He seems to like a little bit nearer the 8 a.m. open, doesn't he, Monkey Man? He likes to do, seems to do his own prep.
Yeah, maybe he's still in his, he does yoga before the show in the morning. Right, so a very, very exciting power hour. S&P, my goodness me, rising 0.75%. Let's head straight to overnight action.
Here we go, here we go.
Here we go. So, very exciting night. How did you spend yours? I had a half glass of wine to try and offset the excitement.
Yeah, I mean, certainly from being away last week, what was quite interesting was the market was starting to form a bit of the look of a struggle, where it was just failing to break out, and a few of the bears started creeping out again, saying this is negative price action, blow off top. But yesterday, with the trade deal with Japan, and then Bloomberg yesterday also piling in with a report that there might well be a trade deal signed with the EU, that gave it some proper impetus yesterday. Small caps again outperforming. Breadth actually picking up again. Last time I was on about a week and a half ago, Breadth actually had a bit of a drop, but that's starting to pick back up again. And with these new highs, money's getting forced back in.
It is. I love the market breadth. If you don't use it, I highly recommend you do, because it shows you where the action is in the day. And actually, I'm glad you brought up small caps, because even the short squeeze is being seen there, isn't it, Scotty?
Yeah, absolutely. Very much so.
Now, one of the key things as well that was interesting, obviously, was the fact that, S&P 500 closing at a new record high. This is the 12th close above previous records. NASDAQ also moved higher. Let's have a look at the Tech 100 there, because I was actually online with several trader friends who, you know who you are. So I know that you're watching the show in the morning. But what is interesting too is that they were all, as I was gearing up for Tesla, they were all trading and watching Alphabet. Yes. So this is the, I'm trying to get you to the hourly chart here now that it's obeying. So this is the US Tech 100. But also showing you, some of the big earnings. Let's start off with Tesla, shall we? Yeah, so Tesla, I crunched some numbers this morning, and I'm going to bring it up for you right now. If I can, it was up earlier ago. If you come off my screen, I'll get the right one up. Here we are.
Yeah, okay, there we go.
Here we are, Tesla, right. So, you know, as you heard me saying in the show, you know, this is, well, to me, expected because, you know, the key challenges there were that the revamped Model Y has not brought on the revenue sales that was expected, right? And also those regulatory credits. I talked about this in my short. If you watched that yesterday on our YouTube channel under Shorts, these regulatory credits, which was the magic thing that was helping Tesla, well, that's fallen away and has impacted revenues because the sales fell 51% due to that. Also, EV tax credits expiring as well did not help and will continue not helping. Main thing was that revenue miss, right? 22.5 billion versus the 22.7 billion expected. So what did you make of all that?
Well, I think the difficulty is the initial surge after he left the White House. That initial surge we saw in the share price was pretty short-lived after he then said, right, I'm going to launch my own political party. When we go to the newspapers actually shortly, there's a nice kind of headline in the Times that basically he's come out, yeah, there we go, look, warns of rough times for Tesla after the worst quarter in a decade. I mean, Musk